Good morning. Welcome back to Forex Focus here on Tasty Live. Pete, how we doing?
Morning, my friend. How are you?
Good. Happy May.
How about it?
May 1st, Thursday. What
That's
a week
right.
we've had. What an end to April we had.
Holiday in Europe?
Really?
May Day? Yeah.
May Day.
May Day. Most European markets are closed for May Day.
And we're here?
Again, Frank has negotiated that wonderful
He's
global
good.
contract. So any eligible holiday in any country across the globe, he gets off. So
I try and learn from him, but he keeps tricks like that to himself.
yeah, he keeps those very close to the vest.
God,
So
that's good. Because,
but-
like Bangalore, they get a lot of different holidays
yeah. But-
related to Hindu religious holidays. May Day, do you know any origins on that?
I think it's a little. I'm not positive, but I think it's a little bit to do with kind of like our Labor Day.
Oh, okay. Okay.
So,
all right. So it's a trade-off. We have one of those
yeah.
in
And
September.
you know what? I think we're seeing the markets are moving, but they're a little bit thinner than
Interesting.
usual. It's holidays during the middle of the week are always kind of odd
Yeah.
in terms of the ones that butt up against Monday or Friday. But start of spring. It's actually warm here, which is nice.
Nice. A lot of April showers.
Yeah.
Now some more May showers coming up. Raining
So it's
this
already
morning.
Thursday. This week has gone really fast. Start of a new month.
Fast and slow.
Great month in April for FX. A lot of back and forth. A lot of different products trading, new ranges, which is exciting to see. We're seeing that kind of after a big run like we have, a little bit of compression of vol, a little bit of compression of ranges, as you'd expect. Markets don't stay at 11
Right.
forever. So as traders, we adjust down our expectations of what any day is. We're still seeing, there's the tweets around tariffs seem to be having a little less effect in terms of magnitude.
What about
you can't say they're not.
What about the tweets about it still being Biden's economy? And even if we get a next GDP number, there's still a little bit of
It was
Biden.
Biden's economy until the market turned and rallied to close higher on the day. Then I think it became his again. So
God, he's
God bless
good.
him.
Overnight, what do you think? I just checked across asset classes. Crude oil, dangerous levels.
Yeah, there
Is
was
that-
some statement yesterday that Saudis were going to tolerate higher production levels and lower prices.
the kingdom can withstand it.
I think it speaks to, the trade above $60 in crude at 63 was a little bit squeezing some of the shorts out of the market. I think it goes as much against the story of an uncertain economic
Right.
situation and the demand for oil as much as, whether the Saudis pump more or less, they're never, OPEC and its control of markets is pretty well gone. Nobody necessarily tells the truth about what they're doing. But I think the pace at which we're down to 56.90, we're below $57 in oil, is a pretty quick move down. We saw a lot of that take place at the end of yesterday. We had one of those, for 3 hours last night when the markets reopened. It just sat there, tried a couple of rallies, 20, 30 cents. And then once it took out the lows, it put another $1.50
There you go.
behind it. So what should that help in our world? Old school FX thinking was, well, that should put a little bit of hurt on Canada because Canada is exporting a lot of oil to the U.S.
Yeah, let's actually.
Not so much.
We have some currency correlations
Yeah.
we could bring up first out there for if our wonderful production team could put together this nice little one pager for you on currency correlations.
This is fantastic.
How to interpret these values. But what we've done is we've run this matrix here of 6 major currency pairs, and then included as well some cross asset class assets like the S&P 500, gold, crude oil, and the U.S. 10-year note. And so here you can read that crude oil line, third from the top, and against some of these currencies, pretty weak correlations. Australian dollar completely uncorrelated, but then you called out historically Canadian dollar can be pretty correlated due to the nature of their exports, but here only minus 0.09. So very uncorrelated. I mean, correlated to the Swiss franc and the yen. Those back to back just speak to me that that's more of a risk, an uncertainty thing.
Yeah, it is a again, not to say that Canada and Aussie are tier two currencies, but they're more commodity based currencies, and I don't know how commodity based they are in terms of that correlation. We're not seeing it, but they are a little bit more elastic with uncertainty.
Yeah, and so not much in our world tied to crude oil. Once we get into the platform, we can walk through it, but just wanted to call out before we do. I update this every month. This is 3-month correlation, so updated on May Day, early this morning. And what stuck out to me is that U.S. dollar, Japanese yen, correlation to the U.S. 10-year rate dropping from negative 0.5 to negative 0.39. And how I like to think about these correlations is, they're bound from -1 to 1, above 0.5 in either direction.
We give them
a stronger,
right.
a stronger correlation. Less than that, harder to attribute a story. But I mean, you're staying near 0.4 over a rolling 3-month basis. What we look at this for is to know that these could snap back, these could break down at any time. But that's definitely interesting to me. And then also, we're seeing a slight, just kind of dollar diversification. We're seeing euro dollar and pound dollar move a little less than they typically do. Still 0.75, positive 0.75, so still moving together in tandem 3/4 of the time, but that's down from historically 0.8 something.
Right. And we've seen that divergence in the euro sterling market. So absolutely.
Exactly. So just wanted to call out a couple of things there. Anything else speak to you from this?
No, I think when you mention crude, the interesting aspect is, again, Japan imports a lot of crude. It's got a correlation to it. At 0.3, this is something we act on. Crude's down a lot.
Bigger stories.
I want to be short dollar yen. No, I think this is really valuable. The interest rate piece probably is the most pragmatic piece that we can use against the currencies right now. And when we look at 10 years across all the currency pairs, as we've always talked about, highest correlation to dollar yen, the inverse relationship of rates and dollar yen from the carry trade. That's a consistent theme that so how do you and I make sense of that? I think when you look at notes in the middle of a kind of a sloppy handle and a half range, bonds at the upper end of 114 to 118, the correlation really doesn't do much for me. If the notes are up half a point, 15 ticks on a day, it doesn't make me want to be long or short dollar yen. But I think if the bonds or notes get to new trading ranges, if we get above 120 and the bonds are back below 112, that's when that correlation tends to kick in, and we'll see it play through. So it is, again, you can argue, well, you're being kind of selective, and I am. So I'm choosing that the correlation, which should be consistent irrespective of where the markets are. I think it becomes interesting as a decision-making tool for my currency trades, movements and rates when they get to the extremes.
Yeah, and last piece before we jump over to the platform is just that euro dollar and pound dollar very uncorrelated to the S&P 500. So if you're looking for an uncorrelated asset to any moves in the stock market as a whole, we've seen a lot of unanimous moves in the stock market as a whole. Just straight up days, straight down days. Not a lot of back and forth. Here's kind of an uncorrelated
and even Swiss
look.
and yen, which we saw some big up days and down days in equities. Some days we didn't. And that was more the confluence of what was driving the equity markets. Was it tariff talk? Was it rates? Was it general kind of uncertainty? So those correlations between Swiss and yen as safe haven flows were those. I think that book of them is less relevant to us trading now than it used to be. I mean, some days you can see. Yesterday started out when the equities got hit really hard. You saw a lot of selling in dollar Swiss and dollar yen, and kind of a mixed response in euro and Aussie and Canada. That was kind of taken out pretty quickly. So, not the consistent play. I mean, 10 years ago, one of the first things when you saw equities down more than 1%, you added a little long yen, a little
Right.
Swiss, or short dollar yen, short dollar Swiss, just as
Just in case.
it was a
tail
tangential
risk.
hedge. It was correlated, something that it was another way to get short equity exposure was adding short dollar yen or short dollars Swiss. Doesn't quite work the same way now.
Interesting. Well, let's hop into the platform. If you like those currency correlations, you can get those straight to your inbox every week with our Forex newsletters from TastyFX. Link is pinned in the YouTube chat if that's where you're watching. But here, waking up two markets, currency markets, all FX pairs, not a lot of movement except for this dollar yen overnight. Why is that? Bank of Japan meeting last night.
Right.
Nothing, no surprises from the interest rate decision. Bank of Japan holding at 0.5% interest rates. But, it's funny, the Bank of Japan sounding kind of like some of these stock or some of these companies' earnings.
No guidance. Right.
Poor guidance.
We've removed the guidance.
And saying that their inflation targets, everything they thought they were doing is all on pace, but hard to say what they'll do because of Japan, heavy exporter, what will go on with these trade negotiations. So not good for the yen so far.
Well, and again, were they looking for a rate hike? No. Were they looking for maybe some more bullish rate talk?
Because
and this is the biggest mover on the board of over 100 pips. But let's think about where we're moving from.
Right.
The low end of a 20 handle range. If we call the range 140 to 160 as a rich range, we're moving from the very low end of that range, and the market is basically baking out a little bit of the edge case of guys betting that they're going to hike rates. When that came through as a very balanced statement with no change in rates, a little bit of that was taken off the table. So we saw a little bit of a bounce. From a structure standpoint, I think that kind of gives you the opportunity to, if you're still looking at the long-term story, is that Japan is either going to hold rates here or raise them. Mm-hmm. The U.S. is either going to hold rates here or lower, depending if you look at the FedWatch tool they've got.
Right.
Again, it keeps changing, obviously, as things unfold, but there's a number of rate cuts priced into the balance of the year. So you've got one country that has stable, if not falling rates, one stable, if not rising rates. If you're looking at that dynamic a little bit longer term, rallies like this, where you're getting a full 2.5, 3 handle rally off the lows, are interesting points if you want to have that longer term bias to reload for another test down.
This is great call out. But as we know, these interest rate stories can take months to play out, and when you kind of get this shift in sentiment, doesn't always line up with the actual meetings itself. And so, while a very attractive market to be a position trader and try to kind of get that longer term perspective, for something like a short position in this market, the carry trade is not in your favor.
Right.
You're paying overnight to hold it, and it's still a very volatile pair in year to date so far.
And I think you're spot on. If you're looking for where's the day trading action, this is a sloppy setup right now. Yeah, we've rallied 2.5 big figures, which is a nice place if you want to say the trend's going to continue and I'm going to sell a few for rollover. But right now, we're kind of sitting in that. And let's just go back to like an hour chart, Glenn, for a sec. Yeah. So can we tighten up a little bit more? Yeah. So, I mean, sure, 144.5 has been your level up to this point, but we're awfully close to that now. And if we get up above 144.5, it gets really sloppy up to 146.
Yeah, look
so
at
in
that,
other words, my
all the way up
question
to
is,
148.
right, unless you're going to put a really tight leash on this short, and if you're buying it here, you're buying, yes, the lower quartile of the last year's range, but where is your get out point? Well, it's really got to get below 142 to tell me I'm wrong. If I want to be long dollar yen here, and if I'm short, if I'm going to keep a very tight leash on it, I know where I'm getting out. It's somewhere right below 145. But if I'm looking at longer term, there's a lot of slop up to 147. So
Right.
for short term trades, I think there's better places we can look.
I agree, and this is an interesting exercise as well to when you're waking up in the U.S. session. We talk about what daily ranges could be. How do you factor in an overnight move of 140 pips
Right.
already? Is that your range? Could there be more U.S. news that takes this in a completely different direction, or all the way back down?
Right. And you're going back to our one standard deviation daily move. It is wrapped around 98 or 100 pips.
Right.
Well, we're there and then some. So, and that begs the question, well, should I do it from when I wake up and I start my day? I'm inclined to stick with the net change piece.
Mm-hmm.
We've had the move. Whether we were awake when it happened or not
Right.
is really irrelevant. If you want to start, the clock starts ticking from here and it's got to move 100 pips, that's absolutely fine. You're using a different start timer, and I would probably then kind of consistently get net change from that point every day, and you can do it easily on the platform. But I think for our purposes to stay consistent, yeah, we're already at that plus one standard deviation move right now.
And this is if you are trading using some of those technical indicators or standard deviations, this Japanese yen pair I think is dangerous because it either behaves or it doesn't, and it'll either be very range bound or very elastic. So identifying what kind of day it is always a challenge.
Well, and we don't know that sometimes.
Right.
We don't know what's going to unfold. We still have some big earnings stuff coming out today.
That saved the day yesterday.
Yeah, it did. And we've got non-farm payrolls tomorrow. And so we do have the start of the month where we sometimes see additional currency flows. We saw a relatively muted reaction to month end yesterday
Right.
for currencies. Bigger moves in some things like gold and crude. So you kind of take that into context. Now, you think, well, you've got these events coming, so can you count on an inside day? I would say you probably could, except for the holiday aspect of this, that things will be a little bit
Interesting.
thinner.
Yeah.
So I'd be a little bit more mindful and be willing to look for a little bit more. But
what I would call out when we talk about a big week for earnings, a big week just for the U.S. stock market. Right now, Australian dollar is where I would look if we're kind of mapping what is going on in the equity space, because you take this is an hourly chart, and this is just yesterday here, pretty identical to what we saw in U.S. equities.
Yes.
We saw a more traditional relationship where stocks were up into the morning, and when they moved down off of the negative GDP number, we saw a flight to the U.S. dollar against the Australian dollar in a big way here in these early hours. Once the PCE and personal spending came in,
market bottomed
a
and
lot.
turned.
Yep. And it played through right in this market as more of a risk on, risk off sentiment took over.
Yeah, I think if you're looking for that connection back into the FX space, you're making a great call here in terms of looking at it that way. We are sitting, again, whether this or Kiwi against 60 cents, it's interesting because we're not coming off much. Let's jump over the Kiwi chart really quickly.
Here's the daily chart. Oh man. If we tighten it up to the hourly.
Yeah, I mean, that 60 cents has been challenged a couple of times. We haven't spent much time above it. We keep kind of getting up to there and failing back, but we're only, again, remember, we were at 56-cent Kiwi, so we've held on to the bulk of the gains. You can argue market structure is getting a little tired because we were able to plumb a new low from that 59.25 range, but it was quickly bought back up. So this is kind of an interesting one too. I think this one will take time to see if it can build energy to significantly print above 60 cents, which when we look at extremes, 60-cent Kiwi is still relatively cheap.
Right.
Where we look at the yen chart, it's a very different animal. At 140, yes, down a lot from 160, but we can see a really longer-term range of par 100 to 160.
Oh, man.
So this will be an interesting one too. It is not acting quite the same way as Aussie. It is acting a little draggy lately. So I don't know quite what to make of Kiwi right now. I would think if everything does roll over, we'll probably shake out and test the will of the longs here on a nice, almost from low to high, 450 points, 9% rally off the lows. Whether or not we give back a little bit more, we'll see. But I think this is one where, again, the change on the day is so small. And here we're looking for around 46 pips, I'm thinking.
Right.
So we're not there yet. So I would think you'd want to kind of wait and see how that shakes out. And this is something too where we can go look at crosses really quickly. Euro sterling, if we got a second.
Yeah, absolutely. Here's the daily chart. We had a big run up, for context, bouncing off of the historic lows.
Right.
The pound is pound at historic strength against the euro. Euro catching up again, but over the past week to date, a lot of back and forth, but some going in the pound's favor now.
Absolutely, and this is one where if you're in the middle of sloppier ranges, looking at the non-dollar pairs, as long again we're not going out to Czech krona against Turkish lira. While we do offer that, that's not where we're going to take our trip to. This sometimes, in terms of setups, will give you, when you're in the middle of a sloppy dollar range, you can sometimes find nice, more defined ranges within some of the major non-dollar pairs. Euro sterling, euro yen. We can look at Aussie yen, same thing too, and see a little bit different picture. That's what I like, is the flexibility, depending on what you're looking for. If you're looking for longer term pieces, there's interesting trades in dollar yen. I think shorter term, this has been a really interesting market, and it has given you that pullback, a tremendous rip to the upside, a pullback where it seemed to have built some footing that gives you, for me, I like the clarity of, okay, I know I'm buying relative value on a short-term basis. It's been a nice pullback here. Mm-hmm. And I know that, again, if we go back to that daily chart, if it does fail, there's a fair amount of sloppiness down 83 cents. It can go through. Can we go there? Absolutely. If we roll over hard, we'll give back that ground. But I like the setup here because it kind of lets me define, I'm getting value in the short term if I want to be long. If I want to play the short side of this, you really haven't gotten the conviction of it challenging all the longs that were built up in this last leg of the run. You got to wait for the confirmation to have it print a little bit lower before you get short. But it kind of defines both sides of that for you in terms of where you want to get in and where you want to get out. And those are the best kind of trades for us.
Agreed. Well, there you have it today in breaking down the global landscape in dollar and non-dollar pairs.
Okay, where can you find the correlations again?
Correlations you can find in our weekly Forex newsletter. The link is in the chat from TastyFX.
Perfect.
There you go.
Good stuff, my friend.
Yeah, stay tuned for Tom, Tony, and Vanetta up next.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Tomas, we are back, my friend. Good morning, you knuckleheads. Don't look at me like that, Vanetta.
You've messed that up every day this week that you've been in here. You don't know where you are. You're all discombobulated. It's just, it's good morning, you knuckleheads.
I don't want to call you guys knuckleheads. I like your earrings. Look at that.
Thank you. I found these in my closet.
Very nice. I just cleaned out my closet, did a whole thing. Well, it was my wife's closet, to be honest with you, but I just did the whole thing up. Very nice.
Very nice.
Mm-hmm.
Ooh, I want to see pictures. I bet it looks really
Million
good.
things in there.
Yeah.
Yeah, what it was. Yep.
It's so real fast because
And I moved an electrical outlet.
does Amazon have earnings today? Amazon?
Amazon has earnings today. Apple has earnings today. Airbnb, Amgen, CVX, XOX.
So here's the thing: is like as much as like you whatever you believe or whatever. Like if you want to protest Amazon, you can protest Amazon. But I can't quit Amazon for the simple fact I order the most random shit and they always have it. Like the reason I can wear these earrings, you guys don't care at all. They would always fall out. So for $3, I ordered 300 plastic earring backs. Like where else can you get that? Like where else can you? And so now they won't fall out, and now I can wear earrings, and I've already gotten compliments.
Staz and Jules had the same problem in the pit.
But I've already gotten compliments. But
You're right. I really don't care.
But people are like, oh, shop local. But people are like, oh, shop local. Bitch, where am I supposed to get 300 plastic earring backs from?
I don't know why anybody would ever need 300 plastic earring backs.
For $3? Well, because I lost the original ones, and then they would do
30 cents. I don't.
I just think it's funny. Amazon has everything, so I will never quit you, Amazon. How are you?
Have you seen the TikTok trend?
What?
And it comes the next day.
Yeah, I got it the next day.
I don't know how they do it. Like,
Yeah.
you know, it's amazing.
Have you seen the trend of name something that you wouldn't take if you get it for free?
Oh, I haven't seen that.
That's good.
Name something
Oh, okay.
you wouldn't take if you get chlamydia.
A group of old traders. Because I'm stuck with them.
Like an asset, like, you know.
Oh, all right, I got you. So what'd you get up to last night, Sparky?
I had to give a talk.
Ooh, where?
He had to give a talk
very
and
much-
get stroked all night. He had to.
Very much in demand.
What street corner were you on? No, where did you give a talk?
M-Hub?
Oh, M-Hub. Oh, that's right, because you were harassing people, and I saw Beth and Brittany pointing out where it was, and you're like, that's too far to walk.
You know what? It wasn't as far as I thought it was.
It's not that far.
But they actually have their own parking lot, which I didn't realize.
How is M-Hub? I've never been in there.
Really nice.
Oh, okay.
There's 290 companies in there. Can you believe that?
200? Really?
290.
Full time? Or they like revolve in and out, or you don't know?
No, 290 companies are in there.
That building doesn't seem that big.
It's 100,000 square feet almost.
Is it really? Wow.
Yeah, it's big. And the guys that
Ain't no joke.
built it are I've been on the show a couple times.
Sure. Yeah.
So the last interview we did was with Dylan, but the guy that built it.
Right.
But he 290 companies, but the deal is to get in there you have to be creating something physical.
Oh, so it just can't be software.
Right.
Or okay.
Right.
Or imaginary.
Or like the cloud, yeah.
It has to be a physical product.
Okay. Like a plastic earring back.
So it's a very cool space.
Oh, what was your talk about?
No, it was Chicago innovation. You know those guys.
Yeah.
Yeah.
Oh, it was the Chicago Innovation Awards?
It wasn't the awards. It was a Chicago innovation talk.
Oh, gotcha. Okay.
I was there with a couple guys that have been on the show, actually. The guy that started Farmer's Fridge,
Yeah. He was on Shark Tank too.
Lucas.
Yeah.
Yeah.
That guy gets around.
Yeah.
He was here, Shark Tank.
He's a nice guy. Really
Yeah.
nice guy. His first interview he ever did was on Tasty Trade.
When you made fun of him for making
And Tony
salads.
and I said, this business is never going to work.
But it was hard because like right as he really got like a ton of momentum, then the pandemic hit, and then no one was eating a salad in their office, and so.
But
But they're still around, so good job.
This was like 2012. He was on the show.
Yeah.
Crazy. And then the guy that started M-Hub was on the show. Howard Tolman. Not Howard Tolman.
No, that's
Glenn Tolman.
brother. Yeah.
Oh, okay.
We had Glenn on the show multiple times.
Glenn was on the show multiple times. He started Valongo. What company is that, Beth? Is it
Lavongo.
Lavongo?
Yeah.
Mofongo?
It almost sounds like an Italian clam meal. You know what I mean? Like, you know what I'm saying?
I mean, they
like
completely changed healthcure. They sold it for $18 billion.
Wow.
Yeah, so it's not like a little,
No
Right.
joke. No
no
joke.
joke.
No joke.
And then the woman from, she's been also on the show. It's crazy how many people are on the show. But
Well, it's a small community. Not
Amanda Lannert from the Jellyvision.
Oh yeah, that's very cool.
Yeah.
Man, I would love to work for Jellyvision.
I'm not sure what Jellyvision does.
They make games. They make interactive video games. Like their most iconic hit from like the
You don't know
early
Jack.
2000s. You don't know Jack. Well, I was telling the people, and so they actually really like you were very ahead of your time. It was like one of the few early places, but there were really only a few places in Chicago that were hiring like pure comedy people. Like if you were a comedian and you wanted like a respectable job, and it was Groupon, it was Jellyvision, and then it was you.
Mm-hmm.
Well, she's been there. I think she's been the CEO for like 20 years or so.
Yeah.
But she was good.
Or The Onion. I guess The Onion too was hired.
The Onion's back.
Yeah, I know, but they were.
Yeah, The Onion's back in business, and they're actually going back to print. I heard.
Yeah, they're gonna settle some stuff in some.
Well, what else
lawsuit.
would The Onion do? Like
They're digital.
Yeah.
But some guy.
I guess it's more cost effective.
I forgot the guy's name, but some billionaire.
What, The Onion?
Yeah, some billionaire.
Yeah.
Some billionaire, whatever. He sold his business. He's like, I freaking love The Onion, and he bought The Onion.
He wants to save it.
Well, yeah, and he wants to save it, so he's taking it back out to print. I'm not sure. I forgot the guy's name.
So sold The Onion to Global Tetradan firm newly created by former Twilio CEO Jeff Lawson.
That's the guy.
Yeah.
Yeah.
I think it's
We received the
tetrahedron.
print edition in August that year.
Yeah.
Yeah.
Yeah, yeah.
Madison, Wisconsin, I think.
Yeah. That's right. Yeah. Former Twilio CEO. Yeah.
Twilio.
So, one of my son's friends just went to work there. So it's great. Loves it.
Nice.
Oh, of course he did.
I love The Onion. I used to love The Onion. I haven't read it in a while, but I love The Onion.
Sure. It's great. Like everyone has like their favorite headlines or iconic things and
The
just,
Onion? Yeah.
Yeah.
Yeah. I have a bunch of them.
All right.
But
Well, that's good. That's good. You're
Yes,
out
it's
on the
good night.
town.
yeah, it was a good night. I was talking to a bunch of people, and there's a lot of tasters there. And you know what the funniest thing was when I get there? The guy who's filming the whole thing,
Yeah.
Doyle.
Oh, Doyle.
Yeah.
Doyle LaCroix. Did you say, what's up, Doyle?
Yeah, I did. We were talking for a while, and
Doyle was one of the original, probably the original photographer here when we first.
production guy. Yeah.
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 So he's doing freelance, and he was filming.
I know.
He was
'cause
able to do the best headshots of everybody except Tom, of course. He was able to do the best headshots. He was great. Yeah.
He's like, haven't seen you guys in 10 years. Nothing's changed.
Aw, that's
true.
funny.
Yeah.
That's great.
Yeah.
Chicago really is just a big, small town when it all comes down to it.
Yeah. I would agree with that.
Yeah. No, there was. I was surprised how many people there had come through Tasty over the years. It's cool. It's really cool.
Yep.
Yeah.
All right, shenanigans all around. How about you, Bat? What'd you get up to last night?
You know what? It was a quiet night. Vinny's got driver's ed now, so my life evolves
Can he
around.
drive with he just drives with 2 thumbs up? Like, how does he drive?
Well, it's classroom right now.
Oh,
He'll be
okay,
able to get
okay.
out of that, then do his driver's ed. He's got to do the
Classroom driver's ed is the absolute worst.
Oh, the worst.
It's the worst.
He's like, and he's got his.
Do they still show the really good videos, like Wheels of Death?
Yeah,
Where,
yeah.
like all the stuff to scare
It was
you.
a cloudy. When we were watching at school, it'd be like a cloudy video. You can hardly see it, and then somebody would die, and they would have
show
to
a car crash. They used to always show car crash.
Yeah, we would get car crash. Yeah, like car crash videos. Yeah.
So he was doing that. So that's from 6:30 to 8:30. So
Oh, I forgot to tell you the best part of the story. So
Okay, yes, back to you.
Mom and Dad get to go out. So go ahead, Tom. Yes, and more about
Farmer's
you.
Fridge guy, I got to tell you the story. So
Yeah.
he tells the story that when he did the first interview with us, and he came on Tasty, did the first interview. His first interview at Tasty.
Yes, I remember.
He saw the interview, and then that's how he went out and raised money.
Wow, that's
Well,
awesome.
he was then on Shark Tank, so
That
yeah.
was years later.
Okay,
Yeah, we hit it first.
okay,
We hit it first.
Right.
that's great. Yeah, and I think that was one of the last times I saw you eat a salad. I'm just kidding.
I bought one of those salads. They sold them at Costco.
So for people that don't know, Farmer's Fridge, they make pre-made salads in a jar, and they have like a vending machine. So they pioneered the concept of like a fresh, ready-made meal vending service for like offices or airports or
I think
bus
they have like
train stations.
they have like 15 or 1,800 machines in like airports and things like that.
Sure, yeah.
So you know what they had in this place last night? Emma,
What?
They had a smoothie vending machine.
Who had a smoothie in M-Hub? There's a
Yeah.
smoothie vending machine?
Smoothie vending machine.
How much is it?
Like an ice cream vending machine that's a smoothie vending machine, or does it look like something out of a Slurpee thing, like
Oh,
7-Eleven?
smoothie. It's like organic smoothies. And
Like, are they just like in bottle? Like it's just like
You have to
juice,
peel
or
your
is
own
it?
banana?
I have no idea. I didn't do
Okay.
it.
Well, you started this, so like we want details. Like,
Saying they have a smoothie machine. I have no
You have
idea.
to sit there and core an apple.
I have no idea how it works.
Was it core an
I have
apple?
no idea how much it costs. I don't know what everything's made.
Was it
of.
really organic? You said you mentioned organic. Was it
so
really?
what is the
said on
point
the
of this
side,
story?
organic.
So what is the point of this story? Now I want to
Do you
see.
have one?
No,
I love smoothies.
I'm not a
I'm not a
smoothie gal.
smoothie guy.
Ah, protein smoothies. Oh, so good.
We have one of those. What's it called? A Ninja Creamy.
Yes, I know. You're supposed to bring it to me. you
Yeah,
don't
we
ever
used
use it.
One time.
I know. I want
It's
one.
not. Kitchen's not her best thing. Although she did make a great pasta with vodka and what do you call it? Give me the vodka cream sauce.
Oh, just vodka sauce.
No.
Like a arrabbiata or
yeah,
like a
yeah, like a vodka sauce. I'm sorry, that's
yeah,
it.
vodka sauce. Yeah, like I don't know. I'm not Italian.
Fan of vodka sauce.
Me either, but it was really good. Maybe it was just because of a home cooked meal we're not used to.
Probably. Did you look in the garbage to see if there was a Rouse thing in there?
I'm sure it was a jar. I'm sure it was.
100%.
I'm gonna have to ask her.
Look at you two
I'm just saying.
MFers.
100%. She was all put together. She
Like,
had makeup
you
on her.
make
Yeah,
everything
there's
from
no freaking way
scratch.
She made a gravy all day long. You're 100% right, but
You
she got me.
What you do is you go to Rouse and you go to the
I
supermarket.
don't think it was Rouse. I know.
They sell a lot of different vodka.
It's really good. That's my favorite. That's the only sauce I'll
you just
buy.
go pick up one.
Yeah.
And then go, hey, look familiar?
Hey, so you're saying that you make everything that you ever cook is from scratch? Be so for real right now, you two MFers.
No, but if I don't, I take the box out to the garbage.
Okay.
So that nobody can trace it.
You can't take it out. You make
Throw it in my neighbor's garbage.
You make your house manager take your trash out.
Manager.
You
Hey,
can't
the fact
take
is, it
trash
gets out of the house. That's
Okay.
all. However it gets there, it gets there.
You're not strong enough. Can't do
You
this.
need a house manager.
Make my
filter.
support team take it out.
Pretty much. I don't know what to
Hey,
tell
speaking
you.
of that, the Tundra sticker for the plate, the registration
It's
is due.
expired.
It's due. It's due. Yes, it's due.
Happy to get you a new one.
Oh, that's nice. Hey, speaking of that, I went last night because yesterday was the last day of the month, and so I was like, oh, I gotta go renew my city sticker. Because
Unlike Tom.
Unlike Tom, so I went to the
Losers.
I went to the currency place to renew it, and the lady was like, "Baby," she's like, "You bought for 2 years." She's like, "You good to 26," and I'm like, "You know what?
Wow, you're
My bad,
smart.
my bad." Because past Veneta. Very SMRT that I had paid for 2 years. So I had $100 in my hot little hands because I had to get cash because I'm a millennial. I never
what'd
have
you
cash.
spend it on?
So I went to DSW, Discount Shoe Warehouse. This is funny. So I was just like looking for a pair of like cute little sneakers because I'm going on vacation in
Tom's
2
not
weeks.
going to find this funny.
I'm going on vacation in 2 weeks. Yeah, I have vacation days. I'm still going to lose days.
Yeah, I got
and I hate
25
that.
days, Saz, I have to use by the end of this month. So
Take all the rest of the month off. Yeah.
What do you want me to do?
Everyone's going on vacation in May because our company makes us.
You
so
lose them if you don't.
Right, unless you pay them out to me.
25 days.
Yeah.
What do you want- what
So
do you
anyway,
want to do?
I needed
Calendar
cute.
year
I
is
needed
over,
cute
Saz.
little. I needed cute little sneakers because I'm going on vacation in 2 weeks, and
What do you want me to do?
I don't want to pay the tariffs. But guess what, though? So then
Yeah,
what?
you're not particularly
I
happy
want you to
with
take your vacation days.
You're not
Oh,
particularly happy
can you
with-
start right now?
Please take
Can
them
you start now?
tomorrow.
I don't know, 25 days. I'd
Take
have
it.
to pretty much start.
You don't have 25. You took some days, but
Yeah, but I didn't mark them down. I mean,
okay. Well,
right. I mean, come on.
Take them. Take the rest of the month off.
Okay. All right.
So anyway, so I go to check out and I found these like cute little shoes. And the lady, first of all, the lady that checked me out, she was a young girl, beautiful, inexplicably full neck tattoo, forehead tattoo. And I'm like,
That's aggressive.
that is a choice. She's super nice. And she's like, did you see these shoes on TikTok? And I'm like, no. And I'm like, I'm gonna be real honest with you. I'm like, the reason I bought these shoes, I was like, you see this brand? Dr. Scholl's. I'm like, they're comfy. And so I guess some TikToker made like video about these shoes. She's like, I've sold 6 pairs of these shoes in the last 2 days. So your girl is on it.
Get 'em?
On the trends. Yeah. The last one's in my size. So that's what I did with my money.
They come in a size 12?
No.
They don't come in a size
No,
12?
no, they do not. But
Between your shoes and your
and my earrings.
I may not make it.
You had
today.
enough?
I may not
Yay!
make it to lunch.
Well, how about this? How about you hang in there because we've got a great show for you today. It is a thrilling Thursday here at Tasty Live at the top of the 8 o'clock hour. Fan favorite trades from the research team. The world's greatest financial think tank is going to present their trade ideas to a cantankerous Tom. That's headed at 8 o'clock. Interesting move and reversal in the market, so we'll see what the research team was able to cobble together. Then we got Victor Jones headed your way, 8:40. Hear me out. What are you going to talk about with Victor today? Do you know?
Nope, I have no idea.
All right. Well, it's always a good time. It's always rousing debate. So Victor will be here at 8:40. And then 9 o'clock, part of our market measures, our zero DTE series, timing zero DTE trades. Is there a lot of things to consider? when it
Sponsored by
comes
CBOE.
to-
Yeah, it's actually it's a good piece. It's on like 8:30, 9:30, 10:30. Like just
It's on the timing?
Oh, okay. Okay, that is actually really
like
interesting.
you have to do 8:30. Can you do 9:30? Does it
Sure.
make a difference if you do 10:30, 11:30, 12:30, 1:30, whatever?
I got you. And then live from the trade desk, big boy Scott Sheridan coming in hot, counting down all the top trending tickers over at Tasty Trade and Programming Note after 2 back-to-back days on the floor of the SIBO. Liz is going to be joined by TP today.
Yeah, Jenny
So-
couldn't take it anymore. The guys were just unbearable. So she
No, but like it's
day
like
off.
I said, May means vacation for this company because our fiscal year starts June 1st. So
Mm-hmm.
they make us take all of our vacation in May. I still got 3 more days, so I'm taking off like a week.
And they send you
And I
reminders.
they just sent me a reminder, yeah, but I still got like 3 more days. So
I've worked under your tutelage now for almost, 14 years here, a couple of years there. let's just call it 20 years. In all those 20 years, Sosnoff, I never got a reminder that said, hey, Bet, you still got like 4 vacation days. You got to take them by the end of this month or you're going to lose them.
Last year, I lost 11 days. So 5 rolled over, and then I lost 11 days.
You didn't write them down just like I didn't write them down.
No. Beth
Give me one of these.
No, Beth is literally the boss of me. I submit everything to Beth, and she approves it, so.
25 days, Sosnoff. What do you want me to do?
Guys are pathetic.
No, I got 3 more days left. Anyway, that's our run of show for today. You guys want your daily dose?
Sure.
Yeah, hit me with my theme music.
Why would you want to miss Christmas? Because every day is.
I'm gonna make it I'm gonna make it an objective of mine. Just reduce the number of vacation days.
You're not the boss anymore, though. So you're not the boss
I'm gonna
anymore.
propose it.
You're the queen now.
Nope.
You're like a figurehead.
Nope.
I'm gonna propose it so it'll save the company money because it's ridiculous.
Hit me with my theme music. Let's go.
Our leading story, breaking news, across the wire. Our leading story, top
This
story.
just in.
In today's headline, breaking news.
All right, everybody. Today is a thrilling Thursday. Mayday. Literally Mayday. It is, it's May 1st, and it is May Day. A lot of worker rights protests will be going on globally today. Actually, it's very important historical history right here in Chicago. But anyway, I'm gonna, let's unionize. Anyway,
Labor lawyer, right?
Rabbit. Where are my donuts, Tom? It's the first of the month.
Yeah, what'd you bring us in?
And it's Mayday. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Would you like to recap what earnings are going to have today? I got the ones from yesterday. Which
You tell your wife Airbnb has earnings. She's going to pick.
she's still
Airbnb
banned.
has earnings. Apple, Amgen, Amazon, CVX, ExxonMobil. Obviously, there are more. I just try to name the most popular ones.
Okay. Headed to my first headline of the day. Fed Reserve policymakers have signaled that short-term interest rates will remain unchanged as they wait for clearer signs that inflation is nearing that 2% goal. It looks like rates are going to remain unchanged despite market bets on looming cuts. What do you guys see as we kind of almost at the half point of the year, which would be June, for your expectations of the timing and number of rate cuts?
Presently, I see bonds at 117, right in the middle of their range. They got up to around 120 and change, down to around 111 and change. They're sitting right at 117, which pretty much means you can do whatever you want, but they'll probably tick them down a skosh.
Tom, for you, what do you see? How many rate cuts? When are the rate cuts? What do you...
I have no idea.
Okay, what are you doing in treasuries?
Nothing.
Okay, going to Citadel Securities is flagging U.S. regulator about 24 trading infrastructure risks. They included warning about the risks of 24-hour trading that is currently planned by exchanges. The market maker, founded by your boy Kenny G, said overnight trading requires a clear regulatory framework as well as market infrastructure to support it, and he's calling for consistency around the dates. What are your thoughts?
They've been talking about 24-hour trading since I was on the floor, and that goes all the way down back to 2005. So for 20 years, that I know about, they've been talking about overnight trading. Now, we didn't have the same infrastructure as we have now with computers and technology and everything else like that. So obviously, it could be more of a reality if, again, they can get the back-end infrastructure. That means you're back-end in the brokerage firm's infrastructure. That means you're back-end in a lot of places. Just saying it is a good soundbite, but I don't think they'll ever get all the markets 24 hours. Thomas? I mean, in my lifetime.
I think that it's inevitable, but Citadel's right. They need some regulatory framework because otherwise there's
how do you settle things? I mean, there's some firms like JP Morgan still settle things in 3 days. I mean, it's my concern is just that they're going to get run over. They're worried about getting run over with a bunch of crappy names in the middle of the night, and they don't want to be liable for it, which
The 29-page letter, which became public yesterday, contains proposals for equities, derivatives, treasuries, credit, and digital assets. It also includes requests for new regulation as well as the revision of some rules. So, pretty comprehensive.
I think it's. I think what you're going to see as customers, myself included, it's just like the top. I don't know, 25 stocks.
Yeah, which would be sufficient. I mean, it's basically.
They don't want to get run over on
Sure.
Some like right now. There's a lot of like junky penny stocks trading, and all these high frequency firms are getting run over by just everybody's on the same side of the market. It's kind of it's the stock business. That part of the business is a really crappy business, and nobody wants to do it. Like everybody wants 24-hour trading. Everybody wants 24-hour trading. Nobody wants to do the business.
Yep. A narrowly divided U.S. Senate rejected the latest bipartisan bid to block President Trump's tariffs on Wednesday, just hours after the federal government reported that the nation's economy contracted for the first time in 3 years. The measure sought to terminate the national emergency that President Trump declared as the basis for the 10% global tariffs. So again, we tried to do something, but it failed.
Okay.
All right, that's it. Hey, in other news, Bank of Japan votes to keep rates steady, and they are cutting their growth forecasts. The central bank is likely to project inflation to stay roughly on course. What are we doing in global currencies?
Yen's taking a hit today, down 1/3%. That's about 9.0000935 lower. Now it is at the higher end of its range, but it's broken out of this range from 70 to 72 into the 69 handle. A lot of our other currencies too have taken a little bit of a dip down, but not quite as much as that. Like the euro's only down 1/3% compared to the yen, which is down 1/3%.
Tom?
I mean, our currency positions don't change from day to day.
Okay.
It's really rare.
Buy dips.
Our currency positions change like once every couple of weeks. So like, you don't have to keep asking. It's the same position every day.
Okay, great. Meta shares rose as much as 5%. Nope, that's fine. Meta shares rose as much as 5% Wednesday after the company reported stronger than expected revenue in the first quarter. Revenue came in at $42 billion versus $41 billion expected. First quarter sales were up 16% year over year. The company did lose $4 billion on their Reality Labs sort of infrastructure. What did you do in Meta, and what will you do this morning?
We sold junky strangles really wide, and we sold extra puts. So I think that
Meta up $35. I think you should be fine.
I think the expected move was more.
It was, but I think you should be fine.
Okay.
Yeah. And we sold extra puts. So I think we're going to be totally fine.
Microsoft shares jumped 9% on their earnings and revenue beat. The company also issued an uplifting forecast. The company's Azure cloud business exceeded analyst estimates. Microsoft bringing in revenue of $70 billion versus $68 billion expected. And they called for revenue in the range of $73 billion to $74, which again, upbeat forecast where other companies are being like, hey, we don't even know how to issue a forecast or outlook, so leave us alone. What'd you do in Microsoft?
Microsoft, we sold.
It's up the same $35
We sold 2 puts to every 1 call, but it still went outside the range for the calls. I think Microsoft's going to be. And I bought some stock last night. I think Microsoft's going to be a loser, a small loser.
Why'd you buy stock last night?
Because I was worried about the stock going up too much.
Hardest thing.
It's really hard to buy stock.
Sure.
Luck box.
Was trading 416 all
forever.
noon.
You could have done anything you wanted for it.
Could have bought 1 million shares.
Yeah.
I still have some, but I haven't sold them yet. But I need them.
I need them.
I need them.
Did you trade in Qualcomm?
I did.
Qualcomm topped their estimates, but they gave a light revenue forecast. Qualcomm's overall handset chip sales increased 12% on an annual basis, and they brought in revenue of $10.84 billion, but they, again, issued that light revenue forecast. What is the stock doing
That's why the
this morning?
numbers all mean nothing. I mean,
Sure.
For direction, it's so hard.
Qualcomm's down
$8.
Yeah, down about $8.
Okay.
We sold some puts in there, but we sold them really far out of the money. We sold the 115 puts. I think we're going to be fine.
Okay.
140 or so.
Yeah.
I know I'm probably not allowed to talk about it, but it had earnings, so I was like, so can I talk about it now? But I'm just going to do it anyway, because I do what I want, and I'm all the way over here. You don't have the speed. Robinhood topped their quarterly profit estimates as volatility fueled trading volumes surge. Did you trade Hood? Are you looking at Hood?
Yeah.
I have a position on there.
Okay.
Strangles. Those would be pretty good winners. The stock was unchanged yesterday. It's up about $1 now, or a little, maybe $1.50.
$2, wasn't it?
All right, there we go.
It was down a 1 or 2. It was kind of a non-event.
Hey, did you trade Etsy? Etsy shares sink after earnings as the company says it is staying nimble to tariff uncertainty. The company took a $101 million hit during the quarter as they sold off Reverb, which your friend owned, which is a weird coincidence.
What they sell for?
I don't know. I wasn't listening to their earnings call.
Let's see.
If they sold off Reverb, I guarantee it wasn't a good one.
Well, it said they took a $101 million hit. So, but again, I don't know
So
what.
that means they bought it for 270 or 370, 270, I think.
Okay.
They must have sold for 170.
Okay.
So today I'm excited to share, I don't know who's this coming from. It says published by the Reverb team. New investors, creative partners, and Cervico have entered an agreement to purchase Reverb from Etsy.
Yeah.
Once the deal closes, privately held, independent operated company backed by two investors who bring a passion to the music industry. I wonder if he bought it back from them.
He could have bought it back.
Who knows? Shares of Etsy closed down 5.7%.
Yeah, he brought it back.
Yesterday.
Passionate about music. I mean,
I bought it back.
The company
pulled a Sosnoff.
The company reported a net loss of $52.1 million. So, okay, Etsy. Hey, in other news, NVIDIA CEO, I got two NVIDIA stories, so I put them together on the same slide. NVIDIA CEO Jensen Huang says that China is not behind in AI and said we should not be caught flat-footed. He says China is right behind us. We are very close, but remember, this is a long-term, infinite race, but something I didn't really think I would ever see in my lifetime. I'm being sincere here. NVIDIA gets a sell rating. Seaport says AI is fully priced in. What do you think of the duality of these stories?
Somebody needs to buy stock because Netflix is up NVIDIA is up $5, so that company.
Yeah. So
it is, I don't know who Seaport is.
Okay. Yeah. Well, but it doesn't matter. But I
discount analyst ratings anyway. But what do you want to know?
First of all, tone down the hostility when you're talking to me because I'm here just trying to do my job. Look, I come in here every day, day in, day out, upbeat, positive,
not those 3 days you take off for vacation.
Serving face, honey, and we can have equal, mutual respect. I come to you with respect and deference.
Grandpa and stuff.
Is the good mood in the room with us now? What are you doing in NVIDIA?
I'm perfect.
Okay. All right.
Hey, up $4 or $5.
A U.S. judge has ruled that Apple violated a U.S. court order that required the iPhone maker to allow greater competition for app downloads and payment methods. Apple basically just didn't do it. And so now the court was like, hello, McFly.
Is Apple in the room?
Yeah. So a U.S. district judge said that Apple failed to comply with her prior injunction order, which was imposed in an antitrust lawsuit brought by Fortnite. An Apple executive has also now been found guilty of lying on the stand during the Epic trial. So big old mess here for Apple, right? What are you doing in Apple? And their earnings today, yes? No?
Apple down $3. I mean, a little surprising with everything up higher by, even the S&P's up 51.
Yeah, that's weird.
Did Apple already have their earnings? Is it today?
Apple has their earnings today.
Today, yeah, right. What are you going to do?
I mean, right now we're flat, but I don't know.
Okay, we'll see what happens. In other Apple news, Google, which famously used to pay $18 billion a year to Apple, so they would use their browser on their iPhones. Well, Google now hopes to enter into an agreement with Apple by the middle of this year to include its Gemini AI technology. Gemini AI technology on their phones. Do not want. What are you doing in Google?
We do not have a position. After earnings, we got flatted.
You got flatted? Okay. Hey, before you put this next slide up, do you want to guess what the 3 best performing stocks are in Trump's 100 first days?
3 best performing. Can you give me a hint?
No, because you've been salty all day, so you get no hints.
Had a downtick forever.
I don't know.
You get no hints. One's a software company, one is a retail company, and one sits in a pouch on Nikki's desk.
Netflix and chill's got to be in there.
Nope.
Oh, okay.
Stock hasn't had a downtick.
One's a retail company.
One is it's brick and mortar retail.
Costco.
No. I'm not saying, and again, by saying no, I'm not saying that Costco is not performing well, but I'm asking for the top 3. So.
Oh, and what's the other one? One's a software company?
One's a software company. You should get this one.
On a percentage
You should both, yes, on a percentage basis.
Palantir?
Palantir, yes.
Percentages. That's why
Yes.
Netflix, obviously,
Yes.
$1,100 stock.
And what's the last one? What kind of business is it?
So we'll put it up here. Dollar General. What?
I would never.
The discount retailer, the shares have soared more than 36% as of Tuesday's close. That puts it behind Palantir and behind Philip Morris International.
I never would have got any of those.
It's a fun. At least you're engaging with
here
me.
for 3 days.
At least you're not just staring dead-eyed at your screen.
A year ago, the Dollar General was $145.
Sure.
A calendar year, full 12 months or so. But it started the year around $74 and $94. So that's
on
a percentage.
I'm not trying to trick. I'm not trying to trick you. I just thought it was a fun. I thought it was a fun game.
Sounded like you were trying to embarrass us.
I thought it was a fun game. I don't know if
that's my job.
I don't know that you necessarily want to trade Dollar General, but can you guys do anything in Palantir right now?
I don't have a position in Palantir.
I have a position.
Okay, how's it going for you?
Last couple days has been a little challenging.
Palantir up to 121. I'll round up around $2.50.
Yeah. You guys trade Philip Morris?
We don't.
Because it's basically like going to the moon because all of the kids are on Zen now.
Philip Morris is in the stratosphere.
It is. This is what I'm trying to tell you. No one listens to me.
Yep.
Well, there's not much to do in Philip Morris.
Okay. And the most hilarious and least self-aware take that I've seen in a long time, I had a good chuckle for this. Mark Andreessen says there's only one job that's mostly safe from AI, and that job is venture capitalist. Be so for real, you literal egghead. Literally, you couldn't just dump a bunch of company, prospectus sheets into AI and be like, okay, tell me which one's the better. Like, literally, the easiest job is
Mark
to replace.
Andreessen is self-aware.
No, I don't. But I just thought it was funny. It was during a recent podcast appearance. And he said, every great venture capitalist in the last 70 years has missed most of the great companies of his generation. So the great VCs have a success record of getting, 2 out of 10 or something great of the decade. And he says it's a unique psychological ability that can't be replaced by AI.
He's an amazing douchebag. Not because for saying that, but
sure.
For everything else.
He's
just incredible.
Just a massive dome, homie. Hey, I don't know if you've seen this, but are you aware? I know that Starbucks, your recent competitor, it's been in earnings, but you should also be on the lookout, girl. Panera is coming for your neck, honey, because they have croissant toast. Have you seen this? I get emails. It looks so amazing. So their croissant toast sandwiches have a bunch of they have a croque monsieur on this croissant toast. And
croque monsieur.
I know it looks good. I get the emails.
You love what?
Croque monsieur.
It's like
ham and cheese.
Ham and cheese with a little.
I hate it when you make it a fancy name for
it. I'm not making.
That's the name. It's a French sandwich. That's what it's called. It's called a croque monsieur. There's also a croque madame and a croque monsieur. But because of the croissant toast sandwiches, for a tongue-in-cheek promotion, the company unveiled yesterday the new croissant clutch, and it says bread experts take on the it bag of the season. When is bad coffee going to come out with a bad coffee purse or something? Bad
or just
coffee
a clutch
backpack.
in general.
Yeah.
I will put our toast up against anybody.
That's right, so I don't know if you want to know why, because it's a Batista production.
So the croque monsieur croissant toast features...
That toast never comes into production if it wasn't for Batista.
Features black forest ham, melty provolone...
Build another company on my back.
Asiago cheese, and a caramelized onion and Gruyere spread. They also have a fromage croissant. Which is melty provolone, American cheese, caramelized onions, arugula, and garlic aioli. Ooh, with a cup of their tomato soup. Say less.
It's been a long time since I've been in a Panera.
I love the one on Elston. That one's real nice. It's across from the Chick-fil-A.
I thought that shut down.
No, it's right there. I was literally there the other day.
They do a half sandwich right, like a soup and half sandwich.
Yeah,
right.
It's nice because my Panera is under construction.
Not a half-cut sandwich. They have bread that's small.
Yeah.
And I like that.
It's nice.
I don't feel like I'm getting somebody else's sandwich.
Panera's private now. They were public, but then they got taken private. But so you can't really do anything.
I used to stop and get their bagels, but
I like Panera. Except for their lemonade that killed people. No problems with
Their
Panera.
iced tea was always really good.
Yeah, they have good iced tea, and their green tea. I like their green tea.
I used to mix their brown and green, black and green.
Okay. A crazy sports story coming out. Adam Schefter broke the news that John Sparebeck, the longtime friend and business partner and former agent of legendary QB John Elway, died from injuries he suffered when he fell off of a golf cart, allegedly being driven by the Hall of Fame quarterback. Sparebeck was only 62 years old. I guess they were at Stagecoach, and I was like, what were y'all doing at Stagecoach at your big ages? And they were riding.
They were at a music festival?
Yes, they were
in
riding.
a golf cart.
Yeah, and the guy was on the back. Yeah.
Guy was on the back.
Yeah.
He was holding on the back.
Obviously, he wasn't holding on.
I don't know all the specifics. They
No
were
details
leaving
have come out
an
about
after party when he fell off the back of the cart and
so they weren't
sustained
playing golf.
a traumatic head injury. No, they weren't playing golf.
I thought they were.
No, they were at Stagecoach because
There were drugs involved?
they were at the
62 years
Madison
old, by the way. I look a hell of a
Club.
lot better than him. I
They were
know
at the
his past,
Madison.
but-
No, this is John Elway. This isn't Sparebeck.
Is that Elway?
Yeah, that's Elway.
Oh, Elway. You got some problems, too.
But
I didn't even know that. I thought that was
Me either.
they were at the Madison Club at La Quinta, which Beth has been there, by the way.
Madison Club at La Quinta Stagecoach.
Yes.
So this was an after party. This happened like at midnight.
Yes.
Oh my God, there are some 20. He's
Yes.
64. I mean, there are some underage ladies involved in this. I am sure now in drugs. So there's more going to come out today.
Sure, it is
not
horribly
You don't
sad.
fall off at 62 years old a golf.
This is not a
cart.
Tom Jules.
This is not a Tom Jules production. No.
Yeah, but it's sad. All joking aside,
Yeah, no,
that's
it's sad.
Anytime
it's
anybody dies,
sad.
it's sad for sure. But this is fishy.
Hey, wow, this really snuck
What are
up.
they doing at Stagecoach? I mean, what's the?
I know that's what I said at their big ages.
Yeah.
I don't know. Maybe they want that Belichick Jordan Love something going. I don't know. They want their own 24-year-old. I don't know. Hey,
I read she's worth like $6 million now. Sadness. I don't know how she did it. Last week she.
based on what? A press release that she wrote and signed Bill's name to? Be so for real. Hey, I gotta keep it moving because I did not know. Guess what?
Somebody sounds like hating. Somebody's hating.
No, well, she stormed out. No, she stormed out of that interview, and she expected Bill to follow her, and Bill was like, "What are you doing?" And then so she
Make a man go
reactivated
crazy,
her
I follow
Twitter.
it.
No, she
Calm down,
reactivated
Sparky.
her Twitter, and then she's been putting out press
Women do
releases.
not like this.
No.
She's been putting out press releases, but signing Bill's name to it.
Yeah.
Anyway,
She's putting out an ain't a press.
hey, guess what though? Saturday. This is fun. This is gonna be a fun game. Saturday came up fast. Kentucky Derby.
No
is
way.
Saturday. Yes.
No way.
So I have the horses. Let me tell you. I'm gonna read these to you. Tell me which names that you like. Okay. So I'm gonna start from the bottom. 21, Tis-tastic.
No.
Tis-tastic.
No.
Number 2, Grande, like a sauce grande.
100%. That's my winner.
Grande? How about you, Bat? You like a grande?
Grande. I'm all in on Grande.
I gotta throw a couple bucks on Grande.
Luxor.
I've rid that Grande horse for the last 14
Luxor
years.
Cafe. Didn't we have a Luxor Cafe here?
There was a Luxor.
Yeah, there's a Luxor
Went out of
Cafe.
business. It's where Starbucks is now.
Number 18, Owen Almighty.
No.
No? 17, Citizen Bull.
No.
16, Flying Mohawk.
You're
Well,
selling
like-
past the close. It's Grande.
Yeah,
Wait, but wait though. But wait, there's a couple other ones. What about Flying Mohawk?
No.
No?
No, it's
Okay.
Grande.
Number 15, American Promise.
No.
14, Sovereignty.
Oh, God.
13, East Avenue.
No.
Number 12, Burnham Square.
No, no, no.
11, Rodriguez.
No chance.
Number 10, Admire Daytona.
No.
Number 9, Beza.
Nope.
Number 8, Sandman.
Possible.
Yeah, Enter the Sandman.
Sandman.
Man.
Number 7, Coal Battle.
No.
Number 6, Good for Traders, Chunk of Gold.
No.
You see, I didn't even get the words out, and you said no. Chunk of Gold.
What's number 5? Nepotism?
No, Neo Equos.
Oh, sorry.
Neo
Way too hard to
Equos.
pronounce. No.
Neo Equos, because equine means
I know,
horse.
no.
Neo Equos. I don't think you do. Number 4, Final Gambit.
Is that the picture of the gray horse? Is that Final Gambit?
I don't know what
see
horse that
Gambit
is.
There. I can't read.
Final Gambit.
No.
That's pretty good. Oh, number 3 is my favorite. Render Judgment.
No.
Final Gambit. If that's the gray horse, it's got eyes like you, like two pistols.
I also think Render Judgment is owned in part, I think, by the country artist Toby Keith. So
No.
do with that what you will.
No, I think you
someone
got
could check
Grande,
me.
and that's it.
Number 2, Publisher, and number 1, which is my favorite, Journalism.
Oh, God.
Probably be a late scratch.
Going with Grande and Sandman.
Grande and Sandman. Well, you can put your bets. DK Horse.
We
DK
lost our
DK.
we lost our our Derby connections. I mean, Jules was really the one that would go down.
But DraftKings now has a full Derby portal.
You're going to have to count on another Batista.
But Bat, what can you do on Bat? What's DraftKings doing this morning as a stock?
Oh, okay.
Stock DraftKings, yeah. Okay. But it just snuck up on me. I can't believe the Derby's this weekend.
Always the first weekend in May.
Well, I am aware of that, honey, but just May.
You didn't remember until she mentioned it.
Right, yeah, you didn't know.
Well, I didn't know. Yeah, I wasn't paying attention.
Yeah.
33.29, basically.
Grande and Sandman, we have to bet I have to bet that.
Okay. Mm-hmm. Hey, finally today for my viral video of the day. I don't know about you guys, but this dude is stone cold as he has a little visitor on the tee box as he's playing some golf. Quiet on the course, please. Watch this. What would you do?
Is that a bear?
Yeah, it's a black bear.
Forget about your worries and your strife.
Well, he's very calm under the circumstances.
These young kids, they all swing like they got the golf swing, like they got the hockey swing.
Some dude in the comments said, I would have drilled that bear, not on purpose. That's just what happens when I drive.
Yeah, I don't know if I would have sat there and done that.
I could pet that bear.
My son to do that.
Bears are cool. Bears are like if you're just
somebody
being
just
chill.
Got killed by a black bear.
I think
black bears usually don't attack.
They don't.
And they just attack somebody. I just read about it last weekend. Was like the first black bear attack, like in California, somewhere where somebody just got attacked by a black bear and died.
Why's it gotta be a black bear? Hey, that's my time for today. Bat, what's coming up next?
We're gonna take a quick 90-second break and come back. We got more Tasty Live.
The worst movie I think I've ever seen.
Cocaine Bear, best movie. Bear. No, best movie. 4 stars. I saw that. I saw it in the theater.
You saw that too?
I saw it in the theater.
What's wrong with you, people?
I watched like half of it. I couldn't watch it. It was horrible.
It was amazing. It's camp. You don't get camp. You don't get satire. Like it was too much for you. Anyway.
And it was too much for me.
I love Cocaine Bear.
Really?
She was a mom. She's an icon.
The best bear movie is the one with the little doll where it comes to life. That's
Ted?
Chucky?
That's the best. Ted.
Oh, Ted.
That's the best bear movie.
Ted is one of the
Ted
best
and Ted
ever.
2. They're both great.
The first Ted.
Yeah, I got it. Even Ted.
Okay, boomers. I'm trying to keep things on time here. Let's keep it moving. What's coming up next?
We can take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send.
F. Scott Fitzgerald is one of my favorite scenes ever. Do you know that scene in there?
Check out this dude, what's living under his porch.
I like things living under. I like
it's a bear? It's a freaking bear?
Yeah.
We're going to do that. I really obviously want to just take a little video and then we'll get him out of here.
He's going to take a little video, then we'll get him out of here.
Oh my God.
Freaking bear's going to move quick.
Why would you even take a video of that? Well, brown bears don't attack? I thought brown bears were the nasty ones.
All bears are bears.
Nasty.
I think you got that. Tell me we got that.
I wasn't expecting the bear to move. Cat-like reflexes.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick 90-second moment to look at the E-mini S&Ps. E-mini S&Ps up 59. They got a little bit higher than this, up to 62, about 15 handles higher. They've been lower by around 30 handles or so to 56.15. Relatively tight market last night, Sadnov.
Grind higher most of the night.
Grind higher is correct. NASDAQ up 314. Russell being a little bit of a bucker, basically up unchanged, up $1.40. Dow up 239 and change. Volatility in by 35 cents, back near its lows of 23.40 here. You can see it's been here about 4 or 5 times before rallying. We'll see if volatility is going to rally. I mean, maybe the market's going to go a little bit lower. We'll see what happens with volatility. Bonds up 8. They trade over 117. They flirted with going under 116. They're right at the middle, higher end of the range, 116.28. Bitcoin, big number, Sadnov, 2.5% or $2,400. 97, Sadnov, over 97,000 out of its little range here of just under 97,000 to just over 96,000, 97,000 right now. Oil down 61 cents, trading near its most recent lows it hadn't seen since the beginning of April. 57.60, $1 off of its lows, still down 60 cents. Gold down 85 cents, Sadnov, flirting with 3,200, 32.33. Still hard to say 3,200 is a downtick in gold. I mean, it's
down $85 though. Something.
No, it's a big move out of its most recent range. Listen, given back, we got as high as 35. So I mean, $300 move in gold is big. Net gas up small, though it is a 1%. But really, it's all about the movement of the earning stocks today. Meta up around 35 or so, and then you've got Microsoft doing around the same. MSFT up around $35. Moderna mRNA, I mentioned it because you had a position in it. Under 27 now, down $1.50. So I thought maybe it was going to catch a little bit of a bid because it's been getting decimated lately.
Yeah,
Qualcomm down 8, Hood up 2.
Moderna, McDonald's, and Qualcomm are all down.
McDonald's down around 5 still?
4. Something like
Yep. Airbnb, Apple, Amgen, Amazon, couple of oil stocks. That's all we got.
All right, let's do it. Confirm and send. These are emails that came into us overnight. We got lots of them yesterday, so let's move through them. It is Thursday, May 1st.
Made it. This is May 1st. You've been waiting for it for 2 days. Now you finally got it.
I know, but it's still cold out here. Raining, cold. Something I'm still confused about is the expected move. This person writes, is the expected move the at-the-money straddle, or is it the 16 delta call and put? Or is the formula you guys suggest where you take the stock price times volatility times the square root of the days to expiration divided by 365?
Yes, to all of the above. I mean it's an approximate number. It's not an absolute. Matter of fact, if you look at an expected move and volatility were to jump, let's go real, like a big number, whatever the case may be, 10, 15, 20%, that expected move is going to jump too, even with the stock price not moving. So yes to all of those things. It's just easy to look on the right-hand side of the platform and go with our formula, or anybody else's formula for that matter.
Yeah, Tasty uses a little bit more of a mathematical model. We on the platform, we take 60% of the front month straddle. We take 30% of the nearest out of the money strangle. We take 10% of the next nearest out of the money strangle. We add them all together, divide by 3, and essentially we smooth out the skew.
I mean, I know what they're looking for. They're trying to get outside the expected range so they don't get, touched on anything. But just remember something. If you sell a 20 delta option, you got a 40% chance of a touch.
Yeah. But if you want to use the at the money straddle, you can do that too. Mm-hmm. If it's the same day, like if it's a daily, that's the at the money straddle is gonna be pretty good. But if you have like a week to go, it's like you take off, you only take 80% of the at the money straddle, and every day you move it like 5%. So like it's like 80% with 5 days to go, 85% with 4 days, it's 90% with 3 days, 95% with 2 days, and then with 1 day, it's basically the straddle. That's another way to do it. When we were on the trading floor, that's how we used to do it. But you want to use a 16 delta call and put, go ahead. You want to use a formula, we do it all for you on Tasty, and we have kind of, I think, the cleanest and best formula out there for retail investors. It's built into the platform. Let's go to the next slide. And it's all over the platform for every single expiration, everything. I only trade a handful of stocks. I've been trading them for a long time, and I believe I have a good handle on how they trade. Is it okay to only trade a small group of stocks, or am I doing myself a disservice?
I don't know if you're doing yourself a disservice. I mean, you won't be quite as P&L curve won't be quite as steady as maybe you want because you might be too concentrated. But you know what? I think if you're comfortable with a smaller set, then that'll make you successful because you'll be comfortable. You have to be comfortable to do anything, especially in trading. So I don't have a problem with it.
Yeah, I feel the same way. I don't have an issue with this. I mean, our research shows that you should not. In a perfect world, you've got to be pretty product indifferent, and you should go wherever there's opportunity. So in a perfect world, you definitely want to think about things, I think, on a much broader scale. But if it makes you comfortable because you feel confident in a small group of stocks, or you feel confident in a small group of underlyings, sure, go for it. I mean, you're not, that's not necessarily doing yourself a disservice, because if it makes you feel comfortable, how could it be a disservice?
Yep.
I mean, but statistically, it's better to have a broader range, but sure.
But it's good and better, right? I mean,
yeah, do whatever you want. Let's go next slide. So we know how to protect from tail risk. We did a segment on this yesterday. But what's the optimal playbook for taking advantage of it when it shows up? How do we turn the loss we have from the tail end event into an opportunity to really make an entire year's earnings? It's a little bit of a stretch.
I think they're saying that they took a larger than expected loss.
Yeah, they did. That's what they're saying.
That's how do I get back? How do I get back? And it is daunting when you're looking at it like that, and that's why maybe this is the time when denial comes into play. And I think you got to kind of throw out, because the stock market's going to throw out your past performance and everything else that you've done, and kind of go back to the mechanics and the focus. So I would say, just go back. If you've ramped up your size, you're going to have to probably go back to your size, get more confident, like the last emailer that put in there. Stay a little bit more focused on probability of success, trying to play a little bit of reversion to the mean, and maybe even in the stock price and volatility, but stick to the liquid products. I mean, I think you go back to your playlist of when you started trading, trying to avoid this.
One of the most difficult things to do in trading is when you have a position on and it goes against you in a big way because of tail risk, and you're stuck because you're like, if I had no position on, I'd be putting a new position on here. But because I already have this position on, I don't want to risk losing any more money.
Sure.
So I'm kind of stuck. I'm not sure if I should take my loss, if I should hold on to it, or if I should, do more, whatever. Most of the time, we don't do more. Even if we have no position on and we would open a position, great.
Mm-hmm.
If we have an existing position on and we would still open a position there, then we'll hold it. But the challenging thing is, forget about making an entire year's earnings or turning it into an opportunity. It's an opportunity if you keep the position on. But the one thing I don't want to see you do is add to the position. Like, that's the only way you can make it worse, is by adding to it.
Yep.
Is it the worst play in the world to hold on to it?
I mean, time will tell.
Yeah,
I mean that's really.
I can't answer that question.
Yeah, you can.
Don't add to it.
I wouldn't answer it. You can add delta to it, like without adding buying power to it. Like if you were more of like an out of the money put, in the 15-20 range, you go to the 30 to 50 range. I mean,
you could, but
keep your contract
when you've suffered a catastrophic loss, it's very hard to add to the position.
Horrible. Yeah. I mean, I lost it all 3 months into my trading career. Going all the way back to 83 on no fault of mine. It was an out trade. Maybe it was my fault, but I mean, it was an out trade. And that was a soul searching day. I mean, but you know what? You go back to what brought you there. I mean, you got to go back to the well. It's the only thing you know.
Why don't you just ask your parents for more money? Let's go to the next slide.
I did actually ask my parents for more money, Thomas, and then I didn't talk to my father for 3 years after that because it took me 3 years to save $5,000. And when I started trading, he called me and said, "Son, I have $50,000." Actually, he said, "I have 50 dimes. Can you take it and run the money for me a little bit?" And I said, "Dad, you have $50,000, and it took me 3 years to save $5,000, and you're asking me what I can do for you? Don't ever call me again." And we didn't speak for 3 years. So no, I couldn't call my dad.
Hold it. Go back.
Mm-hmm.
All right, I can't see the questions.
I can read it for you. There you go.
There it is. Okay. All else being equal, how would taking profits at 25% or at 21 DTE more frequently on the short out-of-the-money strangles compare with waiting to take profits at 50%? How might that affect your overall volatility of P&L?
What is this question from Josh? What is this in English? What is this question here?
I have to translate sometimes, but all else being equal, how would taking profits at 25% or at 21 days more frequently on a short out-of-the-money strangles compare with waiting to take profits at 50%?
So they're saying taking quicker profits rather than staying.
Yes, they're taking quicker profits.
You know what? I don't know, to be honest with you, but I would have to guess from a lot of the research that we've done, it would probably come out to be 6 of one, half dozen of another. Maybe your P&L swings would be a lot bigger waiting for 50%. Because I think there's times when you get to that.
Yeah, I mean, your P&L swings are going to be much lower.
When the end, years later, you might be in the same place, right?
Yeah, but your P&L swings will be lower if you manage earlier, 25% for sure. Mm-hmm. And, I mean, we have no issue managing at 25%. Yeah, right. But we really manage at 21 DTE, not the 50%, but still. And the reason we do that is because we really don't remember where 50% is because we make all these adjustments. It's hard to tell.
Oh, sounds enough. Are you trying to pump one of your segments here?
No, I'm not.
This is managing winners and early management. Are you trying to tell people here that if they search on the tastylive site, managing winners and early management, that this would pop up and answer their question with more detail?
What our team did was they found a segment we did on exactly this topic. And if you search on the tastylive site, if you're curious, it's called Managing Winners and Early Management. It covers this exact topic. It's in the archives. Just go to the search bar, type in Managing Winners and Early Management. You'll get it. Let's go to the next slide. Are there certain strategies that work better in futures or stocks? Along the same lines, are there any strategies that you would never use in futures or never use in stocks?
Kind of a trick question. As a blanket statement, I would say you can use all the strategies and everything with an asterisk. In futures trading, you tried to get me on this, Sosnoff, because I don't see these questions ahead of time, and you were just seeing if I was on my A game today, and I'm on my A game. In futures, a lot of times there will be 2 different months represented, which would make a calendar spread or a diagonal spread not a strategy I would use in futures or futures options.
Okay. That's something. Are there certain strategies that work better for futures or better for stocks? And I think what Tony's saying is sometimes or along the same lines, are there any strategies that you would never use in futures? And I think what he's saying here is if you're a calendar spread person, You have to be careful in futures because you might be trading two different underlyings.
Yeah, I'm just showing you the bonds here. It's not a great example, but the bond that we're trading is 116.27. The roll, or if you were going to do a calendar spread, you're actually buying this bond that's trading 116.14 and selling this one at 116.27. There's no embedded edge there, but you're trading two different products, and they can actually move independently.
So you want to be careful with some of the futures calendar spreads. I think also there are any strategies you never use there are only strategies that we would never use in stocks or indexes is we would never buy a calendar spread in the VIX.
Mm-hmm.
And the only thing I can think of, that's it. And I should say one more thing. We also, when it comes to trading stocks, we don't trade things that are in play. So if there's a stock that's a takeover stock, or there's like a stock that's like, if it's some kind of biotech stock that has some news coming out, anything with volatility is over 200 or 300, that kind of thing, that's not a relatively normal stock. So deal stocks and biotech stocks that are in play waiting for an FDA announcement or something, we don't trade that kind of stuff. Or a stock that's already announced a deal, or calendar spreads in the VIX and futures, and that's about it.
Let's take a quick 90-second break. Come back. When we come back, we got trades.
We have one more question.
Oh, I'm so sorry.
It's okay.
I'm so anxious for trades to the research team, and I want to see my man.
After a sell-off like the one we had recently, is there a way of knowing if it's safe to get back in the water? Are there any tells the market offers that you look for before feeling confident that the worst of volatility is behind us?
No, there isn't. I wish there was. I'd ring the bell for you. I'd go to the highest mountain and yell for you because it would make me look like a genius. So, no, there isn't. I mean, all we have is price and price extremes with volatility, and you can have preferred setups in strategies, bullish, bearish, or neutral, but there's no way of knowing. Safe is a relative term. A bull over the last couple of weeks would have said it was so safe 2 weeks ago. A bear a month ago would have said it was so safe to get in the market. Looking back in hindsight, there's no way of knowing ahead of time.
I mean, going back to the worst of the sell-off when we got under 5,000, we were 4,900 a couple times and 4,800 once. When that's happening, there's absolutely no way in hell you would know.
No, but you traded price. You were buying.
I was buying stuff because I thought we got ridiculously cheap.
Price. You were trading price.
But there's no way of knowing. Like, is it safe to get back in? I don't know.
Well, you know what you knew? You knew it was better than the day before.
And
that you knew.
Yeah. Like I've told this story before. I mean, I started buying NVIDIA at 106, then 96, then 86.
Sure. So it all goes down to those small relative to
at all of those prices. I thought it was safe.
Mm-hmm.
So there's no way. Are there any market tells? Well, the market tell for me is you can get to a point where you feel like it's price extreme based on volatility. When the bonds had a volatility of 150, I felt we were at a bottom. I mean, it took an extra day, but we were at a bottom.
I felt you were closer to the bottom than you were the top, right? I mean,
yeah. I mean, there was a time when we were selling, I thought Tesla was near a bottom when the volatility ranked there got to 150.
Mm-hmm.
The bonds the same thing. We were trading. I thought gold made a top when the volatility in there got to 120.
Yep.
The IV rank.
Yep.
So the answer is we use volatility for that a little bit, but it's not perfect. It could be off by a couple of days.
Let's take a quick 90-second break now and bring in the research team. That's right. Trades to the research team next. We'll be back in 90 seconds. Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Oh, yeah. Tasty Nation, good morning.
Tomas, we are back, my friend. So enough out of you. Treats and the research team. Who is our first researcher? Jaws himself, shooting from strength, Sosnov. Big shark himself. I mean, oh, what's up, brother?
You're so happy the name got changed too.
I am so happy about it. I am. You deserve it. You deserve it. You're a good egg.
Good egg.
What month? What are you doing here? What month is this?
Earnings plate today.
Is it today?
Yeah, today.
So he's doing the 1 day options.
The 1 day.
Oh.
This is my first one of these. I've actually never really done one of these before. So.
Oh, you're gonna die.
Yeah. So we'll see.
This is.
I thought with all the earnings this week, might as well do one of these.
How wide is this?
So it's
$10 wide.
$10. No, $10 on the puts
$5.
and $5 on the calls. See, we're just breaking all the rules today.
What is the expected move in Apple?
$9.
$9, and it's down about $3 right now, so it's around 209. So
perfect time to get in if you have a little bit of bullish bias to you.
So you want to sell the
defined risk. He's changing his strategy because it's.
I actually was going to do Amazon, but that was $5 up or something, so I switched it.
Okay, so I like the thought process at least. I don't care about the trade.
AAPL.
You made it a smaller trade by using defined risk.
Exactly.
You skewed it by going one side wider than the other. I like it.
Snapple.
Probability trade, probably, yeah.
Snapple. Well,
earnings are a little.
I have nothing in the front month. Let's see. You're doing the 1 day.
Yeah, 1 day. Mm-hmm.
All right. So what? Give me the strikes.
200 and 190 on the puts, and
200 puts. They're $1.
Well, the stock's down $3, so they'll be closer to $1.20 or 30.
It'll be $1.30.
Yeah. And then 217.
It's too small for Sadnov. He got to do it. But you know,
so you're doing the 200.
It is a 20ish.
So do the strangle.
You're doing the 200 190. It doesn't make any sense.
Yeah, 200 190 and 217.5, 222.5.
You're really getting a lot of the credit from the call side here.
217.5. What?
And 222.5. $10 on the puts and $5 wide on the
I don't like your strike selection here. Are
Where
you
do you-
bullish or bearish on here? Where's your meter? What are you doing?
bullish. Yeah.
You're bullish.
Where do you think you're going to get filled on this? With the stock down this much, it's not going to trade. How do you get 228?
No, it's not going to be 228 with the stock. It's like it'd be 209. So
To what?
I'm saying 209. Like it's around $3 down or something, right? So
Right. I think this spread's going to trade probably 150, 160. Let's see. I'll tell you right now.
See, I think you got to be. I think you got to be closer.
A little bit
money
closer.
on this one, Sadnov. If you're going to do a 5.
I think this spread trades 155, 160.
I think
so
you
move
gotta-
the deltas up. I was putting it around the 20 delta just to
Yeah.
try to get something.
I think you actually got to get closer to at the money with your put spread and collect more like $4. If you do a $10 wide one and a $2 and a $5 wide call spread, try to get closer to $4. It's more of a 50-50-ish shot, but you basically have no risk to the upside, minimal risk to the upside. You're never going to get $5 for this, which would be a kind of a classic way of doing it. A guy like you could do a Jade Lizard. I know you didn't want to spend and risk all of Tom's money, and that's because you're a conscientious good egg. But Saznov, you can do a Jade Lizard.
Jade Lizard, Strangle.
I got to figure out when it opens what I want to do.
You could do a covered strangle in here with your amount of.
No, I can move the puts. I didn't know exactly where it was going to be because I didn't know where it was going to open. But
I'm not faulting.
I have a lot of Apple positions on already, just so you know.
You're still going to get a golf invite if we golf over the weekend. You're
I'm
okay.
not defending myself against you, Tony. I'm defending myself against Tom. Okay.
Nobody defends himself against me. I'm like a nobody here. I'm like a piece of wallpaper.
No, that's not what I mean. Okay.
That's all right. That's all right. Now you're not coming. Who's our next researcher? Talker, voice for radio, face for video. That's right, it's Gad.
He's checking himself.
You got the same.
The same.
You are such a suck up. I mean, it's great for job security. I know what's happening. I mean, I appreciate it. I love it. I love it. And you got a white shirt underneath, just like him. I mean, you class it up with a tie because that's the guy you are.
I can't wear a white shirt.
You can't get a shirt that fits around your neck to button. That's why.
Why? You have like a huge neck.
Yeah. I mean, do you have eyes? I mean, yeah.
I have a lot of huge things.
Huge head.
What else?
A lot of them. Go ahead. What do you got for us, Gad? Short iron condor.
Short iron condor. So I got a
diamonds. Oh, how are the markets in the diamonds?
Not good. I've not traded them in a while, though. To be fair with you.
Yep, I have not either.
It's volatile right now. So
diamonds.
Yep.
Man, it's been a while since I traded the diamonds.
Going into June here, right? I'm going to assume, June 2025. Just like it's
all right, what are your strikes?
So 285, 385, 375 for puts.
June.
Diamonds have horrible markets.
Yeah, they are horrible. I tried last night and I was like, so hard. But
what happened to this product?
Yeah.
385, 3 what?
375. Yeah, sure. And 425, 435. It's 10.
425?
Yeah, 435. It's Q on cost.
So, yeah, you did it about delta neutral, right? Actually, we're going to be up. Yeah. What price do you think about? 4? Oh.
406.
You go in higher and you adjust lower.
Yeah, I think so too. I think you got to go in higher here and see where this thing opens. I don't know how good it is. I don't know how tradable these are. Let's see.
Okay. Yeah, well, I saw the IVR was higher a little bit, and I was like, worth it trying.
Yeah, the IVR is okay.
Yep.
All right, I routed it. Let's see what happens.
Okay, great.
I'm looking to get a little short this morning anyway, so it's fine.
Okay, great. Okay.
All right, I got to let you go. Short and sweet. Sounded good. Looked good.
Thank
you. Know what? If you look good, you trade good.
Yeah, thank
Who's our next researcher? The unassuming Kai with the crazy rock music. What's up, Kai?
Not much, not much.
Everything good?
Good. Everything.
How's your fountain?
Working.
It's working.
It's working. Yeah, I just got fixed.
Yeah, because I remember last year it wasn't working. We were talking about this.
Yeah, there are a lot of issues.
A lot of issues.
Yeah.
Yeah, and then your fountain has issues.
Yeah.
What do you got for us, Kai?
I got target positions on.
You're
Target. Target.
Target. For some reason, still have IVR above 70% post earnings.
Earnings are May 21st. I mean, they're 20 days away.
That's right. So using June options, but we managed before earnings. We still have 20
days.
20 days. Exactly 20 days, yeah.
Even I can do that math. I don't
Right.
You're selling the 80 puts, and what's the call?
80, 115. So pretty much 16 delta on each side. Very close. That's decent premium. $3, more than $3, so your buying power is only less than $1,000. Very nice return. I cannot believe that's from Target.
Oh. See, hold on. I have a position on here already on the one.
I was in Target yesterday. I can report there were people in Target, if that helps.
What do you do there? I
bought containers, like some like containers for my new closet that I built, Kai. I mean, you got to get with the program here.
Have you tried Costco?
Kai, I'm looking for containers.
I'm
not going in for the free food. Like that. I'm just looking for a container. I need like 6 containers. I went to Target.
All right, I put the order in.
How much cheaper are they going to be?
Oh, it's much cheaper, I guess.
You didn't hear me?
Thank God. I don't know. You're talking about containers.
Those ample size ears. How could you not hear me?
Because I don't want to hear. I'm blocking it out. Containers.
I went with variety of Target.
That's true. That's
and
true.
the focus.
That's true, yeah. I'm very simple. I just go to Costco for everything.
How do you deal with the size of everything at Costco?
I just ask my wife, what size do you want?
Smart man. Smart man.
I don't,
Who's our next researcher? He's going to be asked what size he needs at Costco someday. Julia, what's up?
Hi. How are you guys doing?
I'm doing good. Julia, are you size queen of Costco, or do you go for the variety of Target?
Don't answer that. I'm not going to answer. It's okay. It's going to stay a mystery. Have you guys never been to the Container Store?
I could have gone to the Container Store, but I don't want to be accosted by them.
I would never go to the Container Store.
Container Store is great.
I don't care.
I love the Container Store. You don't like it?
No,
great experience.
I do not like the Container Store.
Man, if you're looking for a container, they got them all.
I'm never looking for.
Well, it's called the Container Store.
I don't need a container for anything.
You don't know that you need a container.
I know
the Container Store until you get into the Container Store.
That's
and
so
then
true. You don't even know the things that you can contain until you see the container.
Their whole marketing thing should be just to get you in the door. Matter of fact, they should give away free food or something like that to everybody that comes in there. Because if they get you in,
you're going to buy something.
You will buy something.
If you're going to get me in there, I'm going to
100%
run out the other door.
No way. No way.
I think you would find something.
And if they make it one entrance
they have
in,
a
one
container
entrance
for
out,
that?
you'll be.
There's nothing I need at the container.
You're so you're wrong. Anyway.
Yeah, they do it at
somebody
Kia
who's never
style,
wrong.
one
Julia,
way in,
what's
one
up?
way out. Oh, I'm surviving. How are you?
I'm doing good, hon. Thank you for asking.
This is a cocoon weather. But today I'm looking at, shocker, the Russell, doing a little bit of a different strategy today. It's actually not moving a ton this morning, which is why I was kind of looking at it, but its IV rank is 32, which is nice. So I was looking to throw on some 50-day positions. I was looking around the expected move, so around 16 delta for the short strikes, but I actually scaled my wings with delta instead of dollars, so it's a little bit further out on the put side, so you collect a little bit more. I like kind of go, I know you guys prefer using dollars for your wings, but I kind of like going back and forth, so I decided to show one of the delta ones today. So it's a little bit further out on the put side. It's the 175, 212 short strikes, and then the 168, 217 long strikes. Collects $1.35 in credit for $5.65 in power, buying power. Little baby trade, but seems like a fun one for this morning amidst earnings season.
Yeah, I have a bunch of strangles on already in IWM, so I don't need this Iron Condor because I'm strangled up
Iron
in there.
Condor doesn't need you.
There's some truth to that, but I'm strangled up in there and ready to go.
Cool. Well,
I like it. I'm looking for trades. Every Tuesday and Thursday, that's right. Option Trades Today, my podcast. So maybe I'll do something in IWM. Works for me.
Maybe there's an
I like the IV rank. Good idea.
I like it. It's not moving a ton this morning. Seems like a fun little baby trade.
See that, Sadnoff?
There you go.
Good job. Good job out of you, Julia. Good job out of the whole team. We're going to take a quick 90-second break. Even the S&Ps really haven't moved. They really haven't moved much all night long. They're up 58. NASDAQ up 323. Russell only up $1.60. That's your weakest of the group, with the Dow up 216. In volatility in by 35 cents, Sadnoff. We'll be back in 95 seconds.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. They have air for that. You can. Tom was just picking up his keyboard and banging it on the desk to release the crumbs that are in there. Release the crumbs. They have air that you could spray on. And never mind. Side note, even the S&Ps hanging in there. They haven't really moved much. They're up 58 handles, 56.45, a 1% move. Nasdaq up a little bit more, 325. Russell up significantly less, only up $2, and the Dow up significantly less, half of what the S&Ps are doing on a percentage basis, 221. Volatility in by 40 cents, but still high, so enough elevated at 23.35. I know you have earnings trades to look at from last night. And earnings trades to look at for today. Apple today, Amazon today. Those will be the two big numbers. Yesterday, you had Microsoft and Meta. They're both up around $35.
Yeah, I thought Meta was going to be good. Now it's going to probably be. I think Meta will still be good. Microsoft's going to be a small loser. I think last night's earnings trade is going to be the first time
you get tested on P&L.
Yeah, I think McDonald's will be a winner. Qualcomm will be maybe a scratch. Hood will definitely be a winner. Moderna, maybe, I don't know. Here's the deal. Meta, I sold twice as many puts. Microsoft has sold twice as many puts. You're going to have a lot of put profits.
Yeah, so you don't know.
The problem is I don't know how bad the calls are going to be.
Right, how much that credit's going to help you to the side.
I don't know how much it's going to help me.
And so you stay mechanical. What's the first thing you're going to do? You're going to roll up those puts and probably reduce your put size, right? Like if you had 5 calls versus 10.
I don't know. I'm going to need your help.
I was wondering when Nice Sauce was going to end. 8:28, I got more than I deserve. 7 o'clock to 8:28, I got more than I deserve.
I'm happy for you.
Thank you, Beth. Appreciate it.
It was a nice
I don't
run.
know. I'm going to have to call in the reserves.
I'm telling the audience that might be listening for, maybe one of the few. I got a lot of new viewers, Sad.
Okay, what do you want me? What do you want to say? Which one?
I'm saying if you had a 1x2 call versus put, you're probably going to reduce that put from 2 to 1. Go 1 to 1 and roll up that put. Reduce your delta by 50% or more, and hope the stock goes sideways for a little bit.
Yeah,
maybe even for the day and volatility contract.
I currently have a bid in to buy back my Microsoft strangles. I don't think that's going to work, so I think I'm going to have to take my putties
for both sides. You mean
for both sides?
Yeah.
I'm pretty sure I'm going to have to roll up my puts, but I'm going to give it a couple seconds here.
So what price do you go in? How do you do that? I mean, if you sold something at $4, you just go in at 50 cents, 80 cents, $1.20, or whatever you want to do, right?
I have to figure out what strike. So Microsoft's trading, because I'm getting really bearish up here at these numbers. So Microsoft's trading at 431 right now. I don't know. I think I put MSFT
here.
I think it's a little too high. I think I buy some stock around 425.
Oh, do you have is there a memo? Is it going to go down by $6? I mean, it might. It's inside the.
I don't know. Do you know?
I don't know. I don't have any clue.
Neither do I.
I'm asking you. How do you know? Where'd you pick that number out from?
I just picked it out of my rear end.
Okay, good.
Yeah. I'm short the 440s in June. I got to sell, I think, the 420s. I don't know, puts. 415s.
Well, who cares? You're going to find out right now, Sadnov, what you're going to do. Let's look at what's...
Ruh-roh.
Let's look at the Bucker, Sadnov. Lilly had earnings last night. That stock is down $55. That stock moves around. It's always on a net change basis, one of the highest. It's really kind of funny because it only has a volatility of around 40 or so. Just heard some dings. You got filled in Hood, it looks like. Netflix down $12. Qualcomm down $11. Costco down almost $8. Apple, which has earnings after the market closes today, down $2. JP Morgan down a couple of bucks. And some gold products with gold down $89 and change are down too. On the upside, Sadnov, significantly more. Microsoft up 40. Meta.
Microsoft's going to be a big loser here.
Meta, well, watch the markets too. They seem to be
big loser. Let's see Meta
opening. Meta up almost 40.
Meta's going to be a winner.
Reddit up $9. TSM up $6. Amazon up $5 for earnings. Sosnoff on news that Veneta buys 30-cent year backings through Amazon. Nvidia up $4.
Yes. So we're going to
Talk to me, Goose.
Talk to me. We're going to buy back these puts in Microsoft, and we're going to have to find a put to sell. I don't know. I don't have a good put to sell either.
Meta, you just bought back some puts for a nickel, it looks like. Got a partial.
That's good. That's a good start.
It's a good start.
Markets are awfully wide in Microsoft.
Yeah, that's what I was telling you a moment ago when you said, it's not going to be a winner or anything like that. Take a look at what Microsoft markets look like here. You're in June, correct?
I'm in June.
Yeah, 380, 460. 80 cents wide, over $1 wide.
Yeah. Now Microsoft ain't going to be good.
Microsoft high was 436.75. It's 434.92. As low as 431. Never got to your number.
Yeah, I know. I never got to my number. That
I know you know. I'm just letting you know.
I'm pretty sure about that. Let's see. Let's see Meta for a second.
Metaverse. Let's take a look at it. Meta up $32 now, Sadnop. That's got to help a little bit more.
No, Meta's good.
Yeah, Meta's low is 579. It's 581. Its high is 592, about $12 higher than where it is right now. So it opened on its high, Sadnop. Oops. There we go. I don't know what happened. Went lower.
Market's still a little wide in Meta.
It is almost 3 minutes after the opening. When we were making markets back in the day, it would be 30 minutes before the markets tightened up. So give them a break. Where are you going to price a $580 stock, 50-cent wide markets?
Yeah, I know. Yeah, I'm trying to just give it all a break. But easier said than done. Meta. I don't know. They're not feeling anything in there right now.
No.
But the stock's, I guess the stock's pretty good. All right. Any ideas? Microsoft. Microsoft's a tough one. Tough one for the good kids today. Did not work.
Meta buying back some puts at 48 cents, it looks like.
Meta, yeah. We're just taking profits in Meta. Meta actually worked out quite well. Meta worked out quite well, but the other ones did not. Microsoft did not. And sometimes Microsoft can.
Sometimes they test you, Sadnov. Sometimes they test you. Even the S&P is up 48, Sadnov, off of their highs of 62 down to 33. They're about 30 some odd handles off of their highs. Volatility only down 15 cents now, Sadnov. Are you going to chase them lower or wait for them to rally before you sell something?
You know what? It's a damn good question. I don't know. What would you do? What would a new subscriber do? I kind of want to get out of my Meta stuff.
I would probably look to sell vertical spreads if I was going to do something like you have in SPY. It seems to be a better play here. Probably sell them in the hole here and then sell them higher. For fear I would miss.
Qualcomm looks like it's a small loser. McDonald's, you would think this thing would be a winner, but it's...
How are the markets in McDonald's? Let's take a look. McDonald's down $4 and change. June markets are not good, Saz. 365, 675. Watch your pricing in McDonald's.
Markets are horrible in McDonald's.
That's correct.
Yep, I see that. Markets are...
So do you notice a little pattern here? It didn't do as well. Really wasn't too far outside the expected move, but the markets are horrible on entry and now on exit. I think it's more of the markets here.
Where?
And I think it's more of the markets in these products than the position itself that you put on.
I agree.
I think you're going to have to wait.
All right, so let's take a look and see what the final totals look like here. Let's go through the earnings plays.
Sure.
First one is Moderna.
mRNA. It was down around $2. What's it doing right now?
It's down around
$1.72.
It's down around $2. We have not taken our position off yet. I'm going to take my position off in Moderna right now. I'm going to call this position a scratch to a small winner. Moderna.
Yeah, scratch to a small winner.
Yep. As a small winner. What's the next one? Moderna. Next one, Meta. Meta. We're out. Big winner.
Thank you, Meta.
Thank you, Meta, for once. McDonald's. We are not filled yet. I think it's going to be a big winner, but I have no idea because
It's only down $2 now. So, it's
the markets stink.
It's off its lows of 311, off of its highs of 37. Well, it's on its highs right now, 317.
Yeah, so I think McDonald's is going to be a winner, but I'm trying to get out of it, and there's not much here. I didn't realize how bad McDonald's is to trade. Mm-hmm. Did you?
No.
I had no idea it's this bad. Okay, so I'm working McDonald's, but it sucks. I'll leave that in. Filled in McDonald's. McDonald's, nice winner. What's the next one? Meta, McDonald's, Moderna, all winners. What else was it?
Hood, you closed it already.
Hood.
Qualcomm?
Nice winner, small winner. Hood was up a couple bucks, now it's down.
Mm-hmm.
Qualcomm. Loser.
Yeah, right. Hood is down $1.50.
Qualcomm is a loser, and we have to do something against our position in there. We sold some 115 puts in June. They're a
Qualcomm down $12. What's up with that?
That's a loser. And then what else is there?
I think that's the only ones that you had. Moderna, McDonald's, Qualcomm, Hood, Meta, Microsoft.
And then the final one is Microsoft, and that's a big loser.
Microsoft markets tighten up yet?
Microsoft markets
up $38. It's had a range from 436 to 430. It's 433. It's right in the middle of its range. June markets have tightened up, so now they're 20 cents, 30 cents.
Yep. So Microsoft turns out to be a big loser and wipes out all the other winners.
Hate it when that happens.
Me too. Microsoft turns out to be a net, takes out all the other winners.
You have a Microsoft position still on now?
Yeah, I'm short of June Strangle.
June Strangle? Go ahead, give me numbers.
2040.
420, 440?
Yep.
Ooh, tight one for you.
I don't like it.
All right, well, hang out for just a quick second to show some intestinal fortitude.
The only other problem child we have today is gold. I guess it's not a problem child because we're making money in gold. I take that back.
Gold is a problem because you're making money in it? Is that the problem?
It's not a problem.
You usually lose money in gold?
In GLD, we're losing. In everything else, we're winning. Whatever. I hate gold. It's my worst. This is one of my worst experiences. Anyway, so that's it. It was pretty much an uninteresting, just a negative
on a P&L. Interesting market though. I mean, the S&P's up 50 and steady all night long.
Yep. And let's see. Trace to the research team. I thought we were going to be filled in Target, but nothing done yet. That's the closest one we have is Target. And looking at all our positions, it's a bad situation in Microsoft and everything else is fine. That's it. That's all I got, Pat.
We're back to where we were in March, Sadnoff, the middle of March when we made that low at that time around 56. And
yeah, this is where I wanted us to get to, 56.50. We're right there.
Yes, sir.
And so we're going to pick up a little short deltas today, and we're going to enjoy. That's what we're going to hope for.
Very good, sir. Let's take a quick 90-second break and come back. We've got more with, hear me out. Victor Jones next. We're back in 90 seconds. tastylive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently over and over? And with Tasty Live, I was able to do that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with this man, Victor Jones, and hear me out.
Oh, yeah. Tom, Tony, Tasty Nation, how you doing? Good morning, gentlemen.
Good morning, Mr. Jones.
Hello, how are you? You guys good? Tony, is he in a good mood? What am I walking into?
Oh, no. You're walking into a good mood. I had to slap him around a little bit, but now he's fine.
I mean, I have one problem child this morning. Microsoft earnings play.
Microsoft?
Yeah, that's the only earnings play. And I played it to the upside. I just didn't play it this far up.
Yeah. Meta with a nice little bounce. It always happens, man.
No, Meta actually just sold off about $10.
Meta's been good to him. Microsoft is not.
Yeah, Meta was good. Microsoft was not.
You also traded Microsoft a little bit larger than you do some of the other things. You got a little.
Before we get to the good stuff, you fading them today? Do you fade them today?
Yeah, I'm fading them today.
So am I. Uh-oh.
I'm gonna. You know what? Then I'm gonna wait
Tony,
48 hours.
You're the tiebreaker.
Okay? If you guys are fading them now, I'm gonna wait 48 hours.
What about bonds? You fading those too?
No,
he's in no man's land there. 116.20 now.
No bonds.
Although you're losing the bond a little bit here, ever so slightly. I don't know. It's mid range. 116.20. Who am I kidding?
Yeah.
All right.
Yeah, I fade them a little bit today, but that's it.
All right, gentlemen.
Yeah, what do we got?
Have you heard about, or do you know of a gentleman named Daniel Kahneman? You heard this name before, gentlemen?
Only from you.
That's not true. It's not true. The author, amongst other things, the author of Thinking Fast and Slow, a beautiful book that changed my mind or opened my mind. I think about the way people make decisions, about a bunch of cognitive biases that are out there, like sort of just flaws in our brains in the way we make decisions, the narrative fallacy. So, getting caught up in an idea and sort of overlooking data just because it has a compelling story. Confirmation bias is a big one, where we seek out information that validates an already existing belief, and we don't necessarily look for contrarian data. Most importantly, we don't even seek it out. We ignore it altogether. It is in that spirit, the spirit of Daniel Kahneman and confirmation bias, in which he offers this idea. Mr. Thomas Sosnoff, he's busy, barely paying attention here. It is in that spirit. It is in that spirit. He offers this idea of mitigating against confirmation bias. And we live in a world of algorithms that are constantly feeding us stuff we already believe. The mitigation technique, or one, is called devil's advocate. Just find somebody with an opposing opinion, or find somebody to present contrarian evidence, contrarian narratives, and see if it changed your mind. And so it is in that spirit we've created this segment, Hear Me Out, just so the crazy people in the comments understand the whole purpose and point of this segment. So I will do this. I want to bring to you two financial influencers that I think it's very unlikely that you've interacted with their work over the last couple of weeks. Okay. And I think it's very likely that they have points of view that are going to run counter to your own. And it is in that spirit that I'd like to see you react to these set of ideas. You cool with this?
I'm totally cool with it. Go ahead.
All right. I'm going to start with my man, Urban Cowboy. This gentleman's name is Michael Cow, brilliant guy, portfolio manager. I'm going to read some of his thoughts. This comes from just a few days ago. As I am Chinese by descent, I get the whole angle of Chinese national pride in being able to eat bitterness and endure hardship. But the math is the math. When your entire economy is based upon keeping the runaway assembly line humming, not because of economic profit or demand, but because there is no other way to keep the masses employed, it really behooves you to find a way to make good with the U.S. consumer that buys 35% of global consumption. Talking with my retailer CEO friends, permanent decisions to relocate supply chains out of China are being made with every day that this tariff war goes on. So yeah, the U.S. is beholden to 4-year election cycles, yada, yada. But China is at risk of secular economic collapse if the tariff war even goes on for 1 year. Trump 2.0 needs to provide a face-saving exit strategy for China, and Xi needs to take it. That was in response to a report that 16 million export jobs in China are at risk. I'll pause for a minute and get your reaction to this idea that it's not that the U.S. side needs the face-saving exit strategy, that it is in fact just as much, if not more, China and Xi.
I mean, I don't know who this guy is. He's not the guy on CNBC, is it?
No, it's a different guy. And he's a really brilliant guy. I really respect his work.
Yeah,
Let me say that first. Before you say whatever you're about to say.
That's your opinion. I have a rule. Maybe it's a little bit in my blood, but you don't negotiate with terrorists. I hate that guy. What he just wrote. I would never. That would not be my approach. I am a compromiser. I'm a negotiator. I like to compromise by nature. But you don't negotiate.
Everybody wants to compromise by nature. And
not everybody.
What I've been saying.
Some people are hardline. I'm not a hardline person, but in this case, because it's a fight that was picked, I wouldn't negotiate if I was. I would not take that approach. If I don't know who this guy is, and I don't know where he's coming from, but if I'm China, first of all, that would not be my advice, and that would not be something I say. I actually really don't like that approach. That's all I have. I'm not going to make it. I'm not going to get into a big others. That would not be how I would approach things.
Fair enough. All right, this one, I thought you'd go harder in the paint on that one. I'm surprised. I'm going to give you this one. I think you'll have more of a reaction on this one. Again, this is in the spirit of Daniel Kahneman's Devil's Advocate.
Yeah.
All right. This is from Brent Johnson of at Santiago Capital.
I don't
History
know him either.
rare.
Just so you know, I do not know who that is.
Fair enough. History. He came on the network on my show once before. It was a really popular episode. Dollar
Brent
Milkshake
Johnson
Theory guy.
Okay.
Brent Johnson.
Okay.
A history rarely gives advance notice. He wrote this April 17th, by the way. History rarely gives advance notice that it is laying down a marker. Empires do not typically hold press conferences when they change the rules, and superpowers do not typically send warnings before they weaponize the system they built. And yet, America is telling the world exactly what is coming. This is not the chaos of decline. This is not the flailing of a fading empire. This is the world's dominant power consolidating its control unapologetically, aggressively, and with the full weight of its economic engine behind it. And the playbook is not subtle. The Trump administration has thrown out the ivory tower frameworks of globalization, free trade, and rules-based cooperation and replaced them with something far older, simpler, and more ruthless. Realpolitik and statecraft backed by financial warfare. Tariffs are not policy details, they are pressure points. Supply chains are not economic abstractions, they are leverage. And foreign governments and multinational CEOs are not partners, they are counterparties in a zero-sum contest for control. Access to the American market, the largest, wealthiest, and most consumption-driven in human history, is no longer free. It will come with a price. But power moves like this do not come without consequences. Global capital is shifting, and markets are trembling. Foreign holders of U.S. assets lulled for decades by predictability and privilege are discovering that what the U.S. giveth, the U.S. can taketh away. This is not about trade policy. It's not about tariffs. It's about power and who has it, who does not, and what happens when the world's largest economy decides to stop pretending otherwise. Those pretty powerful words from a contrarian standpoint to opinions that you had expressed. And I was curious to get your reaction to those words.
Well, that's the first time I've heard that, and it's really well written. I don't really know if he's making a statement. I mean, he's explaining what he sees. I don't know if he's making a statement about, what he thinks. I mean, he's basically just giving you his view of what's happening. I don't really know that there's anything else in there. Like I mean, are you asking me? Is your question?
I would agree. I was just curious to get your reaction on it. I think of all the things that I've read and encountered, and I try to read a lot of the stuff. I know you try to maybe not do that on purpose.
Yeah. I mean, if you're asking me if it's well written, sure, it's well written. I mean,
well, my thought was, I thought he did a really good job of just explaining what is, and I find it's really hard to have conversations about what's happening without sort of the emotional aspect. And I think Brent Johnson is one of these people who's doing a pretty decent job of laying out the incentives and the black and white of what's happening without the emotional overlay.
Yeah, there's a problem with it, Vic, and the problem with that is that there's I mean, in my opinion, there's a problem with it, and the problem is that you're giving significantly more credit for this being an intellectual play than I think it really is. So that's my 2 cents. It doesn't mean anything. It's just my 2 cents. Like I think he's making it sound like it's much more. He's articulating a plan that I don't think was the plan, but he said it really nice. I have no issue with it. I mean, that's what he believes. I think it was more of a hodgepodge of ideas thrown together, and not nearly as well thought out. But listen, I understand
that might be the case. I mean,
it might be. Yeah, I have no idea.
Knows? I mean,
I like what he wrote in the sense that he explained what's happening, but I think he gave more credit to the people behind
than you would
this
have given, sure,
than is deserved.
Fair enough. You know, I thought you were going to get real charged up on this one, and you were super, super moderate. And it was like, I love it. By the way,
what did you think?
That
I have a question.
He's come over to the bad side a little bit.
What did you think I was going to get charged up on? I'm just curious what you think I was going to get charged up on.
I think both takes. I thought you'd be supercharged on the first one.
Well, the first one is bothersome. The first one's bothersome because I am a you don't negotiate with terrorist person, and you don't negotiate with bullies. On the second one, listen, I just think you gave him more credit, and I don't think that was actually what happened, but it's okay.
Do you think let me ask you this question. Do you think there's a possibility, what's the best case scenario you see unfolding over the next 6 to 12 months? What's the best case scenario you see?
That it's good and better like other things in life, and sometimes you don't get to the path that you don't get to the end result of taking the path that you wanted to take or you think is preferred, but we get there. You said it as the U.S. is too big to fail kind of thing. So that's the best case scenario, in my opinion, Victor. And I think that's what I've been trying to say all along.
I mean, if you want the ultimate best case scenario, it's that we invoke the 25th Amendment. If you want,
is that what you wanted, Vic? Is that what you want? You see, I had him moderate. I had him right in the middle there. Well, that's well said. It's not the way I would say it or the way I view it, but that was nicely said.
Best case scenario. Had to do it. The absolute best case scenario is we just invoke the 25th Amendment. The second base.
I knew if I dug deep enough, you'd give me a jewel here, Tom.
The second best case scenario is that in the next round of midterm elections, there's more of a balance of power, so that there's some more checks and balances. I think that's important. But the reality is that, just like Tony just said, I've said all along, the U.S. and I had a same discussion with Dylan yesterday. The U.S. is too big to fail, and I really believe that. And regardless of policy, unless somebody does something, there is the potential for something so ridiculous, so stupid that we don't recover from it. But that would be more like, just to give you an example, like an idiot nuclear, decision or something like that. If it comes down to tariffs or economic policy, whether it's interest rates or taxes or tariffs or any of that kind of stuff, I believe that the market will find an acceptable level, and everything will continue to grow in a positive fashion. Meaning that the market will settle in with whatever it believes. Like, let's just say this is the level right here, 5,600, just as an example. I think that barring anything catastrophic, which would be something that nobody could predict. But if you take a look at what we have right now, I think that you've seen the worst and you probably haven't seen the best. So I think the market will absorb everything, because it always does. It adjusts pricing, it resets targets, and that's it. And I think, we'll be range bound for a while until people get comfortable with it. As soon as you see volatility start to contract at a more significant pace, I think we're going to be, I think it'll be, not going to say clear sailing, but I think clearer. Most of the
now you're becoming a volatility trader. I like it.
Most of the most of the danger will be gone. There will still be social and political danger. There'll still be things that bother lots of people, but the reality is,
as there are every day.
Yeah. But I think the reality of it is that we won't be having these same conversations, and things will normalize somewhat. And I think, I think
time heals all wounds.
I think that's what's going to happen.
I think that's how everybody feels at 5,600.
Yeah.
I think this is going to be a long, drawn-out negotiation, and I think we could just as easily be having the same types of conversations we had at 4,900. And we had this conversation on my show yesterday. At moments when the distribution widens out, it feels like people forget that the distribution's widened, but that doesn't mean you go to the end of the distribution. And I feel like 3 weeks ago, I saw a lot of people going to the very end of the left side of the tail and telling stories, equivalent to the 1930s and the Great Depression. And look, I'm not saying we can't trip a credit event. I'm just saying that it probably behooves a lot of people that are playing 30 and 45-day cycles to remember that there's a lot of room inside that distribution curve. And that the narrative fallacy brings us, it's very compelling to go to the straight to the left side of the tail or the right side of the tail in Bitcoin's case, but there's a lot of room inside the distribution.
I've been having traded and lived through a lot of crises. I don't feel the same way right now that I felt in 2008, 2009. I don't feel the same way that I felt in 1987 or 89, or different points in
You're also a different person too.
Yeah, I know, I understand, but I'm just saying I don't, fear is fear.
But 40 years or 30 years of maturity and being in a different place in life, looking at things
I got that
differently than being a young.
But I'm just saying, Vic, I just feel like we're I liked what you brought to the table today as a discussion, because I think those are interesting points of view. But they're completely random to me.
Next week, can we talk about Bill Belichick, please?
Yeah.
You think there's some
two old guys like Tom and I would like to talk about Bill Belichick, please, if we could?
I don't know that
know your guys' opinion on that.
You're going to get in more trouble.
There's no real control. I'm not playing devil's advocate on that one. I don't think you're going to.
No, I'm one and done. I can't afford to lose half again. It took me over 10 years to get back from that debacle. So God gave me two eyes, and that's what I'm going to do. I'm just going to use my eyes. You on the other hand over there.
Explain how life works.
And Victor over there. Maybe you guys might,
Explain how life works. You can't win in that case.
That's
can't win.
True.
Can't win.
All right, gents. Appreciate
Good job, Victor. Good job. And good job on the E-mini S&Ps holding steady. They're up 56, volatility in by 35 cents. So I saw you sold did I see you sell a couple call spreads here? No, you didn't sell those.
No, I didn't do anything.
You haven't done anything yet. Just hanging steady. How come?
I'm keeping a few short deltas because I think they might go down later. And I've adjusted my Microsoft position and it sucked up. It took my loss. And what do you do next in there?
I don't think you have to make it Microsoft. I think you take your money and play somewhere else. The markets aren't.
I agree. I don't think Microsoft's the place to be.
Yep. Let's take a quick 90-second break and come back. We got more. Why don't you wait for option trades today, every Tuesday and Thursday? Lucky if you today's Thursday, follow my trade at noon. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure, Saad. The moment you've been waiting for. Back in 90 seconds. Thanks, Vic.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. right where you need it. Tasty Trade. Download today.
All right, Tony, we have a big week of earnings coming ahead in a time of high volatility and uncertainty. How are you choosing to attack this week of earnings, and do you think that there's anything that traders should be aware of?
I think earnings become less important when you have volatility in the overall market, because sometimes a lot easier to find a higher probability trade in a longer dated time frame than you would for earnings. But if you are going to trade earnings, I think you have to trade it much shorter term and probably directional. And with this implied volatility being so high, it's going to be even higher in these earnings trades, which means that all options are going to be priced a lot more fatter. If they're fatter and you're selling them, then you can get a higher probability of success and be further out. So I think you have to trade them directional, and I think you have to trade them shorter term for earnings themselves if you're using options.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Hanging steady here on the market before we get to this market measure sponsored by the CBOE.
Pretty boring, huh?
Pretty boring. Even the S&P is up 54 and NASDAQ up 250 and change. Just sold off by about 100 handles. Volatility hanging in there, down 30 cents. Russell actually caught a bid. So I don't know if you remember, the Russell was flirting with unchanged.
Oh, yeah.
It's up $17, more in line with the rest of the market. And the Dow is up 260 and change. Bonds are in by 12 ticks.
You're right. The Russell caught a bid.
Gold hasn't moved.
I'm Tom Sosnoff. He's Tony Batiste. This is Tasty Live. SPOO's up 55 today. That's the S&Ps. We call them SPOOs. You know why they call them SPOOs?
Because we want to make things difficult. Because the symbol used to be SPU.
Symbol's still SPU in September.
/ES.
What?
It's /ES. That's why they're called E-mini S&Ps. And not SPOOs.
So then why do they call them SPOOs?
The symbol used to be SPU, SPU.
Got it. Okay, now everybody knows.
Why do you think they call them SPOOs?
That's exactly the reason. I just wanted to see if you knew. Testing you.
I appreciate the test. I like the test.
Tony and I are going to be on the road. First show.
Yes, we are, Sosnoff. I'll be carrying your bags.
I will make sure you're carrying my bags. Well, I don't really have a bag.
I will be carrying your merce.
Yeah, I have a backpack. I can take care of myself. When I travel for one day, do you take a bag if you travel for one day?
No, I'll wear my suit on the plane. You kidding me? What you see is what you get.
In 2025, we have a show. It's called At Work by 11. That means we do it in the morning, and you're at work by 11. If you work, you deadbeat. Buckhead Theater, Atlanta, Georgia, May 30th. Doors open at 8 a.m. Show starts at 9. Looking for tasty traders all over that area. We got people coming down coming in from surrounding states.
Mm-hmm.
We have people from all different parts of Georgia and Alabama coming over there. Looking forward to it. But we'll be at the Buckhead Theater in Atlanta, Georgia. It's the first show we're doing in the U.S. It's the first show Tony and I have done together. It's the first live trading show we've done since we started Tasty in the U.S. We did 5 in the U.K. last year. And we're going to be back after this show in the Buckhead Theater. We're going to be back in the U.K. We had a group stop in yesterday. shout out from London and Milan, and we're actually going to be in London and Milan coming up next. And so after the show in Atlanta, Georgia on May 30th, and plenty of room. Can't wait to see everybody. We're excited about it. It's going to be Tony, myself. We're traveling, Tony, myself, Britt, and then David, who does software demos. And then we've got Craig from the CME and I think Andy from the SIBO coming down. They're going to be our local experts. We're going to have a little fun on stage for about an hour. The whole show is about an hour and a half. And the trading part is about an hour and 15 minutes. We just set it up for about 15 minutes. And we go nonstop. We make as many trades until Tony's... Which finger do you push the button?
My finger bleeds.
Which finger? Oh, your pointer.
Yeah, I'm a pointer finger guy.
Oh, your pointer finger. Do you? And your pointer finger...
mouse, yeah.
Well, your pointer finger's okay, right?
Pointer finger's good. I've been working it out.
I'm going to get it till it bleeds.
I like it.
We're going to try to make as many trades as possible. You're going to keep hearing dings go off. It's all real time. It's all live. It's all real money. And they're all real trades. And we're just going to try to have some fun. We don't care. We're just going to make this really interesting. It's going to be a great show. So we'll be at the Buckhead Theater on May 30th. And then after that...
And I have, you told me I have a non-held order, right? Like if you tell me to do something, I don't actually I can do the opposite, or I can have to do the order.
No.
I have a non-held order, you told me. I can use my own discretion. It was a discretionary order.
The only thing I told you is that if you make a mistake, you have to pay for it yourself.
If I can get the winnings too, I'll be in there too. Yes.
And then after that, we have a show called Back for More. We're going to be back in London. We're going to be at Earth. And it's in Hackney, which is pretty close to Shoreditch, where we were once before, but it's in the Hackney neighborhood. We'll be at Earth in London on June 20th. We love going to London. The fun thing about London is...
I'll be there.
The bat will be there.
That's the fun thing.
Also, it's on triple witching, June expiration, triple witching. We'll be doing this at 6 o'clock at night. And the markets are closed the day before for Juneteenth. So it's like Wednesday to Friday. So it's going to be a free.
So you can see us out in the wild too.
Yeah. So we're really looking forward to it. So we'll be at Earth in London on June 20th, a really cool facility. We'll see you guys all there. Can't wait. And then Tasty comes to Italy. And for the first time, we will be doing a show in Italy. We'll be in Milan.
Be with your Gumata.
Yes, I'll be with my Gumata. And
Dylan Radigan.
That's right. That's right.
You won't be with your work wife, Pat. With your Gumata. Because everybody who goes to Italy on vacation goes with their Gumata. Never take the work wife. Work wife gets London.
Told my wife, I go, I'm going to be with my Gumata, Dylan. She goes, thank God. Let him... he has to deal with you.
Let him take the blunt of it, sure.
Right. So, Tasty comes to Italy. We're going to be at a place called Fabrique. It's supposed to be a really cool facility. It's in Milan. Not sure exactly what neighborhood, but everybody from...
It's going to be a translator there too, I'm told.
Cool. 2 translators.
That's great.
One that's actually really good because he's Italian from Milan, and the other one is from upstate New York who thinks he's an Italian translator. His name is Dylan Radigan, and he might have a limited vocabulary from what we can tell. All the Italians started laughing when I told them Dylan was going to be there to do a little translation. But he's studying hard and he's going to be ready. Anyway, we'll be at Fabrique in Milan, Italy. Myself, Rich, Dylan, whole rest of the crew on Monday, June 23rd. So we'll be in London on the June 20th and then Milan on June 23rd. So Friday night, London, Monday night in Milan. And after that trip, we come back to the U.S. and all summer long and into the fall. Can you bring back the other page, Beth? Perfect. All summer long and into the fall, we are going to then go to Denver, Colorado in July. In August, we'll be in Chicago. In September, we will be in San Francisco and New York City, crisscrossing. This is the Bat and I. Then we'll be back out.
You got me traveling here, Sadno. When I signed up for this, I didn't
Tony,
realize it was
Tony
like this.
Don't
show me all this.
This is not good to show Tony.
September 5th, 19th, October
September
3rd.
5th, you're in San Francisco. Then you got to fly all the way back across the country on September 19th. Then you got to fly all the way back out to LA. Then you got to fly all the way back to Charlotte. It's not good for you.
Yeah, who made this schedule?
Who made this schedule?
I did. No, I don't know. Anyway, that's not good. That's back and forth across the country.
You guys got to make up before then.
And
it's a lot of time together.
That's a lot of time. I'm going to kill him. I think I'm trying to decide where I'm going to kill him. I think because he's going to
say, take me home to my mom in New York, please. If you're going to do it there. Come on.
I'm either going to try to dump the body in Denver or New York City. One of those two. Denver,
New York. By Denver, you're still going to like me.
I don't know.
Denver, you're still going to like me. New York, Los Angeles, you'll be done with me because I know I'll be done with you.
Crisscrossing across the country with you twice. That's a little much for both of us to take.
Wow. I'm actually scared for you.
But I'll be back. I'll be back in, extra leg room while you're up in first class. And when you pass me back your almonds, I'll be happy.
I'm flying private.
For sure.
I can't even be on the same flight. It's not healthy. The whiteboard tour. Then we're going to be...
The whiteboard tour, that's not you. It's not me.
It's not us, but it's going to be Mike, Nick, and Katie, along with Ryan Grace for, I think, 3 of the 4. And those guys are going to be Washington, D.C., Seattle, Washington, Dallas, Texas, and San Diego, California. They're going back and forth across the country as well. June 12th, August 10th.
Yeah, but that's a love fest with that.
October 12th, and November 2nd. Yeah, I think Mike, Nick, and Katie are just going to get married. The 3 of them. I could easily see the 3 of them living together for the rest of their lives.
Yeah, they could be, what was it?
Katie's wedding this summer is going to mess everything up.
I know.
Yeah.
Oh, wait a minute. You got an invite?
What?
You got an invite?
No, I asked not to be invited.
You could just give a gift?
I'm going to the greatest wedding in the world this weekend.
This is the weirdest thing. It's the weirdest thing ever.
It's on Zoom.
Yeah, it's the weirdest thing ever. I don't get it.
Go back, Beth, for 1 second. I'm going to a Zoom wedding. My niece is getting married on Zoom.
I know. I don't get it.
I'll explain afterwards. July 13th, we're going to be in Boston, Massachusetts. On October 10th, Dr. Jim is going to be in Detroit, Michigan. And then December 7th in Tampa, Florida. So Tasty's hitting the road in force this year. And we're excited for...
So sign up now, but you only sign up for a couple right now, right, Saz?
For you and I, you can sign up for all the whiteboard tours, all the crash course tours. For Tony and myself, just Atlanta, London, Milan right now.
And this first come, first serve.
Yes, it is. All right, let's go, Beth. Let's do it. A piece on zero DTs.
Mm-hmm.
What time of the day do you think it's best for zero DTs?
They starting at 8:30 on the bell? Can we go to the first page here?
Yeah, they're starting at 8:30.
They're starting at 8:30, and every half hour after that, I'm going to say best time, obviously, Sosnoff is going to be between 9 and 9:30. It's going to be a tug of war.
Zero DT option markets continue to be extremely active, and they're liquid, giving new opportunities every day. So far, research has found that selling zero DT options right at the market open, for which aggressive profit taking has been quite successful. What happened to traders who missed the market open and still want to sell zero DT? I sold zero DT yesterday. Oh, well, hold on. I did it actually just after the open. I sold it. We were doing what's your assumption? So it must have been before 9 o'clock.
8:40-ish.
8:40, 8:50 in that time frame. What about exiting trades at a specific time? Can we replace our limit orders with setting an alarm, or should we consider doing both? Let's take a look and see what the research team put together here. Next slide, please. Each day we examine selling iron condors. The reason we're doing iron condors is because the SPX. So you're buying the wings. At 8:30, 9, and 10. 30 delta short strikes, wings 30 at 30 past there. Consider closing the trades at 10:30, noon, or without a fixed time. Both paired with 25% profit targets or just based on exit times, all trades were assumed to exercise at mid-price. Okay, so you got the times 8:30, 9, 10. Do you want to make a statement?
I'm going with 9.
Tony's middling it, going with 9.
I said between 9
Closing
and
trades at 10:30, noon, or without a fixed time. Do you want to pick one?
9 to 10:30.
What?
9 to 10:30. Open at 9, close at 10:30.
Okay, let's see.
Pure guess.
Yeah, sure. So if you sold at the open, all right, now we're just going to see how you do here. It's not, unmanaged, you don't do very well, but other than that, it's pretty good.
Yeah.
Close at 10:30 or 25%. You make $29. Close at 10:30.
10:30 looks strong right there, Sadov. I know it's de minimis, $29, $30, $26. Noon balloon is real.
No, but it's a good number because your CVAR is the lowest there.
Mm-hmm.
And your probability of profit's pretty high. But basically, as long as you're inside of noon, sold at the open inside of noon, pretty good, right? Yeah. Pretty good.
Yeah.
Let's go next slide.
Unmanaged is the takeaway there. Don't do that.
Yeah. Well, if you sell at 9, looks like you do a little better.
Oh, look at that.
Look at that.
Manage at 25%, pretty good too. Yeah.
Yep. Looks like across the board. Yeah. And you have a higher win rate. You make.
Now you know why you're taking me out on the road, Sosnoff.
Make a little bit more money.
Like
well,
a little bit more coffee on this whole thing.
It looks pretty good.
Yeah.
9 o'clock.
Notice you did make a guess because you don't.
9 o'clock looks pretty good right here.
I do.
Let's go to the next slide, Beth. 10 o'clock. Oof. Back down. Well, it looks like on a lucky guess, the bat got beak. Looks like 9 o'clock.
Lucky guess. You are such a condescending.
Well, you told me it was a guess.
Man. It was a guess, but
okay,
from our research, I just kind of try to extrapolate out.
So it looks like
it really is because of all the research.
It looks like between 8:30 and 9, with 9 o'clock being the highest win rate, because probably things get to settle down a little bit, and the highest net P&L per trade. But it has also a higher CVAR. You open the trades at 10, you lose less money.
Yep.
But still, the bottom line here was that you make the most money and have the highest probability of profit, win percentage at 9 o'clock.
Mm-hmm.
Let's go to the next slide. Oh, okay. So the takeaways. Based on time management is a promising addition to our 0DTE mechanical arsenal. Closing positions at 10:30, win or lose, resulted in some of the most profitable outcomes we have seen. That's pretty cool research.
Yeah, for sure.
The half-hour trades opened at 10 a.m. and closed at 10:30 didn't generate as much profit as staying until noon, but they avoided the biggest losses while still being profitable, which is appealing in its own right. I agree with that. Pairing this time management with profit target limit orders, even when rarely triggered during a short time window, was generally beneficial for profitability and consistency. Consistency is the most important thing.
Mm-hmm.
Once again, it seems the key to success with 0DT short premium trades is rapid time management. I can't tell you how many times I run into people that send me emails on the internet, all these different places, and they're all like, what is this with you guys, not letting it go to the end of the day? Well, I'm like, that's what the research says time and time again.
Yeah, different.
Yes. And so there we go.
Mm-hmm. Good job. Good job out of you. Good job out of the team. Consistent research out of them. Even the S&P is up 71 cents. Of good, no sale. Volatility down 38 cents. A little bit lower than where it was before. Russell caught a bid. It's up 18. NASDAQ back up 300 and change. Sadnov still about 70 handles off its highs. The EMA S&Ps are making new highs. We'll take a quick 90-second break and come back. We got more Tasty Live, Sadnov. That's right. Really found these messages with, oh joy, your friend and mine, Mr. Scott Sheridan from the Tasty Trade World headquarters. Back in 90 seconds.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Matt, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do? Like, you know,
we have a party.
You have a party?
little party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Avion?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you
like
put him in a tracksuit? Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good. The tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah, like
the
a
disco
card.
ball, I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean,
That's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's the
great.
cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's got the
good.
snowboard, the Chinese takeout, the dumbbell,
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
It was not me. It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and What the? This is Gus did the Batistas. I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals. That's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey?
What's that? Wild turkeys do not fly.
Yeah, Steph. I think you and
Did
me.
you call
I
me
think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think
Scott.
Turkeys
it was
don't
me.
fly. They can get airborne for a second.
I called him a wild turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
he
taking a
sees
hike
wild
in the
turkey.
woods, I've seen wild turkeys fly all over the place.
Mm-hmm.
Get the full scoop by checking out the archives at tastylive.com.
Tomas, we are back, my friend, and you know what that means. Time for a little more Tasty Live. That's right, with this man. Tasty Trade World Headquarters and the newly named Scott Sheridan Studios, Mr. Scott Sheridan.
Okay, first of all, nothing screams rabbit like a biology lesson from you during the break.
You like that? I don't know how to stop it.
Just keep going. That's okay. Nothing even comes close.
You like that?
Yeah.
I try.
I had a good dinner last night. Have you been to?
I was going to say the Six made dinner or something like that. Maybe the chicken
Where?
soup
Six
again.
Six not a big cooker.
I know.
Galit. Have you been to Galit?
Sure.
Okay, they opened a sister restaurant called Yaya right next door.
Yaya?
Yeah. So
What kind of food is it?
same.
It's Chinese food, Sosnoff.
It's the same thing. It's Israeli.
Yeah, I know. But
Great.
it's pretty fancy.
This isn't as fancy as Galit because Galit's a prefix. Whatever.
Is it fancy enough for Tom though?
You'd like it. It's spreads. They good chicken, steak.
It's kind of like
fish.
like
no.
Abba, whatever.
No, it's not. Yeah, no.
I'm getting
not
tired of the whole. I don't want a
Yeah.
spread dinner anymore. I'm getting tired of the Mediterranean.
I had
thing.
the best pastrami I think I've ever had.
So the guy was on the show.
You know.
Yeah, so I was talking to him last night. Not the chef, but the business. Well, I think they're partners. Yes, the business side of it.
Yeah, he came over. Yeah, he talked.
Andre, I don't remember his name.
This is years ago.
Years ago.
Yeah.
He said he was on the show. I thought he said with Christy, but it was with you too.
No, I did the interview with him.
Okay, you did. He said some. He said some pretty blonde. So
We did the interview.
He said a pretty blonde, so I assumed it was Christy, but you were blonde back then.
Oh, I'm going to go with the guy that say it was not Sosnoff and I. He said it was a pretty blonde.
I'll go with you if you want me to.
If he said it was a pretty blonde, it was not Tom and myself. I could go.
Okay.
I'm going to go with him too. I'm going to go with
I did the interview.
Pretty blonde for 100.
You may have done the first interview. Maybe there was a second interview. He's
Anyway.
not mistaken you.
So he's like, yeah, he loved it. He said it was a great experience. He said, tell somebody. He said,
Tell the pretty blonde.
somebody. He said, tell Tom, wink, wink. Tell them I said hello. But anyway, so Galit.
Tell the chick formerly known as Tom.
Exactly. A little bit of history. So he's got two girls, an 8-year-old and a 2 or 3-year-old, or whatever. Galit, the 8-year-old's name is something, but the nickname is Galit. That's where that came from. And then the 2.5-year-old's nickname is Yaya. So they're named after his daughters. But it's good. I would give it a try. And they look like amazing pastries. But I was too full.
I thought that the pastrami I had at Galit.
How was it cooked? Like just pastrami cut up, or what was it?
No, it was like sliced.
No, it was a big hunk of food. They just
For
threw it
Tom,
on the table there. And they gave you a big, like, cleaver.
I don't know if it was like
It was unbelievable. But it's fancy. They have a Michelin star.
Galit.
Yeah.
This is not fancy. So what they did make though, stuffed cabbage, which I'm not big on stuffed cabbage.
Donnie, tell Donnie.
Cabbage.
You like stuffed cabbage?
It's his favorite meal.
Come on.
Whose favorite meal?
Donnie.
But they don't make it anymore because it was too time intensive. But they made it. He brought it out for us. So it was stuffed with like lamb and something
Tell
else.
Donnie. It's important to him.
Really?
It's life changing.
I like stuffed cabbage.
really?
Too.
Yeah. He
Like
goes to
stuffed
Manny's
peppers.
just to get stuffed cabbage.
Really? He's one of us?
He's not one of us.
By osmosis. Like me.
Stuffed cabbage was for anybody that didn't have any money. Like
Yeah.
his parents were
Yeah,
poor.
stuffed
It's
cabbage.
like, stuffed cabbage.
Stuffed peppers.
Yeah.
I like a good stuffed pepper.
Well, you just did it to act like those people, right? I mean,
I don't get the whole
you just like,
You don't
like I hear some of the people that we collect the rent checks from are eating this. Let's have some so we know
I
what
don't
they're
like
eating.
stuffed cabbage that much because I don't really care about cabbage.
I'm not a big cabbage person, but this was very good. I mean, you should try it. Check it out. It's good.
Anyway, Yaya's. Okay.
Yaya.
I didn't even know.
Right next door.
I know, but I'm tired. Are we all tired of the spreads for dinner now?
No, I love the spreads for dinner.
I can't
Tom
stand
likes
it.
the
I'm getting
spreads.
so sick of
I
it.
like the spreads.
You can't keep fooling me with the meal that's.
No.
not a meal, it's
That's
an
not a meal.
appetizer.
That's the appetizer. No. Tony, nice solid half chicken, roasted, delicious.
He doesn't like.
It is-
He has to do things.
Do
himself.
the work. You just
He
like to have
likes
the
it
work
when
done
it's-
for you.
A spread means he has to have, he has to get some kind of a bread.
I get my hands a little dirty.
He's got to put some kind of
You
spread
could
on
do
the bread.
vegetables. We did vegetables and bread. You did so in case you were gluten free.
But he has to do it himself. It's like making a taco. It's very tough.
The missus won't do that for you.
Evidently not. Evidently not.
All right. So fish, everything was good. Everything was very good. So give it.
What's that place by us now that's by Wildfire? What's it called that nobody can get in?
Wildfire is still open.
Yeah, the new sister place next door. What's it called, Beth?
Etta or Ema?
Ema, like
Yeah.
Ema.
Ima and Abba.
That's the guy from the city. He's on the show
What are you
too.
guys new? Come
I
to
know.
the city.
I can't anymore. I can't. I just
It's a
can't.
big deal in the suburbs.
The new place. Ima and Abba have been in the city for like 15 years.
They're out by us now.
Yeah.
They're new by us.
Yeah, that's
See, Beth
usually when
is
they go
willing to
downhill.
come down to the city. Although I do ask, serious question.
Yeah.
Beth, you can jump in on this too. Will either of you consider coming to the city for a dinner, like either by yourselves or to meet people? Because traffic is so bad, I don't even want to go anywhere.
Yeah,
Like,
it's rough.
I know.
right?
It's rough.
Because you don't know. You could get on the highway. It could be an hour and a half to get downtown.
I know. I took
Hour and a
my
half yesterday
it took
getting
my
home.
daughter. I'm not going
can't
to
drive
name
on
names.
Lincoln.
It took
You
my
can't
daughter
drive
who was
on
in the other
Lincoln.
room over there 2 hours to get home the other night. She left at 4. She got
From
home
where?
From here. She got home at 10 to 6. She left at 4.
It was so bad yesterday. The highway is so bad on Ogden. It used to be the left lane was jammed because everybody was trying to get on the highway. The left lane was wide open. Nobody wants to go on the highway because
Take Ashland for the 100th time.
I don't live there. Oh, the 1,000th time. Okay. If you would ever have accepted,
go there anyway.
If you would have ever accepted my invitation to stop by and see my new place, which isn't even that new anymore, you would know.
It's still new.
With the traffic, with
Scott, if you
the
asked,
traffic
I would
consideration.
go. If we were going to dinner, I would go.
Thanks, Beth. I appreciate that. Let's do that. So if you knew that I moved, do I get a full year of this?
I forgot.
So you forgot.
Until you sell your old house, you still live there for me.
It's a sore subject. Can you not bring that up right now?
Why don't you just?
Because it's the 6, okay?
You want me to take my wife out of retirement and have her sell it for you?
It's not the sales part. I got somebody to sell the house. It's not ready to be sold because there's still things.
I have somebody that wants to reserve a chair from you.
Do yourself a favor. Don't fix anything. Don't fix anything. Don't do anything. The new people that come in are going to change it anyway.
That's right.
Don't paint the wall. Don't fix the hole. Don't do anything. Just sell it the way you.
He's right.
Thank you. Just sell it the way it is.
right.
The new people. So many times I've listened to realtors like, this has to be gray. This has to be blue. This has to be purple.
He's
and then I go into my house again.
Wait a
they
minute,
paint
Tony,
it completely
you're
different.
missing this whole thing. He has just said, you're right, you're completely right, you're totally right. He just said that
You say it one more time. I didn't hear you.
He just said it like
It's the first time I've agreed with him.
He just said that like 4 or 5 times. You didn't even
The biggest
move.
ripoff that real estate people do is they tell you, you need to stage this place, you need to paint it, you need to fix all this crap. It's none of it. Just give people credit. Here, take the how much? All right, fine.
100%.
That's my approach. I'm on that bandwagon.
Do it.
Save one chair for somebody I know.
No problem. You can have a chair.
Not me, at least.
I got it, not you. You got the leather chairs in the basement from the 80s.
I got so many chairs. He doesn't want any of my chairs.
What size chair? I'll see what I got.
I don't know.
All right, I'll come up with something.
He said, does Scott have any extra chairs? I go, problem.
Who wants a chair?
Don't worry about it. It's a guy. Tom's got a guy.
He got a guy who needs a chair.
He's got a guy who needs a chair and he's waiting for Scott to sell his place to get a chair.
If you knew the
Or
guy,
die.
if you knew the guy, you'd understand. Okay.
Do I know the guy?
Yeah.
Oh, so if I knew who it was, I'd understand.
Right. We'll explain later. We can't out him right now. It's not Slappy, but we can't out him.
Slappy wants a chair?
No, it's not Slappy.
I wouldn't think so.
No, we can't out him. But I'll
Slappy needs a couch.
So, anyway, how long does it take you to get home in Ashland?
What?
Well, you go in the middle of the day. How long would it take you to get home if it was 4 o'clock? It would take you an hour.
No, on Ashland?
At 4 o'clock.
No. It takes me 40 minutes.
Oh, here it comes.
40 minutes. It's 2.5 miles.
Okay, it's
5 miles.
It's 4 miles, 4.5 miles.
Whatever.
But it's like people
I'm exaggerating.
live in the city and are members of the clubs out and whatever, and they say, yeah, you can make it out there in like 30 minutes. I'm like, it's like 2 hours to get out to those places from the city.
Yeah.
So, right?
Now it is.
Now it is. It's does this ever get better when the road's fixed? Is it?
Yeah, it's being fixed in.
How was traffic when there was no construction?
No traffic.
So it's this bad just because of construction.
Yeah.
Over the winter?
Yeah.
The winter when they opened up all the lanes? Nothing.
They took 6 lanes down to 2.
6? Oh.
6 lanes. 4
because-
local and 2 express. They took it down to 2 local lanes. Express lanes are open, but it's only one way going back out.
And then when it rains, complete game over.
Oh, and if there's an accident?
If there's an accident, forget about it. By the way, you'll appreciate this. I didn't text you. I texted Slappy on Monday because I saw there was a bad accident. I knew you would know that.
How'd you know I would know that?
Because you're in the know.
I was in the know
See,
because my good friend Beth had the wherewithal to text.
See, I actually knew Beth would do that. Beth, shouts out
You
to you.
didn't know anything.
No, I knew, but I knew you
Beth
would know
saved
that.
me. I would
Beth,
not have known.
Shouts out to you because I figured I texted Slappy because I'm like, oh my God, he's going to get to the office at 10.
Slappy could see it from his.
Slappy would get on there and sit there for 4 hours and not get off and go, I didn't know what to do.
He wouldn't know.
He wouldn't know.
Sitting there.
So I texted
He
him.
also wouldn't know he was there 4 hours. Time would go by so quickly.
So I texted him and I said, bad accident, don't get on the highway. He's like, really appreciate it. Butchie had just texted him too. So he said, really appreciate it. I said, well, I only did it because I needed you at work and I knew you'd show up around noon. You'd just be sitting there going, I don't know. There was an accident. What am I supposed to do? Because he knows one way to get to work.
No, he would just sit there, smoke a cigarette, and just sit there.
Cigarette?
What?
Cigarette?
Couple cigarettes.
Pack of cigarettes, yeah.
Smoke a cigarette and get to work 4 hours
See,
later.
but then I explained to him, you either use Waze or Google or something, to figure out where you're going. See, I knew Beth would be
I
on
don't use Waze. Real men don't use Waze.
Oh my God.
Give me a break.
My favorite is.
I mean, if you don't know how to get to work by this time in your career,
but you don't know. Like if you hit Waze, it's going to show you right way. Don't go that way because there's an accident. You wouldn't know. And why do I always beat you wherever we're going? Because I use Waze. You're like, how'd you beat me? You left 10 minutes after me.
You beat me. Have you seen him drive?
Yes.
He hit something and he had to give his license and his registration. It takes time. Or pay them off. He had to do something.
So Waze is a great app. My favorite thing about Waze is the Six is like.
You like getting the points by telling the crowd that
No. I really hope the Six isn't watching this. This is such a Tom comment, but this is a Six.
Oh, why are you taking the back road? Why are you taking the alley?
No. I'll hit Waze. She's like, okay, what Waze is? And I hit Waze, tells me where to go. She's like, yeah, don't listen to that.
My answer's the same thing.
Don't listen.
I don't like the way it takes me.
Right? I'm like, but that's technology. It's telling you the best way to go. She's like, yeah, it doesn't know. It doesn't know that that's not the right way to go.
I agree with her.
Right?
100%.
Well, you're
100%
morphing into that too. So I get it.
Oy.
You got to be out of your mind to follow Waze.
I use it all the time.
It's crazy.
I use it all the time too.
All the time.
Me too.
Especially
I
like
love
traveling.
Thanks, Beth. Right?
Hockey tournaments. Or
Yeah, it's great.
Plug it
Game
in.
changer.
Game changer. I mean, could you think back to not Beth, not for you, but for us when we were kids? Yeah, AAA get maps.
Right.
Right.
I do miss the guy that'll go, yeah, well, Ashland's 5,600. You got to go to 9735. You take
That's
that to
JJ.
this. You'll be at 6820, and you over there. You're right over there.
Right.
I do miss the guys like that, the old school guys.
Right.
I do miss hey, pull into this gas station here so we can get a map.
Right.
Never did that. That was
Never
did.
That was the worst. You never did that. You asked the gas station people what you were doing.
Or if it was a trip, you went to AAA, if you remember, got the free maps, okay, and then you mapped it
you
out.
stop moving south enough. It's making me dizzy. Them trying to follow you on the camera. I mean, it's really. I mean, you James just wanted to have a drink of water, and he missed it. Unbelievable.
We like to think. What are Spoons doing?
80.
Up 80.75, trading near their highs, about 2 ticks too high.
Strong to quite strong.
You haven't sold a thing yet, Sadnoff. What's going on with you?
I know, because I'm just No, actually, my positions are doing fine.
Sure.
Scott,
I don't blame you.
One little issue today.
Strong to quite strong. All right. Should we do some business? Good lunch today, by the way.
Yeah, fry the coop. Love fry the coop.
Love fry the coop.
Yeah.
Tony, it's good for you too because it's
I know.
It's a grab and go.
Ready-made.
You go for the triple X.
I did last time.
Little hot.
It wasn't too hot, but I just don't know if I feel like dealing with the
what?
The extra heat today.
Pain.
I'm gonna go.
Are you in a little pain? Make me happy. Tell me you're in a little pain. For
last time I went, not extra hot. Extra hot's easy. I went with the
triple X.
No, they have a different. They call it the. They have a name.
Atomic hot or something.
No, well, what's on triple X?
No, beyond that.
Beyond triple X. Triple X came with gloves.
No, I did the hottest one they have. It's called the whatever it was. I did the hottest one they have. They only bring one, but you know what? This time I think I'm just going to go like
nobody else is stupid enough to eat it. They want to enjoy the meal.
Yeah, how do you taste anything if you have that much hot sauce on it?
It's not. I taste it fine.
As you get older, you lose your taste buds. How many times have I had to tell you?
Insanity.
Insanity.
Yeah,
that's what I had last time. Insanity.
So JJ said he had a roll. It's called the Gambler.
JJ is
he is white bread. And JJ will admit it.
He's like they wrote
not a spicy
definition of like white boy goy about him. You know.
Okay, but this is a good one. It's jalapenos, but in one of the 5 or 6 pieces of the roll, they put like an atomic, but you don't know which one it is.
Oh, kind of like those peppers, the shishito peppers.
Well, the shishito peppers, you can get one that's hot.
Right.
Yeah.
You don't know, but you know which one it is.
You don't know which one it is.
Right.
But this one, he said he got it. It was a little painful.
Oh my God.
I would have liked to have been there for that. I'm not going to lie.
He is pretty basic with his food.
Yeah.
Pretty basic.
He's pretty basic.
I was out to dinner with him.
He likes what he grew up on. I mean, I don't blame him.
I was out to dinner with him one night, and it was an Italian restaurant, and they're handing out menus. I go,
He'll have the egg noodles and ketchup, please?
I said, he'll have the chicken parm.
He really had ketchup. His mother, he's told me the story. I'm not.
No, but he said, we walked outside.
Ketchup with a little bit of water.
I said, he'll have the chicken parm, and could you cut his spaghetti for him? He's like, thanks. I didn't even need to look at the menu.
That's good. I mean, I do like a good chicken.
That's cold.
That is cold. All right, let's get to some business. Top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Tom, for you, number 15, Lilly at a 26. For everybody else, Meta at a 26, Microsoft at a 24. NVIDIA at a 33, Tesla at a 36, PLTR at a 67, Hood at a 28, GLD at a 51, Amazon at a 47, Apple at a 39, MSTR at a 19, AMD at a 40, Qualcomm at a 27, TQQQ at a 38, iBit at a 36, and number 15 for Tom, Lilly at a 26, rounding out the next 10. AVGO at a 42, TLT at a 43, and MU at a 30.
Enough. What'd you like about that? I know you're going to be looking at Apple today. I know you're going to be looking at Amazon, but what'd you like in the list here?
I think Apple and Amazon are the only two I have.
What are you doing? What's the call?
Apple unchanged. Even the S&P's up 80.
I have a bunch.
I think I'm choking.
I have a bunch of Apple positions on already, but they're all in June.
Yeah. So
you're going to do something a little shorter dated?
So I haven't done anything for a month yet.
What's the call? What are they both like? Apple's like what, 12, 13, 14, $12?
$8 expected move.
$8.
It's really light. I mean, I think you have to. Apple looks a little heavy here to me relative to everything else. But
yeah, it's unchanged. The market's up almost 2%.
But they've got earnings.
Thanks, Mr. Obvious.
But they've got earnings today, so that's what we're waiting for. In the range or out of the range?
I mean, I think the risk in Apple's to the downside. I thought the risk in Meta and Microsoft, honestly, was the upside, and I sold twice as many puts as calls yesterday.
Didn't work.
It didn't work.
Amazon only has an $11 expected move, or just under.
Amazon,
it's up $5 right today.
Amazon, I think Amazon. I'm going pure delta neutral on Amazon.
Within the range.
No, two times the expected move.
Well, I'm saying but not leading. You did 2 times.
Apple, I'm just going short calls. I'm taking a shot. I hate it. I don't know.
Well, if you hate it, why are you doing it?
Because I feel compelled to make.
By who?
Tony.
Tony, you guilted him.
Puts a lot of pressure on me to do.
You guilted him into this?
Yeah, he does.
See, this is one of these you cannot
I actually
win.
don't trade earnings, so I don't guilt you into doing that.
I mean, earnings have been really good this cycle. Today was
now I have videos that'll say I'm never trading earnings again from Saz.
Today was
multiple
the first
times.
losing. Today was our first.
You were in the room when he said it multiple times. Remember when you would bring up earnings and didn't have a good earnings cycle, he would get mad at you. He doesn't call you names like stupid and stuff like that. He reserves that for me. But he would get mad at you, and you would say things that weren't nice to you, right? I mean, bad tone and stuff like that.
Today was our first bad earnings trade of the whole cycle.
They were big moves.
Microsoft is our first. No, Meta was good. Microsoft's our first big loser.
But it was up a lot. I mean, it was up another $15 though today from the first move yesterday. I think it was only up like 25. And is it still up 40?
Microsoft? No, it's up 35, 37.
Yeah, it's a big move.
But it was our first big loser in all these earnings trades. So I got to make it back tomorrow.
Oh, that's why you're selling the calls? Oh, God. One of these, the market owes me. I got hurt over there.
At least
I lost at blackjack. I'm doubling down at Pyga.
At least he agreed with me and said he doesn't have to make it back in Microsoft, which a lot of people will go stay in.
Rank's already down to 20.
In Microsoft?
But people will say, I got to make it back, and they'll be in that stock. Microsoft's volatility is contracted. It's a $400.
The markets are not great.
Markets are not great in there.
Not great in there.
Again, another reason why I shouldn't have made the trade to begin with. I said there's a pattern here. The trades that didn't work out for you are where the markets were not good.
Right. So now I got to do 1,000 lot in Apple.
I guess Microsoft was really no bueno. Okay.
Yeah, Microsoft is kind of pissed in his Wheaties a little bit.
Oof.
Now I got to do something really crazy in Apple. I don't know what to do.
I need you to do that, by the way. You've been way too disciplined lately. Things have been going way too good for him.
You do
no
upside to Tom doing selling 1,000.
Oh, yeah, there is.
No, there isn't. Because if it goes right, he doesn't even know who you are. And he's got a bottle of Windex out cleaning his screens tomorrow morning. And if it goes wrong...
I really don't care what he says to me. But last night, some customer wrote to me, and they go, what happened to you?
Yeah, it's true.
They go,
I told you that just
they called
days
me
ago.
he called me a name.
The one that Tony talked about with the biology lesson before we went on.
Mm-hmm. I didn't hear that one. Mm-hmm. Anyway, so.
Oy vey.
Starts with a V, does not end with a J. Right.
So I have to do something here.
Oh my God.
Yeah.
I don't know.
Oh, this is where you are.
He needs to step up. He needs it for his
Take
own
it
ego.
from a 5 lot to a 10 lot. Let's start there.
Yeah, right. I don't know what I want to do yet, though. There's no premium in that.
Remember when Sosnoff used to be one of the biggest traders we had at Tasty Trade? Remember that?
On the list every day.
On the list every day. Not no more.
I'm still on the list.
Oh yeah, the mighty have fallen.
But I don't know what to trade in here. Apple doesn't have any juice.
Well, with an $8 expected move.
With an $8 expected move, it's
no direction. Get a hunch. Bet a bunch.
Right.
It's not much.
Well, this is what I think they're going to come in. They're going to miss, but they're going to guide higher, and the stock will be higher within the range.
Is it going to be $20 higher?
No, I think it's within the range. If it's $8, it's within $8. They're going to miss. They're going to either just hit it or miss, but they're going to guide higher, which they always do. And the stock will be slightly higher tomorrow.
What do you think the expected move is in this stock? If you
just said $8.
Yeah, and where do you think the options are? $8 higher, just to get.
Not much.
You're right.
For tomorrow.
Yeah.
$1.
Closer to $1.80, but still.
Okay, $1.80.
That's it. That's the expected move.
Yeah. So what are you supposed to do?
I don't like the risk.
And if you go 2 times out, what is $16 out? What are they? 30 cents? 40 cents?
16 times out, 30 cents.
30 cents. So what are you going to do? That's not worth it.
That's the problem.
Right. So what are we supposed to do?
I don't know. That's the problem.
See, this is why you go for the, what was it called? The atomic? The nuclear? Whatever. Eat that. And then maybe the thought will come to you as you're screaming. You're going to say, it just came to me. This is what I'm doing.
So I got to figure it out. I don't know what to do yet. There's not enough juice there.
All right. Report back this afternoon, please.
I will, sir.
Thank you. Appreciate that.
Before we take a quick 90-second break here and come back with, is it Liz and TP? I believe so, Liz and TP. Under, over.
Yes.
The reason why Tom doesn't like Waze is he can't download the app on his phone.
Over.
What number does it make a difference? Does it make a difference? Just take the over?
Well, I would say this. If you throw in...
You don't think I could download it?
No. Wait, whoa.
I say you don't have it on your phone 100%.
Wait a minute.
I don't want it on my phone.
Here, there's 2 things, Tony. One, he may be able to download it, but he wouldn't know how to put the address in. If you give me that, not being able to operate it, over.
I'm gonna say he can't download it because he doesn't know his Apple password 100%.
You don't need it. If it's in, you just double.
He doesn't have Face ID on there. You think? No way. You have Face ID on your phone?
What's that?
Maybe.
Here it comes.
No, he doesn't.
Here it comes. What's that?
No, he doesn't. And there's no way he knows his Apple ID. No way. I
think Tony's onto something here.
I'm not going to comment.
Oh boy.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Liz and TP. You're not going to want to miss that. No, you're not. Liz and TP next.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going out in a blaze of glory. Lord, I never
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. It's like losses could have been catastrophic, and they're not. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Everybody, and welcome to the Listen Jenny Show. I'm Jenny, that beautiful blonde. Bronze Adonis is Liz. Happy Red Shirt Thursday, Liz.
We made it, Jenny. I know we think it's Friday, but you better show up for work tomorrow.
My days are all mixed up. My daughter's off school. It was half day today, no school tomorrow. You're gonna have to call and remind me.
And you don't look like TP. I was supposed to have TP on today.
I know I was supposed to be at the Mother's Day event at school, but Lily woke up sick, so here I am. You've got me instead.
I know.
Sorry.
I was very happy to have you back. TP is a wealth of information, but no one will ever be able to replace you in my heart, Jenny Andrews.
Well, it was so funny when she said she was sick, and I thought, TP's coming on. I could take the day off, but what am I going to do? I'd be sitting there watching the show.
I thought for sure it was going to be the three of us because he wasn't responding that he was off. He might break in at some point. He's probably watching. We love you, TP.
Yeah, we love TP and appreciate that he is always Johnny on the spot to come and fill in when we've got something going on.
Yes, he is. Yes, he is.
Okay. Okay. Yesterday morning, spoos were down 110 on our way into work. Then during our show, spoos were down 60, 70, 80. Now, by the end of the day, they were up on the day.
Now, here's my question for you. Why do you think they were up on the day? Do you think it had to do with the end of the month?
Yes.
I kind of thought so too. We got to keep that in our back pocket.
I know. So they were up on the day by the end of the day, and it was quick. It was a quick run up in the last half an hour. With spoos up 84 right now, the reversal, it was insane. From down 110 yesterday morning to up 84 now, you're looking at a 200-point change.
Yeah. Yeah. I mean, that's pretty big. Yes. Will you please take me to the VIX?
Oh, let's pop into the platform. Okay. Pop in the platform. I had it on Microsoft, but I will move to the VIX.
Yeah, we do have to look at Microsoft and Meta and all the earnings from yesterday and Hood because we have a Hood trade as well.
Right.
We are going to take a look at that. And today's another huge earnings day.
Yes. Okay, VIX 2403, down 67 cents. But it was as high yesterday. VIX was as high as 28. Mm-hmm.
That's big. That's a little blip. Like, look at the blip. If you move off that, that's right. A blip up. Yeah.
Yeah. So VIX was as high as 28. Now it's down to 24. We did do a handful of earnings trades. We took Meta off. This looks like a win. That's just the put spread. We took Meta off for a scratch because Meta was getting very close. Our call spread of 580, 585, and it's trading 580. So we didn't want to wait for the show and risk it. So we scratched the Meta trade.
Right. And taking a look at that, I'm glad we did because that could go either way, right? These were both out of the way of the expected move. Now they're right there. If it continues to go up, we collected $2 for it. Could be a possible $300 loss because it's almost going to be through tomorrow.
I only bought back the call spread. Should I buy back the put spread for a penny or two?
Yes.
Or just in case. With this market, you never know.
Just because, right?
It's free to close, so I paid $2. There go your $2, Liz. I paid $2 to close that put spread.
It is free to close, and I'm glad you brought that up. We haven't talked about that in a long time. Now, do you want to manage, what was the other one? Microsoft?
So, Microsoft, we just sold a put spread, 74 cents, and it's a full winner, $74, which, that's options for you. You sell a put spread for $74, the most you can make is $74, even though Microsoft's up $36. That's all you can make.
And that's part of the problem with the small, problem's all relative. I'd rather have $74 than have a $300 loss, or $400 loss here. But that's the problem with a smaller account. You're handcuffed, right? So you have to define your risk. And by defining your risk, you're taking in less. Because just selling that put, but it wasn't that much. Just selling that put was what?
$400 in risk.
$400, yeah.
So it's basically like the more you're willing to risk, the greater the reward. If we would have just sold and this 370 naked put, it was $1.97. So we would have made $200 instead of $74. If you're, wider spread, diagonal, whatever, the more you're willing to risk, the more your reward. That diagonal, I think you said was about close to $2,000.
Yeah, it was like $1,900.
And that would have made about $1,000 or $1,200, something like that. Something like that.
Yeah, that would have. It was pretty wide. Okay, so, and then, you know what, Jenny? We also have Hood and Roblox. I forgot about Roblox.
Okay, so let me get out of this 1 cent to buy that back.
You can just buy back the short.
And it's saying credit, but I have to pay a debit. Oh yeah, I'll just buy back the short, 1
You
penny.
can just buy back the one. That's all you got to do because it'll be easier with options with no bid or ask. It's hard. There you go.
Right. So bought that back. And Hood, we had a downside ratio spread. And Hood was, you know what? Hood is only down 12 cents now. It was down quite a bit more. I think it's trading around 12.47 in after hours yesterday.
Yeah, it did.
So we took in 73 cents and that's what we made.
Yeah. And that was, this is, we've been downside ratio spreading. Now, this is not something you're going to butterfly off. I mean, I guess you can.
It's so far. Like here we have the same 3 cents to buy it back or 8 cents to, all I'm going to do, what am I going to do? Close the whole thing, I think, for 3 cents.
Yeah, I mean, honestly, this is if we crash this much tomorrow and Hood goes down to 43.
I will just buy this back.
3 cents is perfect.
3 cents. Okay, and that was using up all this buying power. We said, oh, this is hopefully just for a night. So Hood was using $1,300. What other one? You think Roblox was yesterday? No, Roblox was a few days ago. You see, 3 days.
Okay, so what do we have there? An iron condor?
Mm-hmm.
Yeah, let's close. 1,000%. What? That's not an iron condor.
Wait a second. Oh, we bought a call spread.
Okay. I was like, well, how can we make 1,000% on an iron condor? Inconceivable.
We bought a call spread and sold a put spread to pay for it. And we put this on a few days ago, but the earnings, I think, were just happened.
Yes. We put it on a couple days ago, and then we looked at it yesterday, and that was our earnings trade.
And so it's through the call spread, but it's not worth the full dollar yet.
Let's just take our 77 cents.
Yeah. 81-cent credit. We know if it stays above this would be close to $1 credit, but
it's close enough. I mean, that's good. So not bad.
And is that
earnings have been pretty good so far.
Was that it? Hold on. Let me just double check. Glancing through and just looking at one day. So Microsoft taking care of SoFi was one day. That was yesterday. We just added some puts in SoFi.
Yeah.
UPS.
We butterflied it off. We leave that.
Oh, that's right. Okay, so that's it. Not bad. Do you want to take off our 6E? We're almost at 50% on this short. What do we have here? Short call spread in 6E.
Why, yes, I do, Jenny Andrews. Let's take that off. It's close to 50%. $50, close. 40%. I accept.
Right, we're getting close. And there's still 36 days to go.
Yeah,
so that's fine.
That is pretty good. And we are taking live tweets with the hashtag LIZJNY. That is a daily occurrence. If anybody wants to post something on Twitter, we will take a look at that.
So here we are on Twitter. All you have to do is put the hashtag on, just like Bob on Fire does. Hashtag LIZJNY. Take a look at today. Amazon, Apple, Airbnb, Reddit, Team, AIG, XOM, CVX, CI.
So, and we know, like, this is Bob. Bob's awesome. Bob on Fire, that's what we call him. He's one of our good friends, and he posts this list. This is kind of vetted. There are other ones, too, that are going to be, your off the beaten path ones.
Right, but we have a lot to look at. And another thing I wanted to look at.
Can we take a look at what what McDonald's and Lilly did? Because they were yesterday. McDonald's and Lilly.
MCD McDonald's is really unchanged. For a $318 product, it's down 90 cents. That's nothing.
That isn't anything. That's nothing.
And Lilly. Yee.
Whoa. Holy shirt balls.
But Lilly, so I have a good friend who, good friend, maybe I have a friend who works for Lilly.
I hope they're not watching. You're just a friend.
Well, I didn't want to be presumptuous and act like she's my good friend.
Okay, good.
It's one of my husband's friend's wives. Okay. And she works for Lilly. And so I know, even though it's down $77 and it's $8.22, it's really, really gone up. Yes. Mm-hmm. If you think back to 2023, 2 years ago, it was $300 and now it's $800. So, this doesn't hurt that much for shareholders.
No, it does not.
No. I don't know why I didn't keep this. I bought this for my daughter Lily, and then one day when it went up a little bit, got rid of it.
Now you can't afford it.
Yeah, right here, Lily. What do you want? One share?
That's pretty funny. It's pretty funny. Okay, so what do we have that has earnings already? Do we have an Amazon?
We don't have Amazon. We don't have
Apple? No.
No. Let me go back to this. Amazon, Apple, no. Airbnb, no. Reddit, I doubt it.
I do. I have a lot of these positions. What's Team?
TEAM. Atlassian Corp. Okay, I want to ask you something.
How much is that?
TEAM.
And
I'm
if
going to guess.
If it's on Bob's list, it's vetted 230, 233. That's expensive. What were you going to say? I'm sorry.
Okay, I was on the phone with someone yesterday. 2 stars. It only gets 2 stars. I was on the phone with someone yesterday talking markets, and he mentioned numerous times AppLovin.
Oh, yeah. APP. Yeah, you know me.
And I don't have a position in here. Do you?
I have. This has been, it's kind of a hot topic. Vanetta talks about it all the time.
Yeah, so he mentioned this many times, and I just thought I don't have anything in here.
When are their earnings? They have a 74 rank. I don't mind getting into AppLovin. If I remember correctly, Jenny, when I was looking at this, I think it's cash secured.
Probably. Earnings are May 7th. $60 expected move in the 8-day. And let's just see, is it cash secured? If I go all the way down to here, I can get $500 at the 210. No.
Look at that.
Whoa. It's only using 10%.
AppLovin.
AppLovin.
Okay, it's only using 10%. That's not bad at all.
Yes, you would expect. Okay, we just put on a trade in Hood. Let's just look at this. Okay, the 210 put in AppLovin using $2,000 in buying power. Okay.
Okay. You know I'm selling that. I'm selling that 217 put, and you can't stop me.
So now you go to Hood, and I'll be fair, Delta to Delta, the 42 put in Hood is using $1,200. The 42 put, that 200 put, was only using $2,000.
Yeah, that's crazy.
Well, margin police better come and adjust that. I feel like it should be more.
AppLovin, here we come.
Huh. Yeah, I'm gonna also.
Oh,
I know.
Wait, what cycle were you in for that?
The weekly.
Because you're doing the 1 day?
No, because earnings are May 7th. I was doing the 8-day.
Okay, gotcha.
I was doing the 8-day. But I was looking, so the 217 put is going to give you $650.
I know. Which is crazy, right?
Get your break even down to 210, right around 210.
Yeah, loving it.
AppLovin.
I'm AppLovin. Do you know what's crazy, Jenny? And we're not going to do this, but just do me a favor. Will you go into the 1 day? Do not, these are breaking all the rules. But if you go in, I know it's a lot of capital, but go to the 1 day.
Okay.
It's got a $12 expected move today.
Yeah.
Oh, I guess there's tomorrow too.
There's tomorrow. So it's up $16 now. If I were looking at this, maybe I would just try to get a quick dollar at the 265 level, and then for next week. But I honestly, I think I would just go to the 8-day and sell the 8-day now instead of fooling with the 1 day.
Yeah, that's true. That is true.
But that's not bad.
I know. I mean, I'm saying as soon as I get off, I wish I had a pen and paper. I want to write it down. Do not let me forget when we get off the phone.
Okay, and I got off the phone with him, and he was throwing out a bunch of symbols, and I couldn't keep them all straight, and I couldn't remember them all. I didn't write anything down, and so I couldn't remember. So then I went to bed last night thinking, what was he talking about again? What was he talking about? And then I woke up this morning. I literally shot out of bed. I was like, AppLovin.
AppLovin. I love it. It's pretty funny.
But it's just something we don't look at, and I don't know why we don't. That margin is pretty good.
No, I mean, I've been in and out of AppLovin. It's something that Vanetta talks about. I think it's kind of been new where I don't even know what they do, but
Hey, you know what? If you're on Twitter, you can tell us if you're trading it, how it's been working for you.
Well, Frank Walsh is telling me, Frank the Great is telling me that APP is not tradable.
What?
Yep, that's what he's saying. That's what he said.
Well, the margin begs to differ, Frank.
The margin begs to differ, but it was 2 stars, you said, right?
No, I said team was 2 stars.
Oh, team was 2 stars. How many stars is this? Come on, Scott. 2 stars.
Yeah, 2 stars.
Come on, Scott.
Huh. Okay. Anyway, just something to keep in your back pocket, Liz.
Okay. Back pocket. Put it in.
So we've got a lot of those.
Do you know what I was going to say? I just was doing my job pushing things out. If you want to pop into, can you pop out what we've done already? Our GTC and Costco got hit.
Oh, what did we even have in Costco?
Don't know. That's why I would like to review the tape.
Oh, just a short put spread. We probably sold it for $1. I think this was what's your assumption? So, and honestly, I'll go to Costco and then we could see. It might have just gone on. Would it have just gone on yesterday? Today? Yesterday? No. 7 days ago? No. Guess we've been in this for a while. 14 days ago? How long have we had on this Costco position?
That's a ratio spread, right? Oh, no, it's a 1-by-1. Okay.
No, we just sold a put spread for $1 on 4/16.
Wow. Okay, so 2 weeks.
Yeah. 4/16, 2 weeks. You know, next weekend's Mother's Day, Liz.
I know.
Oh, okay. My husband asked me, what do I want for Mother's Day? What would you say if your husband asks you, what would you like for Mother's Day?
I have everything that I want already.
That's how I feel. So all I could come up with was the bird seed for my bird feeders because the bags are so heavy when I go to the store to buy them. I'm like trying to carry these 50-pound bags of bird seed. So that's all I could come up with. Go get my bird seed so I don't have to carry it through the nursery.
Well, he should be doing that anyway.
I know. Maybe this will start. Maybe this will start the trend.
I like it.
I couldn't come up with any ideas.
Yeah, I don't need anything for Mother's Day. I want just my family to be together. That's such a cliche answer, but I get at this age, I buy everything I want. And you can't stop me. There's packages coming all the time. We've come to that point in our lives.
Oh yeah, and it's next week. It is next weekend. Yeah, it's right around the corner. I always give my mom flowers for her yard, and I already have all that done.
Oh, good. That's perfect.
Like if I have a lot of time, I go and plant all of her flowers. But if I don't have a lot of time, I just drop off pots.
So pots are being dropped off?
Pots this year.
Hopefully she's not watching either.
She's not watching.
Okay,
she doesn't even think I'm on. They think I'm off today.
Oh, yes. You can say anything you want to now. All right, let's get some earnings trades on. I want to lock and load because we are flush with buying power right now. I mean, I'm using
Amazon, Apple, Amazon.
So I want to do Amazon, Apple, Airbnb, and Reddit. And I will be keeping an eye on Twitter to make sure too.
Amazon, it's so, I love selling puts when everything's at the bottom, and it's had quite a rally from 160 to 190. It's tough. So maybe we do a downside ratio spread.
Love the downside ratio spread.
182, 180.
I mean, honestly,
that's not bad. That's not bad. That's not bad
at all. It's using $2,800. I don't mind it for one day.
But that's a lot. Okay, let's talk about this. That is, we shouldn't use 10% of our account in one trade.
No. But that's not going to stop us from using.
So, okay, 124, I'm going to just give up that 24. Then we're getting $1.
There you go. Fine. So once again, if Amazon pops up 10% or pops up however much it does, we're only going to make 97 cents. But that is the handcuffs of trading in a smaller account, in a Tasty Bites account.
Right. Otherwise, if you were really bullish, so in Microsoft, what I did in Microsoft was just bought a $5 wide call spread and then sold a $10 wide put spread to pay for it, which is going to use about the same amount of buying power. What the heck happened here? Yeah, it's going to use the same amount of buying power, more profit potential, but break even's not quite as far. And if it doesn't go up, we don't make anything, or if it goes down a little, we don't make anything. But in the other scenario, we make that $1. But here you can make $5.
So here, and once again, Jenny, I like this. I'm fine because I'm bullish Amazon, but I just want to talk gimmies and gotchas as well. As the downside ratio spread isn't equal to this, even though the buying power is equal to this. If Amazon goes up, you make $5. If Amazon goes down, you can lose $9. Now that was our buying power there too, but if Amazon goes down tomorrow, we can probably make more.
Oh, and that ratio spread.
With the ratio spread. So I like what you're doing, buying power to buying power, and we're kind of bullish. But the downside ratio spreads are kind of, especially on a Thursday when you're wearing red, it's kind of like, well, I want to make that money. But you can,
I'm just showing this as an example of like something you do if you're bullish. If you've been bullish, or if you're bullish, if you're more bullish, like these are the trades I do if I'm more bullish. And then you've got, if it goes up, you're like, okay. But I was still mad at Microsoft because it was up $30 and my strikes were so far away. But the ratio spread, it gets our break even further. But we're only, if it goes up, we're only gonna make $1.
You only make $1. That's correct.
You only make $1. Yeah.
That's correct. And like I said, I like the bullish one. I just don't, it's just, there's so many, there's so many nuances between these two trades that, I mean, I like that you are comparing buying power to buying power. I think that's a gold star for doing that. They're just two different versions of a trade.
So, right. The one thing I think of though, like, if you're risking $900 to make $1, so we're risking $900 to make $1, $900 to make $1, $900 to make $1. We have to do that 10 times to cover one loss. Where if you're risking $900 to make $500, you only have to do it twice to cover one full loss.
And was our break even to the downside the same? So if it went to 167, we're going to lose. What was the spread?
So no, this break even here is like 177, right?
No. For the other one.
No, it was 182. It was higher.
Yeah, so at 182, that was our short strike with 182, right?
Yes. Yeah.
So that's what I'm saying. Your break even is going to be, where was your long strike? That's my question.
But if I wanted to do it similar, like here, let's try the 180. I'm going to do narrower, like 250 wide. 250 wide. Here's a 250 wide. Where I have the same short strike.
So that was the break even, 77.5, right? On the ratio spread? Yeah, do it. Let's do this.
So I only think like see what I'm saying? Like if you risk $900 to make $1, you have to win so many times to make up for one loss.
Correct. And either way, I liked being out of the way of the expected move. I didn't like when you pulled the put spread up a little bit, because then it turns into a low probability trade. Because here, if Amazon goes down a little bit, we don't make anything.
We don't make anything. Now, in the morning, this would probably, if it goes down a little bit, this would probably have a little bit of value in the morning, but this would probably still have value too, I guess.
Ship it. Press that button, Jenny Andrews. I'm bullish Amazon. I mean, I am bullish Amazon.
I just want to make more than 70 cents.
But I do kind of like these. Don't get me wrong. I loved diagonals for earnings. They work until they don't. But it's expensive if you're bullish.
Oh, the diagonals, I like those. They're expensive.
Mm-hmm.
So here, and this cut our risk down to 750. Same break even on the other trade and 750 in risk. So if Amazon plummets, we'll say, oh, we only lost 750 instead of 900. If Amazon goes up, we can say, great, we made 250 instead of $1. But if Amazon ends up in between here, we'll say, shoot, we could have made $1. We didn't make anything.
That's okay. I'm okay with it. But once again, that's why I love options. You could put in this trade, you could put in the one that's $10 wide call spread and a $20 wide put spread. You can do whatever you want. Everybody can kind of retrofit things to fit themselves.
All right, that's Amazon. Apple.
Can you hear that? Can you hear people yelling at me?
No, I just got like a ding on my phone. I had a notification from CVS, which made me think CVS did have earnings too. So I was curious to see what they did. 440.
They're after the bell today.
No, I think they happened.
Oh, they were before the bell. Okay, they were before the bell.
Yeah, before the bell today. So, and they're up. And I wasn't sure because for a while CVS looked like it was going to follow in Walgreens' path.
I know.
Yeah.
And look at it now.
All right, Apple, right?
Yeah, Apple.
Apple today after the bell.
I mean, I'm bullish Amazon, I'm bullish Apple. Those are I actually have those in. I've just been consistently selling weekly puts in those. But we don't have to be bullish there.
We don't have to. I mean, we usually, when we have this choice, we do this just for like, here's a low risk trade, $1.20, 217 calendar.
It's not bad.
But if we, what do you think? What do you think?
Hold on, sorry, let's look. Yeah. I mean, the 217 calendar is saying it's not moving.
I know, not moving at all. And I don't know that that's going to happen.
I don't know that that's going to happen either. I think we do something very similar to what we did.
I'm just comparing to see.
I think we do something very similar. I don't mind if you bring it up to the 200. So you pay a little bit for it. Take the 97 to the 200. It's 20 cents.
So we pay 17 cents, but we can make 232 if it goes up.
Yeah.
And our risk is 500 if it goes down.
Yes. And your short strike is the 205. So if it moves to its expected move to the downside, we don't lose any money. The ultimate game I think we're playing here is trying not to lose money.
Trying to make some money if it goes up, but trying not to lose too much. Are you shocked with SPOO's up 90 that Apple is unchanged?
A little bit.
Yeah. So that worries, that concerns.
Can I see Apple's chart? Because I think it was moving with. No, it hasn't. Those last couple of days, it's only been those little bits.
Yeah. So that's a little concerning to me. I don't know. But what do we know? What do I know? I'm going to show it.
We know nothing, and I'm not going to lie to you. Every time I listen, because I get up pretty early, so I listen as the earnings reports come in. When they tell you what the earnings are, I was like, oh, I picked the wrong direction. It doesn't matter what the earnings are. It doesn't matter. It matters what the market's going to do.
Right. Yeah. Who knows? So
what time is it right now? It's 10:30. Okay. It's 10:27. I just wanted to say I did Jacob's study this morning in my account. I think it's a little bit too much to do in here. I put it on at 9:21. I know I should have done it at 9 o'clock. So I'm giving it an hour and a half. So right before it closes, right before the end of the show, I'll probably take it off. But I wanted to let everybody know I did the 30 delta, $30 wide. I collected $11 for it.
$11.20, I thought, right? $11.20?
No, $11.
Okay, and where is it now?
And right now, let me look at it. It's $130 loss.
Because I was going to say it's $10.30.
It's a $78 loss. So it's $10.30. Now, I put it on too late. You're supposed to go 9 to 10:30. So I'm giving this until right before our show ends.
Yeah, but it didn't matter. Like, we keep ticking up. It would have even barely been worse strikes at 9 o'clock. So I think you'd be in worse shape if you put it on at 9 o'clock.
No, I need you as my therapist, because I would leave this. I'm not going to close it for the $100 loss.
I agree, but but the study was put them on at 9, close it at 10:30, at least close it at noon.
Because I am still $7 away from my short strike to the top.
Hold on 1 second. If I could stop sharing for a minute, if we could stop sharing for a minute, I'm going to pull that study back up, and we're going to see.
No, I mean I know what the study says.
Well, I just to pull this up and take a look.
Nope, Jenny. Nope.
Oh, this is the wrong. Oh, I got the wrong one. I got the wrong one. Hold on. I was gonna pull it up. I was gonna pull it up to see like what you should do.
I know what you should do. It says by noon, the latest. But I put it on later. I want to give it at least an hour and a half.
Noon the latest. I know why it didn't come up, because this is a different computer than I used yesterday.
Oh, I know.
I was like, I know I have that right on my...
Okay, let's jump back into the platform, John. Thank you very much. Jenny sharing again.
Yeah, and I want to make sure, I want to go to Twitter to make sure we get... if anyone has any questions, or if anyone's telling us what AppLovin does. We saw this yesterday, Frank's beautiful wife and Sadie. Make sure that we get to everybody. Oh, no.
Oh, yes. This is her actual docking. This is live footage. Jenny almost launched me off of her boat.
Autopilot. Mikey, okay, my excuse every time, this is the problem with my boat. I have, if my boat were 1 foot bigger, it would have an extra motor. So my boat guy tells me this all the time. I have the hardest boat to drive and control because it's the biggest boat that they make that just has one motor. If it were 1 foot bigger, it would have 2 motors. And that's so much easier to steer if you have 2 motors.
You hit the gas instead of the brake. I get it. It wasn't a steering issue.
It's always a steering issue. No, because we couldn't get it. I was getting so frustrated because I couldn't get it lined up to get it into the slip.
You gunned it in. I mean, I tease. I love being on your boat. I was not scared at all. Even though
I just know, like, my marina has a lot of nice boats in it. And I was just telling you about the friend of ours who has that, like, 4-bedroom yacht. And one day, I'm probably going to hit a boat in that marina, and it's not going to be good.
That's not going to end well.
It's like the little blue bobber with 1 motor is going to take out a 4-bedroom yacht.
Yeah, because if we hit a boat instead of concrete, that boat would have been injured.
Oh, yeah.
But we hit concrete. Okay, Jenny, Florida 7, welcome. We haven't seen you in a while. They want to see the curve view on the Apple and Amazon earnings trades. Can you go to the curve view?
Oh, sure. Okay. The Apple trade, here we are. Let me go to the analysis.
And they're very similar. We'll do Amazon too, but they were very similar.
Yes. We paid a very small amount for this. So basically, I think we paid 10 cents or 15 cents.
Yeah.
So,
I mean, that's why there's a little bit of a divot there.
So if it goes up, we'll make $235. If it goes down, we won't lose unless it goes below 205. And then our risk on that trade was 500. What do we have here? $515 loss. So,
and that is that 205 level was, and I like the way that you set this up because it's at the brown bar. So it's under the expected move for the volatility is pricing.
Yes. And you see the 515, we have that risk because it was a $5 right put spread and we paid 15 cents for this. That's why Max lost 515. And then we bought a 250 wide call spread, but we paid 15 cents for this trade. So that's why it's only 235.
Right.
Now, if Apple plummets, we lose 515 and we could be out 515. But my thinking was if we're going to do the put spreads like we were doing, $1 on a put spread, $1 on a put spread, $1 on a put spread, and then one loss could wipe out all of our winners. We're here if we can make 235 on this, or in Amazon, we could make, what was that? Let's see how wide that one was. Okay. This was same thing. We just did a 250 wide. But we sold a 750 wide to pay for this.
Yeah. But 250 is better than $1. So if you lose 750, you need 3 winners in order to make it instead of 9.
Tech 9.
Yeah.
Yeah. Let's look at Reddit. Maybe we want to do the same in Reddit.
And honestly, and Jenny, when we're looking at these, I do look at the earnings as a whole, right? What did we scratch this morning? We made it in Microsoft and scratched it in Meta. We scratched Meta, made Microsoft. I kind of look at the earnings trades, take them all off, put them all on, and take them all off as you win one, you lose one, you kind of net them out because those aren't your durational trades, right?
Right. And Starbucks, oh gosh, look at Starbucks, 82. I closed my Starbucks earnings trade for a loss thinking, well, whatever, I've been doing okay in my other earnings trades. But now it's up to 82.
Yeah, but you don't know that it's going to do that. So it's okay when you've made, so like from that perspective, if you're on the couch and you're laying on the couch being like, I should have closed my Starbucks. You did the right thing because you took off so many profitable ones yesterday. You're like, whatever, I'm not going to worry about Starbucks.
I know. But you know what I did? I bought this 78 putback for about $2.
Oh.
Yeah. Because it was trading down below 78. I sold it for $1, bought it back for about $2.
It was trading below there. I agree.
And now I really want my $2 back.
But it's not too big of a loss. It's not like one of those where, you're...
No, I was like, whatever. If I take $1 loss on the Starbucks put, that's nothing.
Yeah, that's really is nothing. Okay, let's take a look at Reddit. Reddit.
Now Reddit has, I do like Reddit. I have been in and out of Reddit, but it does use a lot of buying power.
It does. Yeah, but all the ones we did, with the defined risk setups of those, it doesn't matter how much buying power it is.
All right, so let's take a look here. If we did, we could make this baby small too, or here's a $3 wide. Here's a $3 wide. It's only $1.37. We go the expected move, and let's see, 107, 102. Here's a $5 wide.
Make it a little wider.
$6 wide.
101.
$7 wide. Or you know what? I'll just 107, 102. There's $5 wide, and I could just make this $2.
There you go.
There. So we're getting a small credit.
And this is very similar to the three. This is very similar to the three other earnings trades that we did. I just glanced at the chat. Blue wackadoo. I want my $2.
Okay, so this is what this looks like because we're taking in a small credit instead of paying a debit. Anywhere here we make this.
I mean, honestly, this looks so good because it's like very wide strikes. This looks amazing.
This is where it's trading. If it goes up, we make $200. If it goes down, we could lose $500.
Yes.
You know, minus that $16 credit we're taking in.
Yes.
Yeah. Not bad, right?
Not bad.
I'd love a $3 wide to have a chance of making $3, but whatever. We'll just ship this.
Good to want things.
Funny. Now, I don't know what I will do. Like, I don't know what I'll do myself in Reddit. I'm not sure. What are you going to do in Reddit?
So I have been selling weekly puts in Reddit. I'm going to see what I have something in Reddit already. I'm going to look and see what I have. So in Reddit, I have I have a diagonal in Reddit. I think I made my bed.
Oh, I have, sometimes I'd like to keep track of the stack. So I have been accumulating shares of Reddit. So I have shares of Reddit and I've been selling weekly puts. Now I just have shares. But it's not, I don't even have 100 shares. So it's not like I can do any options trading around that. But I have been selling weekly puts. I kind of like the 100 level. I wonder if I would even go out a little further to get myself break even down to that 100 level. I might just do something like
this. In the 8 day, you're getting $2.49. It's a lot of capital, but you're getting $2.50, but you're in the 8 day. Now, keep in mind, this is the 8 day. So even if it goes up, this will maintain a little bit of value if it doesn't move. Well, that's why I love the 1 day. Yeah. I love the 1 day puts because if it doesn't move or even if it goes down, you can make some money.
And I guess those 102s are still $1 something. So maybe I do that. I don't know, but I'm not sure what I'm going to do, but the weekly puts have been working out okay. Reddit has been in this range since the fall in early March.
Yeah, it has. Not bad.
And now we're in May. Can you believe we're in May?
I can't. It's May Day, isn't it?
But what is that saying? Sell in May and go away?
Sell in May and go away.
That's not good.
No, but I think those old sayings are for the birds. What does for the birds mean? Like, why do people say for the birds?
I don't know. But I have, and maybe people are familiar with this. I've got this bird. They come through. They're on their way somewhere else, right? They're like coming south, moving north. They're not going to be here long, but they're very aggressive. They're black and red. They're white, black, and red, and they are very aggressive.
Ooh.
Maybe a grosbeak.
I don't know. Would you want me to send my weasel over? Because I think weasels kill birds.
They are the first bird that I've seen get the squirrel out of the feeder. The squirrels are afraid of these birds.
Really?
Yeah.
I'll send the weasel.
Send the weasel. Have you seen him again?
No, but my husband's calling him Pauly Shore. I guess Pauly Shore was called the Wheeze.
Oh, the weasel. Yeah, the Wheeze. That's funny.
So, I don't think the weasel's going to come out now that Will Ferrell is back. The weasel had like the time of its life because we were gone and Will Ferrell was boarded. Now he's patrolling the yard again.
Oh my gosh. Let's see. I'm back. I'm just making sure look at this. How the heck do you get a position to look like this, Mikey?
Mikey, slow clap for Mikey.
Happy Retro Thursday. Small fours start at XSP and a single mountain in SPX. So, Liz, you can blink for the 5650 in SPX and 55.
What are we looking for? Wait, hold on, I gotta say it.
Double win. Or look at this move. Crazy, Mikey. Crazy.
That's awesome. Well, look at this.
This is SPX. Here's his SPX, and then here's his like double bat wing. This looks like.
You know what I love here in this? I mean, I'm sure if we scroll to the left or to the right, you can't lose. It's like Texas Tina. No matter where on these, you can't lose.
All right. And then the earnings. What else did we not get to on earnings? We did Amazon. We did Apple. We did Reddit. Exxon, Chevron. I don't know if you want to do any of those.
No, I'm okay without them. I was just kind of looking. Riot has it. I'm looking down the list right there. Riot is not on there. That first five. What's 5'9"?
5'. I don't know.
5'9". That's my height. I'm actually 5'10". And then AIG. I don't need to do any in AIG.
Fubo.
Oh yeah, tomorrow morning. Fubo TV.
Let me see what last margin call has to say. Happy Thursday. Oh, well, yeah, we'll look at some others. Enjoying some nice profit on Roblox, Hood, McDonald's, but Microsoft got me. Ooh. Testing my luck with a broken wing call fly in Airbnb. Okay.
Okay. Yeah, I love it.
I'm like anti-Airbnb because I have had in my life a couple times where I've had reservations and the people have just canceled.
Yeah. Well, the prom house, that was an Airbnb that my kid did not go to, by the way, because some other devastating news happened. But the owners came. I got more on the stories. It was an Airbnb they rented kind of in your neck of the woods by your summer house. These idiots, parents, signed for an Airbnb, and knucklehead, you know how I feel about 18-year-olds, frontal cortex, went to the prom house, and they all got, the owner and the cops came at 5 a.m.
So, okay, because, I mean, these rentals have cameras. You can't have cameras inside, but you can have cameras outside. So I see every single person that walks into my place. So these owners are not dumb. They've got cameras. So when they rent a house to adults and they've got 18-year-olds piling in, that's crazy.
Yeah. Mm-hmm.
What flabbergasts me are the parents who sign off on these rental houses.
Never.
How insane.
I know. It's pretty crazy.
And so the owner and the police showed up at 5 a.m.
Yes.
And was the party still raging?
I couldn't get any details because my kid was not there, and he's like, "You're looking for gossip." I was like, "I'm not looking for gossip. I just want to know what happened."
Yeah.
So yeah.
Right. Did they all have to leave at 5 a.m.?
No, they didn't leave at 5. I know that they stayed there for a while afterwards with them and had to clean up everything before they left. So it was more like, I think they're giving them time to, but they stayed there before they sent him home.
Whose house it was, if I know the owner.
No, I mean, it wasn't that close to you.
No, but I know quite a few people who have houses up in the New Buffalo area, which I'm guessing that's where they were.
I'll send
you. I just saw a news article, the Hamptons of the Midwest.
Oh.
New Buffalo. The Hamptons. If you're interested in visiting Chicago, try New Buffalo, the Hamptons of the Midwest. All right, what else do we have going on here? I just can't get over the boat. I was thinking of not even pulling it out this year and just leaving it wrapped up.
Just leave that thing.
I
can't do that. You can't do that. We're going boating. We're going boating with Mikey. So you have to unwrap it for Mikey.
I have to unwrap it for Mikey. Here's SIBO Most Active, and I was just looking to see if there was anything unusual on here. I know we always see SPX all over this.
GLD is number one, and IWD. What is IWD?
Sometimes we see a strike like that or a symbol like that, and we type it in, and it doesn't exist. Oh, yes. Russell 1000 value ETF.
Okay, so let's hit that, and I'm going to go back and see the strikes, just because I think it's fun to look up things that are...
Sure.
This only had a K. The shares traded only had a K next to them. In here, you've got 35,000 puts that are traded.
It's a spread, this 170, 165 put spread. Or it's a roll. It's got May to June.
May to June. And it's 35 to 30.
I'm going to guess they're selling their May and buying June.
I think so.
Let's see. May. What was the strike? Do you remember?
Hold on. I will look.
170 in May. So 170 in May. Yeah, here it is. 32,000.
So they're closing that one.
They're selling their May. And then they're buying June, and they had to go to the 165 in order to buy the June. What the heck? Look at this market.
Well, you don't know that. I mean, yeah. So they're getting rid of one and getting into the other, and this is not tradable. So we'll take a look at this tomorrow. We'll still have that up.
So it's insane to me why someone would trade this IWD instead of just trade IWM, because there's no market here.
No market.
Here's another saying: this person's going to get raked over the coals. What?
Where did that come from, too? They are going to get raked over the coals. They are.
I mean, when they say, "Oh, we need a market, we're going to trade 30,000 of these 165 puts in IWD." What the heck?
You're going to get raked over the coals. That's funny. That's funny. Hold the phone, Jenny Andrews.
What?
I'm glad I waited an hour and a half. I'm closing it now for a $300 winner.
What?
Yep. Spoons are only up 74.
Oh, wait. And that's pretty good. That's pretty good. Okay. Yep. So this is the time. 1 hour and a half. Tell me your strikes, because it was $11 when you sold it.
Yes. So my strikes are.
I just want to see how far out of the money they are.
Just do the 56.55 is my top. 56.55, 56.80 is my top strike. And then to the downside, it's 5,600, 55.70.
Yeah, nice.
Yeah. It's bouncing around.
Buying it back for $8. You sold it for $11. $300.
Yeah, right?
That was nice.
Yeah. Thank you, Jacob.
Jacob. I wish I could pull that study up, Jacob. All right, but yeah, it's been exactly an hour and a half.
So I think an hour is too low for it. I think an hour is too.
Well, I mean, suppose we're up 90.
But it's an iron condor. You got to give it time to. You have to give it some time. It's not like the Jajun trade.
Suppose we're up to 56.58, 56.58, 56.58. It was through your call about half an hour ago.
I know, but right now it's kind of like where it was when I put it on. But you need time for decay.
But I think you're 20%. You're 25%. Do you have a 25% GTC in there?
My 25% GTC is a pencil thin mustache away from getting hit. So it's going to hit 25%.
Yeah. That's what I was thinking. You should almost be at 20. You should be at 25%.
I'm at 25%. 830 is 25%. And that's where it's literally right there.
Yeah. Nice. So, slow clap.
Thank you.
Darn. I missed it. You called me and you're like, did you put it on? I was like, I was in the shower.
It's not a time frame thing. I'm out. 25%.
No, it's 9. Put it on at 9. Take it off at 10:30.
No, I put mine on at 9:21.
You know I take like hour-long showers.
No, you don't.
Yes, I do. Yes, I do.
You can put it on whenever. I think anytime before, like anytime in the 9 o'clock hour, and then give it an hour and a half. So great. I got 25%. Woo woo.
Maybe I should not have this giant bench in my shower. Then I wouldn't sitting there for so long.
I have a bench in my shower. What are you doing in there?
I just sit there, brush my teeth, floss my teeth, everything. Wash my hair, put a mask on my hair, everything. Like get my whole, wash my face, put on a mask. I'm in there for a while.
It's so weird.
and I miss these morning SPX trades. I got to start changing my shower time.
This is the weirdest conversation I've ever heard. I couldn't put the trade on. Why? What were you doing? Were you in the hospital? No, I was in the shower. That's the weirdest thing I've ever heard.
You know what? It's because today's our first day home. We've been on the road. We've been at the SIBO 2 days in a row. I couldn't take my long shower and put on my hair mask. So today it had to be done.
Put the mask on, get out, put on the trade. It'll take you less than 30 seconds. Get back in. Okay. Anything we want to get to take care of?
We never got filled on this Reddit. Let me take it down. 10 cent credit. 10 cent credit.
Markets are kind of wide.
Yeah.
And Frank Great was saying AppLovin is untradeable because the markets are so wide.
Okay. All right. But 30,000 contracts are going to trade in IWD.
In IWD at no bid at 250.
Let's take a look. Okay. What was it? APP? AppLovin. Now I feel like every time we say this, I'm going to say, you down with APP?
Yeah, you know me. We're such nerds.
2.5, 3.3, 1.4. There's not a ton of, but
I think what he's saying is, if you take a look at the 270, the markets are wide.
Yes, the markets are wide. Look, I'm in the monthly, and like the 250, 16, 70. The markets are wide. So here's a word of caution. When you're looking at something that's not liquid on a good day, on a calm day, they're really wide. If the market's falling, these are going to get really wide.
Yeah.
Right.
Yes,
right.
Those are going to get extraordinarily wide. Some of those are out of control. And that's what Frank was saying.
But if someone said to you, I want to own shares of AppLovin, or I want to get bullish AppLovin, or I'm interested in AppLovin, what would you say to them?
I would sell a put. I don't care how illiquid a product is. I'd rather get in with selling puts.
That's it. And so my friend who was saying like, yeah, I like AppLovin, I want to get in. I would say, well, I would, if you want 100 shares of AppLovin, if you really love AppLovin and you want 100 shares, I'd start with selling a put.
Right. And you can get, you can go down, can you scroll down, go to where the expected move is for this 15-day cycle.
Where the expected move is. Okay,
keep
here.
Going, yeah. So, it's 217, which is, that's what I said. Just keep going. Okay. But, here, you're going to get $800 for this. So, this exact scenario, and it was funny because you were talking to our trading conductor, kind of teaching him how to sell a put. And it reminds me a little bit of your neighborhood when you're like, okay, so if in 15 days, AppLovin goes down to 217, then you own it at 217, but your cost base is actually, $8 lower than that.
Yeah.
Okay, what do I pay to do that? Was the question your neighbors asked them one time. You're like, no, you're taking in a credit for that risk. And you're only putting up $2,000 to do it.
And I hope I was clear with the train conductor as well. Like, this is 100 shares. If you want 100, if you're okay with buying 100 shares, and he was smart enough to say, because I said the notional value would be, $20,000. If you're willing to have $20,000 into AppLovin, you'd have 100 shares of AppLovin at like you said, 217 minus the $8. And he's like, but wouldn't I only need 50% to hold it? So yeah, $10,000. So you'd have $10,000 held up in 100 shares of AppLovin. And I'm curious.
But Jenny, what I think becomes super fun is when people realize that puts in the money puts are synthetic covered calls. You can always keep it where you're using margin, and it's only going to be 20% instead of 50%.
Right, you don't have to, if you had 100 shares of stock at 200, right, it'd be $10,000 because it is, so at 287, 14,000, which you see by 100 shares, it's using 14,000. That's half. So you're using 14. But if you have an at the money put, it's using 5,000 and you could keep rolling it and rolling it and rolling it.
Yes. So it is true. Like I prefer entrance with puts because I'd rather keep the collection than ever own that stock, even if it's a stock I want. Now, your conundrum comes in when it keeps running up and running up and running up because you have to keep following those puts up.
And I understand where Frank's coming from with the illiquidity. Okay, we're in Reddit. The illiquidity, because I deal with that with Birkenstocks. Now, I like Birkenstocks and I wanted to get into Birkenstocks and I would sell puts in here, but these markets are wide. I know this is 270 at 280. It looks narrow. These are tightening up, but they've been wide. And it's been a struggle with trying to get filled at mid-market and dealing with wide markets and rolling puts when you're dealing with wide markets. But look, there's no open interest, but the markets have tightened up.
10 cents isn't bad, but I see what you're saying. That is the struggle, and that's what you call slippage, and that's why. But you like Birkenstock, so I think this is a different story in the fact that you like the product, so you don't mind getting into the slippage here. Where most people, if you're just looking at it from like a trading perspective, and I think the research team does a good job about saying that, where that's like the slippage. So a lot of people want to stick with just really, really liquid products because they don't care.
Right, because if you don't care about if your product indifferent, stick with liquid products. But if there's something you want to be in, I'd rather get in with selling a put than just buying the stock, even if it's wide markets.
I think I'm just going to talk about you instead of but I think I'm the same way. I think we're a good hybrid of both, meaning I know I'm acquiring stocks that I want to keep for life, and I'm also a trader. So then the other ones I'm just selling puts in that I don't care about, right? And I think we're a good blend of both of those.
A good blend of both. Right. And so when I was talking to someone yesterday and they're like, what is your account like? And I was talking about, selling puts and things I wouldn't mind owning, right? If I end up owning those. And then just selling puts until I have to take them, and then I could sell calls against them, or I could keep rolling the puts. And he called it, he's like, so your account is basically like covered calls on steroids.
Oh. Yeah. I prefer the Wheel of Fortune, but sure. Yeah, because, he's an advisor, so he understands covered calls.
Right.
So a lot of people have a hard time with naked puts, and they say they're riskier than owning the stock and selling a call against it. Not true.
No, not true. Not if you're, it's riskier if you would only buy 5 shares. If you're because if you're looking at money spent, if you're thinking, one put here is using $2,000, and if you're okay, $2,000 I can buy. I guess it's with 10:57 and we're running out of time, and we could get into this tomorrow, but the risk is 100 shares. So if you're not willing to take 100 shares, then maybe you're better off with a spread or doing something else.
Right.
But you have to always keep in mind the risk is 100 shares. And I always want to beat that into people's brain, because I saw people get margin calls on short puts because they had more short puts than they could afford.
And that was Tesla, wasn't it?
And that was in Tesla.
Can you tell me what Tesla's doing before we conclude this show? I'd like to keep an eye on it. My son bought 3 shares.
It's up $1.67.
Woo! He's up.
Well, foods are only up 56 now.
Wow.
Yeah. Foods are only up 56. So let's see how our earnings trades are. What did we put in? Remind me. We've got Apple.
Honestly, I pushed everything out already. So we put in Amazon, Apple, Reddit.
So see, look, now Apple's down on the day. So Apple's actually down on the day, and our little earnings trade is down right now. And all of our earnings trades are down because we put these on when the market was 40 points higher. And so
Is
Apple,
Reddit down
Amazon.
Too? Apple, Amazon, and Reddit.
Yeah.
That's okay.
Fingers crossed.
We made our bed, right? And so now we're with both of those, we're into the point where if it expires right there, or if it stays right here, we're not going to make any money, but we won't lose any money.
But we won't lose anything.
Right.
If they have big moves down, then we'll be out.
And I do want to bring home this point, and I hope this makes sense. So Jenny and I in this account trade during these times. So we trade between 10 and 11. The show time. We trade during the show time. So sometimes it's better, sometimes it's worse, but I think it all comes out in the wash.
Right. Yeah. Like for the two of us, we're putting our earnings trades on at 2:30, but our show is 10 to 11. So we're putting our earnings trades on from 10 to 11.
And when you consistently do it, so some people, I think that's a more realistic approach to trading, is saying, I only have, certain hours during the day. Maybe it's your lunch hour, maybe it's this, but it all comes out in the wash. If you always do it during that time, it all comes out in the wash.
All right, Liz, good to see you. Glad I made it today.
I'm glad you made it today, too. It's always a fun show with you. All right, everybody, and Jenny, good luck with your earnings. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody. Jenny, do you...
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I will pay for the first bar mitzvah that has eggplant parmesan as the primary dish.
Can you throw weddings in? I'm done with bar. I'm done with bar mitzvahs. If you throw weddings, right? If you throw weddings in,
Hold on. Cancel the quinceanera. You're in shoe now. All right, we got it.
If I got married again, I would have eggplant parmesan as my dinner.
If I get married again, how stupid are you?
Not if I get married again. If I was
exactly
getting
what
married.
you said.
Don't cut that out, Beth, for him.
If I got married again, I would have eggplant parmesan as my dinner.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Katie McGargle in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my two besties, Mike and Katie. Katie, how are you? Good morning.
Good morning. Sleepy.
Really?
Yeah.
Why?
It's the weather. It's the weather.
Oh,
Yeah.
I thought you were up late gaming or something.
No, I'm off the sauce right now.
Nice.
I've decided to read books again for a little bit. Yeah.
What are you reading?
Spooky school books.
Ah.
You know, that's my genre. Kids at spooky schools.
Like Goosebumps adjacent?
Kind of. It's almost like
What a throwback.
more morbid Harry Potter.
Huh. Okay.
For now.
When does the Harry Potter series come out?
I think next year.
Next year?
Yeah, because they just started casting.
That's
so
true.
my gut is saying like they haven't even built sets and started, pre-pro or anything like that. But maybe. I don't know. We shall see. I am trying to catch up. I just caught up because I was out of town this weekend. I caught up on Last of Us last night.
Ooh. I haven't started that. I'm going to start that this weekend.
Wow.
You avoided spoilers, or have you
Yeah.
played the game where you know what kind of is going on?
I have no idea.
Man.
Wow.
Yeah.
Season 2, or you haven't seen any of it?
Season 2.
Oh, okay.
Yeah, you should start.
How many episodes?
You
3
should-
in? 4 in?
3 in.
You should do that this weekend.
Yeah. And then I had to, cleanse my palate by watching an episode of Righteous Gemstones.
Yeah.
I gotta get back in. I gotta rewatch.
So good.
those.
I think my favorite is just the way that they ad lib and you can tell.
Yeah.
Like that's not part of the script.
Yeah.
So funny.
Great show.
Yeah. How are you both doing?
Doing good. Well,
Good?
he's probably the best. He's on a flight after the show. Here.
Yeah.
Where you going?
Peacing out. Arizona. It's my mom's birthday tomorrow.
Mama?
Yeah, mommy. Nice. So we're gonna spend
gonna
some
go?
time there, play some golf. Nice.
Soak in the sun.
Soak in the sun. I'll come back with a nice golden, like fresh out of the oven, perfectly baked cookie, golden brown. It'll be perfect, shining.
Yeah, I was pissed. I was in California this past weekend and it was like cold and rainy and it was like beautiful here. I was like, are you kidding me?
Missed the one good weekend we had. Now
I know.
Did you go downtown? Downtown Napa.
We did, yeah.
What'd
So
you think?
we did.
Was I correct? It's pretty like it's kind of funny that it's like seedy a little bit.
Yeah, I mean, we did like a day of like Napa wineries, a day of Sonoma wineries, and then just kind of did some exploring in between. So saw some celebrities.
Wow.
Jason Segel.
Mm-hmm.
It was really awkward. Like he was like waiting for his coffee right by our table, and it was me and like 7 of my friends, and we were all just like, you know,
What do we do?
had a baby cow. It was a big weekend.
Nice.
Yeah.
Nice.
Yeah, it was fun. But yeah, the weather was not great. But persevere. Now we got rain here.
Mm-hmm.
Markets are looking up a little bit. I know I've been trying to cover a couple things. I've got a couple orders working. I've rolled some things, taken some risk off. What say the both of you?
I spent all morning covering trades, and I will say, when I got into the office, it was a very change of pace for me, but I had a couple people that got into my meta trade from the cherry picks.
Oh.
And I was excited about it because there are people that some people that I think are very new in their trading. And they were like, hey, nice meta trade. And I was like,
Compliments?
I was like, you're trading? That's awesome. And they were like, yeah, I took that trade. It was a great trade. So that made me excited. But I also thought to myself, I'm like, oh God, I'm now going to have a lot of people with knives at my back for the losing trade. Because now I know everybody's like watching. I was like, oh, I didn't know like you would be trading that. I didn't think so. But now I got some people that are watching my back. So that was kind of a nice, interesting part of my morning.
Okay.
Yes.
Yeah. Well, and it could have also been like the beginner luck thing, right? They were passing on some of that good juju to the meta trade.
There is that.
Yes.
Got that little.
It could have been a beginner luck thing.
Little streak at the beginning of your trading journey.
Yes. No,
Yeah.
It was good. I was happy.
Nice.
Yeah.
Do you remember when we were in Vegas and Liz Staub was on the phone with Scott and she was playing roulette and he was like telling her what to put the things on for?
Oh, which number?
I wasn't invited to the Vegas trips.
Yeah.
Yeah.
Huh?
I wasn't invited to the Vegas trips.
Oh, yeah, that's right. It was the boys.
Yeah. I let you go wreak havoc on.
Yes.
Yeah. So that was the one I.
That reminded me of that though.
Yeah.
See, I can't do that because I'm, of course I would be honest about it, but like if Tom was like, oh, just put like 100 on, whatever number and it hit, for me to pay that out to him would.
Yeah.
I would be like, you are
Kill your
lucky.
soul.
But it was definitely beginners. There's something beginner's luck.
And then with Scott, like through the phone.
Yeah. Because then she's like, is this right? And then it would hit and she's like, is that good? I'm like, yeah, that's good. You just won $3,000.
Yeah.
For like nothing.
Ugh, so annoying.
So
Did you
good.
hear that Tom said that the 3 of us will be getting married and living together this morning? Like we're in like an episode of Golden Girls.
Huh. Wow.
Yeah. And then I just want to make this
There's a lot of tax benefits.
That's
we
true.
can think about that.
Yeah. How do they do taxes for thruples?
It's a good question.
TBD.
Yeah. You guys could be the couple. I'll be like the adopted son or something.
Okay.
That's what we should do because then
You're our dependent.
We get the marriage tax benefit and a dependent tax benefit. That's probably the best way to do it.
That's probably the best way.
Yeah. Well, for the record though, Tom was also like, I asked not to be invited to Katie's wedding. And I was like, okay, sweetie, sure.
I saw that. Yeah.
Sure.
Yeah.
Whatever you say.
Sure,
Tom.
Jan.
Sure, Jan. Yeah. Anywho, what else is going on? Is it PGA Thursday? What's the picks?
It is.
What's popping off?
Oh, yeah.
It is.
Nap time.
Jake Knapp. Jake Knapp or bust. That's it.
Nap. Really
It's kind of the quiet. It's the calm before the storm.
KNAPP.
Yeah.
The calm before the storm.
I think there's actually someone that works in this office with the same last name.
Really?
KNAPP. Pretty positive. But, yeah, calm before the storm. PGA Championship in 2 weeks. That's when there will be signs if one of us wins that.
Okay. It's May 1st. Pay your rent.
Oh.
True.
Boo.
Well, both of you own, so I pay my rent.
Yeah, well, it still goes. Mortgage, same difference.
Pay the HOA fee.
Oh,
boo.
God, boo.
But good. I missed you guys last week. I am eager to hear about what you're trading since I'm doing some cleanup. I've got some stuff rolling off in the next like 2 weeks or so, just like long out of the money calls from old diagonals and so on and
Blame
so
Mike
forth.
for those.
Yeah.
Even though a lot of them are mine.
It's all good, you know?
I had some good ones.
I think we put a lot of them on like right at the beginning of the downfall.
Mhm.
So
yeah.
water under the bridge, debit trades.
Yes.
What can you do?
What can you do?
Quickly, the market, E-minis up 63 here. Had a very nice little rally over the last couple sessions here, or maybe even a week or so. We are at 56.50. We were approaching 5,700 earlier this morning, giving up a little bit from there, but very strong market. You got the NASDAQ up 320, you got the Dow up 240, and the Russell up 9. You had some big earnings after the close yesterday. Microsoft, huge move to the upside, up $34 and change. Meta as well had a nice move, $25 to the upside, so definitely seeing some strength in the big cap stocks. Some other sympathy moves in the overnight session. You had Amazon up $5-6. Google was participating a little bit. You had Apple moving higher as well, but even though it was lower in the pre-market. So definitely seeing a little bit of strength in the big boys. Oil giving it up a little bit, /CL down 26 cents. It was down about $2 earlier this morning. 56.39 was the low. It's been very weak over the last couple sessions. Volatility futures have remained sticky. 2380 here, they're basically unchanged. You got the VIX itself at 2477. Bonds down 20 ticks, gold down 100. Gold has had a $300-ish move in the last week and a half. Huge move to the downside. Silver as well, down 43 cents. And then Bitcoin approaching the 100K mark, up $3,200 on the futures, spot up 1,800. Seems risk on but who knows? We've had a really nice rally to the upside. It's giving me a little pause here.
8 straight days, 10% move to the upside.
Nice.
Nice.
In the E-minis.
It's vol for you, baby.
I would like to announce that I secured the miracle move in gold futures. And I sold.
Wow.
Yeah. Yeah.
Wow.
Yeah.
Okay. Did you close it?
Yeah. I sold out of it for another 60 cents.
Wow.
So I've rolled it into a free butterfly to lock in a $100 profit. And then on today's move, I was actually able to close the butterfly for another 60 cents.
That was a legitimate lottery ticket.
Yeah.
Yeah, I turned mine into a free butterfly, just locked in $50.
Nice.
Because I just don't want to risk it.
Mm-hmm.
But we still got 26 days left. But now my shorts are at the 22 delta. So who knows? We were just there a second ago. Maybe it'll pin.
Yes.
But if it did feel good to take off at least the risk.
Yeah.
Very nice. Very nice.
I also covered. What did I do? I rolled Micron short put out in time, picked up another $2.
Nice.
And I covered SoFi the other day.
And the wheat. You got some wheat.
And that's my trade idea.
Oh, sorry.
Spoilers. Gosh.
Damn it.
It's okay.
My bad. I did a whole bunch of things. You can see them all on here if you check the follow page. But same sort of MO as all year long.
Yep.
Some of these big moves, you take advantage if you've been holding stuff that you get bailed out on. You got quick profits. That is what I'm doing today. Closing out of some earnings trades that were nice. Closing out of some butterflies. I had this GDX butterfly. Stock is down $4 or $5 from the highs. SMH, big move. NVIDIA. The Meta trade, obviously, this morning. Bought in the risk on gold like you did. In XOP, I closed out a diagonal spread. Cleaning up. I think this is probably the lightest my position page has been. I can actually see all my positions on one page.
Yeah.
Which I'm usually a scroller.
Yeah.
I usually got a lot on. Mm-hmm. So this is as light as it's been. I have lots of capital ready to throw around.
But it does make sense that it is the lightest it's been after a 10% up move, 8 straight days, vol collapsing. Yeah.
Yeah.
It's the nature of the
practice what you preach.
Yeah.
That's what I do.
But yeah, I closed that gold, butterfly, and the miracle sell-off here. I had
Miracle.
I had the 3200, 3210, 3220 butterfly.
Dang.
Insane. And that one was a little tricky because it was still flying. The bid-ask spread was still flying around, but I was like, I got to be able to close this for like 70, 80 cents. I worked it, didn't move, and then I routed it for 60 cents, and it filled like 5 seconds later. So another tricky one, but also closed a downside put diagonal in GDX. Same kind of idea. Closed the AAL call zebra. The 810.
Oh, I've got that too.
Took 60 cents out of that. And then I had a meta iron condor, the 500, 600 short strikes with a 10-point wide wing. And I closed that for 80 cents of profit, even into this. It was a bigger up move when I closed it. But yeah, just a good example of IV crush being much greater than the delta move. So if you capture the range and there's an inside move, it's going to be a vol collapse kind of move. And yeah, that's it.
Love it.
If you want to join us on the YouTube channel, we're streaming live there. Just pop over to tastylive and you'll see this video streaming front and center on the homepage. You can click on the link at the top of the chat if you would like to get your free cherry picks.
Yes.
Yeah.
Yeah, good one yesterday.
Yeah.
You said.
2 days ago. Yeah.
2 days ago.
2 days ago.
Yeah.
What is time?
I know.
Flat circle.
Literally.
Man-made construct.
Yeah.
It's just blending together.
Yeah.
It is.
But yeah, trade ideas for you coming right up, and then we'll get to the YouTube chat questions, trade ideas. We have Amazon and Apple earnings today after the close. So
big day.
Plenty of stuffs to do.
Yes.
All right, so my trade for today is in Amazon. I'm going to put the link to the Amazon earnings preview I wrote a couple days here ago. But I'm just playing this to the upside. We've seen really good numbers from the other big tech stocks, and a lot of the other big tech stocks are also saying, let's hold off on forecasts because nobody knows what's happening. So with that said, 11-point expected move for earnings today after the close, and Amazon's at 189. I was filled a little bit earlier. It's actually trading. This trade is working out right now. It's up about 40 cents, but still going to hold through earnings. I bought the July 190, just giving myself as much time as possible. There's a little bit of an IV discount in July relative to June, but I really just wanted to have as much time as I could. And Amazon's a $180 stock, so I knew I was able to afford July in this case. And then I sold the one-day 200 strike call for about $2. So paid just over the width of the spread here. It is a 10-point wide diagonal, but because my July option has so much time left, as you can see on this risk graph, it does not matter if Amazon goes nuclear to the upside, because all I need to happen, since I paid 87 cents over the width of the spread, is I need my long option to have 87 cents or more of extrinsic value. And pretty much anywhere on the strike plane, that will be the case. So looking for a move above 200 where I'll collect all that extrinsic value tomorrow from the short, and then I can just sell out of the package, and any additional profit will be how much extrinsic value is left in the long. In this image, I crushed implied volatility by 5% in July, bringing it down from 39 to 34, and pushed the risk graph out in time to tomorrow. So about 570-ish max profit if we go closer to 200 or just above it. And yeah, we'll see what happens. But if Amazon drops, because I went to July, I can roll the 200 short to May, and then I can roll that from May to June if I need to. So I have 2 embedded rolls in this, which is another reason why I went to July. You pay a little bit more, but you give yourself another defensive maneuver that you can deploy if you need to.
All right. Sound.
Very nice.
Thank you.
I'm also long Amazon.
I have not touched it yet. So
Variety of positions. Multiple.
in the Johnny account and in here?
I don't think I have any in my Johnny account. I'll have to look. But I was going to do an Amazon trade, and then I looked at the slides and saw that Mike did it. But I was already filled, and I was like, screw it, I'm going to hold it. Yeah. So I'm playing the upside, too.
There you go. Well, what does that mean for me?
Ooh.
Am I going to KOD it?
No.
No.
Please no.
No.
Please no. Yeah, I will take a look while we're continuing.
Beautiful.
Beautiful.
So I went, of course, with a little spicy trade, and I am looking at Roku, another stock that has earnings after the close today, playing like neutral / bearish in the best case scenario, but with a little bit of a buffer to the upside. Really minimal risk to the upside here with the stock kind of range bound. It got as low, I want to say about 55 was like the low. Yeah, about 55 was around the low of this recent sell-off. Got as high as 100 and change. Definitely a stock that has given me problems before. It has also been very fruitful because it's one of those really high volatility, $60, $70, $80 stocks. It whips around a little bit, so just be careful in here. Margin requirements are a little high in there, so I didn't want to be naked here, so I went with a crab trade on the downside. You got it trading at around 69. It's actually a little bit lower right now, 68.31. I went to June. I bought the 65 put. I sold 2 of the May 2nd, expiring tomorrow, 60 puts. I sold 2 of those at like $1 and change each. So about half of the cost of that long option. And then I went and bought the 50 strike put just to cap, defines the risk and caps how much capital you're using. Rather than use $3,000, I'm only using about $700, which is our max risk, $755 in max risk. So you got about $2 and change, $2.25-ish cents in extrinsic value that rolls off the table tomorrow. So ideally, you get kind of an inside / down move, maybe somewhere between 60 and 65-ish would be the best case scenario, which is basically the expected move to the downside. But anywhere around 65 would be a nice hit here. Max profit on this, there's obviously a variable here because there are 2 different durations. So, I'd probably look for like $200 overnight would be like a home run here. You could probably make more if you can pin, 61-ish, but $200 is kind of what I'm looking here. Buying power, $755. That's the $2.55 debit for the trade. So the $255, that is the max risk if the stock were to go up and you held this all to expiration. You can see in the risk profile, I moved it to the end of the day tomorrow. So even if it does move up a little bit, you probably still scratch it, maybe make a little bit of money on it. I didn't take any vol out, but if you get a 75 print, you're probably a scratch, maybe a 50, 60, 70 cent loser, something small. Your tail upside is kind of your risk here, but the max loss is $255 to the upside plus the $5 extra width on the downside. That is the crab part of the trade. So if you had a big tail event to the downside, you could theoretically lose up to $755, but probably more like $400.
Okay. Roku.
Something different.
Need to also look in there as well. Roku.
Vol's high. Ivy rank at 50.
Yeah.
Cheap underlying.
I ain't mad about it.
Yeah.
Expected move is what again? $8?
$8. Yeah,
Okay.
you got 291% implied volatility in the May 2nd expiration, 70% in the June. But it is up, there's definitely some vol there.
Maybe. Let's see here. I don't know. I'm going to mess with this a little bit.
Okay.
Maybe.
No rush. We got time.
All right. Yeah. I shall take a little look.
Yes. And if you'd like to just duplicate the trade, you could do it from the follow page.
Indeed.
On the platform.
Yes. A differentiator, I would say. Check out the tastylive / tasty trade follow feed.
Yes.
Lots of different traders, lots of different risk appetites, lots of different preferences and trading styles. All there available to you.
Lovely.
And check out if anybody leaves a comment. I'm hit or miss on my comments. Mike, I think you're the most consistent. Nick, you're probably also extremely consistent, right?
I'm in there. I like to give the peeps,
The logic.
the insights to what I'm doing.
Yeah. The know-how.
The know-how.
Empowering the retail trader.
Yeah. Sometimes you could see the pain too. I'll be like, this stock's a
Pig. I knew you were going there.
It is the phrase of the decade.
Yes.
All right, well, I am going uncorrelated. I don't know what Mr. Westwater feels about the current agricultural market, so hopefully I'm not on the wrong side of his trade. But I figure this is just like almost a classic tasty setup, if you will. Wheat is on the lower end of its range, so really what I'm looking for here is more so a grind sideways to a little bit of a bounce rather than it breaching this short push strike. So I'm going with a classic put vertical spread, giving myself a little bit more time with 50 days to expiration. I'm collecting 1/3 the width of the strikes here. So again, in the futures options world, be mindful of like the multipliers and the points. So you'll see that I have a 20-point wide spread here, but actually in terms of value, that's $1,000 in spread value. So you have some flexibility in terms of controlling your size, even though, you know, it might be intimidating at first glance to not know exactly like what the spreads and the setups kind of look like. But I've got the 520, 500 short put spread, like I said, in the June expiration. You might also be wondering if you're new to futures options, KDY is the buying power effect, not that full max loss. That is due to span margin, which is kind of a series of factors that are used in a calculation that kind of consider what your buying power requirement should be when you are trading futures options. It includes time and volatility and a couple of other like scenario-based calculations. So that number can change, but that's why when we're talking about futures options, we oftentimes say you could potentially get a higher return on capital because of that span margin. You're not required to put up that full max loss up front. So yeah, pretty classic trade. Collecting $350, would be happy to squeeze out $100 and $150 from it.
I followed you into
Sideways
it.
grind.
Same, I'm also in. We're all in.
And just so that other people know, wheat's SPY correlation is 0.23, so pretty much moves independently of SPY. So if you're looking for a little diversification play.
I like it.
Yeah, and also the corresponding wheat ETF, which is WEAT, no premium. You got to use the futures options.
Yeah, probably not very liquid either.
Like literally the at the money strikes are 0.
Perfect.
So, yeah.
Very nice.
Yeah.
Cool. Trade ideas.
Yes. Yes, yes. Quick and easy. Look at that.
Yeah.
Wow.
11:28. We got 32 minutes to power through some questions.
Yeah, you got some trades. Throw them my way.
Yeah. I asked if people could ideally tag Tasty Live in like the actual questions that they're sending just to help us skim through them. No worries if you didn't do that though. We will check out all of the chat, so be on your best behavior. You can be on your mid-level behavior.
Good behavior is okay.
This is a safe space, Katie.
This is a mostly safe space.
You can go wherever you want.
No. That's giving them. You're giving them an inch, and they're going to take a mile.
I'm telling the peeps, my peeps, my peeps can do whatever they want. Okay.
All right.
But listen, supervisor is here. I will put you in timeout. I will give you a 5-minute timeout. You know.
And a stern talking to.
Yeah.
All right.
Exactly.
All right. Smack Lovin has a Amazon May Iron Condor. Short the 180 and 200 strikes, 15 points wide. Collected $6. Looking to adjust into a broken wing butterfly. I think it's fine. I would just close this trade. If you're trying to shift this and like manipulate it, I would just close it and start fresh. You have a small profit here, and it is going to feel like a butterfly type trade because your strikes are within the expected move. So if you're trying to hedge or avoid a big up move, I would just close this one down, take the small profit, and then just create a new trade. But yeah, call broken wing butterfly, call zebra, call calendar, call like anything.
If you're trying to play the upside?
You're trying to play the upside, yeah. Yeah. Because yeah, you're a little too close here for comfort. You would need an inside or a non-move for this thing to come in more, but it's still not going to come in that much because you have narrow spreads within the expected move. So I would just shut this down and start over fresh. But yeah, nothing wrong with the broken wing butterfly to the upside.
Yeah. Agreed.
Somebody quickly just asked, how do you find that ZW number that corresponds to 0.23 of SPY? So if you just type in the symbol WEAT, you can check it out on that like right-hand panel. Yes. Yeah, so where it says core SPY, right next to the liquidity indicators with the little stars, you'll see that 0.23.
Yeah. I don't think it's there for the futures themselves. I think because
Yeah. They can't be, they're it's not an apples to apples.
they expire.
Yeah.
It's a weird thing about futures, and they have different prices. So it's like you can't really string them all together.
Yeah. But specifically for ags, wheats is WEAT, corns is CORN, and soybeans is SOYB.
Yeah.
You want to take a look.
Yeah. No soy boys.
No soy boys? Are you intolerant to soy?
Well,
That'd be
why
wild
did that
if
come
you
up? It came up with Westwater.
Forgot, yeah, I don't
So
remember.
he had like a soy. He
Oh
made
yeah,
it.
it's because he's the corn man.
Yeah.
And then it was
Oh yeah, corn. Yeah.
shifted to soy
Somebody
boy.
was like, okay, you guys.
And then
yeah.
And then something else.
And then we were like, no, Thomas isn't a soy boy.
No.
It's military.
But he's like a homestead boy.
Yeah.
Bringing in eggs and veg.
Oh he's got a whole farm now. Westwater Farms.
Westwater Farms.
Yeah. Haven't you seen? If you get a carton of eggs, there's a literal stamp that says Westwater Farms. They have a stamp.
Yeah, get your bug out bag and just go right to Westwater Farms.
Yeah, but he made a fence for his garden, full ass fence,
Dang.
and he's got what San Marzanos, jalapenos,
Hey.
the whole 9 yards.
We're going to his house for chips and salsa night.
Yeah, good, perfect. Knock on that door.
Go to Gallo. All right.
All right. Dr. Jim Special, bearish Microsoft Butterfly, Friday expiration. 352.5 long put. 392.5 long put, 375 short twice, and then the 352.5. So pretty wide butterfly.
Yeah, I would just, I would close out of the shorts. What were the shorts again? 370 something?
375.
Close out of one of the shorts and you free up all the buying power, and
Yeah.
the rest is just a lottery ticket.
Yeah. Close the lowest leg and the 375. Would you roll the rest or close? Yeah.
So they've basically covered one of the spreads,
Yeah.
and then they just
Oh.
have the other spread left.
Yeah, you can leave the long spread on and just pray, but it's
Yeah.
basically it's going to expire worthless unless something insane happens.
Yeah.
But yeah, that's kind of the binary nature of the 1-day trades. It either hits or it doesn't.
If you got was it the 350 was the long?
352.5.
Yeah, so that option I would just take out of the order because it's zero bid. So if you're trying to close it and you're not getting filled, that's probably why. So I would just close out of the two shorts and then the closer at the money long, and you can just free up.
Yeah. I mean, you can I think they have the 392.5 long and one of the 375s left. But yeah, that net transaction's gonna be like 3 cents. So
Yeah.
it is what it is.
Tiny. Lotto.
Someone's getting mad that you're not wearing tasty merch also, Mikey.
Ooh.
It's okay. This was like a rainy day. Just grab it from the closet.
I was going to say, Mikey, I think he has a lot of green polos. You gravitate to the green.
I have the green.
I know. We got to get you a
Green-
little something
green
else.
face.
Yeah, we got to get you.
I've got some other
Oh, you have
colors.
like some reds.
Yeah.
It
I
accentuates
have
his
the blue,
eyes,
too.
though.
Oh, thank you.
You know?
Yeah.
You're welcome.
I just had to wear this because this is the new one. This is the Arcadia Bluffs, and I was like, I'm wearing this.
Yeah.
Gotta
That's
do
the
it.
one, the Michigan one.
Yeah.
Yes.
Kind of looks like Notre Dame.
Mm-hmm.
Keep that in mind for the
Irish.
next Notre Dame Bowl
Yeah.
game.
Little face off.
Mm-hmm.
You can go to Tasty Live store.
You can.
What's the URL?
tastytrade.threadless.com.
Beautiful. Yeah, we'll drop that in the chat too. In case people want to pick up some merch. Fly the colors.
Yes. Before the tariffs hit, price is going up.
Yeah. You're just going to skim off the top
Yeah.
right into your pocket.
Yeah. Kevin was telling us a funny story yesterday. Because there's a winery below his place.
Yeah.
And he's like, this guy, because of the tariffs, he bought a ton more of inventory than he normally would.
Yeah.
And then Kevin was like, well, I mean, I live upstairs. You could store all this in my place, but there will be tariffs.
Yeah, there might be some.
Yeah. Well, it's funny because when I was at one of the wineries this weekend, I asked them, like, how are you preparing? And they were like, well, you know, obviously everything is very touch and go, but one thing that they're thinking of doing is importing the French oak just as like straight lumber and building the barrels here rather than having them built in France and then shipping the barrels.
I like that.
So it might cut down on.
That could be a shtick. Custom built barrels.
Yeah.
Fun times.
Yeah.
Love a good wine. What is your plan for the NEM put butterfly on the Johnny account?
I have the 55, 52 and a half, 50 put butterfly on. I think I have this on for like free or maybe a small. I have it on for 20 cent credit. So we're right where we want it to be. A little bit of a move higher would be perfect. 52 and a half is my short strike. But I'm going to hold it. 2.5 points wide, small one. I'll let it ride for now. Wouldn't hate if you close it, you net out $90-ish profit on the trade. Nice little trade.
All right.
Yeah.
Beauteous. Mark, do you offer securities lending programs? Yes.
Yes, we do.
Yes.
Tasty Trade does, I should say.
Yeah, I just posted a link to the Help Center article. But yeah, you can, I think there's a video in there and some written context around what you can do, but yeah. It is available.
Just go to my.tastytrade.com, head over to the Manage tab, and then in My Accounts, you'll see fully paid securities lending, opt-in, advantages, disadvantages, all that fun stuff.
Very nice.
Yeah.
James Bond, happy post-hump day, yes. Have you caught the zero-day trading bug, KT? If so, how do you trade it?
I have not caught the bug, mostly because my time management skills are very unpredictable when it comes to work here.
Yes.
Tom keeps me busy, but I'm receptive. So what are they saying? Looking at SPX iron counters, what are you all doing in 0 days? Do you?
I don't, but if I did, let me tell you.
It'd be SPX.
It would be SPX. It would be iron condors. I would have a GTC order for 50%, and I would not have a close at loss order. I would just let it go.
Yeah.
Because
size it appropriately.
Because like you're gonna get your 50%, or you can just hold it. But I mean, with short premium trades, there's no reason to hold it if you're already at 50, 60, 70%. You just have a lot of risk on the table. But the opposite side of the coin, if you're already at max loss or close to it with an in-the-money spread, you could see the markets reverse in an instant. Like yesterday is a good example. Look at a chart in the E-minis from 2 o'clock to 3 o'clock. It's hilarious.
Yeah.
So like if you close a loser and then you watch that happen, it's going to be a very painful thing. So yeah, if you're sized appropriately, you should be able to just hold those losers and see if you get the reversal. But the winners, you can close at 50%.
Right.
And I also don't mind if you don't want to do an iron condor. I don't mind just taking one side. Like let's say you think the general momentum is upside, you could place it just the put side, or you can look at the intraday range based on implied volatility, and then see if you get down to the lower bound at any point, and then you throw it on. So there's a lot of different ways to slice it, but the main thing is being able to hold it all the way through expiration, even if it's a loser, and that comes down to sizing appropriately.
I think you make a good point, though, about having in a resting order, which would be beneficial to somebody who may not be able to be at their screen come market close.
Yeah.
Or throughout the day.
Yeah. Yep. Put on a Microsoft Iron Condor in May. 360, 410 shorts, 10 points wide. It's about a debit to roll the calls out to June.
410.
410, 420. I mean, you're right there. This is a big move.
Oh, is this in the May monthly?
May monthly.
Yeah.
So 410, 420, trading for $200 less than max loss. So similar to what we were just talking about with the SPX, you have $200 more to lose. You have $800 more to gain back if there's a sell-off. Rolling to June is going to cost you. I don't like rolling to June with in the money spread, but I mean $1 is whatever. Like what did you collect for this? I think is the better question. If you collected $3 or $4, probably maybe closer to $4, I would say. But if you collect $3 and you give up a dollar of that, you still need a downside move. It's tough.
I think you hold it.
Yeah, I think you hold it.
You traded it into earnings, so you got to be comfortable with that. If you get a couple dollar down move, you might make $100 back and then you close it and start fresh.
Yeah.
In June.
And then you could either close the 360, 350 or just let it go. It's not going to hurt you if Microsoft goes back down to 390.
Yeah.
The net trade will be profitable, so.
7 cents, that spread.
Yeah. You might as well just close it.
Yeah.
But yeah, 15 days, you're right at the expected move. A lot can happen. Whoa. Just got slammed to the bottom of the chat.
It's very annoying that YouTube does that.
Yeah. Palantir. Bullish on Palantir, considering a long call diagonal for earnings.
Ooh, stocks had quite the run.
Yeah.
Back to basically highs. I think it got up to like 125 was the high. Yeah, 125-ish.
You with your little hollow candles.
Oh, yes. Yes.
Mm-hmm.
The trend candles. Mm-hmm. So it gives you...
Yeah.
It changes.
You've been talking to Ryan Grace a lot, haven't you?
He does. He influences me quite a bit. You see all my little lines. He's pretty colored lines,
Do you dream about them?
Yes. I see them.
I would say he 100% has had dreams of trading.
I'm sure we all have.
Yeah.
Like the dreams where you're like trying to run, but you can't run, but you're trying to close an order. You can't close an order.
Exactly.
Snowboarding down the down slope of a chart.
I can't say I've had a snowboarding dream.
No, I'm just making stuff up. But yeah, so kind of like a shorter term diagonal, 118 call on the May 30th, and then short the 138 call in the May 16th.
138.
Yeah. So pretty wide. $800 ish. Possibly adding the short put to reduce costs. Yeah, you can do a number of those things.
That's a double.
That's what we call a Psycho Bull. Diagonal spread paired with a short put.
Yes.
I would probably put the short put in the 15-day. If you're going to do something like that, you're going to definitely use a lot more buying power. But if you're comfortable with like taking the shares at whatever your short put level is, I think it's totally fine. But yeah, you'd have to just be comfortable with taking the shares there if you're selling a put. Ooh, Alan's headed to Napa today. What was your favorite winery?
Ooh, all of them were really fun. I really liked Pride Mountain.
Mm-hmm.
Take some type of motion sickness pill if you are prone to that going up that hill.
Mm-hmm.
Because your girl was grabbing for the pretzels, let me tell you. Ooh. And I don't think I have motion sickness, but it was windy. Pride Mountain was very cool. And then in Sonoma, we really also liked, why am I blanking? Gunlock Banshu. That was really cool. And I'm trying to think of the other one that we went to. Benziger. Biodynamic farming. So everything they do is like chemical free. So I just thought it was really interesting the way that they like fight off vermin and insects and how they plant other plants to protect the vines. And that one was really cool as well. So yeah, those are my picks.
Lovely.
Yeah.
Very nice.
Also, Abbott's Passage was also very cute. And they had some really interesting grapes, like that weren't just Bordeaux grapes. So those are Katie's hot picks.
The wine tastings there are top tier.
Yeah, it was excellent. And the food, so food-wise, we went to the Chartered Oak. get the crudité plate. Yeah, that was
Okay.
great. They make it with this
Yummy.
like creme fraiche dip.
Creme
This-
fraiche.
Creme fraiche. That was excellent. We also went to Farm, which was really, really cool.
There you go.
And it was on the Carneros property. Yeah. So, yeah, good times.
Glorious weekend.
Have fun, whoever's going to Napa.
Last time I went there, I stayed at the Silverado Resort and Spa, and we literally crashed a wedding. And we got
Nice.
kicked out.
Nice.
Nice.
Yeah.
It wasn't Mahu's wedding?
No, but Mahi was there.
Yeah.
Believe it or not, yeah, you better
sure.
believe.
It's shocking that he was the best.
Yeah.
Well,
that one?
The Silverado Resort has like this huge white main building.
Yeah.
And we were like, oh, let's go to the bar for a nightcap. And there's a wedding there. And we just walked into the wedding, and then people were like, what are you doing?
Yeah.
And we're like, we're actually not sure. We're going to leave now.
Hit the pavement.
Yeah.
That's great.
Yeah.
I also liked, we did Sterling as well, which had a gondola up to the top. But I would say don't do like their sit down tasting, just like buy a glass of wine when you're up at the top. I think it's the gondola, and then just the views are where I'd rather be.
Yeah.
Scenic.
Short call vertical on Tesla and a short put vertical on Amazon. P&L cancel each other out. Should I not do this on correlated names going forward?
I don't know if you could say those are two correlated names. I mean, they're
definitely not.
In the last week or so, maybe, but I don't know if they've. I mean, everything goes down kind of together in the big moves, but
they have a similar price chart recently, but I would say it's fine to do on products that are kind of in different worlds.
Yeah.
But I would say I would not be doing that on like short put in SPY, short call spread in the Qs kind of stuff.
Yeah.
Because those are much more positively correlated, and you're just using twice as much buying power.
Yeah.
Like just do an iron condor in one of them and use half the amount of buying power.
Or like vary it by duration. You know, if you have a stronger short-term assumption in one, do a 2-week. And then if you have something a little bit longer, you know, do a 45 to 50 day thing or something like that. If you want to feel like you're more diverse.
I agree.
Why not turn the Amazon trade into a crab? Sell 2 of the May 200 calls, buy 1 of the 210s, maybe even a broke wing butterfly if you're worried about upside risk. Yeah, I just don't want upside risk, but you
up
totally.
only again. Mikey's back.
Yeah,
to up
we're
only.
back.
We
We're
like
back,
it.
baby.
We like it.
The nice thing about the July long option is that you could do a call crab trade and get away with like a move to 205 or 207.5 or maybe even 210, just because the extrinsic value in the long July option will help offset that risk in the near term short option spread. But also because my long option is in July instead of June, I'm more comfortable being aggressive with an upside move here because, like I said before, because I don't have upside risk, if there is a downside move, I can roll from the 1 day to the 15 day, from the 15 day to the 50 day, the June option, and then I can even roll into something further than that because there's still going to be 30 days between June and July. So generally speaking, the more time I have associated with something like a diagonal spread, the more aggressive I'm going to be because I have 80 days for things to work. But yes, Nick went with a crab, correct?
Yes, I did June, May.
Yeah.
Monthly.
Oh, there you
a
go.
little bit more time.
Yeah.
I don't know. It had such a big move in the after hours session that I figure, rather than get a little bit more premium, make it a little less volatile of a trade,
Yeah.
go further out of the money. I'm at the 205 strike, so another 5 points out of the money. If we get the 200 move, I'll be happy with that trade too.
Yeah.
T-Port, having trouble grasping the crab trade conceptually, but then always have trouble with calendarized anything. I know it's a butterfly with one long leg pushed out later to expiration, but neither makes sense to me intuitively. How about we do a round table, a 1-sentence explainer?
Oh, you guys, that's your wheelhouse.
I can't do 1 sentence anything.
So the reason
Get
why
me rolling and I'm up.
the reason why the risk graph looks the way it is because you are buying a debit spread and then you're selling an equal with credit spread against it. So that's why you have this middle ground profitability. That is also why it's a cheap trade relative to max profit, because your credit spread with, or your debit spread with offsets your risk in your credit spread if it goes all the way in the money. Yes. And if it stays out of the money, you're just losing whatever credit you or debit you paid. So the benefit of pushing the long
one sentence. What happened to one sentence here?
I'm doing it for all three of you.
No, I want my one sentence. I got something, I think.
So pushing the long option further out in time, just like a diagonal spread, removes the implied volatility crush as much as you can and adds more time value to that option. So it gives you a more smooth P&L, and it gives you the ability to make a profit if there's a non-move. It's not going to be really the case with a near-term butterfly.
I guess that was technically 2 sentences.
Yeah, it was just big, long run-ons, baby.
That was a run-on.
Okay, what's yours?
I would say that it's just a butterfly with positive gamma. So when you have any trade, that would be my sentence. Now I'm going into the explanation part. When you have any trade that is in the same expiration, a defined risk trade, you're very binary with the position, depending on how wide your spreads are. If you sell a 100-point wide put spread in SPY, it's synthetically naked. But if you're doing a 5 or 10-point wide put spread, you're basically Greekless. You want the stock to go up, but your delta exposure is minimal. You're really exposed to time and volatility and just ultimately where the stock ends up being. Same thing with a butterfly. When you're doing a 10-point wide butterfly, you need the stock to move right to your short strike. It's binary. So I see both like kind of smiling over here. I feel like there's something funny in the chat.
There is.
But I was going to say, it's basically just a faster moving butterfly. It's a butterfly that has positive gamma. Am I going to get roasted?
No.
I wasn't looking at the chat, so I don't know.
I'm always looking at the chat.
Yes.
Dronin, I'm just looking at Dronin's post here. Dronin profit rescue recap, wing, diagonal, $1,000 win in one day. We don't get to pick. We just trade the market. We have Dr. J would do a 20-minute victory lap and say, #I told you so. That's a great trade. Listen, but there's going to be a day where you have a $1,000 loser in Wingstop and you say, why the hell was I trading Wingstop?
Well, let's hope not.
Let's hope not. But
Dronin, I hope all of your trades.
Yeah, they have been really
May
good.
all your trades be profitable.
Yes.
Yes.
They have been good. They've
They
had
have
some
been
good
good.
ones.
Yeah, of course.
But yeah, Wingstop. I gotta say, on the trip to Michigan a couple weekends ago, we stopped at this place called the Blue Slipper.
Okay.
It's this like random spot on the way up to Arcadia Bluffs. They had the best wings I may have ever had.
Wow, that's a big
He's
statement.
been ranting about these raves.
And ranting about the rave.
Ranting about these wings. He's been raving and ranting about these wings.
Yeah.
Okay.
So they cook it in a pressure smoker.
And
which I've never heard of.
Onakama, Michigan?
I think so. Turns
right.
out. Pressure smoker.
Turns out.
I've never had anything from a pressure smoker, but literally the wings, you could like take the bone and just slowly peel out and just fall. It would just come right out. It's wild.
What kind of
Crazy.
sausage you get?
They were just like standard buffalo wings, but they were succulent.
Wow.
Yeah.
All right.
So pressure
Got
smoker.
an endorsement from
Yeah.
Mike Butler, Blue
Yeah.
Slipper Tavern.
Am I wearing a polo due to the supervisory role to get TPS reports done? Yes. Yes. No, I wear this because it's PGA Thursday.
Mm-hmm.
Come on now.
Everybody
Come on
knows
now.
Let's see. Power lasts 5 minutes.
Yeah.
Roku credit spread, 60.55 in June. Cold Stone Creamery. Yeah, sure.
I got my downside play, so I will refrain. But
Okay.
sure, if you're a little bit bullish.
Just signed up for the whiteboard tour at the Crocodile in Seattle.
Awesome.
Great. Yeah, tastylive.com/events. Come to the whiteboard tour. Come to Tom's tour. Come to Jim's tour. Come to Bats and Tom's tour.
Do it all.
It's going to be gas.
Yeah, you know what I think we should do? since this is I think we should do a full circle trip to the world's largest bowl of pho in Seattle when we're there.
Oh yeah, that was great.
Yeah.
Yeah.
Or I think Jiro Dreams of Sushi. He has the restaurant in Seattle.
Oh, okay.
That our friend Mike is there right now. Mike and Melina.
I just
Seattle
saw
right
them
now.
post that. Okay.
Yeah.
I was wondering where he was. I was like, why is he golfing all the time?
Yeah. I'm golfing with him on Saturday.
There you go. Yeah, we should
but
do
yeah.
that. But the place that other place we went to for dinner this last time was fun too. They had a lot of those passion fruit cocktails.
You talking about
in Seattle?
Yeah.
The one with like the table that rotated, and we just got like 8,000 things.
Yeah. Like a good lazy Susan.
Yeah.
Great.
It was nice. Yeah, that was fun. But tastylive.com/events, we are doing DC, Seattle, Dallas, and San Diego. Couple in the summer, couple in the fall. Should be fun.
Lovely.
Talking a lot about management this go around. So you can use the time that you have right now to learn more of like the building blocks, and then we can come in and talk to you about how we approach trade management.
Very nice.
Yeah.
I have a silly zebra killing my P&L. It's in GDX. Must be a downside?
Upside. Stock gotten killed after the move in gold.
Yeah.
I think I remember he had like
yeah.
46s or some
47.52.
Okay.
Yeah.
June?
I have to wait in 50 days to go. So yeah.
I might even just peel off the 52 strike call. I mean, you probably sold this at, $2, $3, depending if you did this like at the highs. And if you get a dollar up move, just close the position, move on. Or if you get back to a scratch or a little smaller loss, stinks.
Yeah.
So that's what I do.
Is 50% too much to ask in 0 day? Not if it's an iron condor.
Yeah.
If it's a butterfly, yes. Or an iron fly, yes. Because you're going to have to hold that all the way to expiration. You have to pin it. But an iron condor that's out of the money, no. Or a credit spread, you can get 50% for sure. Tracking.
Nobody giving me trades.
Yeah.
I'm
How about a
itching.
jade lizard on Amazon?
I'm all over Amazon. I'm upside Amazon. I got that one. All over it. Like white on rice.
In a blizzard?
Yes.
If you want to buy 100 shares in SPY, would you do it in an IRA or a margin account? Looking at a margin to limit tax events and management. There's no tax events in an IRA unless you withdraw it. But it's definitely more efficient use of capital if you're in a margin account. But you can do the same thing you can just buy an out of the money put in both of those accounts to make it even more efficient. But yeah, it depends on.
Yeah, to reduce the capital requirement.
How soon do you close a crab trade after earnings?
Ideally, most earnings trades I try to close on the open. Not like the open second, but, 15, 20, 30 minutes. You want to wait a little bit. But, over time, the waiting hindsight is, 50% better, 50% worse in terms of like when you close it. So I just close them on the open, done with it, and move on.
MicroStrategy after the close. Any trades? This product doesn't really move for earnings. It could, but they don't really they just talk about their Bitcoin holdings. So it's not like a thing where they could, in the market's telling you that 13-point expected move for a $400 stock is extremely low. So we kind of just avoid it.
That's it.
There was one last question about how did we get our jobs.
Yes.
So thank you for somebody new asking that. I started as an intern in 2012 as a media intern, so helping run the live show.
Yes.
And then just kept saying yes to everything that they told me to do. Yes. And here we are.
Ryan Grace actually hired me.
Oh, really?
Yeah.
Really?
Yeah.
Mine was nepotism.
There you go.
But you've earned your keep. Sell
I'm
yourself
a-
short.
I'm a finance guy. Come on.
Yeah, you were the best salesman at Grossinger Autoplex.
Best salesman Grossinger Autoplex has ever seen. 19 cars in a summer at
Wow.
19 years old.
If you walk back in there, do they know who you
It's
are?
no longer Grossinger. They sold it.
Oh,
so the
man.
answer is no.
Yeah.
And well, yep, that's how
Yeah.
we kind of got our start. But if you want to learn more about us, come say hey at tastylive.com/events. Come to one of our live shows. Hang out with us and chat. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick at Trader Nicky Bat. Good luck, good trading, go golf. PGA Thursday. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We are back. It is Thursday, May 1st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, it's quite the interesting start to the new month.
Sure is. I didn't have up almost 100 at one point in equity markets on my bingo card. And, well, they have faded some. But, yeah, strong day here in equity markets to start the month of May.
Strong day to start May. May is usually a good month for stocks. This year may be a little bit different, but the seasonality for May is quite strong. We start this month with, of course, the earnings after hours yesterday. Meta, Microsoft, which helped propel NASDAQ futures higher overnight. but we're off the highs right now. And it's a muddled message here, but maybe there's some good news that we can hang our hats on as we look into today's session. One of the major concerns for this market is that we could be looking at a sudden stop in trade, Jamal, because of this trade war. Tariffs forcing small and medium-sized businesses to dramatically upend their sourcing for materials. And one of the things that people have been pointing to as a major source of concern, something that we flagged at the start of this week, was that bookings to the port of Los Angeles, Long Beach, Seattle, Oakland, etc., from Asia were falling dramatically. That's what we see here. The May 4th to May 10th week for the port of LA, for example, down 35.91% year over year. But on the board comes the following week, May 11th to May 17th. And the bookings for that week are actually up year over year, 0.84%. There is a slowdown in trade that is coming through the pipeline right now. We're experiencing it. It's going to make its way through our shelves in a few weeks. But how long that continues is now up in the air. And this is a very significant piece of data, as far as I'm concerned, that suggests a number of things. First and foremost, that maybe the empty shelves fears won't be realized. But secondly, these ships, the goods on these ships, are still under this tariff regime. The only way these goods aren't tariffed at the rates that are applying previously is if they're going to be coming off the board before these goods come off the ships and hit the docks. So part of me thinks that we may have some announcements coming down the pipeline soon. Otherwise, that's a lot of money companies are going to be paying to get these goods over the border. And I don't think they'd be doing so willy-nilly, Jamal. This is the best piece of data that we have today on the board for anything, anywhere in the market.
Yeah, I mean, it just shows you the shifting landscape of where we are and why a lot of these companies are uncertain of how to predict their future, right? I mean, there's a lot to come here, but you're right. This is a very significant piece of data, and we'll see what happens in the coming months and how things change and how much discussion happens and how much more Besant talks and, you know, the whole I guess. The whole
Yeah, Trump said today that Besant is in the middle of negotiating with 200 countries for trade deals, which is incredible because there's only 193 countries on the planet. I digress. The more important thing is that the trade flows that have been slowing down and stopping down at levels that we haven't seen since COVID, which was obviously a very unique time, it doesn't appear to be persisting. And that is something that we need to continue to watch here across the board. I'm looking at the LA, Seattle, Oakland, Long Beach ports, as opposed to looking at the Chinese trade data in particular from the tracking that we have there, only because there are substitution effects. If the goods are too expensive to buy from China, we've seen data suggesting that flows from Vietnam are increasing. And so maybe this is just the wrinkle where people are looking for new sources and then back to business as usual. Time will tell, Jamal, but this is an encouraging sign, and it perhaps means that the worst of what people may expect to come will not transpire in the time frame with which one may have surmised it would. And that includes myself as well. So always have to update our priors, right, as new information and data comes in and adjust our worldview. People may be adjusting their worldview today a little bit. 56.55 here on the S&P 500. It's a heck of a move to the upside, Jamal. A few days ago when you and I were talking about this, I told you about the difficulty that I'm having reconciling here, where I'm letting my fundamental news-driven brain perhaps stand in the way of what looks to be a decent chart setup and the building momentum we have here in stocks. Are you looking around the corner to Amazon and Apple today, however, as something that may be a concern that could short-circuit this rally here that's been pretty good this week?
I am, but it would seem as though most earnings that we see are things that are better than feared, I guess, is the way it's coming off. And of course, Meta and Microsoft delivered good earnings yesterday, but it's this seems like a lot. It seems pretty fast. And you're right. I'm kind of having trouble reconciling as well. I mean, 8 days in a row, market's been up. I don't necessarily see how Apple or Amazon. I can tell you, and I'm going to tell you on Engineering to Trade today here at 1:45 Central, the bad things that Amazon and Apple could end up saying that could turn around this rally that we've seen. But I don't know how it's going to happen. It seems as though the general public has resigned to buying the market right now because they've just finally calmed down on a lot of the fears, even though volatility is still in backwardation and still kind of elevated.
It's still in backwardation. It's still kind of elevated. The VIX term structure is not exactly clean. It's kind of humped still. You get that drop off over the next few months, and then it rises back through the summer and then falls off again heading into winter, into early next year. But that doesn't really matter, I suppose. The technicals here are giving enough breathing room for this market to run to the upside. Momentum's strong. We noted this a few days ago, Jamal, and I say I'm remiss to not have pressed longer delta on it, but you don't typically see bear markets get overbought conditions, and stochastics arrive there at the start of this week. We see MACD was also pushing through its signal line, and they continue to push higher. So momentum right now in the very short term continues to build. Now through 55.55, I think the level that we're probably gunning for would be that April 2nd swing high that we had before Trump trotted out that big board with all the reciprocal tariff rates on it in the Oval Office, or rather the Rose Garden. That's 57.73.25. I don't know if there's much standing in the way of a market trying to rally up there, unless, of course, you want to think of the Amazon and Apple earnings as well as non-farm payrolls tomorrow. But there's not much standing in the way right now, technically speaking, for this thing to continue to move up.
Certainly doesn't seem like it. Again, I mean, I don't know. I don't know what to say here. I mean, seriously. I mean, 8 days in a row. I said it 2 days ago. It seemed a little bit much. And now I certainly still feel like that now. I mean, again, the positive earnings by two of the big Mag 7, which obviously you can say that those companies still move the market, even if it's not just about AI. It doesn't really matter the narrative. They still push the market higher. And that's exactly what we're seeing here today. But, dare I say, this seems a little overdone.
A little overdone. I don't know how, arbitrarily picking a top here, and that's one of my big sticking points when the market's moving up. There's that latent, unending bid because people are, adding for their 401ks, pension funds, yada, yada. Do you look at the IV profile right now in this market? Volatility in we'll call it the IVRs in the low 30s for ES and NQ. Is that an appealing enough level for you to operate on the short put spread side of things right now? Or just because of what you said, too far, too fast, long in the tooth, heading into non-farm payrolls report, would you be a little bit more reticent as to adding more long delta exposure here right now if you already had it on?
For sure, I would be. Absolutely. I mean, I don't necessarily think I would get. I'm not getting short here. But I just don't necessarily feel, it depends on the term, I guess. I mean, it depends on how far out you're going. Like if you're going, more than honestly, I just think it's a little too much in the near term, really. I mean, I would say over the next 10 days, it just seems a little bit much in the near term. I haven't added any long delta here, so I guess that's the answer to the question. And I haven't been interested in adding long delta here. I feel this is the area to be a little bit flat after the long run that we've had more recently from the bottoms that we had. And again, I do think at some point markets are going to push higher. It just seems a little bit much to ask for in the near term, despite what's happening.
We find ourselves getting to an important technical level, at least from a Fibonacci perspective. The 618 retracement of the down move that you have from the February highs to the April lows, that's going to come in closer to 2023 or 20,230. As we press up against the April 2nd high right now, that's where the market is pausing today in NQ. So I suppose if you're looking for ES to continue up to its April 2nd high, NASDAQ overshoots a little bit more from here. We're getting into the zone, though, where if you've been pressing long this week, heading into this bevy of earnings risk, event risk, you may surmise that you're in the zone right now between 20,000, we'll call it 20,044? I think that was the high, 20,044 and a quarter, and 20,245. So you have this 200-point window in NASDAQ where you might see some things slow down a little bit, just given where we've gone from into where we've come and what lies around the corner. The sector rotation today, though, is robust. We have to give the market credit when it's due. Today, the top performing sectors on the board: XLK Tech up 2.47%. XTL Telecom up 2.24%, SMH Semiconductors up 1.93%. That's pretty darn good there, Jamal. Those are the names that we want to see at the top of the heap. And then on the bottom, it's gold miners, healthcare, staples. Those are all the defensive names. So not too bad under the hood.
Yeah, and it just so happens, I mean, again, with the healthcare, obviously Lilly is leading the way, which had earnings, and apparently things didn't go well. I didn't know they didn't go that well. That stock was down almost $100 at one point, but you're right. It is almost, when you look at it like that, it's almost a reversal of a lot of what we've been seeing. That's actually, That's actually the thing that it makes it hard to say, even though I think it's overdone, this move that we've had. A lot of me saying that is the fact that it's so many days in a row. But the hard part about saying that is the fact that it's almost a reversal of what we've been seeing to the downside, right? You mentioned the tech names are up. You mentioned what is down, the really defensive stuff that we've seen that was I wouldn't say carrying the market, but it was somewhat holding the market up as we were going through the downtrend, which we'll get something we'll get to later. Obviously, the move in gold, all these different things make it seem as though the market should be up exactly the way it is, because again, it's almost a complete reversal of the trade that we were seeing earlier in the month, or a month ago, I should say.
One of the more interesting dynamics right now is how the market behaved over the past few weeks. I point that out because as we look to the CFTC COT report entering this week, we find ourselves with a net short position in the futures market among speculators. Now, speculators, right, you and I are not considered part of the speculative pool, to be clear. We're not large enough. We're not the large speculators that I look at in this report. No. So those would be institutional folks. And yet we've seen from banks, from Bank of America, from Goldman Sachs, from JP Morgan, when their desks have released flows figures, retail has been buying the entire way down. Has not capitulated whatsoever throughout this entire pullback from February to April. And yet institutions are selling. But we're now, 13% up off the lows, Jamal? Mm-hmm. 12% off the lows. And you have all of this cash that was sidelined for the past few weeks, thinking the market was going to crash even more, and now you've missed a 12% move to the upside off the lows. There may be a fascinating dynamic setting up here just because of positioning and how the market's performed, where a lot of people will be forced into chasing this market higher now over the next weeks to pad their 2Q fund performance, right? They abandon the market at the start of April, it then rips to the upside. How do you explain that to clients moving forward? Should have just held, shouldn't have sold. Bad judgment.
Yeah.
So net short position in the futures market, a market that's not 12%, and we're coming off of historic bearish sentiment levels. I don't think that, the technicals say enough for themselves. There's a lot of chase here going on right now. And I don't know if we want to try to fade that just yet.
Well, we did say it. We said the buyers were above 5,500. It's definitely around 5,600, and that's exactly what we are seeing. Exactly what we're seeing.
You've been beating that drum for the past week and a half, and it's, we finally punched through. It took us a few days, but once we get through 5,500, rock it up. You've been all over that.
Ain't no stopping us now. We're on the move. That's what we've been saying.
Russell's on the move. Russell's about to put in its high close since Liberation Day, which not the leader today, only up by 0.94%, but I suppose breaking the downtrend from the February-ish highs, the March-April swing highs here. It's another piece of constructive price action. We're not quite out of the woods yet, unlike the others. Russell never quite got back through the mid and late March swing lows, but we're close to it. So this is the line in the sand. If the Nasdaq's able to get through 20,240, if the S&P is able to get through 5770 or so, if you see the Russell get above 2,000 again, you've now cleared the next major threshold for all three equity indexes, and you ratchet your expectations up to the next level higher. And that's the technical view. The fundamental view, of course, is still garbage. Don't know how to describe it otherwise. Like the port situation may be getting better, but yesterday we start off the second quarter with a bang up Atlanta Fed GDP Now growth tracker, 2.4%. That's now been revised lower to 1.1%. So recession looming. Just today feels like a day of people taking profits in fear positions like in gold and reallocating to stocks and trying to play catch up for what was a lost month of April for many traders, many fund managers.
Yeah, that's exactly what it is. I mean, I would love to tell you that I'm surprised, but I'm not. That's exactly why I put on the call butterfly I spoke of to you recently. The only odd problem is that it's completely been overshot. I mean, I put it on last Monday. and I put on the 5,400, 5,500, 5,600, and just in the past, since yesterday, honestly, has it really been overshot by this big move on the heels of the good earnings from Microsoft and Meta. So it's a strong move, and I think you're right. I think a lot of people are rolling out of the fear things that they had on, the fear trades, and moving back into equity markets. And it just so happens at these levels that we were talking about that people were interested in getting. It seemed crazy, right? Nobody wanted them. Nobody loved them at 5,100. They love them now at 5,600, and just kind of how markets work at times.
That's how it works. You see those memes out there, like, the booth, Bitcoin at 100K, everyone in line. When Bitcoin's at 50K, no one's in line. That's just human psychology, right? Momentum has turned the corner, though. And I think that's the bigger, more important takeaway at this point in time, that we're seeing that momentum is turning the corner as long as we are afforded the opportunity. If you're going to be leaning long right now, you're getting into the zone where maybe it's worth trimming. If you can punch through here, then you just look a little bit higher, 20,600, and then 21K in the NASDAQ. S&P, very similar, just taking steps forward. You get to 57.73, you then go up into 58.40, and at that point in time, if you clear 58.40, you're back into the sideways range that defined markets from basically October through the start of March.
Mm-hmm.
And just as a heuristic, right, purely technical, avoiding the noise, just as a heuristic, if you leave a consolidation only to return into it, the rule of thumb is that you look for a rebound to the other side, so that if you get above 58.40, the technically prudent thing to do would be to look for our all-time highs again. I can't believe those words are coming out of my mouth.
I can't believe you just said it either. I can't believe it.
I'm not trading that right now. But we need to have scenarios planned out. If X happens, then we do Y, so we're not caught in the heat of the moment. I rolled off my short put spread earlier this week. I took profit on it, didn't want to stand in front of GDP, didn't want to stand in front of non-farm payrolls. Apparently that was a mistake. So I will wait to see how the dust settles before I jump back in.
What do you think what could non-farm payrolls possibly do to damage this rally? I don't really see how it's possible.
It's a good question. I feel like, given the market is riding high on hope right now, and even with how it reacted to yesterday's GDP report by the end of the session, you could probably say it's going to look for a silver lining. The silver lining yesterday was, as we explained here on Futures Power Hour, when you strip out all the noise and you look at core GDP. And to take a step back, Jamal, for those who may not have heard this yesterday, you maybe didn't either. I look at this in particular because in 2022, when everyone was hemming and hawing about recession, I was saying that I didn't think it was a recession. I didn't think it was stagflation at the time. I wrote it for Luckbox magazine. It wasn't a recession, in part because if we strip down GDP and look at the core, you're taking out trade, you're taking out government spending, you're taking out inventories. So just consumption and business investment effectively. Core GDP was positive in 2022. GDI, gross domestic income, stayed positive through the summer months. And so as we learned more and more from the data, was it was backfilled, it wasn't a recession. So using that same framework here, yesterday's core GDP figure was plus 3% annualized in real terms. So a lot of it was trade, a lot of it was tariffs. The economy is still chugging along. It has enough underlying momentum that if we get off ramps here, if we get some solution, some memorandum of understanding pointing to a deal sometime down the road, doesn't need to be tomorrow or the next day, but a framework to get a deal done, things can calm down and you can quickly pick up the pieces. The toothpaste has not been squeezed out of the tube fully yet, as it were. So what can non-farm payrolls do is your question, with that as the amuse-bouche to lead us into there. If it's a really good non-farm payrolls number, does the market care that the Fed isn't going to have a reason to cut up front? Or is it going to care more that we're not tumbling into recession violently? I would say that it's going to care more that we're not tumbling into recession violently. Yeah. Whereas a month ago, a good non-farm payrolls report would have said the Fed can't come and help us. The frame of mind matters. The context of the sentiment matters in the market. So I think the sentiment is now hope and looking for silver linings as opposed to the darkness of the cloud.
Yeah, I mean, it appears that way. I mean, it is kind of interesting how sentiment has changed. I mean, you're hearing a lot more about now, the Fed probably has ample room to cut, and it's just really a complete 180 than just a month ago. So it's crazy how fast things have changed. I tell you, it's head spinning, seriously.
Do you have anything else to discuss in equities, or, quick stopover in Bitcoin, which is up now at a new highest level that we've seen since the end of February here, Jamal? Bitcoin's been really resilient. Stocks up, stocks down. Bitcoin continues to hold its ground.
Yeah, the only thing I still look at is VIX, the VIX futures complex. Just looking at, May, June, and July, I still find it interesting that it's slightly, but we're still in slightly in backwardation. These are almost flat, if you will, and again, I mean, having a big rally like this doesn't automatically mean that VIX should be down huge. I think by the end of the day, if we're still here, I think things kind of change. Maybe there's a slight chance that we are, May and June are even by the end of the day. May and June VIX futures are even. There's a slight chance maybe at the end of the day where if for whatever reason we get a similar move tomorrow, I think they certainly will be. And you could almost see that things are over, honestly. But that's the only thing I still look at, despite this rally. That's the only kind of glaring issue to me. Other than that, everything kind of looks as if this is already over, including the thing that we get to next, which is gold. Not next, later. Excuse me.
That's gold. Close
Next
enough
is
to
bonds.
next.
Yeah.
Yeah, bonds here, they didn't like the ISM manufacturing PMI this morning. Again, showing signs of more stress, more price pressures coming down the pipeline. It also, we're looking for a previous of 49. It comes in at 48.7. It's not too hot. We see that manufacturing employment is still declining in the country. That's not great. Prices paid up. Stagflationary impulse in the PMI data. Bonds here a little bit of a struggle today. Not terribly. ZN is back in, bounces off its 1 week moving average. I'm directionally neutral here, Jamal, still. We rolled this out 2 days ago, right? So the short eye in Condor, this isn't the worst price action for that kind of trade, considering where we put this on. We just want the sideways shuffle.
We want the sideways shuffle. And again, I mean, the wings here have been rather bid up, so you're able to put this iron condor on and sleep comfortably knowing not much will happen. But like you said, this is, I think this is a little strange too. I know it's related to PMIs, but having this move, you would think, equities wouldn't be up quite as much. And maybe that's why initially we kind of pulled back some from those highs. I think this is one of the things that are probably weighing it down. If these bonds were up, I think markets would probably be up even higher. So this is something that's also a little bit, kind of glaring today when you see, again, volatility. You just add them up in aggregate. You see, obviously, gold down big. You see bonds slightly down, and then I guess it's a little more than slightly when you look at the ZB being down almost 0.5%. That's a decent sized move. And then you see, there's still some volatility here in the market with us being up above 23.5. I just think those things in aggregate don't mean that it's an all clear signal for the markets.
Bond auctions coming up. Again, we have a calendar that's a little bit more saturated moving forward next week.
Next week, right?
Threes.
10s and 30s.
Yeah, threes, 10s, and 30s. Monday, we're going to get the threes. Tuesday, we're going to get the 10s. Thursday, we get the 30s. Why? Fed meeting next Wednesday. So Fed meeting weeks, you typically don't have any auctions that, when the Fed comes out with its decision. So Monday, Tuesday, Thursday, 10s are Tuesday, 30s are Thursday. We'll have the Fed sandwiched in the middle. We'll get a nice gauge for how foreign investors react to the Fed's latest decision with that demand in the auction on Thursday. But then the auction calendar really does quiet out for the rest of the month. 20-year bond auction is on May 21st. 2-year 5 and 7s, the 27th, 28th, 29th. So this is the only 10-year auction next week that will have the, over the next few. And then we have the 20s later on. It's not exactly a super saturated calendar here, Jamal. Either way, though, we see ZN pulling back in. We see ZB pulling back in a little bit. It bounces off of its 1 month moving average here today. Just keeping an eye on the short-term charts. This area right around 115.5 or so, it has been a line in the sand for the market. I just want to kill this Fibonacci retracement for a quick second. It has been a line in the sand over the past several months. Mm-hmm. And it's an area where we just saw it as resistance. It has been support. if we're going to lean long deltas here in any capacity, we want to see 115.5 hold. If it doesn't, then you might surmise that we're maybe looking at a retest of the Trump put levels around 113, 112 in ZB. But this is a nice place where you'd find some pickup or expect to find some pickup here. And then I suppose as a final point, for those who've been watching the bond market but haven't been trading it, you still have a decent amount of volatility here at a 42.2 IVR. I would go back to that Fibonacci retracement that we just took off the screen, and I would look at that 50% mark, which is basically where we are right now. Right? We're just a hair below it. So if you want to be directionally neutral in something like ZB, this is a good place to do it. If we do the yearly high-low range, you're actually closer to 50 on the nose right now. There's enough vol here we could operate trades on the yearly high-low range, 45 in, 21 out, and feel fairly comfortable now that things have calmed down relative to where they were at the start of last month.
This is one of the best trades I got going in the portfolio, these iron condors in ZB and ZN. And again, it's really funny when you look at the fact that market's up 8 days in a row. This was up 6 days in a row, but it just has not followed the market over the last 2 days. And I don't know if that is telling us that it doesn't necessarily believe that we're going to get this cut that everybody keeps talking about anytime soon, or if it's just, some beginning of selling of treasuries again, and we're going to get, I wouldn't say new lows, but some release of some release of more treasuries out there that are going to be sold at some point in time, and that maybe we get some of the trade of sell America all over again.
It looked like it was buy America this morning for a while. Bonds were up, stocks were up, the dollar was up, gold was down. That was pretty nice. Mm-hmm. That has since reversed. Talking about the yearly high-low range, though, we have the high tick on April 7th in the ZBM5 contract at 122.05. The low tick comes here in January, right just around 110 and 22 ticks. So wrapping our iron condor around those levels, right? The short strikes, the guts, the 111, 121, and then the wings, long 123, 109. That's a 60% probability of profit. Risking a little under 3 to make 1. It's actually a pretty decent risk to reward. And the buying power here, always love when the max profit's well in excess of the buying power being used. I already have a short put spread on in here, Jamal. I like this short iron condor trade in ZB as well. So consistent with the whole notion that bond exposure right now should be directionally neutral, if not having a slight upside tilt to it. I'm comfortable adding a little bit more here, given where I see markets right now.
Yeah, I mean, I'm like I said, this is one of the best trades I got going on in the portfolio. I am not touching it. I could roll down my put spread if I wanted to, but I'm not even going to do that. I'm just going to sit where I am in between. Again, in ZB, I have my short strikes are the 110 and the 121, and both of those are pretty far from being breached, so I feel really good about that.
Feel really good about that. Far from being breached is a good thing.
Yeah.
Do you have? I know that we look at this through the price perspective here, but do you find when we look at this from the yield perspective, an area where the market has failed to really breach outside that excess move we had at the start of April? Do you find that this is a noteworthy turning point? Maybe we should lay off. Yeah, go ahead.
Yeah, we're on the same wavelength. It's funny. I was just looking at that next, and it is interesting. We backed off of 4.5. That's an area where clearly the market got spooked, and you could see it. And as soon as we touched it, markets really kind of freaked out there. And so the fact that we've backed off of that kind of gives you another look at kind of an all clear sign. Again, I mean, 4.5 has been an area where we've had a couple of issues, even back in 2022 and 2023. So, again, I just think it did happen rather fast, and I think that's one of the reasons why they've been bought the last 2 days. Something to keep an eye on, but I mean, it's hard to say, Chris, that clearly it seems like a crisis averted for the time being.
Ping pong is ultimately the name of the game, right? That's what we're playing for here. So if we continue to oscillate where we bounce up, 20, 30 basis points wrapped around 4.15%. If we go up to 4.4, if we drop down to 3.9, that's fine. Mm-hmm. That's how the trade is structured, right? So I think we can avoid the noise a lot of, I think, what's good for people right now, maybe I'm speaking my own book, but as someone who is, listen, Italian New Yorkers tend to be emotional people. So I will say that I find this environment very stimulating. Intellectually, emotionally, right? There's a lot of things going on, these headlines, this, that. How can we avoid the noise? Knowing that I'm a person who's emotional, longer duration, directionally neutral. Who cares what happens today, tomorrow, the next day, as long as we remain within the confines of this particular trade setup, then it's all just noise and we need not pay attention to it. So call this a sanity trade, directionally neutral in notes and bonds, looking for more chop. I think you and I are very much there.
Oh, yeah. Yeah,
I made a mistake in gold.
You bring it up though. This time period, we have had no shortage of things to talk about over the last couple of months. It's been amazing, actually, from the standpoint of what we do day in and day out. That's for sure.
Yes, it's like when people say Trump's living in your head, Chris. It's like, no, it's not rent free. We collect a paycheck every 2 weeks to talk about this.
Yeah, I know, right?
In fact, he's paying me rent. That's how it works. He's paying you rent, he's paying Tony rent, he's paying all of us rent. Let's take a look at what's going on here in gold. I screwed up my gold trade.
What'd you do? Why? What'd you do?
I got out of my short position yesterday and went long.
You did?
Listen, here's how I operate, and I know my shortcomings. I would be a lot more pissed off if I stayed short and the market went up than if I got long for the reason that I got long and then the market went down. Why did I look to get long yesterday? We were looking at the 2-hour time frame here on Futures Power Hour, and I couldn't help but notice we had this beautiful little evening star candlestick cluster here at the very high on the 2-hour time frame. And then yesterday I couldn't help but notice that we had this beautiful morning star candlestick cluster as well. Where did that occur? It occurred right at former resistance. One more time. Turn support. Highs that we had back here in April had been support on the pullback over the course of the month. We had that little evening or morning star candlestick cluster there. And I said, maybe it looks like the selling's over. Alas, that's wrong. We've now taken a step down to the next level here, which is my final pain threshold, but a former swing high that you have from April 2nd, the Liberation Day swing high. Okay, let's remove all the other noise here on this chart. The Liberation Day swing high is very important, psychologically speaking, for gold. If we're down below 3,200, and quite frankly, this is the place where I was hoping to buy all along, I just got impatient. If this is crossed, if we're down below 3,200 overnight, gold is going to probably see a flush back to 3K over the next few weeks. I will have no business being long whatsoever. I will take the loss. It's small, a few $100, but I'll take the loss and I'll go home. But this is not looking pretty. It should have bounced yesterday. It did not. Decision time now. 3,200 or bust.
Yeah, I think, maybe tomorrow, maybe things reverse. Maybe if we're lucky. And I say we because I also kind of messed up my trade too. I think I might have done it when we were on the show the other day. I mean, as much as I talked about, I don't know if I did. I don't think I did it on Futures Power. I can't remember when I did it actually, but I had an iron condor. My put spread was the 30-50, 30-30 put spread. And even though all along I said I wasn't going to roll, I rolled. Yeah, I rolled. And I rolled to 31.50, 31.30. So it's still out of the money, but nevertheless, I mean, you have a big move like this to the downside. Of course, downside gets bid. And so that's my blunder as of right now. The upside part of this is looking great. 34.50, 34.70. I'm still there. It's 26 days to go, so I don't necessarily have to make a decision right away, but who knows, by next week, like you said, if we do get that flush below, it's not going to be pretty, and then I'm just going to be holding this longer and more than likely have to roll out.
Trade turns into an investment.
Yeah.
Right?
Yeah.
Okay, so you and I are both eating it there. Yesterday, we had an opportunity to look for something on the long delta side in copper as well, which was put on. So that's working better today. Why? The swing lows that we have here. Funny how sometimes these things work out. Okay. Swing lows that you have in February. Resistance on the way back up in the middle of April, excuse me. Support as we make our way through April. Support yesterday. It's not the greatest looking chart in the world right now. This concerns me.
Yeah, it's not. That's what I was going to say.
Evening star cluster here, and then this bearish engulfing bar / key reversal in the 4-hour time frame. Not great. So the trade's working for now, the short put spread. Short put spread is in, let's see, 4.4 to 4.5. Why? Because if we lose the low here from yesterday at 4.52, then we're probably not going to hold. So I'm going to get out. But just cherry picking this low for the time being, I'm trying to do it. I like that we're at the 38.2% retracement. That's exactly where we held on the sell-off. This seems like overreaction down here. This seems like overreaction here. I'm leaning long deltas for now.
Yeah, I know you love both this, copper instrument and as well as silver. Both of these charts are kind of scary to me in a way. Not scary as in I think they're going to be more downside. They're just rather volatile. And for me, I got, other volatile things in the book in the form of a lot of different tech names, honestly. So that's one of the reasons why I haven't added any of these this exposure, any of these two metals for that reason. But these big down bar days more recently in silver and the one yesterday in copper kind of scared me a little bit.
They're scaring me too. Volatility's coming in, right? Silver volatility coming in is not typically a good sign. Gold volatility coming in is typically not a good sign if the market's going to behave in a manner consistent with what it did over the past 2 years. Well, year and a half, since October 2023 with the Hamas attack against Israel. That's really when gold's trajectory really evolved. And we haven't turned back since then as geopolitics ratcheted up. What have we seen here in gold vol? It's been coming down. This is the whole rationale last week when I got short. By the way, gold vol's coming off 25% above the 200-day moving average, get short. Wrote it out for a few days, flipped long, not working out so far. But if this is a place, funny how we should have just been patient, wanted to move back to 3,200 to get long. So having not been patient, I guess the question is, if I saw this sell-off today, would I take a long here first blush? Yes, I would. And so that's why I'm holding the long in gold still. Silver's a different story, 3% down. Silver's a different story here, right? We can see that you have this engulfing bar low from April 23rd on the daily time frame. We're trying to hold that on a closing basis today above 32.37. But again, momentum's deteriorating.
What would you do?
Feels like we're moving away from panic.
And gold.
I'm just going to have to throw in the I'm going to have to throw in the towel on everything.
No, if you just walked in today and you were interested in taking a long position,
I would not do it in silver. I would do it small in gold. I would do it small in copper.
Yeah,
nothing like I was my regret is if I was looking at this today, would I have done what I did yesterday, which is purchase, call spreads wrapped around the all-time highs? No, I would not be doing that. So that's maybe the adjustment needs to be made sooner than later. Drag it back to say 3,300, 3,350.
That's exactly what I'm looking at. Call spread. That's why I asked this question.
Yeah, take the small loss on the adjustment, pull it back into yesterday's highs. There's enough duration so the intrinsic value hasn't been totally decimated. But it's I would structure the trade differently doing it today than I had done yesterday. And so I think perhaps that's informative enough for how I should handle it. Yeah,
I'm going to think about that maybe the rest of the day, this 3,300, 3,350. We'll see. Of course, the rest of the day might not be enough. If we do, I still see a scenario here, and maybe I'm talking my book, but I see a scenario here where we could fall back throughout this day and see a reversal in gold. I still see that.
I'm sure lips to God's ears, man.
I know, man. I know.
It's it's so funny how I think you're the same way too. Like when I make money, it's like, oh yeah, I made money. That's the job. When I lose money, I'm so angry at myself. Like I'm so upset with myself today for not being long, for being not holding short one more day to 3,200. So hopefully it comes back. Yeah. It's usually a terrible strategy.
That's how it goes, right? We all are annoyed about the things that we did that were dumb. We don't pat ourselves on the back enough for the good things.
Yeah, right. Yeah, I don't know anyone who's like, that was really stupid. Nice job. Let's turn our attention to oil here. It's real interesting how these things turn around. I write the slides ahead of time, as you do for engineering the trade. Markets move. I want to just point out, when I was looking at these markets, energy was right across the board, down bad. That's a reversal here in crude today off the lows. And it's coming at the point where one might hope for it to occur. It's a level that we pointed at yesterday and the day before. We talked about the Fibonacci potential retracement off the highs here. It looked like a head and shoulders pattern. And just to line this up neatly here, let me just do this real quick. We have our neckline, we have our head. Okay, so left shoulder, head, right shoulder. A simple doubling of that range gives you a extension move down to about 58. Where do you have a swing low from April 10th? It's down at 58.29. Yesterday we sold off into there. We stopped. We overshoot, but we're now back above through it. I would posit, as I was looking at yesterday, this may be a workable low. I still have short put spreads on here in CL. I'm convinced for the time being, although definitely wrong the past week, that the lows are going to hold from early April. I just don't think the incentive is there for the Trump administration to destroy the U.S. energy industry. And at below 53, you start to see existing wells shut down. 49 to 53 is the pain point for U.S. producers. So I'm going to continue to operate in that fashion. I think the candlestick on the daily time frame today, that nice long lower wick with a green close, signals washout. And so the question always is, if I didn't have the short put spread on, I've been riding it out and just need theta burn, would I put it on today? And that answer is actually yes, unlike the gold position. This one I think still has some validity to it. Copper moving up is nice, and that growth profile of the equity market here, 10-year yields moving up a little bit because oil's bouncing back, that feels awfully normal. That feels real normal. And guess what? We have that trade figure with us. Oil is so sensitive to global demand. So sensitive to global demand. And with trade looking like it's falling apart, demand for oil implicitly is going to be down. But keep an eye on that May 11th to May 17th Port of LA shipments note. If we see that the ships are coming in, that the goods are making their way to the docks, then very obviously trade hasn't slowed. It's been redirected. We may not be getting it from China. We could be getting it from Thailand, Vietnam, Malaysia, Cambodia, wherever else in Southeast Asia. So yes, trade between the world's two largest economies has slowed, but trade in general may not have for a persistent period of time. And that is the single most key feature for how asset prices behave over the next several months. Cratering into recession, or it was merely a bump in the road, and people like myself lit their hair on fire for no good reason except for the sake of content.
This is another canary in the coal mine, Chris, and there's at least three of them today. We talked about it earlier. Volatility still just a little bit big. We talked about gold pulling back. It's a little weird to see bonds being sold off today. We got this huge rally in equity markets. And crude, the one thing that we've been talking about for a while that shows that there's clearly a potential recession coming, pulls back in a big way, especially earlier this morning. I mean, this is a little bit weird. All of these things in aggregate are all a little bit strange. As far as trades go, similar to you, I do have a put spread. It's part of a condor. This has been one of the things that, the last couple of weeks, it was bonds, it was gold, and it was oil for me as far as these condors that I put on, because vol was still bidding those much more than equity names. Yeah, got pretty close to the downside here. Again, I'm short the 56, 54. I'm fine. I'm not going to do anything. And most of all, what I'm not going to do is adjust my upside. I'm keeping exactly where it is, 72, 74, not going to touch it. For whatever reason, at some point or another, either these markets are wrong and gold should be around this level or maybe back towards 56, or the market rally is right, and that would suggest that things are getting better on the front of trade and tariffs, and gold will bounce back. We'll see. I'm not here to judge which one is right or wrong. I'm just trying to make profit off of it. That should be a t-shirt.
I recall back in September, Jamal, you and I were looking at trades in crude when oil was coming down very quickly. And one of the things that we discussed was positioning in the futures market. How if we look through the period of modernized CFTC positioning data going back to 2011, at the time, you were looking at one of the, the first percentile of Z-scores for crude positioning. The market basically had never been the least net long it had ever been in recorded history. And that's interesting because typically oil markets have a structural long bias to them, even in the futures market. So what do we see here? The positioning that we had for the week of April 7th was the least net long the market had ever been, according to my data in front of my eyes right now. We are now in the 4th percentile for crude net long positioning, where we stand right now. All data ever. So if there are any signs that trade is not going to fall off a cliff, oil may have a lot of room to the upside, I should say. At least for speculators to come into the market and push this thing higher. In the short term, it's exceptionally thin right now by comparison. So we talk about there's 173,000 net long contracts in the market right now. Back at the start of January, there was somewhere in the neighborhood of 318,000 net long contracts. Okay, so there is ample room for people to come in and pick this up off the lows if there is a scintilla of hope that trade isn't dead. And I think we got one of those breadcrumbs here today.
Sounds like a very possible reality that we could be seeing real soon. I mean, I thought about buying it at 56 and change today, even though I am short that put spread. I thought about it. The only reason I didn't is because, again, it's almost like Texas hedging. But it's when it touched there on the 9th, it seemed as though we were on this way to doom and gloom, and there was no reason to be buying it because there wasn't really any bounce in store. But today seems a little bit different, like I said, especially if things are going to get better on the trade front, or kind of like we talked about a couple of days ago in overtime, if all of this is just for show and there's nothing really happening with this. So, depends on what you believe, I guess.
My own personal conspiracy that I'm working with right now is that we had, trying to put together puzzle pieces. We have the Amazon, Walmart executives at the White House last week. They announced through media outlets that they've told their suppliers to resume shipments to the U.S. The reason why those shipments stop is because the tariff rates were too high. They're too costly. So if these companies then tell their suppliers to get the ships on the water, one of two things is happening. Either they've been convinced to eat the costs, or they've given a heads up from the administration that by the time these goods hit the ports, the tariffs won't be in place. Because the tariffs are paid once the goods come off the ships in the port of LA, Oakland, New York, wherever. They're not, you don't pay for them while they're on the sea. So as long as those tariffs are removed before the goods come off the ships, no harm, no foul. I can't help but think that there's something in the pipeline. Maybe I'm wrong. I've been wrong a lot. But it seems like there's something brewing there. There shouldn't be a rebound in trade to that degree if it's going to cost people an arm and a leg. They're just all run out of business. They're all going to go out of business. They'll burn through their working capital to pay 145% tariff rates. So there's something else has to be going on.
For sure there is. There is. Of course there is.
Yeah, just got to wait for Lutnick to tell us. The euro is down today. The pound is down today. The yen's down today. Everything is down today versus the U.S. dollar. Do you follow Jared Dillian, Daily Dirt Nap, Bloomberg columnist?
I know he is. I don't follow him, but I know he is. I know the Daily Dirt Nap.
I reference him because I like to keep an eye on people who make big, bold calls and end up being right. And at the start of January, he tweeted something along the lines of, "I've never been more bearish on the dollar in my life." And then 2 days ago, he said the dollar's bottomed. And I think that's very obviously fortuitous timing, considering where the euro pops above, 115 a few days ago. But now we have a potential head and shoulders coming together here. Left shoulder head, a lower right shoulder. That would signal a top here in the euro. It's a similar type of trade set up in the British pound, where it's looking more like a double top on these lower term time frames. You could even see in the yen, which the yen is a nightmare, but that is a left shoulder head, right shoulder already giving way. And that brings up the broader question. If the dollar has bottomed now, if we just went through the re-rating of U.S. counterparty reliability, we've taken the haircut in stocks, we've taken the haircut in the currency, we've re-rated the bond market. Down here, this is a very interesting place to turn, Jamal. The lows that we have back, we're going to scroll all the way back here. These are the lows that you have back in September 24 before Trump becomes the favorite to win and the dollar skyrockets alongside U.S. yields as that trade goes into place. Those are the lows that we're now breaking through down here in a left shoulder, head, right shoulder, inverse head and shoulders pattern. If the dollar's done selling off, stocks probably have room to run. Gold's probably in trouble a little bit more. Oil's probably going to make its way back up, though. So dollar and oil, I think, are telling the same story here. Dollar and gold are telling the same story here right now. This is the most important chart in the world. The dollar bottoms, we're out of the woods for a lot of different assets.
Isn't it crazy that we're saying that too? I mean, again, when you think back a year ago, 2 years ago, we wouldn't have put those in the same sentence, but now you have to. You totally do, because again, it's the buying of America, right? It's a different type of trade now. So yeah, it seems as though the dollar's trying to turn the corner here. And again, I mean, if that's the case, then gold being down and it's a little weird that bonds are down, but I'll take that as a one-off day type of situation. But when you start to put those together, then maybe there is something in the pipeline. Maybe there's something around the corner, and we're going to hear more about it soon. The assets are sure trying to show us the way, it would seem.
And this has been a market where there have been first movers ahead of official announcements.
Yeah.
And we've seen that time and again. And that's just, we just need to be clear about that. We've seen April 9th, 20 minutes before the pause was put into place, there was a huge surge in S&P 500 call buying.
Hell, the day before, right? The day before, there was an accidental mention, of a pause. There was an accidental mention, right? Accidental. Day before. So, yeah, you're right.
Yeah. Accidental. Okay. What's next on the calendar? Tomorrow, still busy day. Not quite as busy as yesterday or today. Of course, we have those earnings after hours. Apple, Amazon, much more tariff sensitive than Microsoft and Meta. So let's just keep that in mind. Eurozone inflation to kick things off. We have non-farm payrolls at 8:30 a.m. Eastern. We're going to get, it's a day. Tomorrow, though, I want to be clear. Tomorrow is the first time in a few months that Jerome Powell will not be speaking after the non-farm payrolls report. And you and I, Ilya, among others, have discussed how it kind of feels intentional that the Fed chair has been coming out after the non-farm payrolls report to kind of tell the market what to think and what to feel. This month, it's not happening. Don't read too far into it. We're in the middle of a Fed communication blackout week. The Fed meeting's next week, so the Fed is not allowed to speak at all this week. This is not Powell's taking a step back and saying, I no longer feel the need to clarify what the jobs data says. He's not allowed to by law. So were this a different week, I think Powell still would be speaking tomorrow, but that is now a new layer to tomorrow's non-farm payrolls report. Unlike what we saw in February and March and April, where Fed Chair Powell was out there 2 or 3 hours later to tell us how we should respond, we are rudderless. We don't have that North Star. So non-farm payrolls tomorrow, that is the move. We're not waiting for a secondary effect to come in later in the day. Jamal, you're going to be back talking about this, though, in a little bit. I know that you mentioned engineering the trade is coming up in about 45 minutes. You'll be looking at those earnings reports. You're going to take a quick break, though, as am I. After some commercials, Tasty Live programming continues next with Dr. Jim Schultz with From Theory to Practice. Stick around.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
All right, Mike, we have earnings coming up next week in a time of high volatility and a lot of uncertainty. What advice would you give to traders in terms of attacking earnings in a time like this?
It's a great question. I think every so often we have this pocket of time where everyone is talking about the same thing. Or when Bitcoin and crypto came out, we had Radio Shack talking about it. We had a coffee roasting company talking about it. Now I think you're going to hear a lot of tariff implications. So there's going to be a lot more heightened implied volatility in that weekly cycle where earnings are. Just doing your due diligence, have an understanding of what might impact the company you're trying to trade and how potential tariffs might impact that.
And what would you say your earnings checklist is? What criteria do you look for in a company if you're going to try to make a play on earnings?
You have to be really small. Even when you have a super strong assumption, you can be really wrong with earnings. The options market's closed when the earnings come out. You can't adjust unless you're hedging with stock, which I would say maybe size down more than you normally would. Stay defined risk. Just because a company reports good earnings numbers doesn't mean the stock is going to go up. Just be prepared for a lot of uncertainty.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday Apple and Amazon earnings edition of what it is that we are trying to do, man. Thank you guys so much for being here and being a part of what it is that we are trying to do. I don't think we're going to figure it out today, but, man, we are going to give it the old college try. If you're watching on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion and you can communicate with your brethren who are also watching the show. You can celebrate if you are a Meta bull. You can celebrate if you are a Microsoft bull. You can celebrate if you are doing the opposite of all of my earnings trades, as you should have been doing since day one. So, John, bring us into the market. Man, do we still have a market? Yeah, we got a little something cooking. Look at that. E-mini S&P's up 64. Whew, man, got the risk-free instrument up 333 on the day. And so it's doing what it's supposed to be doing. You got YM is the old boomers are up 225, and then you've got the Russell 2000 Futures Index up 11 there on the day. So let's go ahead and let's see here. Let me get into the positions tab here, and so market is loving it. Whatever it is, I'm not exactly sure, but the market loves it. This morning, I think we had, jobless claims. I think we had, housing starts. I think we had that Canadian durable goods print that drops reliably every Thursday morning at 8:38 Eastern time. And the market is absolutely, absolutely loving it. For those of you that may have followed me on my earnings trades, we're not exactly loving it. Not exactly loving it at all. You've got Meta here. You've got Microsoft here. Both expected move butterflies. Both have seen better days. And so Meta, you've got the stock at 574. We have a 540, 510, 480 butterfly that we paid 506 for. It is currently marking for 27 cents. And the 27 cents I think is a bit generous. I don't even know that we could get that if we tried to close it here today. Microsoft, similar situation. We have a butterfly on it at 392.5, 375, 357.5, with the stock at positive infinity. So the mark price on this butterfly is 3 cents, but again, that's really just a courtesy mark. That's most likely worth absolutely nothing. So what are we going to do? I'm not going to do anything. Guys, I'm not going to do anything. And here's the reason why. So right now, it looks like strawberries and sunshine. Like right now, it looks like the market can do no wrong. It looks like we're headed all the way back to all-time highs. Like everybody's loving it. Like you're loving it. I'm loving it. Everybody's loving it. But here's the problem. Tomorrow morning at 8:30 Eastern time, guys, I don't know how to say this. There's never been a more important economic print than what's going to drop tomorrow morning with this NFP. And I just can't see a way through this. I just can't see a way out of this print tomorrow morning at 8:30 Eastern time. So when this NFP drops and when the cooks cook up, these fake imaginary jobs that may have been created, may have been destroyed, whatever it might be, I just don't know how we get through. I don't know how we make it to Monday. So if the apocalypse does arrive tomorrow morning at 8:31, 8:32, which I'm going to say is about a 65 or 70 delta, then you never know, man. This Microsoft butterfly, it could print. This Meta butterfly, it could print. Let's go ahead and wait. We've already basically assumed maximum loss on both trades. Let's sit tight and let's just see. Let's see if, the Grim Reaper doesn't show up tomorrow morning right after the NFP drops. And speaking of Grim Reapers, take a look at our Starbucks position. So that's Meta and Microsoft. Sadly, it's not going to work. But again, guys, I've talked about this so many times on the show before. If you're brand new to the show, hey, welcome aboard. Here's the most important thing you need to know about me and about my trades. You need to be doing the exact opposite of every single earnings trade that I do. Every single one. I've said this on the show many, many times, and I'm going to remind you of this right here and right now. If you did this, if you did the opposite of every one of my earnings trades, a la Meta last night, a la Microsoft last night, a la Starbucks from 2 days ago, man, you're retiring 18 months earlier. You're going to be vacationing in much nicer spots. And man, you're going to be buying all organic. You're going to be healthy. RFK is going to be happy. Everybody wins. Everybody wins. And so I would do the exact opposite of all of my earnings trades. On that note, this Apple and Amazon earnings trades that got cooking up for you guys coming down the chutes in a couple of minutes, I have never felt better about these two guys. But we'll get to those guys here in just a couple of minutes. Let's look at Starbucks. So we've got a lot of things happening in Starbucks, man, I don't know. Oh, by the way, happy month anniversary to you guys. I'm actually going to get my Starbucks after the show. And in that little hour window between the show and, the earnings with Amazon and Apple, I have some recording that I have to do. And then I'm going to try to, there's a Starbucks maybe 3 minutes away. I'm going to sneak up to Starbucks, come on back so I'm ready for the fireworks after the bell. There are going to be Amazon. And then, of course, Apple always makes us wait until 4:30 because it's kind of brutal. In that regard. But if we look at our Starbucks position, we have our trusty 100 shares that, again, this has been an investment style covered call. We're not going to do anything with this right now. I'm waiting for an uptick that I thought was going to come a couple days ago from earnings, but alas, we are in the situation that we are in. So vertical spread, this guy, it looked like it was dead to rights. It looked like it's done. It's not coming back. It's going to be a full loser. Now, it probably is going to be a full loser. It barely has a heartbeat. This thing is absolutely on life support. But man, there was a faint little beep. There was a faint little something that is cooking on that machine back there. So with Starbucks, with the vertical spread, we're going to sit tight. Again, I'm predicting Grim Reaper tomorrow. I'm predicting apocalypse after NFP. So what's going to happen? 500 points in the NASDAQ. 600 points in the NASDAQ. Easy stuff, man. So if that happens, Starbucks may follow suit. And then the next thing you know, this vertical spread is going to absolutely print. So vertical spread, we sit tight. Butterfly, unfortunately, we're not going to do anything because it's not worth anything. But it's probably done. We would need quite a face ripper to bring Starbucks back. I don't think that's going to happen. So this guy, let's grab our Diet Strawberry. Probably not going to work. But the good news, I guess, these are both kind of, maybe not so good news. But the good news is this 80 put that we sold in the June cycle. We are in a decent spot with this. Now, of course, we could be in a better spot. But man, Starbucks was at 76. In the overnight cycle, maybe the early morning cycle, the day after would be, let me think here. Starbucks was Tuesday, right? Or wait. Was Starbucks Tuesday night or Wednesday morning? Or was it Tuesday morning? And I can't even remember. It's all a blur now. But whenever Starbucks reported in the after hours market, whether it was the night after or the next morning, 76, I think, was the low on Starbucks. And so I'll take it, man. 80 and some change, sitting on a short 80 put in the June cycle. It could be a lot worse, and it was a lot worse. And so we're in an okay spot with this guy. We're going to sit tight, and we're not going to do anything with Starbucks. So, all right. So that is the earnings bonanza. That is not exactly working in our favor, but it's been worse. It's been absolutely worse. So here's what we're going to do. Let's do some Apple. Let's do some Amazon. And then, of course, I want to get to you guys. I already see you guys in the chat. Man, I know you guys. I want to know how you guys are playing Apple and Amazon. Let me know how you guys are playing Apple and Amazon. Let me know in the chat. I see you guys, man. Sam L, Theta Trader, Emmett Morrison, Stefan's in the house. Man, Grumpy Mike even in the house. Joel's in the house. Man, look at you guys. Look at you guys. Joel even commenting on the magenta shirt. Man, I appreciate you, Joel. Thank you very much. This obviously is, one of my 3 shirts that I wear on the program. We've got this shirt. We've got the black Moji t-shirt, and we've obviously got the Star Wars gray t-shirt. That's pretty much the roster. So let's go in. All right. So when I think about Apple, I just think about Apple. Again, if you want to apply sophisticated analysis to this, you certainly can. If you want to get in, knee deep into the hoopla that is the charts, go for it. If you want to be digging up 10Ks and getting into some fundamentals and whatever, hey, go for it. I prefer to just use common sense analysis. And when I think of Apple, not even as a company, when I just think of Apple as a thought experiment, as a phenomenon, I don't know how you could possibly not be super, super bearish on Apple. Like, again, look at the chart, man. If you want to look at the chart here. I'll do it for you. Let's look at the chart. You can pull up any time frame you want. Look at that. What is that, a daily chart? Couldn't be more bearish. Let's look at a 4-hour chart. Look at that. Couldn't be more bearish. What is that, an inverted cup with a handle? I mean, that's crazy, man. That's easy stuff. What is that, a 1-hour chart? Man, same deal. Look at that thing, man. It couldn't be more bearish. Like, you see it going higher, I see it going to go lower. Right? That's just the way it's got to be. So with Apple, got to play this thing to the downside. Now, I think the best way to do this, we're going to go into the 1-day cycle. I don't think we have to dress this up. I don't think we need to put lipstick on a pig, which, by the way, I taught so here's a quick little story for you guys. If you're brand new to the show, I have 3 children. I have Penelope, who's 10. I have Eli, who's 8, and then Amelia May, who's 5, right? And she is, so, you guys are used to the B- humor, right? She got the B- humor gene, but somehow it became like a B+ gene, which I don't know how that happened. It certainly didn't come from me. But man, she is the comedian of the family, is absolutely hilarious. So I actually taught my kids earlier this morning when I was looking at the market and I was talking about whatever. Eli was coming over and he was asking me about something. I can't remember what it was, but I used the phrase lipstick on a pig. And then my oldest daughter, Penelope, said, "Oh, that's really funny. Like, that doesn't really make sense, but that's just really funny." And I explained to her what it meant. Like, it meant like something that's not going really well, but you're trying to dress it up and you're trying to like make it into something that's, more than it actually is. Well, my youngest daughter heard me say that. And then she started like singing songs around the house talking about lipstick on everything, like lipstick on a pig, like lipstick on Henry, which is one of our kittens, lipstick on Daddy, like lipstick on whatever. And it was just absolutely funny. And so here with Apple, I don't think we need to put lipstick on this pig. I don't think we need to put lipstick on Daddy. I don't think we need to put lipstick on Henry. I think we can just play this thing straight up to the downside. But then at the money, put vertical spread. So again, nothing crazy, nothing fancy, just keeping it super buttoned up. So you've got the stock here at 213. Guys, this is it. 217.5, 207.5. That's it. Doesn't get more simple than that. Right, 217.5, 207.5, long put spread. We buy the 217.5, we sell the 207.5. That creates an at the money long put spread in the 1-day cycle. Instant pain or instant gain, in the words of our very own Errol Coleman. And I think this is the way to play it. It looks like the debit here is 472. I can't recall feeling better about an earnings trade than this one. And so you know what to do with that information. Like, that we have essentially cemented Apple 230, maybe 235 tomorrow morning on the opening bell. But this is how I see it. And I feel really, really good about it. So, all right, so with Apple, we're going to keep it really straight-laced. With Amazon, I think we're going to do something a little bit insane. So let's go ahead and let's try 477. Let me delete that. Let's go to the activity page. Let's see here. If I go to, let's try 480. All right, so we got filled at 480. Boom. Earnings trade number 1 is in. Earnings trade number 2, which could be a 2-parter. There's a little something insane that we might do in here. So for Amazon. Okay, so again, if you want to look at charts, right? If you want to look at the fundies, look at the fundies, right? If you want to do all that stuff, hey, go for it, man. But when I think about Amazon, and I just think about what's going on, and I just think about the world, and I just think about all these different things, once again, I don't know how you could possibly look at Amazon and not be mega pint bearish on Amazon too, just like Meta and just like Microsoft. And so I think we're playing Amazon to the downside as well. Not to mention, we have a 1-day cycle, right? So this is the perfect time for an expected move butterfly, right? Because you guys know, if you've seen the show, I mean, I'll do expected move butterflies on Monday, Tuesday, Wednesday, Thursday, whatever. But Thursday. I like doing them on Thursday to kind of walk into Friday. Because if it does happen to work, and we are happen to, completely luck out on the price action and getting it inside of the net, because earnings are always 50-50. I mean, we joke about it, we this and that, but it's 50-50. Nobody knows. Nobody has any idea. Not a single clue. I mean, again, Squeeze Metrics knows, but he's the only one. He's the only one that knows. When you think about the trades you want to do, though, taking a cheap shot with an expected move butterfly, where you can have maybe, potential, 2-to-1 return per unit of risk, 3-to-1 return per unit of risk, in terms of a practical sense. Like you may, pay $2 for a $10 wide butterfly, where it's like, all right, the maximum profit potential is $8, but that would require me to get all the way to the short strike at expiration. That's probably not going to happen. But the nice thing about doing a Thursday butterfly, going into Friday, is the simple fact that if you do happen to get the price move that you're looking for, then there isn't much time left for the options to cling on to the extrinsic value. Like instead, you're going to kind of wake up on third base. Like again, you're going to wake up in a really, really good spot when the opening bell rings and, the stock kind of lands right in your butterfly net. So that's why I prefer, Thursday butterflies if I have to choose. Now, we've recently learned over the course of the last, I want to say, maybe 2 months, maybe 10 weeks or so, butterflies early in the week can work too, because the nice thing about a Monday butterfly or like a Tuesday butterfly is you can't hit the home run. You're not going to wake up on third base, but you can draw more walks. Like you can reach on more errors. Like there's more ways to get on base as we continue with the baseball analogy, which is right around the B- quality level, I would say. But on Monday, Tuesday, that's really, really nice. I'm not going to hit the home run. I'm not going to get a huge winner, but now I have multiple days for it to land inside my net just in case it doesn't work at that first pass, which happens to us often. It happens to us on a very, very regular basis. So, all right, so for Amazon here, this is going to be a two-parter, potentially. The second part's a little crazy. It's a little bit crazy. So let's go ahead. We got Amazon at 190. I'm thinking, man, let's buy a 190. Put, of course. Sell a 177.5 and then buy a 165. I'm thinking this is going to be what? Maybe 350? 330? 330 on the nose? Wow. I did not look at this before the show. I promise. I didn't look at this before the show. I can't believe I got that right. That's the first time I've ever done that in 10 years. Unbelievable. It's marking at 330 right now, 328. And so, man, it's almost like we've been doing this for a while. I mean, we can't trade. We're the lick. But it's almost like we've been looking at the markets for a while. So 190, 177.5, 165. We're paying $3.30 for it. The maximum profit is going to be the difference between the width of the butterfly. You can take the width of either side. It's symmetric, so it doesn't matter. Minus what you pay for it. So the maximum profit is a little over $900. But again, that would be at the short strike at expiration. Not likely to happen, even with tomorrow being Friday. I mean, if we mark, and again, remember, if this thing marks in a good spot early in the day, I will take it off at some point early in the day. I'll probably take it off. I may leave it on and let it ride into the show. But I like to do most of my trading on the show. You guys always see all of my trade entries, and you see 98 to 99% of my trade exits too. The only exception to that rule is, if I happen to be doing an expected move butterfly and, when it lands in your net, it can be quite slippery. And so you don't necessarily want to let that guy get away from you. So, all right. So I think this is the first part to the Amazon trade. And I think this is it. 325 debit. This is it. So, let's go 330 since we kind of called it there. We called our shot. All right. So we got filled at 330. I mean, how could this not work? Have you ever seen a more serendipitous earnings trade? I mean, I certainly haven't, right? So could this potentially be the thing that turns it around for us? I mean, if history is any guide, our career batting average on earnings is right around 18 to 19%. And so I'll take whatever I can get. But man, we called our shot. This has to work. So because of that, I think we are going to go into the second part of this trade. And this is a little bit insane. Okay, now again, remember the rule. right? If you want financial freedom earlier, you should be doing the opposite of all of this. I think we're going to go out to June. We had so much luck with our GM short call. I think we're going to go out to June and we're going to sell a call, a naked call. I want to finance this butterfly with a naked call in June. Now we're going to go outside the expected move. It's not going to be super duper crazy, but it's a little bit insane, right? Because we're not talking about GM. We're not talking about Procter & Gamble. We're not talking about Google, which is basically Procter & Gamble now that they pay a dividend. We're talking about Amazon, right? Which, wait a minute, does Amazon pay a dividend? Hold on a second. I think they also pay a dividend. Do they? They don't. Ah, the plot thickens. Look at that. No dividend. All right, so Bezos is basically saying, listen, all that cash you guys send to me, I'm going to find a good use for it. I mean, I'm going to get myself some pretty top grade pharmaceuticals for my physique, but after I get that taken care of, we're going to find some good projects to use that capital for. I'm not going to send it back to you in the form of the dividend. I got to make sure I got my BPC 157 and my TB 500 combo pack. And so, all right, no dividend for Amazon. Now, I was kind of hoping I would see a dividend there. That would make me a little bit more bearish on Amazon. But nevertheless, I think we sell the 215 call. And the buying power is actually not that bad. Right? The buying power is not that bad. And we're 25 points away from where the stock is. We're like 7 points or 6 points outside the expected move for June. And so it is a little bit insane because we're not selling a call again in, Bank of America or General Motors or, Ford or whatever. We're not selling a call in like a stock that doesn't necessarily move. We're selling a call in Amazon, which could, of course, backfire just like any other strategy. But I do think that, Amazon, when Amazon was like 2,000 or 3,000, it was much scarier than Amazon at 190 because I'm like, all right, if Amazon hits it out of the park tonight, right? If they come out with an earnings beat, they come out with a revenue beat, like Bezos comes onto the call, just all pumped up after like a chest and back session, then maybe it rallies $20. Maybe it rallies $25. That puts me right to my strike. Now that's going to be some pain. Don't get me wrong. Like that's going to be a losing trade, but I don't really think, Amazon going up 40, 50, 55, something that would be a significant amount of pain is in the cards. Now, of course, those are famous last words because that's essentially exactly what's going to happen now. So I think we're going to finance this with this 215 short call. And again, it's a little bit insane, but I kind of like it because now the pressure's off. All right, so we got filled at 266. So now the pressure, maybe the pressure's on, I'm not sure, but the pressure's off for the butterfly. And that if Amazon does go down, then we're going to get paid on that short call. So I'm not going to feel the heat to actually nail the butterfly. And so that might motivate me, motivate us. We're a team in this. So if I go down, like you're going down too. Like we're all going down together. But if the stock does go down, then maybe we take a smaller profit on the butterfly because we have the short call working for us too. So, it's just a way to kind of finance some of your debit trades. And you of course could have done a call spread instead of just a naked call. But because Amazon is a lower price stock now, only $190, it's and we're working with about a $30,000 account that it fits within the buying power parameters. And so we give it a shot. We absolutely 100% give it a shot. So all right, let's go ahead. And let's see here. I want to surprise and delight somebody in the middle that might be throwing some shade and trolling my earnings trades potentially. Let's see here. Where are we at? Let's see here. Oh, here we go. Okay, this is a great question. So Sparky Dog says, this is a legitimate question. This is not a troll. This is not a story or a joke. I think this is a legitimate question. Sparky Dog says, hey, Doc, riddle me this, please. We don't like to hold positions through earnings. That's correct. Not undefined ones, at least. But we do occasionally trade earnings events with undefined risk, a la the gift that is Best Buy. What's the difference? Yes. Okay, great question. So that's a very, very good question. And you're right. Like, I just did a short call for Amazon earnings, right? So what is the difference? I think the difference is pretty clearly this. When you put on like the short call that I just did in Amazon, obviously there's another leg to that. There's the butterfly, whatever. And so there's multiple moving parts to that whole puzzle. But if you just look at the short call in isolation, like right now, nobody knows what's going to happen tonight. Nobody knows what's going to happen tonight. And so it's 50-50. It could go either way, essentially. It's a total coin flip. With that being the case, you're basically starting off with a clean slate. you're basically starting off with just a clear plate, right? Like you're not carrying baggage into the trade. You're not carrying, baggage into the relationship. Like this is a first date. Like you don't know how it's going to go. Not unlike the first date. Have I told this story before? So on July 1st, 2006, I took my wife to Starbucks for coffee, and that was our very first date. We have been to Starbucks on the first of the month ever since, which is why today is our month anniversary. And I'm glad I was finally able to tell that story because I don't think I've ever told that story before on the show. But anyway, I digress. I think that's a digression off of a digression. If I sell a call or sell any strategy, a strangle, a ratio spread, whatever, for earnings, like Best Buy was a ratio spread, you're starting with that clean slate, right? You don't have the baggage that is potentially carrying some losses from an underwater, undefined risk strategy that's going into a new earning cycle. That's the big problem, Sparky Dog. I don't want to take a trade that might be already sitting on, 1x, 1.5x, 2x of credit received in terms of the loss, which I'm okay holding, but now I'm walking into kind of a known binary event. Like I'm voluntarily walking through a minefield, so to speak. And it's like, man, this is hard enough. I think you're making it harder on yourself. Like, yes, you could get bailed out. Like, yes, you could absolutely get the perfect move from the earnings release. And then, everybody walks away. Nobody gets hurt. That can definitely happen. And, it will happen from time to time. But the reverse is also true. Like the gotcha is also there, that now all of a sudden a 2x loser becomes a 5x loser basically overnight. And it's like, I don't really love that trade-off on something that's essentially a roll of the dice, on something that's essentially just the flip of a coin. And so I would much rather kind of put all of my eggs in things that are a lot more reliable, like the theta in the first half of the cycle, selling premium at 45 days to go, selling premium without binary events, like things like that. So that's the answer to the question. Great question. Really, really good question. And so let's see here. So we got somebody in the middle. Man, look at you guys. Man, you guys are just, so many things happening in the chat. I just appreciate you guys so much. So let's see here. Let's go to the very beginning. So Sam L says, Dr. J in the house. What's going on there, Sam L? I appreciate you, my friend. And then he says, Doc, Amazon earnings tonight. Oh, I know. I'm ready. I hope you're ready. We are bullish. No, we're not bullish because the boy Jeff B is still juiced on that TRT and the prime confidence. Oh, he's juiced on something. There's no doubt about that. But no, I think it's all going to come crashing down. Like not unlike all that juice when my man runs out of his supply. Like he's going to be in a world of hurt. And so once RFK gets on his case, like it's over, baby. And so I think that's going to start tonight. And yes, we are mega pint bearish on Amazon and also Apple. And so, are these going to be the things that take the market down? I don't know. I did tweet earlier when the NASDAQ was a little over 20,000, like maybe 20,010 or 20,020, that we were going to flush into the close. I do think that's going to happen still. We have about an hour and a half to go. And so the flush hasn't quite started to happen just yet, just a tiny little bit of a gurgle coming out, not a real clean flush. And so we'll have to wait and see what happens over the course of the next hour. But obviously, I don't know. It's just all in good fun. And so Brad Glazier's in the house. Excuse me. Greetings, Professor. An earnings party. That's correct. Let's get positive on Roku and Amazon. Well, I'm not positive on Amazon. And Roku, I'm actually shocked they're still in business. So ROKU. Yeah, down 50 cents. That makes sense. I mean, do people still use a Roku? I mean, I don't use a Roku. Do they have earnings tonight? Wow, they do. Man, should we get bearish on Roku too? And we can, we have our scapegoat and Brad Glazier. Let me write that down. Hold on. Because I usually forget. So since I'm going to do a little something, let me put Brad Glazier. Roku. All right, got it. Boom. And of course, naturally, if this trade works, I'll just throw that piece of paper away. And so Roku, 67 and some change. I mean, I can't play it to the upside. Again, I mean, their days of solvency have to be coming to a close here. But I'm kind of thinking, why don't we I want to be a little bit strategic though, Brad. Let's mix it up a little bit. I think we're going to do a skewed strangle. Like, let's sell both sides. I'm going to sell the 59 put, and I'm going to sell like a 76 call. But I'm going to bring that 76 call in just a little bit more, just to create for myself a little bit more bearish delta. So again, nothing crazy, but let's do, instead of a 76, let's do like a 73. And then maybe we move the put down a little bit too. Let's move the put down to like a 57. So you can see that we're no longer centered around the expected move. We're a couple of strikes away on the downside. The expected move runs out at about the 59 level for those of you that might be listening to the show and you can't see the screen from an audio only crowd out there. You guys are my people. The expected move runs down to the 59 strike, and we have a 57 strike put now. And the expected move on the top side goes up to, it looks like about 76.5, and we're going to do the 73 strike. So obviously our meat and potatoes zone, our peanut butter and oatmeal zone is going to be 57 to 73. And we're going to pick up a credit of about $3.22. Wow, this is actually taking more buying power than a naked short call in Amazon. Wow, that's really crazy. So this is really, really surprising. The implied volatility in Roku, are they in the, well, hold on. I'm not going to do this in the 1 day cycle, but look at the IV, 300%. Is something happening with Roku right now? I mean, are they filing bankruptcy? Like, is that happening? I mean, it wouldn't surprise me. But all right, I'm going to take this trade. Hold on. I like the spirit of this trade, Brad. But let me go ahead, and I was so used to doing the 1 day cycle. I don't want to do that in the 1 day cycle. Let's go to June, and we can do basically the same type of trade. The expected move is going to look a lot different. But now you can see that the implied volatility is only 73%. And so it's a lot calmer out in the June waters, which is nice. Let's see, I'm going to sell the 80 strike and the 50 strike. Yeah, that looks pretty good. The buying power is still pretty crazy though. $1,800. Wow. For a $67 stock. I mean, we just paid $1,800 for Amazon. It's 3 times the price. Like that's pretty wild. And so 80, 50, there might be something going on with Roku. And so the margin requirements maybe are being lifted. Because generally speaking, the buying power is only impacted by 3 things. The stock price, the implied volatility, and the degree of in the money / out of the moneyness of the strategy. Those are the only 3 components that go into the buying power effect. But there are times when a given stock or a given product might be in play where things are kind of crazy right now, like waiting on M&A news or whatever, that the margin requirements increase for those underlies. And that makes sense, right? Because, it is something that can't be shown necessarily in the implied volatility of the stock price and the moneyness of the strategy, but the potential explosiveness of that stock is kind of heightened because of the chatter in the news. Now you could make the case, yeah, but Jim, shouldn't that show up in the IV? Yeah, I guess it should, and so maybe that should all kind of correct for itself. But there are definitely times where the brokerages will increase the margin because of various kind of macro level factors. For all my macro bros that might be watching the show. And so 367, yeah, I'll do like 364 just so I get filled. All right, filled at 364. Thank you, Brad Glazier. I appreciate that very much. White says, hey, Dr. Jim, that Microsoft Butterfly hurt. It certainly did, didn't it? Yes, it did. Could you explain how you'd manage it, if any? Yes, there's nothing to do. Weiss. And so right now you just sit and you just hope. Like right now you just sit, right, and you're watching that NFP tomorrow and you're like, all right, like I'm waiting for the apocalypse. Like I'm ready, baby. And so that's the only thing you can do. And that's the thing about these expected move butterflies. Again, you just have to know what you're signing up for. There it is again. Right? I think that's now 900 days in a row that we've mentioned that because it's so important. You have to know what you're signing up for. This is not a strategy that you're going to get super creative with your management. This is not a strategy where you're going to have all these innovative moves where you're legging out, you're breaking it up, you're taking off one side and leaving on the other side. You can do all those things, but you're most likely not going to squeeze out a whole lot of additional benefit, and you're going to be left with a hot mess. You're going to be left with a super confusing jumble of legs, and you're going to have no idea what's going on. Even if you've been trading for a while, it's like that can be really, really confusing, really, really quickly. So with something like an expected move butterfly, I put it on. It's a directional play. If I get the move that I want, then I'm just looking to get out with some kind of profit at some level. If I don't get the move that I want, then you let it go. You let it go, it expires worthless, and you end up losing the debit that you pay. And so that's why I like the strategy. It's very simple to kind of look out into the forest at the different pathways forward with winners and losers and management, which is not really too much. So Sergio's in the house. Sergio says, Dr. Jim, you mentioned living in France as a young man. That's correct. In the spring semester of 2003, I studied abroad in Nice, France. I was there for 4 months. Couldn't speak a lick of French then, can't speak a lick of French now. But you've never told us, excuse me, but you've never told us the real story. How many hearts did you leave scattered across Paris? I think it's somewhere around 0. Approximately 0. Maybe exactly 0. I'm not exactly sure, but it's some number around 0. Let's briefly get into that tangent. Yeah, there's nothing to get into because it was right around 0. Approximately 0, but I'm pretty sure it was right on the nose. I'm gonna go with 0. But it was super fun. Like, it was obviously an experience of a lifetime, and it was great. I made a lot of really good friends, and it was just really, really great to live in a brand new culture. I mean, I was 20. How old was that? 22? Yeah, I was 22, about to turn 23 when I was out there, and yeah, it was great, man. Really, really loved it. I love France. Like, I loved my time in France. I loved the French people. I loved my little daily croquembouche. That was amazing, of course. And yeah, good stuff. Really good stuff. So, Theta Traders in the house. Thank you, though, Sergio. I appreciate you. Dr. Jim, if you had to hold long shares as opposed to trading options, would you rather do that in a margin account or an IRA? Wow, that's a great question. That's a really, really good question. So, if you could allow me to wax poetic for a second on your answer, which might surprise you that I want to do that. So I just got done recording the crash course. It's all recorded now. It's done. It's all. I think I have to record like a little promo or whatever. And so if you see the promo, the little 12-second deal in the magenta shirt, that means I did it today. If you see it some other day, or if you see it in some other shirt, then I did it on some other day. But recording the crash course and going through the stocks to options crash course, it's great. Like, I'm really excited about what we're doing with this. I'm excited about the content. I'm excited about what Ryan's got going on with it and all those things. But the one thing that was interesting to me, kind of going through, how should you, like, if you're going to have some of your assets be actively traded and some of your assets be passively managed, which is kind of what you're asking Theta Trader in like a not really kind of way. But if you're going to do that, how do you split it up? If you have retirement accounts and you have active accounts, how are you going to split it up in terms of like, what you do in what account? And what's interesting is traditional wisdom, conventional wisdom, is kind of in the retirement accounts, you keep the passively managed stuff. And then in the brokerage accounts, you do the actively traded stuff, that's the direction that I went with the crash course. So, spoiler alert, that is what you're going to see me say in the crash course. But as I started to think about it some more, I'm like, it's not that clear. Like, it's not that clear at all, because one thing that's really nice about actively trading in something like an IRA is there are no tax implications. Not until you go to take the money out. Like, you don't have to worry about all the tax forms and all the this and the that and whatever. And if you're super active, that can be really, really nice. And so I don't know, just to kind of zoom out a little bit from your specific question about long shares and talk about active versus passive, I don't know how simple it is that you just go active like in a brokerage account and passive in a retirement account. I think you could easily mix it up. I think you could easily kind of go the other way with that. So with that being said, long shares in a retirement account are probably the default setting, I would say. It's probably going to be what, most people are going to do and probably what most people should do. The tricky part is you don't get any margin relief. So the tricky part is, your buying power is going to be 1-for-1 with the notional value of the position. And so that's a little bit tricky. I would probably say, though, if I was going to do, long shares in one of my accounts, I would probably lean more towards long shares still in the retirement account and more of an active approach in a brokerage account. But I don't think it's as close, or I don't think it's as obvious as it used to be, maybe, at least in my own mind. And so Emmett Morrison in the house. What's going on there, Emmett? Emmett says, hey there, Dr. Jim. Lots of earnings plays available. But more importantly, we have the biggest NFP print of our lives tomorrow morning at 8:30. That's correct. And no Uncle Jay to put our fears to rest. What's the play? Man, the play is you tonight at Publix. Water, batteries, flashlights, right? Routers, right? All the things that you need, right? Transistor radios, right? MLB package to watch the Red Sox tonight. Like, these are the things that you need down in the bunker. So again, you've only got 14 hours, 16 hours left to figure this out. And so there's plenty of time. It's coming. Like, the apocalypse is rolling into town tomorrow morning at 8:31 Eastern time. And so it's on you if you don't get these things squared away between now and then. So that's what I would do. That's the play. So Scramble Everything says, hey, Dr. Jim, for some reason I have the same haircut as you. Oh, that's a tough draw for you. How do you get so much volume in your booth? Oh man, I appreciate it. Look at you, man. Look at you guys, man. The lettuce, it's certainly poofing today. It's doing some things. That's for sure. There are so many products in my hair right now. Like, it's products, plural, that I don't even know where to begin. Like, there are so many things happening in the hair right now that I don't even know where to start you off. So again, I like to just go with the kitchen sink strategy. Just throw it all in there and hopefully something sticks. Right? Pun intended. And so Matt Johnson says, let's do some earnings. Stone Cold locks only. There you go. There you go. Apple to the downside, Amazon to the downside, right? Now, again, you know what to do with that information. Like, I don't know how many times we have to go over this. Like, again, I'm going to keep reminding you because it is safer than a U.S. T-bill, right? Doing the opposite of my earnings trades is safer than the U.S. T-bill until I get super hot, right? I do go on like super hot streaks, which I don't think that's coming anytime soon, so you're safe. But once I get that hot streak, then you might want to watch out. And so I've been known to hit 1 or 2 in a row. And so Stefan says, hey, Dr. Jim, time to play the opposite game. That's what I'm saying. This is what I'm saying. He knows what he's doing. Like, RC in the house. What's up, Dr. Jim? I appreciate you. Appreciate you, RC. Thanks for being here. Sam L back in the house. The doc calls the flush. NQ and ES tanking. And here I am buying Lotto call for tomorrow. Guess I'm just here for the pump and hope. Well, no, you're good, man. You're good. I called for the flush, and we are currently about unched on the flush call. I'm going to say that it was right around here when I called for the flush. It was maybe 5 or 10 points lower, actually. And so, I mean, we'll see what happens. I mean, the market's been pretty whippy today. It's been moving around quite a bit. I mean, look at gold. Oh, by the way, how did I not mention gold in the intro? I got a little sidetracked. I got a little amped up with Apple and Amazon, but look at the shifties, man. Somebody check on your neighborhood shifty. Gold down 87. Gold down 87. Wow, that's a big move. What's silver doing? We should have gone through all of this, obviously, for the intro to the show, but I was a little bit off kilter. So silver is also down, but only down 23 cents. So silver, very interesting. So silver and gold usually follow each other, and normally silver is going to be the bigger mover than gold. And so to see gold down about 3% and silver down less than 1%, that's a little bit surprising. But it could be, gold is traditionally maybe they don't move as closely together as I kind of just thought a couple of minutes ago. I haven't really like gold, silver, Paris trades and things like that. I don't really think about them in that way like I might with like the equity indexes where, obviously the correlations with like S&Ps and NASDAQ is a lot tighter. It's a lot more obvious. It's a lot clearer. With silver and gold is traditionally a risk-off asset. Now, again, gold can wear a bunch of different hats, and you don't know which hat it's going to wear on a given day. Like, you think it's going to wear the risk-off asset, and then it wears the risk-on asset, or the risk-off hat, and then it wears the risk-on hat. It becomes a risk-on asset. That's what I meant to say. And so you don't really know what it's going to do on a given day, which is very much like the rest of the stock market. But silver and gold, generally speaking, silver is going to be the more risk-on play, generally speaking. Silver is not usually a risk-off play. Like, when's the last time you heard somebody say, man, the apocalypse is coming tomorrow, better stock up on some silver? Like nobody says that. I mean, I know Peter Schiff says that, but he's been saying that since 1982, and so we expect him to say that. But nobody says that. People say, "Man, we gotta buy T-bills, we gotta buy gold, we gotta buy bonds." Nobody says let's buy some silver coins. Like, nobody says that. And so silver usually is more of a risk-on play, and so that might explain kind of what's happening here, but nobody knows, man. I mean, I'm just giving you guys fodder for the cannon. But let's see. Strategy and opportunity says, woohoo, Meta paid groceries. I hope so. You did the opposite. Well done, my friend. Like, you guys know. If you're brand new to the show, by the way, and you're still watching, hey, thank you so much. That would really surprise me. But if you are still here, then I mean, these are the core position of the show. Like, there's many others that I'm not going to be able to get to because I take so long on these questions. But strategy and opportunity, Sam L, RC, data trader, right? Scramble everything, Emmett Morrison. These are the core positions. They know. Like, they know. If you're brand new, you don't have to take it from me. Take it from them. Like, they know. Like, if I say something crazy on air and you're like, what does that mean? How do I interpret that? Like, get into the chat. They will tell you how to interpret that. They know the Dr. Jim code. And so don't you even worry about that. You are in good hands. And so Theta Trader says, sort of theoretical, I'm considering a 100 lot of, here we go, on the shares, of SPY and a margin account to limit taxable events. Occasionally sell calls against it instead of rolling puts. I love it. No, I absolutely love it. And once you get into like that long-term bracket, I think you have to hold it for a year, I guess, 12 months or more, then you're going to be in a good spot. And so I have no problem with that at all. Wanda Clark says, hey, Dr. J, always good to see you. Man, it's good to see you too. There, Wanda Clark, thank you so much for being here and being a part of what it is that we are indeed trying to do, whatever that might be. So Gregor V. Dub says, Dr. J, I just got a ticket for July 13th in Boston. Look at you. And I bought a Tasty Trade tank top to wear to the event to show off the guns. Man, sun's out, guns out. It's going to be July, Boston. The sun will be out. And so, man, that's going to be amazing. And yes, I will be in Boston on July 13th. I forgot to kind of promo the shows. We'll have to do that again tomorrow. And yes, thank you there, Gregor V-Dub. That's amazing. That's so amazing. July 13th is the next time. It's going to be Crash Course Live. You can sign up on tastylive.com/events and sign up. Again, it's totally free. And I need people in the seats, man. I need friends. I need family members. I need enemies. I need complete strangers. Like, just bring people, just gather people with you, caravan to the show, and it'll be a good time had by most. And so Emmett Morrison, happy month of anniversary. Thank you there, Emmett. I appreciate you, my friend. We're very, very excited to celebrate our 3,000th in a row. So Grumpy Mike, did the swing set ever get built? Yes, it did. Last I recall, it was not done and you were going on vacation. Yes, it did, but I didn't do it. And my friends didn't even do it. I had to hire a dude to do it because I was like, all right, listen, like, let me just think about this. Again, you got to know what you're signing up for. I know what I'm signing up for, and I know the inventory of my personal skill set. There ain't many, and I can assure you that building a swing set is not one of them. And so I was like, man, I'm just going to pay this dude $400 or $500 and let him put it together. And so it was kind of a friend of a friend type of deal. And he earned a few extra bucks. Swing set is put together. Kids are super happy. It's not messed up. And so everybody wins. But guys, I got to go. It's time for Jamal. Man, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into Tasty Live. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hey, what's going on, everybody? Markets are up big today, of course, on the heels of a couple of the Mag 7 names that reported earnings last night in the form of Meta and Microsoft. And we got two more tonight. We got Apple. We got Amazon. What are they going to say? We'll talk about those two things as we start the show. And then, of course, things are a little muddled here today when you talk about markets being up big, but bonds aren't up as big. But the one thing that does make sense is gold is down, and gold is down for the third day in a row. We'll talk about what to expect going forward. We'll talk about Amazon earnings, Apple earnings, and what's going on with this move in gold. And look around at a bunch of the other earnings that are going to come out tonight and see if there's anything interesting in doing. Welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler, and it would appear as though there's a new sheriff in town in the NBA. Anthony Edwards quickly dispatched of Luka and the Lakers. And yeah, LeBron is out. You had to see this coming a little bit. I mean, if you watched the games this summer when they were over in France playing for the gold medal, Anthony Edwards was the up-and-coming young gun. And it was interesting because he was open. One of the best things to watch was the whole covering of that the Netflix show had, and showing all the stuff. I think it was Going for Gold or whatever. It's a really good show. I talked about it before. It was really fun to watch. But you see the young guy, and you could see that he could sense that he's next. He's that next guy. And this is definitely something for him that was in his path to dispatch of one of the bigger names in the NBA, and LeBron James, and of course in Luka. It was a good series. It's probably one of the best series going on. I know a lot of people who've been watching more NBA right now because, well, as a lot of people have noticed, it's not, NBA during the regular season is not the same. I watched a podcast recently with Reggie Miller on it, and he talked about how, during the regular season, there is no, there's fouls. There's a lot more high scoring. There's 140 to 150. There's all these different things happening because they want the entertainment value of basketball, and they want that to be on full display. They want people going to come to a game. Believe it or not, most of them want to be entertained. They want to see high scoring stuff. But when it comes to the playoffs, the referees are going to swallow those whistles a little more, and they're going to let those guys play. And it was a really fun series to watch, and I don't even know who they play next, but I'm looking forward to that kid play. It's funny because when he first came in the league, Anthony Edwards, I thought he was like 6'6" or 6'7". He's only like 6'3", which is still tall, of course, for most of us. But just when you watch him up against Luka, who's, Luka's big. He doesn't look like he's big, but he is big, right? And then you see him up against LeBron. Anthony Edwards is not a huge guy, man, but boy, he makes up for it in his play. So I'm going to be watching him going forward. We'll see how it goes. Let's pull up some slides and let's see what's going on today in equity markets as I look at my people in the chat. What's going on, people? Sergio, thanks, man. I appreciate it. Kimberly, appreciate you. Thank you. I mean, I try to be pretty chill, relaxed. Why not? You know what I mean? I tell you what, Amazon has earnings tonight. And as always with these Mag 7 names, there's a lot of pressure on them, but this time around, I feel like it's not as much pressure at all. I feel like they don't have to, before they had to justify all this AI spending and what it really meant, as we usually do, right? Something that's the next thing we're always saying, okay, well, what are we getting out of it? And that's what we were doing with the AI for the longest. These last, almost 2 years of earnings, they had to really prove what it meant to be a company that was moving towards AI. Now, it's all about how tariffs are going to affect you. That's what everybody's dealing with. I mean, this morning, there were more earnings, and there were plenty of them that were talking about how tariffs are going to affect them, GM being notably one of them. Amazon, of course, is highly affected by tariffs when you think about it. I mean, 50% of their third-party retailers are in China. So what are they going to say? Just the other day, they were chastised by the idea of putting the effect of tariffs on every price tag for every item that they had. So they didn't do that. But they're going to have to at least talk about it in their earnings reports, right? How much are they going to be affected by this? Obviously, they got a lot of suppliers in China, and China does have 145% tariffs as far as I know. So what are they going to say about that? But then also, of course, Amazon Web Services is where they really make their bread and butter, or I should say where their bread is buttered. And Microsoft set the bar high yesterday with what they said about Azure. Now, Amazon Web Services is number one as far as clouds go. So they're obviously going to have to talk a little bit about that. But I'm excited to hear about consumer trends on their site. Has things slowed down as a result of these tariffs starting up? What's the deal? So I have a couple of names that I have been trading earnings. I've been selling earnings. I've talked about this. Caterpillar worked out. Lilly, I did last night. God, big move in Lilly here. Did not work out. These have all been iron condors, by the way. Microsoft was another, also an iron condor. Did not work out. The Meta one, I did an iron condor last night, is kind of working out. So am I going to do an Amazon or an Apple iron condor? I don't know. There's some big moves from these names, more than I expected. I thought that the wings were a little bit bid in a lot of these names for earnings. so they wouldn't move quite as much because they were overinflated vol. But that wasn't exactly the case. And 2 of the 3 that I chose for last night, I'll make a decision when we look at the platform. Also earnings, obviously Apple has earnings as well, and their situation is a little more complicated. I mean, they have heavy ties to China, to Vietnam, to India, right? For parts, for materials, for labor. And ain't no way in hell Apple is moving over all of their stuff all over to the US anytime soon. So again, a lot of these earnings are, of course, it's for last quarter, right? What have you done for me lately? But they have to address going forward. What's going to be the situation? Are they going to give full year guidance? Meta gave full year guidance and they said, we're fine. We're fully equipped to handle any environment. Will Apple be able to say something like that? Will Amazon be able to say something like that? I think is the big thing we're going to learn tonight. Next, when you look at markets, I think one of the main reasons why we got, besides Microsoft and Meta earnings, that markets are up big today, I think is gold. Gold being down is almost like a waving the white flag on this tariff trade issue. Gold's down for the 3rd day in a row. We're hearing more and more about potential talks with other countries, whether it's happening or not. Who knows? Who really knows? But these assets are moving. Our market's up 1.3%, S&P 500, NASDAQ over 20K and up 1.8%, Russell 2000 up over 1%. Those moving like that, and you see gold down 2.6% back towards 3,200, makes it feel like things are really calming down. The only thing that doesn't is volatility, is VIX. Still in the 23 handle range. Matter of fact, what's the VIX? And the VIX index, yeah, they're all around the same area, 2350 to 23 flat. That's the one thing that kind of throws me off, along with bonds being down today. Doesn't really jive. So I don't really get it. I feel like I wouldn't be surprised. I still wouldn't be surprised if by the end of the day, the markets pull back about 50 handles. I just wouldn't, just because everything doesn't fully seem right, We'll see. Leftovers. Where in the world is tea drank the most? Let's move to the next slide. Drank. That's right. I want some drank. Who drinks tea? This is a share of respondents who regularly consume tea in the selected countries. 87% of the respondents in Turkey consume tea. So I guess that means a lot of tea, if you will. 83%, I totally forgot what KE was. I don't remember what country that is. Like, I don't know. 82% Pakistan. I don't remember what 79, 80 MA. I totally made this a while ago. I forgot. Was it Macedonia? I don't remember. I don't remember those 2 countries. I couldn't place them. India, 70% of the people drink tea. I think we know about that. 64% in Ireland. Great Britain, 58% of people drink tea. We're such a coffee consuming society in the US, I feel. But there's a decent amount of people, 49% drink tea. 45% in China drink tea. Didn't that number used to be much higher once upon a time? Especially after I bet once there was a removal of the dependence of Britain, things changed. Maybe. 40% in Spain drink tea. So it would seem that Turkey is the highest, which I wouldn't have expected. If you had told me this ahead of time, I would have assumed that Great Britain was probably the highest. Great Britain or Ireland, but turns out there's a multitude of countries that are in front. Who knew? Let's move to the next slide. Looking at a couple of charts here. Oh, boy. Now it's the beginning of May. April was rough, as we know. Really crazy month that we just came through. It always seems to go like this. Like there's one month. Once things are really bad, it's like a solid month. And then, boop, good on the other side. And look at this. First day of May, we're up really big. Just after earnings, whatever reason. I don't know if we even needed a reason. It feels like this was going to happen anyway. This is one of the reasons why I put my call butterfly where I did. I put it on May 2nd. Now, the only problem with that call butterfly is it's all the way in the money, which I expected. I didn't expect us to be at 5,600 within a week. I mean, we basically jumped 400 handles from 10 days ago. It's just wild. Nevertheless, obviously before the NASDAQ was leading, before the big downturn, February 20th, now the Dow is leading, if you will, but the Dow is only down, I don't know, let's call it 4%. S&P down a little more than 4%, NASDAQ down 5%. And then, of course, the loser in the clubhouse, as usual, is the Russell 2000 down about 11% and change. Let's move to the next slide. There's still some volatility in all of these, honestly. I mean, IWM, you could still sell some vol in there if you want to. Qs, 31, IVR, you can still sell vol in there. Again, this is one of the things that, is not the full all clear signal because you still got VIX in backwardation. And speaking of, here's the chart right here to show you. As you can see, we're not as bad as they were a week ago or 2 weeks ago, but nevertheless, we're still in backwardation. And that tells you, that tells you that everything is not all the way clear yet. Like, what if tomorrow they come out and say something about, we have talks have broken down. Well, markets are going to drop. We're going to have an issue, so on and so forth. You get the picture. So this is the one thing that I'm still keeping an eye on, and I can't say we're all clear yet. Cannot. Let's move to the next slide. Treasury yields, however, have really trailed off, save for a day like today where they seem to be bouncing back. Another thing that just doesn't make sense, I tell you. But, Treasury yields are well off their highs. And 10-year, again, it's climbed back some today. Currently, I'm looking at it, it's 4.23. But remember when it was 4.5%? Fairly easily at the beginning of April, but something changed when we came back from Good Friday, from that long weekend. Things started to de-escalate some, actually, as we've started to this bounce here in equity markets. And, as a result, you've seen this fall in yields. We'll see if it continues. But 4.5, I think, is an area where the market seems to get scared again and again. And that's what happened with treasuries before. But now we were below 4.2 at one point today, but things have changed. Let's move to the next slide. So for earnings, Amazon and Apple, of course. We also have Riot earnings. I have a long-term play on that. Really hasn't worked out as much. Reddit has earnings. Airbnb has earnings. An AI company, and BBAI has earnings. Roku has earnings. Twilio, Block, which is XYZ, of course. U.S. Steel has earnings. I know there's a lot of discussion about them for a while. Wasn't it with Nippon Steel? I don't know if that's still the situation. AIG has earnings, Amgen, and a couple of oil names in Exxon and CVX. GM was the latest company to cut their full-year guidance, citing exposure to auto tariffs because they just are a little bit worried about the current environment for their business. April non-farm payrolls are on Friday. That's right. We got one more huge data point coming up. And then, of course, the big thing next week is the FOMC rate decision, where you're not expected to cut any rates whatsoever or raise them. But it will be fascinating to see what Jerome Powell says about, he's going to get a ton of questions about tariffs, if he feels they're inflationary. And, markets don't never not move during this report, during the FOMC meeting, whether they cut rates or not. So I would expect some movement. Number of SP 500 stocks above 50-day moving average, 206, kind of flat from the day before. Let's move to the platform. Excuse me. Bunch of different things going on here with, I got a couple of different things here. I haven't decided. There's times where I look at this and I'm like, I want to take most of my stuff off and just start all over because I feel like we're at a inflection point. 5,500, 5,600. I feel like we're at an area where we're going to plateau for a while. I don't know. I just kind of feel like that. And I just feel like I want to take a bunch of stuff off. But I like my positions. I do. But you ever feel like that sometimes? You're like, okay, you know what? Because I'll be honest with you, part of the reason why not much is making sense. I know we're rallying because of Meta and Microsoft, but why is VIX still in backwardation? Why are bonds down? I get why gold is down because equity markets are up big. But, a lot of it just doesn't seem to make sense at this point in time. And so I feel like taking a few things off. Tomorrow's going to be fascinating. Maybe I might wait until tomorrow. I am going to wait until tomorrow. That's really what I'm going to do. I'm going to wait until tomorrow and see how things play out, see if, whatever reason, what the jobs report gives us. If the jobs report flashes recession signals. I think it puts the Fed in a bind. I don't expect it will. Honestly, I expect it's gonna. I don't even know what the expected number is, but I feel like people are going to largely be gainfully employed. We're not in any negative situation yet, and the unemployment rate is somewhere around 4.2%. I don't expect that to go up too much. So, what's going to happen? Well, I don't know. We've had a big week here, and again, this is the 8th day in a row that S&P 500, Nasdaq, all these guys are up, which seems a little bit fast to me. A little bit much. 8 days in a row. I mean, when's the last time we had that? It's been a while. Not too long ago. I feel like sometime maybe last year at one point in time, we might have had something like that. Yeah, it's a little strange market right now. I must admit. I said I've been doing a couple of earnings plays recently, selling earnings, which I usually don't do. I might have just stopped doing them because 2 out of 3 didn't work last night. Lilly is underwater, fairly big. What am I going to do with this? Well, I don't know. Maybe I'll get lucky. Again, I've chosen the May 9th expiration on a bunch of these earnings because I didn't want to do the week of. I just decided to go 1 week out. It gives me some time in case, well, you get an adverse move like this. I suspect Lilly will bounce back. If it doesn't bounce back in the next couple of days, I'll just roll it out until it does. Meta is another that I did for last night's earnings. Again, this case is the upside. Still got a little bit of cushion from the upside on this one. Of course, if we get some crazy blowout move tomorrow, I really am hoping for a pullback. Honestly, I got my best and biggest position. It's not even big by per se, but dollar wise, I guess it is. Is this? I'm hoping for a pullback. I got this call butterfly that I put on when S&P was this was around 5,100, honestly, and that tells you just kind of the big move we've had over the last several days. I mean, I did it, on the 21st when we came back from Good Friday, and I did it on this day, thinking that by the time we got to today, really, we would probably be around 5,500, just because the month was over, we were going to have bounced back, and that's kind of what we did. But we started a little bit early, and now so we're well deep into. I am still a little bit surprised that it moved this much. Nevertheless, I like where I'm at. We'll see what happens tomorrow on the jobs report, hoping for a little bit of a pullback after 8 days in a row. Are we really going to run 9? Well, I guess we'll see. Apple earnings. What? Right now, I got this put spread I've had for a while. I rolled this out here a while ago, so this has been on for a bit. What is the expected move? Oh, $9.24. So 4%. Is that kind of what we're expecting? What do we think here? Now, again, this is more recently I've been looking at names. I'm like, okay, I'll do $20 iron condors. This is kind of, $10 wide iron condors at 20 delta, basically is what I've been doing. And some have been okay. This would be one to do, but I've lost interest. Now that I had 2 go awry, 2 out of the 3, I'm going to leave it alone. But this is not a bad trade. 220. Apple has been obviously moved as much as some of these other names. Is it really going to have a $10 plus move? What would they say to make that happen? Maybe it is. I feel like some of these names have moved on earnings. The ones that have moved up to big, it was more like, oh, okay, this was less worse than we feared on a lot of these earnings. And I feel like that's kind of where the move is emanated from. So I don't know. I do like this, but I'm going to leave it alone. Amazon, again, going by what I've done more recently, I would normally 20 Delta Iron Condor. Choose this kind of trade. 20 Delta. Well, that's 22. But sure, just to look at it. Again, similar type of deal. They're all around $2 and change, 60% pop. I mean, that's exactly what you want when you're looking at an iron condor. It's just a question of what happens on the one-day move. Does it move big enough to eclipse that? what do the calls look like here? $11 move expected on this one. Yeah, I'm going to stay away from it. This is the first time in a while I'm not playing Apple or Amazon earnings. I mean, I wanna do these condors, but I just don't know if it's worth it. It really doesn't feel like it. It really doesn't. I don't know. It's tempting though. Oh no, that's the May 2nd. Excuse me. It's like I knew that was wrong. I mean, what do you guys think? Is it worth it? Are these condors worth it? 175, 170. Yeah, the flush is definitely behind us for now, Kim. You know, like I've felt like that for a while. Leaving money on the table. Apple 212.17 problem area hurdle, and then boom, jumped to 2. I know exactly. That's one of the reasons why I don't want to do it. I feel like it's just not enough juice worth. The juice is not necessarily worth the squeeze. I feel like the same thing with again, let's see, Microsoft. One of the things that I had done recently was sell short call spreads right up against this area, 415, figuring, it was gonna struggle. It was gonna probably reach the 200-day and then struggle to get through it. Well, that didn't exactly work out the way that I had planned. Same deal here in Meta. And so that's why I'm a little bit nervous when you talk about from a technical standpoint. These 200-day moving averages are big areas where people are probably still long and holding. And so I feel like above these levels, things get really explosive and they really take off. It just so happens to coincide with the upside of where I would want to do these iron condors, right? And I've already kind of, taken an L on some of them. So I'm going to pass, but they do look compelling. They do look interesting, but I'm going to pass on them, especially in the light of it would seem as though earnings is on once again, and these names have been moving fairly big. Riot has earnings tonight. No interest. I mean, you could buy stock in here, but this stock doesn't seem to I don't know. This doesn't seem to reflect Bitcoin as much as it used to. Once upon a time, this thing used to, if Bitcoin went up, it would go up, and vice versa, down. But now, I don't know. It doesn't seem to do it as much as it used to back in the day. I don't think I understand it anymore. I don't think I know it. What else has earnings tonight? Smack Loving likes the 175, 160 put spread, buy the July 190 call and sell the May 200 call, huh? So you like buying the 190, 200 call spread? Yeah, I feel you. You're very bullish, clearly. You're very bullish. Let's see, what else has earnings tonight? Not that I plan on trading any of them. I mean, I think I'm kind of good. But, Reddit has earnings. Now, this name, of course, can be explosive. And, I would expect it. Oh, well, this is only $16 expected move. Huh? I mean, that's 10% of the name. This name can be explosive. I don't like to sell explosive names. But if I were a betting person and I wanted to do some little something in here, this would be an interesting iron condor as well. But again, I'm not interested in doing it because I'm worried about the explosive nature of this name. It can really go. Most of these, you're always going to find these iron condors in this range of like $2 and change, 64 to 68% pop. And they look fantastic. But again, earnings is a one-day, one-off move, which is one of the reasons why I typically like to buy, because anything crazy can happen. Airbnb, this name was a lot more expensive. It has definitely faced some type of haircut here. Similar deal. $10 expected move, just about. Where's it going to go? Don't nobody know. I'm staying away from it as well. Again, I mean, this is one where I would be inclined to buy, really. It's hard to justify. Airbnb, Reddit. It's hard to justify an iron condor in here upside. I just don't feel a lot of these names are going to perform on earnings. I shouldn't say perform. I don't feel like a lot of these names are going to beat on earnings, but I could be wrong. But yeah, I don't know. I think I might have exhausted my desire to trade a lot of these earnings as of last night from the Lilly and the Microsoft trade. I think I'm just gonna leave them here. So what do I got going on? Again, the SPX Iron Condor, I need it to get back below 5,600. I mean, specifically 5,580 would be nice. We'll see what everything brings tomorrow. I'm still short bonds, vol, Iron Condors, ZB and ZN. I'm still short gold, Iron Condors, and I am still also short bonds, gold, and oil. Oil is the other one. Still short a oil Iron Condor as well after the big dip. I thought about buying some oil at 56 and change, but decided against it. I'm short the 56, 54 put spread. That is good enough. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See you tomorrow.
What is your favorite option strategy? What is your favorite option strategy? What's your favorite option strategy?
Oh, the Condor. I love me an Iron Condor. It doesn't always love me, but I like defined risk. I like the wings. I think that you can get like some directional exposure if you want to. You can control the position size a lot easier than undefined risk, so that's just my go-to.
It really depends on the time period. Right now, it is the short put spread, right? But a couple of months ago, it was a calendar call spread, trying to take advantage of upside moves, oddly enough, that we were seeing in the market.
Call spreads and put spreads. You know, I'm rocking on a budget here, so you know we got to offset some of those debits.
Got to be a diagonal spread. Short a little bit of front month volatility, long back month gamma, and a little bit of volatility there as well in the back. So it allows you to be directional, but stay small with the position.
Diagonal spread. It allows you to stay defined risk, play a directional move, reduce cost basis with the sale of the short option in the front, and buying a lower IV option in the back.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hello, everybody. Tim Knight here, and it is Thursday as we approach the end of the good part of the earnings season. We've got Apple and Amazon after the close, and we've got the jobs report tomorrow, an hour before the opening bell. It's a very green day, thanks mostly to Microsoft and Meta. And what else is there to say? Not a lot of the news today, but the fears definitely left the building. This is day 8 of the stock market going up, 8 days in a row. And if Amazon and Apple please investors, it'll be 9 tomorrow. I've got my charts preloaded and ready to talk about, so let's talk about them. Let's dive right in. As always, we start off with the Spider, the biggest, baddest, oldest ETF out there. And we are getting closer and closer and closer to what is kind of the last line in the sand for any surviving bears out there, which is right there. The initial plunge was here. So we had the lifetime high, fell hard, and we bottomed on the 13th of March, and we went zipping higher, and that didn't last that long. That terminated on March 25th, and then the big fall came. Of course, supercharged by Liberation Day, and we bottomed on the 7th, and ever since the morning of the 7th of April, we've been rocketing higher. And as I wrote a post last night, which basically said if at the last day of March you fell asleep and you woke up on the last day of April and looked at all the quotes and be like, nothing's going on. Geez, what are you guys been up to? All the mayhem of April was completely concealed by the fact that net, end of March, end of April, zippo, nothing happened. And we're actually above where we were at that point. And as I said, the kind of the last wisp of hope for the bears would be to stay below this level. In other words, to keep that lower high intact. We'll see. Amazon and Apple will definitely help inform that. Let's peek at the big fellas from last night. There's Meta, which is up about $30. And as we zoom in on this, you can see that we peaked up here at that dashed line. It's in candlestick terms, this is a spinning top, just this wild fella here. So we're off the highs, but it's still a big gain for Meta on the heels of those earnings. And so it translates to about a 5.5% gain. And Microsoft is up even more in percentage terms. This is almost a 9% gain. Zoom in on it here. A couple of interesting things to note. One, this descending trend line is not violated. So here's the lifetime high, here's the lower high, and here is so far the lower high. The other thing, which I find more interesting because I'm kind of a gap chap, is this fella right here. The last gap, which was formed at the last earnings announcement. In other words, when they had their announcement, they fell, unlike today. But we almost closed that entirely. So that's kind of interesting too. Okay, I'm a pretty natural warrior. I'm just going to grab this here. Okay, so Microsoft, Meta both up big, and I think the general expectation is that we'll have the same deal after the close. No idea. I didn't have a position, Meta or Microsoft, thank goodness. Nor do I have one in Amazon or Apple. I'm kind of staying way on the other side of the room when it comes to any Mag 7 or tech stocks. I will mention that I did today short Microsoft after this explosive move higher because it's a way safer trade. My stop loss is basically that line, and it's actually a little bit of a profit so far, so we'll see how that goes. So I normally don't dabble in Microsoft, but I thought today would be a decent entry point now that the earnings risk is behind us and we've got a very, very clean stop loss to set. The cubes naturally are benefiting from this. They're up almost 2%. Same deal as we were talking about with the spider. So long as we stay below that dashed line, the one or two bears left on the planet still have a little bit of hope left. And that's really it at this point. Sure, if it goes above that, maybe months down the road, we'll have another shot. But that's really kind of the last line in the sand. Just some odds and ends on various individual charts while we're in the neighborhood. IBM, which is a very clean trade here as well. This is the level 24366. That is the gap formed by this bar on the 23rd of April. And today we got a nickel below that. So that's good enough for me. So I've shorted IBM with a stop loss there. Palantir, this is a stock I do not go near, but it's a good illustration of just how powerful the recovery has been in recent days. This bottom down in the mid 60s, now it's in the triple digits again, is almost doubled. It is almost doubled from the 7th of April. Pretty amazing. And actually, we might as well just throw down a line here, getting within spitting distance of its lifetime high. So that's PLTR. Carvana, another huge recovery. Zoom in on this one. Got another gap on this one. We're close to that, but this one also, everything pretty much bottomed on the 7th. So this bottomed around 148, and we are over $100 higher than that now. So there's a really pronounced blasts higher from these formerly battered stocks. A little less dramatic, but still an interesting chart is Costco, COST. And in this instance, yet another price gap right there at 1019.05. And we are closing the sunshine of that window as we get closer and closer to that. And of course, long term, you can see we're mushed up against the top trend line of that very, very long term price channel. And just one last individual one to drive home the point about how big the recovery's been. RCL, Royal Caribbean, the cruise company. We've got this multi-year price channel. We had a failure, so this was the last point that it held above. It jumped below it, failed, been banging around there ever since. And its own line in the sand is like so. But, kind of the damage that's done on these, you can see that this is real damage that's worth noting. But anybody who's tried to get in the way of these price ascents has gotten rolled over. A couple of ETFs still in the U.S. The diamonds up, not quite dramatically as the likes of the cubes, but here we've got a major price gap on Liberation Day. Now, some Liberation Day price gaps like the cubes were sealed up long ago. The diamonds has been kind of the laggard, and it's getting close though. So that dash line represents that final gap it needs to seal or should seal. IWM up a little more than 1%. The gap is sealed on this one, and it's a little tough to suss out what the appropriate line is on this one, but best I can do right now is this blue level here, just below 200 on the IWM. Still a magnificent reversal pattern here, but stocks, just like I say, 8 days in a row, muscling their way higher. It's pretty potent stuff. EFA is up a penny, basically effectively unchanged. Here we have the former lifetime high. We're very, very close to it. That high was set back on March 19, before Liberation Day was a thing. We, of course, fell tremendously, and in this incredible V bottom, blasted higher to essentially equal. Not essentially, we do equal. We're at the same levels we were back on March 19. So it was kind of a non-event, but at least we can say we're not above that lifetime high on the EFA. Now, one of the kind of the shelter from the storm that people had sought was gold. That has lost its luster in a big hurry. Here we have GLD down hard over 2%. This had peaked back on the 22nd. Bearish engulfing pattern on this one. And so this was a very strong day. But I forget, I think got up to almost 3,500 an ounce in the futures, but we had a bearish engulfing pattern here. And as I pointed out, we have an island reversal pattern. That is to say, this dash line represents strong resistance. So here was the bearish engulfing pattern. It blasted below here. Hasn't been able to muster enough strength to get above that gap ever since. And now it's down like so. So when I spoke of gold taking a breather, this is the kind of breather we're talking about. And it could keep getting hammered down to this general vicinity. So China dumping a lot of gold on the market, and naturally in turn the miners also doing poorly, about 3.5% negative on GDX. Same deal, not really an island reversal here, but we do have this price gap which represents important resistance, and so we've sunk back to where we were back on the 10th of April on the miners. The semiconductors have steadied themselves. They've been getting a lot of good and bad news lately, but at the moment we're up about 1 2/3%. We do have for months now a steady series of lower highs like so, bang, 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 all the way down. And so the line in the sand for this one, which is pretty far above present price levels, I realize, is this dash line here. We've been progressively making, and the lifetime high is way, way back last July. But in more recent history, we peaked on this in January and have been slumping our way lower like so. I have nibbled a little bit at semiconductors. I've shorted AMD, and that's about it. I thought that was worth giving a shot at. What else is cooking out there? There's a couple of ETFs I like to watch, worth noting. Materials, XLB. This is getting closer and closer to its diamond pattern. I got stopped out of this late yesterday. I'm staying away from it until such time as it seals up this gap or gets very close to it. That's a very, very nice looking pattern, but I've burned my hand on the scale a little too often the past 8 days to get serious. So I'm keeping things light. I'm down to about a 70% commitment level in my portfolio, but this is something I'm keeping an eye on for potential opportunity. Maybe if we get a big update tomorrow, that'll present itself. XLF, the financials, is another interesting one. Very close to sealing this price gap like so. This is the gap that was formed Liberation Day, the low of April 2. So just about sealed that as well. Let's see. Tesla is up a little. It's been quite range bound for a few months. The big chatter there was the rumor that the board of directors was trying to find a new CEO for the company, which the board completely denies, and so Elon's not too thrilled with that reporting. I don't think the stock cares that much, but we're below major resistance right here in the form of these 2 Fibonacci's. So that's probably just about all she's going to write on that one. Bonds are down pretty sharply, which ostensibly is the reason there was such a retreat from Liberation Day. So even though stocks have been very, very strong, bonds are not buying it. They reversed away 2 days ago, so off about 1.25% on the TLT. So anyway, the 2 big dazzlers after hours is Apple, which has a very clean gap right here, 221.02. So if we exceed that one, that'll be interesting, worth noting. The lifetime high on this is a ways back, late last year, but that is the price gap I would keep an eye on in terms of any pop. So Apple is a very clean chart. Amazon, a lot less clean. It's really hard to tease out a pattern on this one. I wouldn't put hardly anything into this line, around about 200 or so. And Apple tends to report pretty well after the close, like half an hour, whereas Amazon's kind of lickety split the moment the market closes. So just to wrap up with a couple of last quick items, SPY divided by TLT, very important chart, broken wedge on this one. Long term, still suggesting that equities are very vulnerable to a slip from these levels. You can see the bounce has been tremendous since the 7th, but that is a very broken wedge. And lastly, our old friend, the RTY. This is the long-term Fibonacci, and we are butting up right against the underbelly of that thick red line you can see right there. We'll see if it does anything or not. We got right up to it to the penny today and backed away. We're just below it now. So anyway, big earnings coming. Good luck to you. Let's see how it goes, and I'll see you post-jobs report to close out the week tomorrow. Bye-bye.
So, Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammy is when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car. You get a car. You get a Scott Sheridan. You get a Scott Sheridan.
I want the car.
That's right.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain's seat.
I've never been invited to come sit in the new captain seat, but what I'm concerned with is the size of these screens. And that he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it. Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. Even the S&P's up 72 handles. NASDAQ is up 347. Russell is up 24, and the Dow is up 290. Kind of a complacent day, wouldn't you say, Saz? After the opening, I know we rallied up, and we rallied up to 680 and change, which is another 30 handles higher than here, almost up 100 or so. But it was kind of quiet and steady. That one little sell off.
Yeah, I mean, if you looked at the whole day, I mean, I think we were up 90 something, and we were up 40 something. So right up 70 is right in the dead smack in the middle, and nothing really happened. I mean, not that much happened today.
Mm-hmm.
It was kind of a good day to be short premium. I like the fact the bonds are down because they're in the 115 handle. I could use one more down day on the bonds
Wait a
tomorrow.
minute. Do you like bonds being lower? Because bonds.
I want to buy them.
Right, but bonds going lower, market staying bid, volatility kind of staying.
I know. I want to buy bonds. This is just pure bond talk. I want to buy them under 115. Okay. I'd like to see one more down day in the bonds. Maybe I think there's a number tomorrow. Maybe just to get a quick little downdraft under, get them in the 114 handle. I would buy bonds, and so a point lower from here. I'm just being selfish. I would like to get my hands on some bonds. I don't know if that's bottom. I'm just saying I'd like to get my hands on some bonds. It's a good day for gold, silver. It's a good day for all that kind of stuff. But the S&Ps, man, it's a good day for being short premium. It came in everywhere.
It did come in everywhere. Still elevated relative, right? And to go to your numbers, you got
100%.
Non-farm payroll. You got unemployment. Tomorrow.
You have a big number tomorrow.
First Friday.
Yeah, you could have the expected move in the bonds. Let me just check. I don't want to guess. I'm guessing it's got to be over a point.
The move in the bonds are just under 0.77. So that is
0.77 is
just 0.75 of a point, right?
Yeah, so that's 24 ticks.
Yep.
That's less than I thought, but I guess that's the way the bond. Let me see what am I doing here?
Ivy rank of 43.
Yeah. Yeah, you're right. That's yeah. 0.77 would be 25 ticks exactly. So 25 ticks lower would take us right around to that 114 if it's the downside. So I mean 115
even, not 114.
So that would be, I'd be good with that.
Handle.
I'd be good with that. So any
down 25 ticks tomorrow morning, I would buy bonds just on a shot. I like that. Other than that, I don't think
oil turned around. Oil went green after being red all day. Traded down to 56 and change. It's 59 and change right now. So you got to.
I know. I rolled up twice today and this morning oil was down, so I rolled down crude oil calls, and then I rolled up twice during the day. So now I'm flat crude oil, but it's premium came in there today a little bit. Nothing great, a little bit.
Despite all the earnings that we've had, big names yesterday, you only got 1.1 million, even the S&P's trading so far. Not a huge volume day, relatively light.
Huge
Especially
volume
on a
huge
70
volume in
point-
some of the options, not in the futures. You're right.
True that. I'll give you that.
Yeah, I mean, like Microsoft and Meta, they had huge volume today. People like me, just covering, adjusting, all that kind of crap.
Sure.
After the opening, Microsoft, I mean, it's literally been sitting at within $2 of 430 all day long.
Yeah, perfectly priced.
Meta opened at its highs. It's been right around here, 576, 577. I'm flat Meta. I kept my short premium in Microsoft, but the problem with Microsoft is Ivy ranks down to 20.
Yeah.
McDonald's been down all day.
The other problem
down
is
all
it's a
day.
$575 stock. It's not.
Yeah, but Qualcomm, McDonald's, Moderna, and Hood, they're all been down all day. They haven't rallied at all. Those are the other 4 stocks with earnings from last night.
Mm-hmm.
Those are the 4. So I was trying to get a read on, what do you want to do tonight?
Well, you've got a couple of stocks that you're interested in because you already have existing position, but you got Apple, Amazon, Roku, Reddit, and ExxonMobil. You have positions in all of those.
Yeah, so let's start with the smallest position, ExxonMobil. Tiny little position. I have, what do I have on? I have the 100-105 1/2 put ratio spread. I'm not touching that.
In June or May?
In June. It's kind of a garbage trade. I'm not touching it. I don't care. I'm not.
So you're kind of omnidirectional, slightly bullish.
Yeah. I didn't put it on today. I put it on yesterday. I'm not touching it. I'm leaving it. It's an earnings trade, whatever. Reddit, we trade a lot of Reddit, way more than I probably should because it's not the most liquid underlying in the world.
Reddit's up $4.46 after opening at 125, which is actually about $4 higher than where it is right now.
Yep. I have a tiny bit of short delta in there. I have some wide strangles, not too big, but just playing some wide strangles. I think Reddit's, I loved Reddit in the 80s. I loved it in the 90s. At 120, 125, I don't like it anymore.
$15, $16 expected move. Do you do anything in the 1 day options? So the markets aren't great. And even in the 1 days, they're 30, 35, 40 cents wide. They're not that great.
Tough to trade in there. I totally agree.
Okay, I agree.
Next stock, we have Amazon. Obviously liquid. I have been trying to put some positions on. In June, I'm short 2 puts and 1 call, pretty far out of the money.
Amazon opened right here, by the way, just under 191. It's just over 191 right now.
Yep.
So.
Hasn't really moved all day. It's been up $6-7 the whole day. Like I said, I'm short the 160 puts and the 220 calls. It's equidistant away. I'm just short twice as many puts as calls. And then in May, I have the 165 217. So I'm a little bit inside of that. And that's just a May strangle. I don't know. I'm as delta neutral as you can be in Amazon.
I can see you all the way out there. Yeah, I see you.
Yeah, well, all the way out there didn't work for Microsoft last night. Okay.
Surprising, Reddit has a $15 expected move. Amazon only has an 11.
No, Reddit's got to be twice the beta of Amazon. I mean,
Reddit. Right, where are we going? Roku or are we going to Apple?
I'll go Roku first because I have a small position in Roku. Roku hasn't moved much today. We have the 55.90. I don't know what that means. in June. We did not put it on today. We had it on.
$8 expected move in Roku.
We have the 55.90 small. We'll leave that on. Biggest position we have on is Apple. And I did probably go a little overboard in here. We are in June, short a wide strangle in June, the 180, 240. That's my June strangle. It's pretty equidistant away.
Mm-hmm.
Yeah, 180, 240.
Yeah,
and
then, 30 points away, pretty much. I mean, one way.
Yeah, I can roll the put side up some. I don't know, but there seems to be a little skew. I'm not sure. And then I'm just naked short a bunch because I'm a little bearish in Apple. So I'm naked short a bunch of May 240 calls. They're about 40 cents pick 'em. They did not hit premium in Apple all day until about 2 minutes ago.
Okie dokie. Apple expected move for the day is about $8.
Yep. I think that's way too low, but I'm not selling any puts.
That'll teach them.
That will teach them, those little bastards. That'll teach you.
Airbnb, Amgen, CVX.
I do have an Airbnb position on. I didn't realize they had earnings.
You do?
Yes.
Then I missed it.
Yes. That's a good damn question. What's the expected move in Airbnb?
Airbnb has an expected move of $9.50 for a day. June is almost 14.5, a little bit more.
I have a small strangle on. I have the 105.
In June?
In June, I have the 105, 140.
That's a little short delta, but you're $16 away and basically $16 away.
Does anybody use Airbnb?
Not since your wife told me not to. I don't go against her.
She's a national boycott on there.
You kidding me? I'm not. I
don't know why. I honestly don't know why anybody would use Airbnb ever. I can't figure it out, but people do.
Airbnb expected move about $9.50 or so.
Yep. So I am going to load up my watch list and hope for the best, I guess.
Got it. No 0-day, 1-day expirations tomorrow trade in any of these stocks like the Apples and the Amazons of the world?
I mean,
Roku's and the Reddits? You don't got a hunch to bet a bunch?
I don't have a hunch to bet a bunch.
Okay.
I don't really have an axe to grind in any of those stocks, to be fair. They're all kind of meh to me, I guess.
Meh?
Meh. Yeah. I mean, S&Ps have literally traded in both the NASDAQ and the both NASDAQ and S&Ps have been in a tight range the entire day.
Yeah, only thing selling off right now is volatility for the moment, down 55 cents. That's about as low as it's been.
Yeah, it's come in a little bit.
Mm-hmm.
Let's see. You said Exxon, Roku, Airbnb. What else? You said Roku, Exxon, Airbnb, Apple, Amazon. I know. What were the other two?
Reddit, CVX.
Oh yeah, Reddit. Oh no, not CVX. Reddit. Okay. And I think there was one more, but I don't remember.
Airbnb, Apple, Amgen, Amazon, You say meh? I'm done.
No. I'm saying I don't have any CVX or Amgen.
Didn't say you did. Did you sell them at all today?
Nope. I'm short Delta right now, but I didn't sell them. I wanted to sell them all day. I sold a few futures. So yeah, you know what? I take it back. I did sell a couple of futures. I am currently down
about 15 handles or something.
About 10 or 15 handles on some. But I needed to get some short delta. I don't know if I'm going to hold it till the number tomorrow morning or not. It's a small loser right now.
Okay.
I just wanted to have. I wanted to have some
at 3 o'clock in the morning or 4 o'clock in the morning when you wake up to do a little something that they're down there and you buy them back. You make 3 points.
I was hoping that there'd be a little something maybe overnight or after the close. I mean, I can see a little tug of war.
Apple's going to move the market one way or the other. I mean,
Apple's going to move the market a lot.
Yeah.
Amazon's going to move the market somewhat. Apple's going to move the market a lot. I thought today was exactly the rally that, I guess exactly the rally that I was hoping for. A rally up to 56.50. It's a 56.60. This is the area. Except they, listen, there's no sign that they want to roll over here yet. So I'm just going to play it. I'm going to play it. I don't have to be a hero. Let's put it that way. I don't need to be a hero.
We've had 10 green bars.
Yeah. I don't need to be a hero tomorrow on Friday, but I think tomorrow's the day you gotta give it to them a little bit.
Now tomorrow's the day.
No. You're going to have to get a little short today. I will get a little short today.
You only got 11 more minutes.
Well, I'm already short. I'm short right now, and I'm going to add to it if they rally up tonight.
I hear you.
Yeah.
I hear you.
Yeah. This is the shortest we've been going home in a while. But, I'm not going to go crazy. Just a lot of green on my screen for the last couple of days. I feel like this is a pretty explosive move to the upside.
I don't think there'd be anybody would argue about that. 1.5% just about across the board, just rounding here on the overall market on top of the last 10 days. Sure.
Yeah, you've got literally.
It almost seems like it's due for a breather.
And you have literally 10 green bars in a row?
Yeah, 10 green bars. That's what I said.
Yeah. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, just about. Listen, if there was ever a time for a pullback, you got it. And that's just gambler's fallacy, but whatever. That's just something to throw out there.
Yes.
Apple, this is the high of the day in Apple right here.
You are right. And my Taiwanese sources just reminded me, Sadnov, because I know it's one of your favorite stocks. XYZ has earnings today.
Yeah, I do not have a position on in there.
That's the block.
Yep. I got enough positions.
I know. I just never thought I would see a stock XYZ. Markets are 10, 15 cents wide in there.
Dumbest symbol ever.
Yeah.
Dumbest symbol ever. But yeah, no, I think I got enough stuff tomorrow. Looking at my screen, just looking how much green there is, and there is a lot of green today, and there are not too many stocks. There are not too many stocks with red. And when we talk about red on my watch list, I have nothing of significance in red. Other than gold, which is down big, I got nothing else.
Well, you got Qualcomm's down 12. That's something.
Yeah, right? Earnings play. Yep, earnings play.
Amgen has earnings after the market closed. It's down 6 right now. I guess, but you're right. I think
Amgen. I think the big stock you didn't talk about it was Eli Lilly, but most of us don't trade it. But that was the big mover today.
Yes, Lilly down 11% or so, $101. Yeah, that's a big move. But like you said. Yeah, that's a big move. I undersold that. I will tell you that. But markets are $2 wide.
I understand.
$2 wide. We don't.
But
trade it.
We have traded it. We do trade it, and
I do mention it a lot and say it's always on my leaderboard for a mover. It's surprising with a 37% monthly implied volatility. That's always in like the top 5 or so of movers of the day. When I go, what's moving today? We got Lilly down $8. Lilly.
I don't know. I don't know what the expected move in there in earnings, but it wasn't 100.
No, it wasn't 100, considering it has a $100 expected move for the next 78 days.
It wasn't 100. That's for sure.
Definitely, that would be a safe bet if you could find somebody to take the other side. So enough, that'd be a safe bet.
All right, what do you think in Apple? What's your?
Oh man, you're not going to give me the advantage of just being able to fade you, huh?
Well, if you're going to fade me, you'd have to get long Apple. So I'm flat in June. I'm short in May.
Oh, you got like a Pete Momat special on.
I'm flat in June.
You got the flop, you flop and pop, or you have a pop and flop. I don't know which one you got, but you got
No,
one.
I want to flop. I want to flop and sit there. But because I don't want to deal with any pressure. But I have a
you thrive under pressure. You kidding me? A guy like you? I mean, pressure's your middle name.
There wasn't like in Microsoft today. I was thinking I can make some money back, but there was nothing to do the whole day. It didn't move.
We talked about that pretty early. It looked like they crushed premium right away, and we both said I don't think you have to make your money back or give your money back in Microsoft.
Yeah.
You asked me about Apple. I think it's a tough one to call here, Sadna. Dare I say, up $2. Up $2. That's it. Well inside the expected move. Big non-event in Apple.
It's entirely possible. I'm thinking in Apple. I think it's going to be very much an inside move after the Microsoft move last night.
I'm dead.
And by the way, Microsoft's on its low of the day right now. This is where I wanted to buy it this morning at 125. It's 126 right now. But I think Apple trades
425, 426.
425. Yes. Yeah. I think Apple trades and between 207 and 209.
You can just about get your futures back if you were dying to get those. This could be a gift from above. Like a baby, Sosnoff. A baby is a gift from above.
I didn't even realize that. I can.
You sold them around 46 and change or so, right?
Yeah. Here you go. There you go.
All right.
Take half back.
Beautiful. Good job out of you. Thanks for mentioning that, Pat.
I didn't think I was going to get a chance to make money on those.
No, I mean you talked about getting.
I forgot. I totally forgot.
Yep. That's what I'm here for, Saz. I'm glad I could be of service to you, my lord.
Totally forgot. This little down move here is surprising. I wonder if it's Amazon that's scaring the children. Somebody just scared the children.
Why Amazon? Because it's up 6%.
I don't know. I don't know why Amazon. I don't know why Apple. I don't know. But we'll see. I mean, they sold them off. Usually they get a sell-off in the last, 10 minutes of the day, last 5 minutes of the day of 20 handles. That's a third of the move for the whole day. I mean, Microsoft making a new low for the day. Spoo's making a new low for the day. I don't know, just a little weird.
Whoa. Recent low, not new low.
Well, since the opening.
Yes.
Since the opening. And since the opening. I mean, Microsoft 425. This is where this morning I was like, you know what? I wish I could buy this thing at 425.
And there it is. All you had to do is wait, sounds enough.
Now I got to roll down calls in Microsoft because if you think I'm going to get caught long here, you're out of your freaking mind. So now I got to roll down calls in Microsoft, the whole deal, just to be a little bit short. With this close, ooh, dogger.
MSTR? Yeah, MSTR has earnings. I missed it, Saj. You got 3 minutes before the market closes.
MSTR.
It's up $2.80. I did not talk about it. I'm sorry I missed it.
MSTR.
And my Taiwanese sources missed it too.
What the hell's wrong with your Taiwanese sources?
They're not what they used to. Good help is hard to find.
My
Taiwanese sources had it. I missed it.
These markets are actually better.
In June, markets, 50 cents wide. Yeah, they're actually better.
These markets are actually better than most of the other markets. I sold some small strangles just for the hell of it. MSTR, you got me.
In May, 250, 525.
You hooked me. You hooked me with 1 minute to go.
MSTR has a $12 expected move. Does that surprise you?
Yes, because it's priced as if it's a $100 expected move.
Extremely low. Low IV rate too.
It's priced with a $100 expected move. All right, let's see.
What do we do every Friday, Saznov?
Every Friday, we get a little fast market action.
Yes, we do. And we need your trades. Please submit them to tastytrade.com/fast market. You got something to say? We're going to listen.
Thought they would bid up the calls in Apple on the close, and they did not. Surprising.
Well, market's selling off a little bit. Apple's only up 60 cents now after being up.
I know, but I thought they would bid up the calls just because people would get nervous and try to buy stuff. It does not look like they did.
Volatility down only 20 cents. Small range for volatility today.
Yep. I thought they would bid this stuff up a little bit, and they absolutely did not.
Even the S&P is now near the lows of their day, so I don't know if you are correct.
Yes. Very surprising what time we got here. 1 minute left in the day. Yeah. Hey, listen, probably the best prices of the day.
The highest premium and price action, meaning low?
Yeah.
Got it.
All right, Mr. Batista, what time do you think Apple's coming out? I think it's going to be $5 lower. That's my call.
Oh, you're changing a little bit here. Oh, I can see it in your eyes just on this little move. They snookered you in on this little move. We'd like to get rid of the weak hands like you. I feel a lot better about my up $2 prediction now that you flipped cards a little bit. Even the S&P is up 33 cents. It's the biggest move we've had pretty much all day, or in the shortest period of time for sure.
They absolutely scared the children on the close.
Mm-hmm.
Yeah.
And by children, you mean you, right?
But me and other children, yes. Absolutely.
All right, you big lug. I'm going to take a quick 90-second break. We'll come back. We got the overtime crew next. Sound good to you?
Sounds good to me.
Peace.
Welcome in Tasty CEO Tom Sosnoff, also found at Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah, as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
What is your favorite option strategy? What is your favorite option strategy? What's your favorite option strategy?
Oh, the condor. I love me an iron condor. It doesn't always love me, but I like defined risk. I like the wings. I think that you can get like some directional exposure if you want to. You can control the position size a lot easier than undefined risk, so that's just my go-to.
It really depends on the time period. Right now, it is the short put spread, right? But a couple of months ago, it was a calendar call spread, trying to take advantage of upside moves, oddly enough, that we were seeing in the market.
Call spreads and put spreads. I'm rocking on a budget here, so we got to offset some of those debits.
Got to be a diagonal spread. Short a little bit of front month volatility, long back month gamma, and a little bit of volatility there as well in the back. So it allows you to be directional, but stay small with the position.
Diagonal spread. It allows you to stay defined risk, play a directional move, reduce cost basis with the sale of the short option in the front, and buying a lower IV option in the back.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Stocks are up, but they're down thanks to Amazon. It's Thursday. It's May 1st. It's 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan. Take you through the rest of this trading hour. Futures market closes at 5 Eastern. If you're joining us on the platform on the website, tastylive.com, thanks. Come over to YouTube. Tell us what you're trading, what you think of this market action here today. Amazon earnings out after hours, and they were good-ish. 159 on the EPS versus 136 expected, but of course they have to guide a little bit lower. So the stock here is coming down after hours. S&P 500, as we look to the charts, is now down after hours as well. Amazon here closed at 190, now in at 181. It's about a 5% drop here for the share prices. S&P was trading, can't believe, just about 15 minutes ago, closer to, call it what, 56.50? Now we're at 56.06 and a half. Ilya, it was a confounding day in some regards. You see Buy America early in the session, stocks up, bonds up, dollar up, gold down. As we shake out here into the close, it's not quite there. What do we make of this market ahead of non-farm payrolls tomorrow?
Take a look at, let's say, a 1 hour chart of the S&P. Let's say that. So let's just zoom in on yesterday and today and do a little autopsy here. So obviously the GDP report lands on the market. The markets don't like it. Then they stop and think about it. And we basically get back to neutral by the time we arrive at the close. That's that first big green candle. And we arrive at basically dead even. Then you get the Meta and the Microsoft earnings, and they're good. And you get a pop. Does the S&P do anything after that? Not a whole lot. Almost nothing, as a matter of fact. It has one follow-on pop at the cash equity open for people to get their crack at Microsoft and at Meta. And then that's it. We didn't really do anything today. Which brings me to the thing that we talked about yesterday. Which is that if you take this GDP report and you take out of it what is, by any definition, a ridiculous anomaly on imports and inventories because of the front running of the tariffs, and so the investment number is off the charts. The imports number is off the charts. The real story in that GDP report wasn't investment, wasn't imports, because imports on net are less than 5% of GDP, net of exports. It's barely a rounding error. The real contribution to GDP is consumption, 68.5% of GDP in the most recent quarter. And that gives us the slowest growth and the smallest contribution to overall GDP since the second quarter of 2023. So we get the weakest reading on what is the most important part of GDP in almost 2 years. Now, what do we have? Amazon is guiding lower. What is Amazon? Amazon is consumption. The concern here isn't this back and forth tariff nonsense. And yesterday's stock resilience, in my mind, isn't the markets shrugging off recession risk. It's them not wanting to front run Meta and Microsoft. And rightly so, by the way. The markets were rewarded because those releases were, in fact, surprises. They were, in fact, good. And the markets did, in fact, get a lift. We still have Apple that's pending here, yes? So we're going to get another little surprise here at some point, incoming. But when we get the jobs report tomorrow, that stuff will be out of the way. And the markets will have an unvarnished opportunity to bet on the business cycle. And if what we saw in the ISMs today, if what we saw in the revision of S&P Global PMIs, if what we saw in the abysmal jobless claims numbers today, in particular continuing claims, which surged, if all of that lines up to a soft jobs report, and there's no earnings to fear, and there's no month end, and you just have the recession to bet on, very difficult to imagine how these stocks do anything but unravel.
Dylan, we have the more tariff-sensitive names coming out with earnings today. Amazon, Apple, certainly more tariff-sensitive than a Meta or a Microsoft here. What's your read on the situation here as we go into the final day of trading this week?
Yeah, I mean, it's a test. So the market basically said, we're okay with the tariff war as it is after it was all said and done in April. I would say the stock market said that. The dollar did not say that. And there are other financial assets that had a different point of view. But the stock market said, we'll survive this. The Amazon, the Apple, and then it's going to be the automakers, some of the big consumer goods. Nike stands out, obviously. It's hard to imagine how, the same way it was hard to imagine how Tesla's numbers weren't going to be terrible, and they were indeed much more terrible than the presumed terribleness that was baked into the expectations on that. No one will be surprised that Amazon is like, well, all these tariffs are going to slow down business. I mean, it's Amazon. No one's going to be surprised when Apple, who famously makes iPhones in China, will have to their business will slow because of the tariffs, or Nike, or. But I don't know the degree to which the market, I mean, obviously we got the Amazon sell-off, but Amazon might be back to even. The question is really, will the bad news that will come out from Amazon, come out from all these companies, will the bad news be treated the same way it was treated in the Tesla earnings cycle? And I think there's a reasonable case to be made for the fact that it will. How could you possibly be surprised if Apple and Amazon tell you that their business will be hurt by the tariff wars? And if you can't, a 2-year-old can figure that out. The only question is order of magnitude, I suppose. And even that's probably easily modeled by somebody who's in the business of modeling businesses.
And in fairness, I mean, I think that's absolutely right. But in fairness, Tesla was a special case. Stock is down 30%, and
special case by order of magnitude, but not
by order of magnitude,
but not by ease of assessment. It's just as easy to think that Amazon will be hurt by the tariff war as it is to think that Tesla will be hurt by their CEO lining up with a radical political faction.
Yes, but if I guess the point I'm trying to make for Tesla is if the negativity for Tesla was so ridiculously acute that it was priced into such dramatic losses in the stock, you don't see those kinds of losses in Amazon. You don't see those kinds of losses in Nike or some such thing. And so when you look at it in relative terms, it was easier to look at Tesla and say, well, how much more weakness could possibly be baked in here? This thing is down almost 30% on the year. Whereas some of these other names aren't, and so maybe they have a harder time digesting it because they have more room. But
I mean, I guess that's the point. I mean, like everybody.
But in fairness, you're right. I mean, it's not complicated.
You're shocked that there's tariffs. I think there's been enough discussion of tariffs the last 30 days that if you're a institutional investor in Amazon and Apple and you're not aware of the fact that tariffs might be a factor in the earnings, you probably need to be fired.
I mean, I think it really all comes down to what, and I agree with you. I think it all comes down to what we see in the S&P. And in the part of the decline in the S&P that happens before, let's call it Liberation Day. Because there is that first half of the sell-off from mid-February into March. And that part of the sell-off isn't erased. In fact, we've reset basically to where that ended. Essentially, what we've done on every major index is come back to what the level was before Trump pulled out the foam board and scared everybody half to death. So it seems like we've uncoiled the sort of term premium sovereign risk. Oh my God, we're going to melt down the architecture of the global financial system because we are going to somehow irreparably tarnish the faith and credit of the U.S. government with all of this. That part of it, rightly, is over. Because that argument always sounded too extreme. Because even if the U.S. were to absolutely demolish its credit rating, it would still be better than everybody else, because in a world where the U.S. tarnishes its credit rating, it's Armageddon and nobody survives. Because the global financial system just comes undone. So, okay, we've erased that extreme. But what was that mid-February into March move about? It wasn't about tariffs as such, because we knew about the tariffs in November and the markets didn't run. It was about the growth implications of what all of this put together means. So, yes, earnings this, earnings that. And we should know that, and it's obvious. But is that what we care about, or is it where the economy is going? And if tomorrow we get finally, for the first time this week, an unvarnished way to look at the economy without earnings complicating the speculative back and forth, especially when they're big earnings for where all of the market cap is and they're after hours, then this whole thing might not care about earnings ultimately. It might ultimately see an awful NFP number and go, well, what's the Fed going to do next week? And the whole thing just rests on that into the weekend.
I mean, was there a world where you want a bad NFP number to give the room to force the Fed to cut next week?
Yes, I think there is, and I think this
where the
will
market
be
rallies on a bad number, basically.
This could be, yes, and so I think the really interesting part about this now is there seems to be a kind of, if you're bearish here, as I am, there is a sort of Goldilocks number for NFP. And it's a number that's weaker, but not so weak that the Fed perceives an emergency. Because if the Fed perceives an emergency, and the surveys leading into this don't perceive an emergency either, in fairness.
No.
But ISM did report the third consecutive month of contraction in manufacturing employment. Okay, yes, that's bad. Jobless claims were bad, especially continuing claims surging, bad. Okay, but not an emergency. If the number is not like a shock contraction, like suddenly we lose a couple 100,000 jobs, I mean, the Fed would probably cut next week. Suddenly. But absent that, I think the Fed still slow walks it because the data fog is still significant. And the markets aren't going to like that. If they get, so the expectation for NFP is 130K. If we end up with like 110 or 100, I don't think the market likes it. Because I don't think it thinks that's enough.
You know, like
for the Fed to
lukewarm
jump.
is worst case, where it's not enough room to cut and not like it indicates.
So for equities,
the worst,
it's like
worst of all worlds.
Is it a smile outcome where if it's really bad, it's good for stocks, and if it's really good, it's good for stocks? But if it's a muddling figure,
that's kind of my mental framework here. Yeah.
If it's really bad, then the market melts down, and you get a Fed that steps in, and it's bad for stocks in the short term, but the Fed operating on an emergency basis 3, 6, 12 months out is actually good for equities if history is any guide. It's if the muddling through is the recession scenario where the Fed is hands tied still, can't act in May, maybe they act in June, but there's no guarantee. Stocks are an interesting place to turn here today, though. We trade up to
They really do. It's that Liberation Day high, the high before the gap. They literally they erase the sovereign kerfuffle, and we're back to we're trading the recession.
The sovereign kerfuffle comes after April 2nd, when it looks like the U.S. is going to formally and aggressively extricate itself from the global trading system.
Yes.
The high for that day in the Nasdaq was 20,044.25. Today, the high was 20,125.75. So there's a significant effort here, at least within the stock market, to wind things up and get us back to a more normal place. I would point to the sector performance here today: XTL, telecom, technology, XLK, XRT, retail. These are some of the top performers. XLY is up on the session. Underperformers: biotech, healthcare, staples. That's not bad. There was a growthy sheen to today's price action, even if it wore away from the Buy America mindset that dominated the overnight into the morning. I suppose.
Does that surprise you in the wake of the Meta and the Microsoft earnings that the leading sectors are techie?
Not necessarily. People just can't shake their addiction to American big tech. That's what it tells me.
I mean, it's in fairness, the leader of its kind for a reason.
We are waiting the Apple earnings here. Amazon doesn't look great. Apple is another one of these companies that are tariff sensitive. We've already heard the news that India is having difficulty, or rather Apple's having difficulty reshoring some of their supplies to India. The Chinese government's not allowing it. Dylan, are these the wake-up call earnings reports? Is this the wake-up call non-farm payrolls report? I didn't see much conversation today about the initial jobless claims. That was the highest spike, the biggest jump that we've seen since 2021 in a single week. So maybe the layoffs are starting to come down the pipeline all of a sudden, Dylan.
I mean, I guess what's confusing to me is if the market is a discounting mechanism and they've been given all of the information, whether it's the government jobs cuts since Doge took over, or whether it's the slowdown in growth spending from CEOs because of the tariff wars, I just don't see where the room for surprises are. What's Amazon doing right now? Is it coming back? I mean, I just feel like if I'm the CEO of one of these companies, I'm going to be as negative as I can possibly be.
Back bet.
Like we talked about, and blame it all on tariffs and uncertainty, and then set myself up to surprise everybody to the upside for the rest of the year. But I also feel like that it doesn't surprise me that Amazon has come back from whatever a third or so of its losses in the first 15 minutes, and it won't surprise me. I would be shocked if Apple doesn't come out and say we expect margin to contract and demand to slow.
So
it would be shocking if they don't say that.
Absolutely. No,
how could they not say
they
that?
would? It would be malpractice.
Yeah. And so
here's
how could the
a
stock
data
not already reflect
point.
that? How is the stock not already priced to anticipate that?
You'd think it would be. Here is a data point or two for you. Government spending in the most recent quarter accounted for 17%, percent of GDP, 17.1%. Again, consumption was 68.5%. If we look at the sort of the Doji contribution to this thing, government expenditures shaved a big 0.25 percentage point from overall GDP. It's barely a rounding error. Nobody cares. This is not a real influence on what's going on. It's the consumption thing. And that consumption is growing at the slowest rate in almost 2 years. That's the kind of thing, in my mind. Again, the market doesn't have to care about my perspective, but in my mind, that's what's scary. And the reason that it's scary is because there's nothing you can do. If consumers lose faith and retrench, and that's what all of this seems to be suggesting, again, going back to mid-February, when the PMIs and the consumer confidence surveys turned. And they turned hard, and the market turned with them, and we have undone none of that. We've only undone the sovereign spook.
And I had someone in Milan recently make the case to me that the gap in reality between the logistics and supply chain management companies that are seeing a massive slowdown, and the U.S. stock market is that there's a huge gap between the logistics industry and the stock market, basically.
Yes. Well, and
so that earlier this
to
week,
your point, we started to see it close mid-February to March, because who are these logistics people? That's who's polled for the PMIs. They come out and they go, our job is to think about these things 6 months, 9 months forward, because we need to manage inventories and supply chains and blah, 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 inputs. These are exactly the people. And they ask them, what do you think? And they go, nothing great. And so January, February, March, you start getting these PMI numbers and you go, oh my God, this is terrible. And it's in the service sector, which is worst of all. That shouldn't be impacted by the tariffs directly. That's mostly domestic firms. But the atmospherics is scaring them. And then you look at consumer confidence and it's melting down. This is not the kind of thing that you can paper over with a quick trade deal.
But so why do you think, Ilya? Because I don't disagree with anything you're saying.
Yeah.
What you're saying is factual. It's not actually a subject to agreement. But I don't agree. I don't disagree with your emphasis of the priority of those things. You got numbers? Hang on.
Not yet.
You got Apple? Okay.
Not yet.
But why do you think the stock market was only down 1% this month in the context of all this? The dollar obviously,
because I think they got scared. They had a panic. And then they realized that the panic was unfounded. I think what Liberation Day did for April was just create enormous chaos. And once it was clear that the initial kind of knee-jerk, oh my God, Armageddon sell-off was wrong.
Right, but what I'm saying is we're not the only ones that know the logistics, that the unit shipments are in rapid decline. We're not the only ones that know that this is not good for, here's Apple, here's something.
There they go.
No headlines
Not yet. Keep going.
But no, you're right.
You see what I'm saying? Like, I get the panic.
No, you're
but
absolutely
what I
right.
don't get is, why is the stock market basically unchanged for the month of April when for sure logistics and unit shipments
I think that's a bad thing. I think that it's unchanged is a bad thing, because what it tells us is that all of the actual growthy concern, which happens before Liberation Day, none of it is erased. We haven't undone any of the growth concerns, only the panic.
Okay, so could I share a chart today that I came across, which I think is perhaps the most important one in the world right now?
You're
Speaking
at
of
the
logistics,
steer, good sir. You can do whatever you like.
Logistics.
Hey-o.
Look at that. I didn't even know you had that.
Port of Los Angeles. Earlier this week, we talked about how trade was flagging on the West Coast, which is where most of Asian destination trade arrives from.
Yes, it is.
The week that was referenced was the May 4th to May 10th window that we were starting to see now at the end of April and going into May, a steeper and steeper slide in ships that were expected to arrive in our West Coast ports. This is the Port of Los Angeles, for what it's worth.
Yeah.
The upcoming week has a 35.9% drop off in scheduled vessels and overall planned containers coming in. But you know what doesn't? The following week, which was just posted today. This is remarkable. This is really important to me. We were looking at an acceleration of trade declining. For the May 11th to May 17th week now moving forward, year over year, the number of containers that will be coming into the LA port will actually be in positive territory, up 0.84% year over year. Forget the noisy change week over week stuff. Trade is snapping right back.
Is it though, or is this that inventory rebuild? Because if you look at the PMI numbers out of both the US and China, you still see that on-ramp of catch-up in the in the April and in the March PMI.
Why would you do an inventory buildup after the tariffs are announced, though? If it takes 26 days for ships to get from Shanghai to Los Angeles, then the ships that are set to arrive here would be arriving under the 154% whatever Chinese
tariff. Because for China, the tariffs have never changed. China was an exception to this entire thing. You try to squeeze in everything you can while you can.
But we're already on the other side of that hurdle now. So
yes, but those ships are at sea. They've been at sea.
And they don't pay their tariffs until they dock, though. That's the point.
Right. But I'm saying you are going to get a volume of ships that left weeks ago. They've yet to arrive.
Weeks ago, post-tariff announcement, here's my shtick.
Okay.
Last week, we had Amazon and Walmart executives at the White House. We had reports in the media that they told their suppliers to put containers on the ocean. Get the supplies moving again.
I see where you're going here.
There's a trade deal
That's
coming.
Smart. Before they land at Long Beach?
They won't have to pay the tariffs. That's the only way around it. That's the only way this makes sense, is if there is inside information being circulated through the administration that something is going to be announced because we've seen a complete rebound in trade. That makes no sense. This makes no sense if the tariff regime is in place the way it is. All of these goods will be tariffed at the levels that could put companies out of business, right? These aren't substitution goods. Something's going on.
So what are you suggesting? So you're suggesting that the companies that are actually that the shipping companies know something, that somebody on the China side knows they've got a deal that is starting on May 11th?
I think that American companies that import goods from Asia have been given some piece of information to give them confidence that they are not going to have to pay tariffs on the goods.
Starting May 11th.
That's why there's the slowdown here. We're going to get the rebound back. You're going to get all these exemptions, carve-outs. If you're the Walmart CEO and you're in the Oval Office, or you're an executive at Amazon saying, we can't pay for this stuff, it's not going to let us stay in business, The only way that we can start importing the stuff again is if you can guarantee that the tariffs will be out of place by the time this stuff hits the docks. And Trump says, you have my word. Risky gamble, because if the tariffs aren't removed, all these companies are now going to pay those higher tariff fees, or they're going to get them reimbursed. We've already seen that happen. That happened a few weeks ago.
So if that's the case, I mean, would you not then go into an option expiring, let's say, May 17th? A call option expiring May 17th, well out of the money, full madman style, in Amazon, in Apple, in the sensitive, in Nike, in Walmart.
To Chris's point, if they get reimbursed,
there you go,
rather than the tariffs go away.
Sorry, Elliot, let me just cut you off quickly. We do have Apple earnings that are out here. 165 versus 163 expected. Revenues do beat as well. Stock down like Amazon. Do we see strong guidance moving forward? No. There is an authorization of $100 billion of company stock for buyback. I don't see anything crazy. Lower
You're probably going
guidance.
to wait for guidance. It's probably, if anything,
Yeah, I'm just looking at the number. I mean, the market is kind of operating in the manner where, I mean, you're only getting 5% growth year over year in Apple, heading into earnings.
Right, where it's no longer a growth name, basically.
I mean, that's not a growth stock. Right, 5%. It's not growth.
No.
Apple's increasing its dividend to 26 cents. I don't know if there's anything to write home about. Both of the tariff companies, or rather the companies that would be a little bit more sensitive to tariffs, not quite swimming upstream here after hours. Apple up 208.58. That's from 213. Amazon closed at 190.20, now in at 183.25. Ilya, you were saying, and you were responding to my crazy tinfoil hat conspiracy that someone in the White House has been giving inside information out to people. Who would suggest such a thing?
It's not that crazy. It's not that crazy. I think if there is a trade,
you say it a fifth time.
Yeah, yeah. Well, here's the thing, though. I mean, would we put it past the administration? Of course not.
Nope.
Would we put it past China? Maybe. Nope. But not really. I mean, they want this overall.
Would you trust Xi Jinping to babysit your kids? No. Okay. So, right.
So, you end up with, and there's a Winnie the Pooh joke in there for sure, but we'll leave that be.
This episode is now banned from China.
This episode is now banned from China. If we look at the bottom line here, I guess I'm more so drawn to the more obvious explanation that the reason there is a rebound in these shipments is because there is a massive fleet of barges on full of this catch-up stuff that we see in the first quarter GDP report, that we see in the PMIs, because of course it takes time for those things to sail. So people go and they put through all of that business. It's gonna arrive for a while yet. We'll probably see it continuing to arrive well into the second quarter, like deep into the second quarter. This stuff takes a long time, especially with all of the shipping disruptions. It's a long voyage. So it's going to take a bunch of time for that. And so I'm not naturally drawn to sort of the tinfoil hat perspective here, but also, to give it its due, if there is some sort of an MOU announcement, it'll depend sort of whether there's a cliffhanger baked into it or not. But if it's, to your point, not an undoing of the tariffs, but a reimbursing of the tariffs, how optimistic do we get beyond a 1 day's kind of thing? I mean, as you said, we've already seen them have some tariffs reimbursed. Market didn't even sneeze at it. So, I mean, those are not the kind of band-aids that address anything. So, and the issue is uncertainty, as we've discussed. So yeah, okay, maybe there is a shock announcement of an MOU. If there is, I completely agree. The markets are going to love it for at least a while. But
because then we're all going to skate to the puck of people assuming that if there's a memorandum of understanding for Japan, India, South Korea, pick a country out of the hat, one of the so-called 200 that Trump says he's negotiating with, even though there's only 193, I would posit that the market's going to go, okay, there's an off ramp for every single country now, right? Because you don't want to, if you're Argentina, if you're Chile, if you're Mexico, if you're any number of other countries that's not the EU or China, you understand that when America turns to those negotiations, that's going to eat up all the bandwidth. So you want to get your things done early, otherwise you may have to wait several weeks and months to get something significant pushed forward. So, but don't we all kind of expect that though? Or do you think there are enough people out there, Dylan, who still are hanging out hope that maybe this is all just a farce? If that makes any sense of the phrasing. How do you take the administration at face value, I guess is the question.
I mean, I think that the financial markets don't. I think that if the financial markets believed that all these tariffs were going to be implemented, that stock and bond prices wouldn't be where they are. But I think the question is not how do you take the administration to face value. I mean, that is a question, but I think an additional question, I guess, would be how do you take, knowing that you cannot take the administration at face value, how do you how do you discount that? I guess was really the question, because you can discount it to, oh, there's going to be a full reversal of fortune at one end, or you can discount it to there's going to be a modest, or some, some varying degree of discounting. Just out of curiosity, is there any obvious winners to the tariff, like Nucor Steel? Is Nucor Steel straight up here, or any of these sort of theoretical prime beneficiaries?
Like really. X Steel, United States Steel Corps. That's been pushing up higher here and holding up all year long. I mean, if you're domestic, that's one of the reasons I think why utilities have been holding up all year long. Forget the AI play alongside of this. But if you're a domestic energy producer right now, and we're going to have a lower mix of external inputs, then you have a stranglehold on supply. And you have a more monopolistic position moving forward. Right? And we know the data center demand's moving there. So, I think the winners are the people. If you are a domestic commodity producer, you're fine. If you're a company that produces purely services, you're probably okay, right?
Other than you're probably
you'd think, except their sentiment is
slowing economic activity.
Well, that's the thing. You'd think, right? And this is why the PMIs became so scary, and why next week, starting with the service sector ISM, should be a worry, because it's right out the gate on Monday. You'd think the tariffs are a manufacturing side thing because it's goods and not services. And it's the deterioration of service sector confidence in February around what all of this will do to consumption. That's what gets the markets finally to roll over. In my mind, all of this optimism around we will eventually get a deal, blah, 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 blah. All of this is what November into the new year was all about. The market said, he'll figure it out. Nobody wants to cut off their own nose to spite their face. Not even the president. So this will be okay. It's when it starts to beat down the service sector and actually threaten growth, that's when it becomes a concern. Because goods demand hasn't really been a thing in months. That's not really a big deal.
I mean, I think that's what sets up tomorrow's non-farm payroll to be so fascinating.
Uh-huh.
You and I have opined for a number of months now. Isn't it fascinating that Fed Chair Powell has been coming out right after the jobs report to soothsay market participants? We don't have that luxury tomorrow because we're in the middle of a Fed communication blackout window. So if, depending upon the nature of the report, the market is going to have ample opportunity to run. And we see that cut odds have shut up across the board. There's basically nothing on the board for a cut next week, which isn't surprising. Right. But we still have 4 priced in for this year. Mm-hmm. And Powell has said that they need something to quantify the impact of tariffs thus far. You could look at GDP. Then again, the way that the Fed looks at GDP, they're going to not say that we're in a recession. So there's nothing for them to do on that front yet. The labor market hasn't deteriorated yet. Inflation's still sticky.
It's not an emergency.
There's no fire alarm right now. So, I mean, if we get that muddling through figure, you mentioned the Bloomberg consensus forecast right now is 130K. The replacement level for jobs at a 4.2% unemployment rate is 113,512. So if we're at 130K, the economy's not growing immensely, but it's producing enough jobs to absorb the people coming into the market. Mm-hmm. That would be good. I don't know. I think we got to talk about what we screwed up, though. We're doing a lot of jawboning here today. I screwed up in my gold position. I screwed up in my gold position yesterday. I should not have cut my gold short yesterday because I was waiting for 3,200. I didn't think it was coming, so I got impatient and I flipped to long, and I cost myself a few $100 in the process.
I screwed up my yen position.
Well, I would point to
not yesterday, but in the context of yesterday, it turned out that I screwed it up.
I would point to 3,200 being this new line in the sand now, as we've taken a little bit of a leg lower here. Swing high that you have on April 2nd, which Liberation Day high. Swing low on the 14th. That's what we're holding up against right now in 3,200. And were it so interesting, as gold is challenging the swing from Liberation Day, so is the S&P, so is the NASDAQ right now.
Yep.
You can kind of see the full trade in one lens. If stocks are going to continue to run, gold probably needs to break down a little bit more. Gold below 3,200 might be the best thing in the market for stocks in the short term for a continued run up to like 5,750, 5,800 in ES, maybe even higher. I might need to cut this tomorrow depending on how it reacts to NFP, because if we have a bad NFP report tomorrow and gold does not go up, as you like to say, Elia, forget the data itself. Look at how things react to it.
Yeah, that's exactly it. I mean, I think when we have our debates with Tom and Tony about whether macro matters, we're ultimately talking about different things. And I think you unpicked it very, very neatly on your Let Me Explain piece this week, which, hats off, was excellent. Everybody should go and see it. When people say, oh, well, if I told you the macro number, you wouldn't know what the price action would do. Of course you wouldn't, because the indicator is not the number. That's not what's interesting. What's interesting is what the market makes of the number. That's the indicator. Those of us that are trading from a macro perspective, we ultimately don't care what the number is. We care what the market does with the number to get a lead on what the market is thinking. That's why understanding what the number says is so important, because it helps you to then interpret what the price action sees and what it then might see next, because you've established the lens. So the key thing here isn't what the number is. It's how the market reads the number. And if the market sees the number and it's weak enough, to Dylan's earlier point, and says, oh, goody, the Fed is going to race to the rescue, the market probably loves it. But if it's not weak enough and you go, oh, man, they're not coming to save us. It's weak, but they're not coming to save us. The market probably hates that.
Dylan, yesterday you were telling everyone how you could be tempted into a long oil position. It was tough to get there today, but oil settles positive. We're up by 1.41%. President Trump says that anyone who trades with Iran for their oil will be hit with secondary level sanctions, and they will not be allowed to do business with the United States, which is not such an indirect threat against China, considering that China imports like 90% of Iranian's exports. I don't think the nuclear talks are going well, Dylan, or maybe they are, and is this just a way to nudge things along? Just remind everyone to stop dragging your feet, Dylan.
Who knows? I mean, my whole oil opinion was just on if this was on growth, just on the asymmetry of if the stock market doesn't think the economy is that bad, then and oil is on its recent lows. Doesn't it make sense to take a shot? I'm going to hold on to it for a second. The Iran thing, who the hell knows? I'm not even going to pretend to have a meaningful opinion on that, other than the fact that everybody has an incentive to misrepresent something, which is why having an opinion is a fool's errand. So my opinion which I claim no grandiose accomplishment, was just on my logic of yesterday, which was, I think the risk to oil is a really bad jobs number to Ilya's point. I actually think that oil's trading more on economic, like last year I thought oil traded very much on geopolitics and fear of Iran, Israel, whatever, all this. I think so for the past few months, and certainly for the last month, I believe that downslide for the last month in May is entirely reduced global growth.
Elliot, it's definitely hard to get bulled up on oil for growth reasons in the short term, but I think Dylan has a point, and maybe this becomes one of those factors that actually helps stocks. I mean, we're pointing to oil, to copper as growth indicators on the macro level, right? Mm-hmm. The market's saying right now growth is weaker than it was, a month ago, 2 months ago.
I mean, copper had a 5+% down day.
Yeah, it wasn't pretty. But if oil starts to rally because of geopolitical fears, it can mask the fact that growth is slowing, right? People say, look, if growth was so bad, oil wouldn't be back at $65 a barrel.
It gets interpretive at that point. And this is why watching the price action in response to macro is meaningful, and watching just the macro is pointless. Because it's exactly that interpretive element. You're absolutely right. If the market looks at oil rallying, and if it's rallying because of geopolitical uncertainty or whatever it is, and the market chooses to read that positively, that the market chooses that is important, because it says something about the mindset of the market. And if the market chooses not to, that's meaningful. That's why it's important to both follow what the macro is doing and also how the market reads it, so that you can see, okay, well, their reaction function to X is Y. What does that say about where overall risk sentiment is, and how do I then extrapolate that to sort of the universe of assets? That's why yesterday's stocks rebound was so suspect in my mind. Because it looked like, we're in front of major Mag 7 earnings. The GDP number is bad not because it's negative, but bad for its implications for consumption. And if you look at oil, if you look at copper, if you look at all these things that would be better if the market had indeed shrugged off GDP on its own merits and said there is no growth risk here, they were down and could not get up all day. So, in my mind, that's where the macro is so useful, as a lens on the price action. And the price action is ultimately king. So, how this thing is interpreted could absolutely be oil rallies and the market goes, this is okay. But that's if they choose to read it that way. Or they could choose to read it as a negative. This is why when people say, "Oh, isn't lower oil good for stocks?" Well, it depends. Why is the oil lower? Is it lower and growth is good, or is it lower because growth is bad? It's very different things.
How much does the jobs number get done for us at the end of the day, in terms of information?
I think it's a very important data point, not only because it's one of those key things that has so much speculative fervor built around it, but also because finally there's no weird earnings anticipation that muddies the response.
It's a clean signal on labor market strength, functionality, whatever you want to call it.
It's a clear, big macro number ahead of the cash equity open with no big, oh my God, there's a Mag 7 earnings report around the corner, I better not overcommit type of risk.
I can't help but think like that. Maybe I'm just being naively optimistic, as is my nature as a permeable, as one might say. But if we have a weaker jobs number and then we see trade figures continue to hold up in Los Angeles, in Long Beach, in Oakland, in Seattle, in New York, Newark, Miami, there's a temporary dip. And then people have found substitutes. Yeah, the costs are going to be higher, no doubt. But we found substitutes, so it's not a sudden stop to trade. It was just a hiccup. How much do we care about a single month's non-farm payrolls report? There's part of me that thinks like tomorrow could be bad, and it's another day kind of like yesterday where we're down most of the session, then all of a sudden we're closing unchanged.
Seems to be a theme.
Could be. It certainly could be. I don't think there's any reason to think that the markets might just simply say, you know what, ugly number, big leg down, and then, it's Friday. Who knows what he'll say over the weekend? There's always a tweet. Let me not be extended in a direction. In my mind, it would be a similar thing if the jobs number is actually favorable and there's a rally. The same kind of logic might then erase the rally. So any kind of deviation in a direction, up or down, by the proximity of the weekend and the heightened weekend risk with which we all now live, because we're all a Truth Social update away from some sort of major thing that you then have to think about at the weekly open on Sunday for the futures market. Maybe the market just doesn't want to have conviction on a Friday. And if it's a rally, it fades. And if it's a sell-off, it fades.
I just know for me tomorrow, for so many of these, up until recent months, my whole shtick was like, oh, it's a strong jobs report and the market's going to sell off in that because the Fed can't cut. Not a problem. Buy the dip. That's not my mindset. That's not my mindset tomorrow. I'm not going to blindly, if it's a good number and the market's down, I'm not blindly buying it. It's just, that's not where we are.
Because of the risk of the truth tweet. Is that why? What's the reason you wouldn't?
Oh, yeah. I haven't even considered the insane angle, which is that if it's a good number, Trump's going to come out and say, see, the economy is growing, adding jobs, even as the tariffs went into effect. Oh, people are getting behind the policies. That's why
the open next week is going to be so ugly if that happens. Oh my God.
But like,
it'd be so bad.
The market discipline here is that what Trump is doing is bad. Bad boy, stop doing that, right? And he goes, okay, I'm sorry. And the market goes back up. So if the economy starts producing data that reinforces his views, like, oh, the data held up while I started doing this, what I must have been doing wasn't bad, he will then feel emboldened to go out there again. And, quite frankly, we've heard a lot from Navarro and Lutnick the last few days. a little bit less than Besant, it feels like. So I guess the old adage, as Victor's been talking about, like when the S&P's near 5,000, Besant's going to be the guy you pay attention to. When it's up near 54, 55, you're paying attention to Lutnick and Navarro. Dylan, close us out here for this week, though. Give us something to think about heading into the final day of trading and the weekend. What's the most underrated concern right now that we're not discussing here we've missed out on?
I think it's the other way around. I think that it is easy to get spun up on 1,000 concerns, but the market, whether it's a little bit in oil or the levels on equities, or for that matter, the stabilization anyway in the dollar, I think that the action in the market is still surprised to the upside. Despite, even though personally I have all sorts of skepticism and critiques and on and on and on. But relative to where the stock market is, I think that there's still a prevailing sense of pessimism, a prevailing sense of concern. And I believe you're in more of a wall of worry situation than anything else, primarily because I believe the probability of Trump basically backtracking on everything, but while claiming glorious victory at the same time, is the most likely outcome.
If I may, we could have a little bit of fun here at the end of the show. Yesterday, I put out a tweet saying that I was working on a new algo to help me sort through some of the president's commentary. I'm trying to figure out when it's a Trump stock market versus a Biden stock market. So I'll be sharing this code. You can message me on Twitter for it. It's just a little indicator that depending upon where the market's going, it will apply little labels to your chart. So now we know that this was all the Biden market in early April, but we're actually in the middle of a Trump market right now because the market's up. And right. Dylan, as I learned from making this indicator, did you know that we had a Biden market all the way back in 2008? It was kind of crazy. In fact, if you go back to 2008...
He was the vice president, wasn't he? Oh, or was that Bush?
No, it was still Bush. But a lot of this was a Biden. You see, that's a lot of Biden in here in the 2008 global financial crisis. Anyway, I have my proprietary Biden-Trump stock market indicator, depending upon if it's going up or down, be available for TradingView and Pinecode. Message me for more. And with that, overtime is out of time for this Thursday, May 1st. We'll be back next week, every Monday through Thursday here on Tasty Live, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. Up next, after a brief break, Macro Money with Ilya Spivak.
See you there, everybody.
If you missed the live show, here's our cherry on top weekly recap. Matt, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do? Like, we
have a party.
You have a party?
Have a little party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Avion?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it. All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you
like...
put him in a tracksuit? Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good. The tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah. Like
the
a
disco
card.
ball, I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean...
That's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's
great.
The cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's
good.
got the snowboard, the Chinese takeout, the dumbbell.
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
Was not me. It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and what the? This is not. This is. Gus did the Batistas. I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals. That's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Stock markets definitely liked Microsoft and they definitely liked Meta earnings, but they definitely didn't like Amazon's and they definitely didn't like Apple's. And where are we left with the S&P 500? Well, not very much of anywhere, as macro risk once again appears unvarnished ahead of us. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live, and we're going to take a look at how this very jumpy week for financial markets might end in a loud crescendo with the release of U.S. jobs data. This is a very interesting moment here for the markets. So what we are going to do here is, first and foremost, unpack a little bit, do a little bit of autopsy on the price action over the past 24 hours here, because it is worth looking at exactly what the markets are doing and why they're doing it, and then look ahead to this jobs data and see how that might fit into what could be an explosive end to the week. So let's take a look here at what's going on. This is a chart of the S&P 500 here, the continuous ES contract. It's pointedly not including the overnight action here. If we take a look at what's going on overnight here, we actually do have a little bit of sogginess in the wake of the announcements from Microsoft, or from Amazon rather, and from Apple. Those pieces of guidance were not to the market's liking, and if we look at where we are here on ES, we're down about 0.5%. On NASDAQ, we're down about 0.7%. But the upshot is not dissimilar from what we're looking at here. And what we find is that the markets over the past 48 hours, essentially, have erased what was the post-Liberation Day kerfuffle. So if this part of the market decline from mid to late February and into the beginning to middle of March was about business and consumer confidence surveys starting to show that worries about implementation of fiscal policy, mainly the tariffs, of course, has become a dampener on economic activity, then this right here, this wild gap and the subsequent panic sell-off, was that Liberation Day announcement that basically suggested initially at first blush that the U.S. was determined to wholly take apart the post-war trading order, post-World War II trading order that it itself engineered and built. And that, of course, raised all kinds of existential level concerns. And since then, when we started to walk that back with the pause in the sort of most biting part of the reciprocal tariffs, everything above 10%, it looked like the market unclenched. There was a secondary fear around maybe the president would move to try to extrajudicially fire Jerome Powell, the chairman of the Fed. That unclenched once the president dismissed that he was intending to do that. And we seem to have come out of whatever this kind of hair on fire episode was. And where we've been left is a very interesting spot because we are right back to where we were before Liberation Day and back into a mode where the decline was driven by a view of the business cycle. And the concern was that what this fiscal policy fog will do, and was already doing, was hampering economic activity, and what that would mean is recession. We got a preview of this yesterday. You can see it in this seesaw here. At one point, the S&P was down 2.2%. That's this long wick right here. And you can see where that long wick is. This is now a 15-minute chart of the price action. Again, it doesn't show this sell-off that we're now seeing around the Amazon and Apple earnings. But what you see is here's U.S. GDP data that comes out yesterday. And here's where the Microsoft and Meta earnings come out. And they're obviously greeted with positivity. This GDP number is clearly something that gives the market indigestion. It spikes lower, but then resets to basically unchanged. That's this green bar here. Into the close before these announcements. And of course, investors are rewarded for not wanting to lean in on the downside with this event risk ahead of them, as we argued yesterday, because ultimately the numbers are something that turns out relatively good. And there's a pop. But do we actually go anywhere since then? Not really. We get a little bit of a sign of life around the cash equity open, but that's really it. Ultimately, the markets don't do anything with this other than the one-off response to the event risk. And if now Microsoft and Meta and Amazon and Apple, if all of these names are now out of the way, and now the next thing that we need to think about is macro data and the business cycle in isolation, well then what have we set us up for? Tomorrow's earnings offerings are not these mega cap names. Exxon, Chevron, Cigna, Apollo. These are kind of the big announcements tomorrow. And all of them are doing the AM, so there's no big after close PM risk. So as we consider then what comes next, let's take a look at why the markets got so unnerved by GDP. Because it looks like this is the part of the story that's front and center from here into the end of the week. Well, we saw that GDP contracted, down for the first time in 3 years. The last time was in the first quarter of 2022. That was a decline of 1%. This was a decline that was more modest, 0.3%. But of course, it surprised. The expectation was that we'd get the same magnitude, but on the upside, that we'd get a 0.3% increase. That's not what we ended up with, clearly. And the market didn't like that it was negative, sure. And then, as we saw, we got this bounce. And to be sure, there is a lot to be said. Again, in my opinion, for not wanting to have directional conviction before these big announcements. But you certainly heard a lot made of the argument that this is not really as bad as it is, and flagged the internals of the report. And rightly so. You take a look at those internals, we can see here that a huge detractor to GDP came from a surge in imports. The way GDP is calculated is you get consumption, add investment, add government spending, add net exports. That is exports minus imports. And clearly, this dramatic surge in imports made the net exports component here, green part minus the brown, a huge downward influence. If we consider, by the way, the downward influence from the Doge government spending cuts is barely a sliver, about a quarter of a percentage point of overall GDP. But this imports downdraft, it's a huge influence. And it is offset to some extent by a giant jump in investment. So what is this all about? Well, quite clearly, as the PMIs both from the US and China have been telling us for months, there has been a rapid attempt to front run the tariffs. Because anybody that's been paying attention since November at the absolute latest knows that the Trump administration had tariffs on the menu. People didn't know what kind of tariffs, how they'd get rolled out. But tariffs were a huge part of the president's campaign. So when he won in November, one might surmise that everybody rightly knew that the tariffs were coming. And businesses, reasonably enough, rushed to stock up inventories at the lower rates as quickly as they could. And even though the tariffs, in particular facing China, didn't get much of an unclenching, we nevertheless have had a gradual increase in them. So it has paid for months to buy as much as one can from China because tariffs on it have only gone up. So any purchases made between now and, let's say, the beginning of the year, all of them have faced incrementally higher tariffs the longer you waited. And the PMIs have shown us this dramatic burst in activity to try to stock up and front run still higher import taxes. And you see it here in spades with this dramatic surge in imports, but also this dramatic surge in investment, because what this shows you is the buildup of inventories that this surge is feeding. And what all of this then suggests is, well, look, we have this giant thing from imports, we have a giant thing from investment. None of them look anything like any of the recent past. All of this is noise, and the imports are clearly outweighing everything. This is not a GDP number to worry about. Makes sense that markets shrugged it off. Okay, maybe so. But that's hardly the story in these GDP numbers. Take all of this noise aside and look to consumption. Why consumption? Well, because when we look at the breakdown of GDP going all the way back, all the way to the start of the post-war period here. This is 1950 here. Consumption hovers somewhere between 60 and 80% of GDP. Government spending, Down here. Not even 20%. Never mind exports and imports, which barely register. When you net them out, they come out to a contribution of less than 4.5% of the overall. And what do you see on consumption? On consumption, you see the smallest contribution to overall GDP since back here, the second quarter of 2023. So what we end up with is, for the biggest component of GDP growth, 68.5% of it, we have the weakest contribution in almost 2 years. Looked at in terms of growth rates, we can see exports are meager, but imports absolutely surge in terms of their growth. Inventories surge in terms of their growth. Consumption is the weakest annualized growth rate, again, in almost 2 years. That's the real story in these GDP numbers. And if we are, in fact, going back to a market that's more concerned with growth than it is with some sort of a sovereign kerfuffle, well, then it's important to note that none of the growth concern here has been undone. All we've done is had a panic and then come to our senses. But the GDP numbers are telling us that what inspired this is very much afoot and has now been confirmed in hard data. Which, of course, brings us to the major event risk in front of investors now, with no earnings fog to distract them. And that's the US NFP report. The expectation is that the economy is going to add 130,000 jobs in April. That'll be a little bit of a climb down from the 228,000 that it added in the prior month. The unemployment rate is seen holding unchanged at 4.2%. If we look at the way U.S. economic data has performed relative to forecasts, the data from Citigroup here that we like to follow, it suggests that we are underneath this zero line here, which implies that U.S. data is tending to undershoot, albeit not by a huge margin, but to undershoot relative to expectations. And that, to some extent, sets the stage for a downside surprise, because it implies that economists' models of the economy are giving them forecasts that are tending to be rosier than reality is validating at this moment. And because of that, whatever forecast we have on the board, in this case 130,000 jobs added, might well fall into the pattern. Now, there is a bunch of incidental data, not even including the disappointing jobs report from ADP this week, which is a very inconsistent sort of lead for NFP. We do have a bunch of leading data that would suggest that indeed there is weakness to be seen in the jobs market. First of all, we get the ISM manufacturing survey, and of course this operates as PMIs do, with a center line at 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So what we see is a second consecutive month of contraction. We see the pace of contraction accelerates. So this most recent yellow bar is both lower and longer than the one before it. Moreover, new orders shrinking and employment shrinking for a third month. Now, the pace of contraction for both eased a little bit, but nevertheless, a third consecutive month of contracting employment is hardly good news. And for what it's worth, on the inflation side of things, costs for manufacturers are absolutely skyrocketing and started to move up at a higher rate in this survey. But for us, with NFP in front of us, the key is the employment side of things. And the main takeaway here is that for a third consecutive month, manufacturing employment fell. We likewise see from a separate PMI survey that was finalized today from S&P Global, the worst manufacturing job creation figures in 7 months. So there is, in fact, some indication that April was a bad month for jobs growth. It's not dissimilar from the picture we get in jobless claims figures. And perhaps most worryingly, not only do we get a pop in initial claims, so new applications for unemployment benefits, that's already something of an issue, but it's hardly the main or the scariest. The bigger issue is this jump in continuing claims. In fact, continuing claims here actually end up at the highest level since November of 2021. And that tells a very worrying story, because what that implies is not only are people being laid off, but there has been a level change in how quickly they are able to find new work. And what this surge implies is that they are increasingly struggling to find it. Now, if all of this translates into a weak jobs report, well, then what is the upshot? Well, if stocks are focused primarily on growth from here onward, and we're essentially back into this mode here, then signs of economic weakness mark this as perhaps the end of this rebound and a re-engagement of whatever this trend was, reflecting incoming recession risk. It also probably means that the markets are going to start to hope that next week the Fed is going to do something about this, and perhaps end up in more dovish Fed policy expectations. As it stands here, the markets are pricing in 128 basis points in rate cuts between this year and next, and we can see they're front-loaded here. 86 basis points expected for this year. That's at least 3 rate cuts, with about a 50-50 shot at a fourth. Next year, we're looking at least 1 cut, but with a heavy probability towards 2. 42 basis points out of 50 basis points, that would be 2 cuts baked in. At 128 basis points total, that gives us 5 cuts. So 1 extra than the Fed has been projecting in December and in March. And so the market is already somewhat tilted to a more dovish direction. And the question would be, if the jobs numbers disappoint, how much do they disappoint by, and does that change the Fed's calculus? Because the Fed has been resistant to doing anything quickly, largely around the same kind of uncertainty that businesses and consumers feel vis-a-vis the tariffs. The Fed does not want to make a decision amid so much uncertainty, because its decisions are longer lasting, have significant runway after they are made. It can take between 12 to 18 months for a single Fed policy change to be fully absorbed into the economy. So what we're looking at then is a kind of U-shaped response function to what the number might be. If the number is abysmally bad, if it's shockingly negative or some such thing, one might reason that the Fed would then be seen as likely to perceive an emergency. Could cut rates as soon as next week, if that kind of an emergency were on the table. Likewise, if the markets were to get a positive surprise, well, then perhaps the markets would go, you know what, there really isn't a growth scare here, and there's not much to get all upset about. Yes, the numbers are hot. Yes, that probably means the Fed isn't going to be in a hurry to cut, but that's all fine because the growth scare doesn't have much teeth in it. Let's wait and see. But if the numbers are soggy, and if they're, as we suspect, lower than expected, but not terribly so, well, then you get the worst of all worlds. Because then the Fed is not in a hurry to cut, but the cyclical risk is very much afoot. And the response then may well be a pricing in of more easing later downwind, which could mean, aside from a stock sell-off, that this pullback in the long end of the bond structure, this is the 30-year note, finds itself some support around this inflection point near 115 and begins the next leg higher. So the upshot could well be weaker stocks, lower yields, stronger bonds, and against that backdrop, perhaps a weaker dollar. And that is macro money for today. We are here Monday through Thursday, so this is our last show for the week. We'll be back next week, of course. I am likewise on Futures Power Hour both tomorrow, Fridays, and Mondays, on The Price of Truth with Victor Jones on Tuesdays, as well as with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and opining sporadically at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money, we'll see you next week. Good luck.
With a big earnings week coming up next week and a time of really heightened volatility, what advice would you give to traders in terms of managing and attacking earnings in a time like this one?
I think this one in particular, just given the market volatility, I would be a little bit more conservative with the trades. Maybe instead of going a 10 or 20 point wide iron condor, go to a 5, because the market has been moving huge in both directions. There's tons of opportunities. There's no shortage of trades out there. I think earnings trades should be kind of pushed to the back burner in terms of your risk parameters.
What type of specific criteria do you look for in an earnings trade, and does that change in a time like right now?
Well, the main criteria is, of course, volatility, but you've got high volatility everywhere, so you'll have no shortage of high volatility to trade. I would say maybe going a little bit further out in time this time around, going into the May or the June monthly cycle as opposed to the weekly expirations, just to make it a little bit less volatile from a P&L standpoint for your positions.
Hi, I'm the Bat, man of the people. We've recently switched this lady's normal morning show to Tasty Live. Let's see if she notices. I'm just joking around a bit, but our Tasty brand is expanding. Our free 10 hours of daily programming will now be known as Tasty Live. So while things might look a little different on the screen, we're still bringing you the same engaging, probabilistic content that's not offered anywhere else. You're watching Tasty Live, the Traders Unnetwork.
Coming up on Bad Money with Jim Blamer, Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
How we respond
to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
What is going on, everybody, and welcome back to Risk and Reward with Ian Gus. Another volatile day in the market. I know we got some new positions on from Tuesday, some earnings positions. So we'll recap all of that. We'll go over some of the earnings that had dropped this evening after the bell as well. But before we get into all of that, Gus, my brother, how we doing? We're taking it a little calm today, and on the shirt, I don't know what that means. Is that red?
It's red. Yeah. It's
okay.
This is it's actually a Tiger Woods brand red shirt. My dad passed this on to me sometime. But yeah, I felt like breaking out the tasty red. I actually I'm not going to stand up. I have khakis on. Believe me, this is my Jake from State Farm cosplay. This is what I have going on here. With my red polo and khakis, but no, I'm doing good. As you said, yeah, nice volatile day. This Mag 7 earnings season has brought the volatility that was promised. Up after close today, down after close, up after close yesterday, down after close today a little bit. It's an interesting one. We'll get in and break it all down, obviously, but been making some money, been taking some profits on some of these shares, and feeling good.
Love to hear. Yeah, we'll go over all those things. Love that things are going well on your end over there as well. Again, we'll get into all of it, but I know that meta position that we all talked about on Tuesday played out really well for you after earnings today too. So we'll touch on all of those things. Is the torch being passed though, Gus? I got to ask, is the torch being passed? The Wolves knocked out the Lakers last night in 5. And I just got to ask, one last time, it seems like the torch is being passed. Anthony Edwards is an absolute dog. So I wasn't sure if you were insinuating, is that the torch being passed with the color red today? Like, what does that mean? What's that insinuating?
You think there's some deeper artistic and poetic reason to the red shirt?
I mean, based off of based off of some of the shirts that you do wear sometimes, is there a deeper meaning? There could be, but no, nonetheless though, Ant really got the Lakers in 5, a gentleman's sweep, if you will. But I don't know how I feel about that. I'm all for my Nuggets, and I think we'll do really well. Hopefully, maybe it'll be the Wolves and the Nuggets in the West. But it's always a fun time around the season. We got March Madness, and then we're right into the NBA playoffs. So, is there any type of correlation on these positions? I don't know. Some days it feels like it. Some days not really. But I don't know. If should
we be going long every time the Lakers lose? Did we miss the boat on this?
I have not tracked any statistics. Got to hit up Dr. Data on that one.
Appreciate all the compliments on my shirt and chat here. You guys are making me laugh. It does certainly accentuate the red and the mustache. You got a point there. Looks like Gus is about to sell me something. What I'm about to sell you is State Farm Insurance, brother. Call me anytime. Like a good neighbor, I'm
You're
here.
In good hands.
But you guys got me laughing. I do think the torch is being passed to some degree. Anthony Edwards, certainly a strong contender for the future face of the league. I think he's funny and lively and upbeat, and he's still so young and doing all these things. So, I think that's certainly a very real possibility. I saw a very funny video of him just walking the streets of LA, like talking shit to people last night after the game. And people kept coming up and like trying to say hi to him and Lakers stuff, and he'd be like, "No, don't act nice now. You guys were going crazy." So it all made me laugh.
That is funny. And lastly, before we shift gears here and we get into the market and all of our positions, Jason Tatum had an opportunity to become the face of the league. I don't know how it got passed up by Anthony Edwards. Jason Tatum went really deep into the playoffs too for how young he is. I don't know what it is. I don't know if it's his personality. Yeah, that's what I'm saying. He's got a championship. I don't know if it's his personality. I don't know if it's just Anthony Edwards comes off like he has more of that like dog in him, that more killer instinct. I don't know what it is, but Jason Tatum definitely had a shot at being the face of the league, but it looks like Ant Edwards might be on the come up. Batman, Robin Hood, whatever, Ant-Man in 5. That's what it's going to be from here on out. But we'll jump into this platform at the same time.
Yeah, go for it. Yeah. Jason Tatum, certainly interesting situation there. I personally, I think Tatum's a little corny. I think that this is a common criticism, but he's just kind of a cornball sometimes. And also, he really at the beginning of his career, what kind of put me off was like he really tried to lean into the whole Kobe thing and posting screenshots of the text that he sent to Kobe's number after he passed away
after the wins.
It's just
the recreation of some of those iconic photos.
He's trying too hard. I think that's really the thing, and I think that's why Ant resonates more, is because like this is a weird way to put it, but Ant is kind of just naturally cool, and when Tatum feels like he's trying really hard to be cool. I think that's kind of the difference to me.
Yeah, I feel you. Lone got that puppy in him. I hear you, Lone. I hear you. But we'll see what happens. It's always an exciting time around these times, but it's always an exciting time for us because we're in such a headline-driven market right now. The Mag 7 earnings, like Gus just said, is upon us. So we've been getting a lot of volatility. The volatility has not been disappointing so far. 10 minutes before market close, we got an insane sell-off, and then we ended up selling off a little bit more. We got Apple earnings that came out today as well, so we can go ahead and check on Apple. But a pretty crazy rally over the last couple of days. I feel like sometimes we really underestimate some of these moves to the upside because whenever we get that same move to the downside, it feels so aggressive. Everyone's talking about the market. There's a little bit more fear, but we can just easily put in a few 100-point days to the upside. Nobody bats an eye, but Apple did have earnings, so let's take a quick peek at what was going on over here. Excuse me.
Yeah, things.
Wasn't Anthony Edwards and Top Gun?
They did beat expectations, but we're trending down.
Yeah.
Services division came up a little light, what are we looking at? Yeah, 11.65% growth. 11.65% growth in the service division, below analyst expectations. Damn, this is a really in-depth breakdown I'm looking at here. iPad revenue here. Let's run through everything real quick. All right, EPS beat estimates by 2 cents. Revenue beat by about $1 billion. iPhone revenue beat by $1 billion on the nose. Mac revenue, 0.2 billion, beat. iPad revenue also beat 6.4 compared to 6.2. Wearable accessories revenue, I have one right here, 7.52 billion versus 7.95 billion. So that's a big miss there. Services revenue came in just slight of estimates, 26.65 on 26.7, and their gross margin was exactly on the estimate of 47.1%.
Okay, it's looking like it's having a negative reaction, and that is just the story of earnings right there. I mean, you can beat earnings, you can have a great EPS, your revenue can be looking great, and you can still get a downsized move in something like Apple. So that is the story of earnings. Nonetheless, I know yesterday Gus did put a position on in the Meta earnings, and Meta had a pretty big day to the upside yesterday. One thing I was really surprised about, I don't know about you, Gus. We saw the big move coming. We knew we were probably going to have a gap up into the next day because it put in that directional move like right after market close. But I mean, it held all of those gains overnight into the next market open. And I mean, we even kept rallying a little bit more to the upside. So that did catch me off guard a little bit. I was able to take advantage of that Microsoft position. I know you were able to take advantage of that Meta position. Did you end up getting out of that at market open, or did you hold on to that one a little bit longer?
I'm going to hold on to it. It's only 8 DTE next Friday. And I just needed above 535 to close on max profit for that. So we'd be talking about like a 10% dip before next Friday, which in this market environment is not entirely out of the question, but I feel good enough to hang on to it, and hopefully we can close in on the max amount.
Yeah, I know Dr. Jim was doing some things in Apple. I know he was getting short in Apple too, so I know he was able to take advantage of that downsized move. You weren't doing anything else in other underlyings, or did you get involved with some other earnings this evening too, or anything end of week?
Nothing end of week this week. I have Meta going off end of week next week, and that's it there. But I do have two 15 DTEs here. I have an IWM and then the Victoria's Secret Risk of the Week, which was the one previous to this past Tuesday, which is going swimmingly, actually. It's appreciated nicely. I bought This vertical just needed to close above 15 on May 16th at about $16. We're over 19 already. It's had quite a nice little run up over the past 3 days. So yeah, feeling very comfortable there. But those are my only things inside 21. And then I also opened a small position on yin today, which is the long, it's 3x long China ETF. So that'll be 21 DTE tomorrow, but needed over 27 in 22 days. And that is based on some data that the wonderful Christopher Vecchio provided us with earlier today, that there has been a sharp uptick all of a sudden in shipments from China to the port of LA and booked shipments, which means that there might be some information leaking out there that a trade deal could be reached in the next 2 weeks. So I have a small position there, but a fun little lotto, because if that news breaks, I think yen will be flying.
I know lastly I wanted to just ask you about was VIX. You're not doing anything in VIX, right? It's looking like we could be stirring the pot for a potential expansion in VIX sometime soon.
Yeah, I was actually thinking the same thing. I was just eyeing this today. I joked earlier this week, if VIX gets to 20, you kind of should just blindly go long at this point in this environment right now. So we're getting close to that point, but yeah, it does definitely look primed for something to happen. I don't have anything on just yet. Not afraid to trade it. I'll maybe analyze that tomorrow and maybe get something on. But yeah, not entirely sure. I don't know though. I mean, am I sure that there's going to be some kind of volatility event that happens in the next 60 days? Like I am. So it might be wise to just kind of always have some shorter dated leaps, I suppose, going on with this one.
Yeah, no, I hear you completely. VIX down over the last few days. Again, market selling off into the close with an extended potential gap down into tomorrow because of some of those earnings that might be pulling the market down. So we'll see what we get on that end. As for my portfolio, at least we got that SPY position on, getting hammered in that one. We still have until June 20th. So I mean, we got 2 months. We have a little bit of time in here. I'm sitting in a very difficult spot right now. I mean, at this point, I'm already at the max risk on this trade. So we're gonna hold it for the next month and a half. Silver sitting around break even on that one. That one's been really quiet. I've been in silver for a couple weeks now. We're up a few bucks on it. Nothing too crazy. Silver's been a slow mover for me. I have some shorter dated QQQ call spreads that expire by tomorrow. Unless we get some big sell off. A big gap down tonight, big sell off tomorrow. Some of those will start to come in, but if not, we won't see that happen. And then I have another call spread that expires May 16th. That one's sitting in the money right now. We've got a couple weeks. Gonna have to be patient with those ones with QQQ and SPY. And then Microsoft. That one played out really well. I know Gus and I went 1 for 1 for Meta and Microsoft. Last minute yesterday, I was with Dr. Jim. He nudged me into getting long on Meta. I was letting you know as well, guys. Like he nudged me to get long on Meta. I was like, you know what? We'll go ahead and get long on Meta. I'm not a big earnings guy. I'm really not. But over the last few months, especially into this new year, Dr. Jim has definitely convinced me a little bit. And I'd have to say we're doing well so far this year in earnings. So I might have changed my opinion on trading some of the earnings just because we built a little bit of a buffer. So we won't be as gun shy as we've been. But yeah, that's Meta. That's Microsoft. Pretty much the same story in those two underlyings. I was able to take off the gold trade. This was one where I was kind of kicking myself. Not that we could have caught the top, but I know a lot of TC traders were already looking to sell in some premium in the calls on gold, just a few days back whenever we were trading around 3,500 ounces on gold. When we got a little bit of a retracement bounce, I ended up getting short. We got a gap down, sold off a little bit more. I was happy about that, even though I felt like I was late to the move. So a little bit on gold there, and then a little bit of the micros for today, but nothing too crazy. Other than that, I was just eyeing Apple's earnings for the most part today, Gus. I wasn't able to take part of it, but then again, like we know here in chat, Dr. Jim was talking about Apple earnings to the downside, and that's definitely going to pay by tomorrow morning. So we'll take a look at some other earnings that we have dropping this evening, and then some more to come here soon. But let's take a look at Apple and Amazon. But nothing too crazy after we last spoke, Gus.
Yeah, no, nothing too crazy on my end either. Took some profits on shares this morning, as I mentioned. Exited some Microsoft shares that I had opened at 365 and some Broadcom shares that I opened at 160. So handsome profit on both of those, just blindly buying shares at the bottom is paying its dividends now. And yeah, that's pretty much it outside of the options positions that I already mentioned. Just taking some capital back and getting ready to redeploy it however I see fit. This earnings thing also is interesting. I feel like I've actually been more successful trading earnings right now in this time of uncertainty because it's a little easier to quantify what's going to happen, because it's basically just how hard are tariffs going to hit this company? How poor is this forward guidance about to be? And I think that that's really kind of made things easier to quantify, having this tariff issue looming this entire time.
Oh, that's a really good point. I mean, even Amazon's getting hit pretty hard right now. I was really curious about Apple. Was that something going through your mind a little bit too? I know there was a lot of conversations around Apple, tariffs, iPhones. I mean, iPhone is probably one of the most common cellular devices we use in the US that's produced in China. A lot of conversations on how much is the iPhone going to cost if we stop producing it from China too. So a lot of those conversations are going through my head in terms of tariffs and how these companies are going to be affected. But Apple's getting hit right now. Apple's getting slammed. So
yeah, in the middle of you talking just now, actually, I had a red breaking headline pop up on CNBC that Apple expects $900 million in tariff costs this quarter. Very difficult, end quote, to predict beyond June. That's that uncertainty certainly driving part of this. To be honest, while I kind of gamed out these earnings and did think that both would probably issue poor forward guidance and probably move down a little bit in the midst of all this tariff uncertainty, with how big of a winner Meta has been, I decided not to push my luck and just not even try to involve myself in either of these two, because also you have a lot of conflicting things. Amazon also has web services, and is Apple set up to eat this and all that? Clearly, the market does not think so. But yeah, I laid off of these today. Would have been a little bearish on Apple and undecided on Amazon had I decided to actually take any trades on these. But yeah, for $900 million in a quarter, that's pretty steep.
No, that's massive. I mean, that's just a quarter. And I mean, just hearing that from what you're saying, maybe that's as to why Apple's selling off even more now to its lows very aggressively too. But I'm going to have a little bit of a bearish sentiment on a lot of these underlyings, especially just within that window with all the tariffs, all that uncertainty. And I think kind of what you just said, that headline just speaks uncertainty to me too. So I'm not going to be expecting much out of Apple and some of these underlyings, especially into this next quarter. But I know we still need more time to go by for us to really see how the overall market and economy is going to really digest all these tariffs. I don't know. I just feel like it's a lot of uncertainty. I mean, tariffs, how is this going to react? It's like a slow prod. Like we have to wait to see the impact. It's a lot of sitting. It's a lot of patiently enduring the uncertainty. So that's where I'm at on that, Gus.
Yeah, you're absolutely right. And I mean, I think, and I've said this before, what this 90-day date is still looming. The market is like beginning to act as though we are through this tariff uncertainty, and we most certainly are not. These trade deals are getting fired off. The White House says they're negotiating with 100 and some odd countries all at the same time. Obviously some countries are going to be more influential than others in terms of how it moves our market. But there is a date on this tariff pause, and there has been no news insinuating that date is going to be extended or anything like that. So as the market begins to react as though times are normal again, you kind of have to do everything with just a little bit of scrutiny, because that is still looming, and anything that you're doing longer than, I guess, about 60 days now. I'm not sure exactly how long ago Liberation Day and all that was. But yeah, if you're doing anything longer than about 60 days right now, that's something that you need to consider, is that a decision still has yet to be made on that front.
Yeah, no, most definitely could change the whole economic climate of things. So risk reward portfolio, Gus, we have any names on the top of our list that we might want to start adding into here? I know we're going to touch up on this, brush through it a little bit, but we're going to get more names in the risk reward watch list. Again, by next week, we're going to be putting up more on for risk of the week on Tuesday. So I want to make sure we're prepared for that. I'm going to have to go with Qualcomm, though. I know Qualcomm isn't on the list. Qualcomm, very liquid underlying. IV's pretty solid. Not that I'm in love with the company, but it's one of those very tradable products. You're going to have good premiums. You're going to have good liquidity. So I'm afraid to start off with Qualcomm, guys. It's not like I'm a big fan of this company, but as a trader, I'm a fan. I'm gonna have to put it in the basket.
Yeah, I agree. Qualcomm is very nice. It's always super liquid, tight spreads. It is very trader friendly. I'll float kind of to the same end and also ending in Broadcom.
Okay.
AVGO Broadcom. I feel like this is
that's after that trade that you have. You have a little bull bias.
It's true. I do have a little bit of bull bias, but also, I feel that this is kind of a slept on company in general. I mean, Broadcom is the 9th largest company in the world by market cap. I mean, they're very close to 1 trillion. They're one tick below Berkshire Hathaway, and they never get talked about in that same group, despite being that gigantic. So, it's a little bit of a sleeper. It's kind of something we shoot shoot for here to an end. So I'll float Broadcom. If you guys have tickers to add to the risk and reward watch list, please throw them in chat. We're happy to. We really have no direction with this thing whatsoever. we're just
we do risk.
Stuff.
That's the direction.
Yes, risk. Yeah. I suppose that is the direction.
All right, so guys, we got Qualcomm in there. We got AVGO, very liquid products. Let's go ahead and go into our watch. Do we have Apple in here? I don't even think we have Apple. We're gonna have to throw Apple in there. It's only right. It's only right. AAPL. Did I have that in there already? No.
No, it got longer when you popped it in.
Oh, okay. There we go. Did we?
Yeah, I'm trying to think what else might be a valuable addition here.
We can also go to our list. We can see what's kind of been moving for the day.
Do we got Lyft? We have Lyft already?
I think we do have Lyft. Again, we do. Lyft ended up playing out really well. I know chat. I know where you guys lean. We did the poll last time. I think 80% of the chat was leaning towards Uber over Lyft. But as a trader, if it's moving in my direction, you know what? I'm game for it. So that's why I ended up going to Lyft on that one. But do we have Lyft in here? We do. We don't have Uber, I don't think.
Yeah, no Uber. Yeah, something I've just recently, it's come to my attention that Lyft might be a very strong candidate for a buyout, which is something that I had never really considered before.
Really?
But there are options there, even if just for the infrastructure that Lyft provides. Like I could see a Google who owns Waymo sliding in to acquire Lyft just to get access to their app and their user base. The Lyft experience wouldn't change at all, but all of a sudden you'd have Waymos popping up on there in eligible cities as well.
Yeah.
Something like that. I don't think that Uber could buy them. I think that would get tied up in red tape and antitrust stuff. But outside of that, I do think that there's a few suitors. I mean, even maybe Tesla. Like there are suitors for a Lyft buyout. So it's something that I would kind of like to keep my eye on.
Yeah, no, 100%. I'm always really paying closely attention to that space, as you know. Really curious with like Waymo, Tesla, Uber, Lyft. I'm more so curious just how they're going to play their cards. I'm not even more like on the investor side, like which one I want more. I'm more so just like, this is going to be interesting to see how these companies play their cards with self-driving, players like Tesla, Lyft, Uber, Waymo, all those guys. So we'll see how some things play out.
I'm seeing Johnson & Johnson in chat. We got some pharma exposure in here already, but I think, do we have any pharma exposure?
We have Pfizer in. Oh, I thought we had Pfizer.
I see Pfizer. Just Pfizer.
Oh, yeah, we do.
We could throw J&J on there. Why the heck not, man? They got good. I don't know.
What was their? Yeah, there we go.
I'm always confusing Johnson & Johnson with SC Johnson, like. They make
family company.
Yeah, exactly.
SC Johnson.
Insane branding. Insane sleeper. Insane sleeper branding.
Exactly.
Yes.
Exactly.
Yeah. But yeah, they make baby products and whatnot. So I'm always confused.
Yeah, we got some Johnson & Johnson, solid risk reward for long term. Let's look at Johnson & Johnson. Volume is pretty decent, 7 million traded. IV rank sitting at 28 and a half right now. We got dividends May 27th. Going to look in that June 20th cycle. Not the most insane volatility. Probably might lean something more undefined risk in something like Johnson & Johnson because you're not going to pick up too much premium, but you can justify something in the undefined risk category over there.
Can you name any of the Johnsons? There's actually 3. That founded the company.
Are these family members?
Yeah, 3 brothers.
They all 3. Okay. We're gonna go John.
No, that's a sharp
John?
guess though. You want to throw out another generic
I thought
name?
It was gonna be one of those. I thought it was gonna be one of those. Yeah, we're gonna go with. Is it a generic name like
all
Bill,
3.
Tim?
All 3.
Okay. Steven.
No, not quite there.
Let's get a letter. Let me get a letter.
Give me the most generic male name that you can think of.
Like, I just hate to say, but just like Bob right off the top of the
Bob.
dome.
No, it's James, Edward, and Robert are the 3. Maybe there's a Bob. Robert is Bob. Okay. You know what? I'll throw you Bob.
Yeah, Rob. I said Rob. No, I'm just kidding.
Yeah, Robert's go by Bob.
Ben and Bob. Cornelius. Yeah, right. Earl Johnson. Yeah, right. Fun fact: growing up, one of my favorite basketball players was J.R. Smith. J.R. Smith, he was on the Nuggets. I was growing up while he was on the Nuggets. One of my favorite basketball players. If anybody knows ball like that, some game, J.R. Smith was that guy. When he got a hot hand, he really got a hot hand back in the day. That was J.R. Smith. Favorite basketball player. And then also, his name was Earl. So I was like, yo, Earl, tomato. It might be in the blood.
Woody Johnson. Oh, man. You guys, Big Johnson, you guys are inappropriate.
All right, we got time for one more to get in this list because we need to build this as time goes on. Real quick, Tesla's been a little quiet. I know Tesla earnings was not too long ago. So we got some pharmaceutical in there. We got Pfizer. We have Johnson & Johnson.
J.R. Smith, shout out to Newark, New Jersey. Noted collegiate golfer J.R. Smith, I might add. That was
Yo, Gus knows ball, bro. Gus knows ball. Bro, you pick out the littlest of details that don't have anything to do with the exact thing we were talking about. I'm like, I know you know.
Southern University, baby. I think.
Yes, sir. We're gonna go with we got Waste Management, we got Qualcomm, Eli Lilly. What was LMT again? Lockheed Martin. We're gonna go with. I know we don't have SPY in here, but we have QQQ. SPY would be a little boring. We need something a little bit more than that.
LMT was part of our war index. I remember doing that.
Okay.
Yeah. What else? What else we got going on? Do we have some nuclear? We do have some nuclear. I see SMR in there.
Do we have PLTR in there? Hey, I know you're a PLTR hater, Gus. I know. Hear me out, though.
I'm one of the biggest PLTR haters. We can throw it in there. Like we said, risk is the whole idea here.
Absolutely. This thing is going on a massive run after its initial run.
Yes, the W pattern. The classic W pattern. It actually is just a nice double bottom we're seeing there, but that's funny. It's pretty perfect.
It's whatever you want it to be. It's two snow cones.
PLTR, that describes the entire damn company, Palantir. It's whatever you want it to be. Nobody knows. What are they worth? Who cares? Let's buy it.
We move off of vibes. No, the market really does move off of vibes.
It does.
For being real.
Oh, yeah,
it's a vibe
for sure.
market.
It is.
Yeah.
It is.
AKA sentiment.
It is just sentiment, but that's a good way to classify it. I've actually thrown that around in the office recently. Yeah, it's all just vibes. So are the vibes bad? Let's panic and sell everything.
Yeah, are the vibes bad? We're in a recession. Are the vibes good? We're not. Like that is the main metric point. But we are coming to a close here. Gus, anything to add before we hop on out of here, brother?
I don't have anything else. I suppose we're one more negative GDP quarter away from the definition of a recession. So that's something interesting to monitor.
Unless the goalpost is moved, but I don't know.
It's true.
We'll see.
It's true.
Yeah. Anyways, that's going to wrap it up for today's segment. Thanks to everybody that was taking the time to hang out with us, chop it up a little bit. We'll see how some of these earnings play out, especially into the rest of this week. We will be back next Tuesday, putting on a new risk, and we'll be adjusting all those positions from there. But that's when we'll give an update. Thanks for taking the time. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
If you missed the live show, here's our cherry on top weekly recap. Bat, how about you? What did you get up to last night? Any shenanigans?
Watched a little hockey. Watched my pool get filled up with water.
That must be exciting. When it goes to each level, what do you do? Like,
we have a party.
You have a party?
Have a little party.
Do you fill it with cold, crisp bottles of Saratoga Springs?
No, you use Fiji water, don't you?
Evian?
No. Hose water, Sosnoff, so I'm going to tell the kids not to drink it.
All right. Put up this picture. Can you please put the picture of me as an action figure? It looks
Did you
like
put him in a tracksuit. Is that tracksuit?
Tracksuit works. I don't really have tracksuits, but I do wear a lot of leisure stuff on the weekends, so I'll be good. The tricolor cookie is absolutely spot on. The coffee cup is spot on. The trading card is spot on.
It's a pink sheet, yeah. Like a
disco ball, I can handle it. What I have a problem with is, how did Dylan Radigan get in my jeans? It looks like a collab between Tony and Dylan Radigan. It looks like Tom. Like, that's Tom. I mean,
that's because I did this one.
Right, that's Tom as a gnome. You're perfect. You did you, right?
Of course I did me.
Yeah, of course. I could have told you that.
So I have a can of Diet Coke. Liz and Jenny.
Can't say anything bad about that.
They have the zebra and the jade lizard. Jenny, of course, has a glass of wine. I did Jenny's. And her boat, her sailboat.
Yeah. You were very kind.
Also, I'm no dummy. I typed in the prompt, make her look younger and slimmer. I did Dr. Jones. So he has the dumbbell, a cold plunge pool, a calculator, and he's Florida man.
Jamal, perfect. The basketball, the football, the video games.
And the gears, because he's an engineer. Yeah, I did Julia's.
Yeah, perfect. She looks
She's
great.
the cat. So the thing, people think it's a chandelier. It's a quantum computer.
Mikey Butler's perfect.
Yeah,
Very
he's got the
good.
snowboard, the Chinese takeout, the dumbbell.
Yeah,
golf
perfect.
ball.
Mikey must have done Mikey. Let's go next one. Okay, who did my son dirty?
It was not me. It was not me. The same person that did yours did your son's.
Okay, they don't like Batista, so that's what I figured from the very beginning. Katie McGurgle's beautiful, perfect.
Katie is stunning. She is an icon. She has a Harry Potter wand, cowboy boots. If you haven't seen Katie try to teach Tom how to line dance, it's on our social. And then
Okay, now I know who did the Batistas. It's Gus. Okay, Gus did the Batistas. All of a sudden, he's all buff and What the? This is not. This is. Gus did the Batistas, I'm 100% sure. And Gus, I will be coming for you.
I should have been. This should have been me.
Yeah, he looks like The Rock. Yeah.
Mommy and Daddy are fighting, okay? And you guys are not getting along. I am not going to come in here and try to mend this broken bridge.
He's just having John withdrawals, that's all.
With you, it's hard.
She always has her A game. Wait, go ahead. I'll take the pressure. I'll take the heat. What do? I love this.
What's the line you always use? It's hard to fly like a turkey.
Fly like an eagle. It's hard to soar like an eagle when you're working with turkeys. Turkeys don't fly. We're like, I cannot with him. I just sometimes.
Wild turkeys
Did you just
fly.
call me a turkey? What's that? Wild turkeys do not fly.
Yeah, Steph, I think you and me.
Did you call
I
me
think
a
this was
turkey?
more.
I didn't call you. I'm calling
No, I think it
Turkeys
was
don't
me.
fly. They can get airborne for a second. I
called him a wild turkey.
You can get airborne. Well, you couldn't get airborne.
Turkeys
for anything.
fly. Turkeys fly. I've seen turkeys fly.
Turkeys do not fly.
A wild turkey doesn't fly, you're telling me?
You've seen a turkey fly.
When Tom's out on those survival missions that he frequently goes out on with just a knife, and he hunts.
When I'm
yeah,
taking
he
a
sees
hike
wild
in the
turkey.
woods, I've seen wild turkeys flying all over the place.
get the full scoop by checking out the archives at tastylive.com.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from 1 to 30, and I haven't had an unprofitable quarter since.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And Tasty Live does it again. They teach it in a way that is fun. It's easy to understand. And you're learning from people that have done it for 40 years.
All right, Julia. All right, Nick. All right, Mike. All right, Jamal. All right, Glenn. What was the last trade that you made?
Oh, it was bad.
Oh, man.
I bought SQQQ. It's like a 3x inverse ETF. I feel like I get shit on for the inverse ETF trades. They're not, I wouldn't say they're always good trades, but I'm like, I kind of don't want to get in the options right now, but I want some leverage.
I got long some Apple, and it just happened to work out in the last about 5 minutes here. So I sold a wide put spread out in May, and it basically lost half of its value in the last 5 minutes.
My last trade was closing out a meta calendar spread that was worthless prior to the 500-point rip in the E-minis.
Last trade I placed was I closed out a put spread in SPY. It went well. I regretted to say it was a long put spread that I put on yesterday into the big move, and I closed it out since we retreated in price today, and it's worked out well.
Short gold options.
How'd it pan out for you?
We're still alive, but we're not looking good.
If you don't come from money, working with money sounds like the quickest place to get to money. So this idea of allowing money to work for you was fascinating with me. And then the more I get into it, the more I realized it was just a big competition. You know, it's like a big poker game with really smart people who know game theory, and nobody knows tomorrow, but they're all just taking calculated risk. And when I figured out that's what it was, like it wasn't this weird world of like somebody knows exactly what's gonna happen and this guy's got great stock picks, it's all just calculated risk, that gave me inspiration that like, well, I can do that. So I think spending a lot of time when I was young to learn different option strategies and to learn stocks, options, futures, Forex, crypto, to be able to go where the opportunity is, I think is the most important. Getting hooked in a strategy, it's cool, I respect it, but I tend to think I like to go wherever the opportunity is.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Oh, yeah, it is Thursday, May 1st, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast. A little podcast called The Price of Truth, a little show where we like to explore the incentives that govern our world. And man, they make us earn our money over the last, 100 plus days or so. More on that in just a bit. But before we get there, we should say what's up to the people. Shout out to everybody watching on tastylive.com. Shout out to all of you watching within the platform inside of Tasty Trade desktop and mobile applications. But if you want to be part of this little guy, bing, did I get it? This one. This chat box in front. There we go. On your screen, there's only one place you can do it, and that is on Tasty Live's YouTube channel. I forgot which side to point to. And that's on Tasty Live's YouTube channel. So head on over to YouTube. Go to find the channel, subscribe to the channel, and go ahead and start bashing your face, your wrist, your fingers into the keyboard, anything you want to, as long as you're typing in random ass characters and spoofing the Google algorithm into putting us in front of as many people as possible. Speaking of the people, we should say what's up to the people. Shout out to everybody in the chat already. I see you. I appreciate you. Shout out to who do we got in here? Mark, Catan, great to see you. Mark, you as well. Brandon, Osborne, Ben, Absolute Beginner, Victoria, Cato, Emmett, and Brian. What's up? So many more. I know you're in there. I know all of you are in there. Shout out to all of you. Off. Victor, the Trump video was for a laugh, not a political statement. I don't get it. Shout out to everybody. All right, let's talk price, my babies. Pretty decent week for the good guys, huh? Not bad so far. S&P 500 up 2/3 of 1% here. Talking cash right now. The NASDAQ was up a little bit more than 1%. Wild day in price, honestly. The Dow Jones was up about 1/5 of 1%, and the Russell was up 2/3 of 1%. Shout out to the chat. Hope everyone was green today. I agree. Victor, remember, last forever. It's Eddie. What's up, Eddie? Catan, sleepy. I don't know what you guys are talking about. A little green on your screen today, at least into the close. After the close, they're a little bit weaker here after 5 p.m. S&P backed off about 0.25%. The NASDAQ backed off about 2/5 of 1%. The Dow Jones kind of flat, and the Russell kind of flat in the extended. What a day. What a day. It was a pretty fun day. I would argue, for those that are trading sort of in a two-sided manner. We were up to about 56.80, and they gave 80 handles back before rallying about 60 of those handles, and then just dumping in the extended hours, or into the, I should say, not into extended hours, into the close. Let me catch my breath. Let's get going. How do you lose your breath doing the intro to a stream? I probably need to get more active. Bonds at 116, which was a welcome development for the good guys. I told you guys I was fading bonds at 117. I thought I was probably a little bit too early. But I don't know. I like to live dangerously sometimes, I suppose. And I think I'm a little early, but who knows? I'm managing my size, so it's working out. We're down a point. So I guess we turned something into nothing on a one-day basis. But again, it's just the risk to reward in bonds right now to do anything. At 117 is kind of this line that we've been at for a very long time. To be at 116 and take a position, it's a bit risky. 110, they're probably interesting to buy. Let's say 110 to 112. And maybe 120 to 122, they start to be interesting to probably sell. And anything in between is probably this no man's land, sort of this idle chop zone, but I just cannot help myself. Just take a quick look at the curve here. I don't know, to end the week, we got a whole bunch of nothing. You know what I mean? We started at 65 basis points. We got that original flattener that we thought what would happen. The administration changed their rhetoric a week ago. We thought that could create a flattening of the curve. My thought was maybe we'd see 20 basis points. Maybe we'd come into 45 basis point difference between the 2s and the 10s. That didn't really happen. We got 10 points of flattening, so we came in from like 65 basis points to 55, and we have not really done much with that. We've stayed there for most of the week. Even though you got a little bit of movement, bonds one way or the other, to be honest, just a whole bunch of noise right now. And this is kind of what I love. I absolutely love these moments in time. I'm going to explain what I think this moment in time is. I think sometimes in a trending market, there are times when you can tell yourself a narrative, and that narrative sounds good, and because the narrative is not refuted by price, because you have a highly trending or auto-correlated marketplace, you can keep telling yourself that narrative, and you can even build on top of that narrative. I talked a little bit about this with Tom this morning, that one of my gold pooped, says Mark Aguilar. It did. I'll get there in a sec. You can tell yourself this narrative, and you never get checked by the market. The market never goes in a trending market. They never go, no, you're way off. You're wrong. Whatever you're saying, you're locked in this world of narrative fallacy. You're building on top of this narrative fallacy, but it's all bullshit. And you don't get called on that bullshit in a highly trending or auto-correlated marketplace when the distribution is a little bit tighter. And I think the last 3 weeks, I just keep thinking about Daniel Kahneman's book and the cognitive biases that sort of govern, or that can govern, our decision making. I talked a little bit about confirmation bias with Tom this morning, but I think there's so many that I think it benefits people, and I'm not trying to be preachy at all, but I think it does. I try to remind myself, I'm not trying to preach to anybody out there, but I try to remind myself about narrative fallacy. Be careful, Victor. Even the stories that sound good could be total bullshit. Are you compelled to this idea because it has a compelling sort of narrative? Is it a compelling story? Or can you back this up with data in some way? In confirmation bias, Victor, are you just going out there and you're seeking information that's already validating your existing opinion? Are you ignoring all the evidence to the contrary because you want something to be true? You already believe something to be true. I see this all the time in the comment section. Herd mentality, or the bandwagon effect. Do you believe something is true because there's this appearance that that's what everyone else thinks, or that's what a majority of people are thinking? You know, it's kind of like when you watch the news. If you ever watch a panel, you always have an odd number of people on the panel. Let's say they have 5 people. Well, if they have 5 people and 3 or 4 of them are arguing on one side and they only have one person on the other side, who do you think you're likely to believe is true? What side of that argument do you think you're likely to believe is true? It's so funny to me. They used to only do this with 3 people, but now they do it with 5, and it's on both sides. Yeah, you ever watch CNN and you see Scott Jennings on one side and 4 other people arguing the other? And then if you go look in the comments on a CNN video and you see all these people just bashing Scott Jennings, you can do the same exact thing on Fox News. I think it's a show called The Five on Fox News. 5 people arguing, 4 of them on the conservative side, and I think there's one lady, her name's like Jessica Tavarro, something like this. She's arguing generally on the liberal side of the aisle. You go read the comments and everyone's bashing her. It's sort of this really interesting thing we get locked into in the herd mentality of our side, and confirmation bias. I can go through so many more, the sunk cost fallacy, recency bias, availability bias. And then when you're right, people get sort of like this overconfidence bias, right? If your narrative seems like it's being backed up by price, you get overconfident that you're right, everyone else is wrong. So I sort of smile to myself in this 3-week window, because I think what's most important is if you've been able to stay on the right side of P&L, if you've been able to stay on the right side of price, you've probably been able to do that not because you're telling yourself a narrative, probably. It's probably because you're open-minded to the idea that all narratives right now might be a little bit wrong, might be a little bit off, and you're just trading price. As painful as that may be, regardless of what your political bias may be, it's just a price of an asset in front of you in a marketplace that's either fearful or over-rotating to complacency or even greed. And, I find it funny, because I hear a lot of narratives. I heard a lot of narratives 3 weeks ago, ended up, in my personal opinion, being sort of dog shit, completely wrong. And then I'm starting to hear a lot of narratives today that kind of seem a bit too rosy, a bit too this is over and everything's going to land happily ever after. I think that's wrong too, and I think I sort of smile to myself in these moments in time where people who have to have a narrative can't find their footing. They can't find it because the price is not confirming anything on a day-to-day basis. So a story that they tell today is complete, it's that story. I posted something about ex ante versus ex post. Ex ante just means before an event, ex post after an event. You listen to people and they'll tell you one thing ex ante or before the event, and you listen to them ex post, and it's like, why do you sound like you're saying the exact opposite thing that you said yesterday? Why does it seem like you're pretending that your opinion was different yesterday? I just think we're in an interesting environment. I think you got to be careful with the stories we tell ourselves. And I think if you can try to not tell yourself a story or live by a story that you've told yourself, or get ingrained or committed to a story that you've told yourself to the extent that you're going to get caught in this sunk cost fallacy, and no matter what new information comes to you, you've got too much invested in this story that you're going to keep trying to rationalize it. I think it's dangerous, and it's you can sort of chuckle. If you've been doing it long enough, you can recognize these things. You can recognize these stories, or recognize when people sort of get caught in these cognitive biases and have to try to work themselves out of it. It's tough, man. At some point, I've done it a few times. At some point, you just got to go, I'm wrong. I am wrong. I'm going to reset. And you got to be honest with yourself. You got to be honest with people. I'm wrong. I'm going to reset. Where am I wrong? One of the coolest things, there's a guy named Andy Constant. I think he's an absolute brilliant follower. And back in 2022, I think it was 2023, he was right about, being bearish in the market. And then in 2023, you got this end of 2022 into 2023, you got this real, this bullish, pulse in the marketplace, but he was still bearish. And one of the coolest things I ever seen, because he's got a huge X following, this is one of the coolest things that I've ever seen, and it speaks to, I think, his integrity and his desire to want to make money more than he wants to pretend to be right in the eyes of the public. He went online and he goes, "This is what I thought was true. It doesn't seem to be the case. Can anyone tell me what it is I may be missing? Tell me why it is that my thesis might be wrong." And he was just open, and he was engaging with everybody that came in and engaged with him. And he did it with such humility and such openness and such a desire to try to understand and find the truth. And I thought that was one of the coolest moments I had ever seen, that this guy who had so much experience, he had worked for Ray Dalio. Obviously he's done well for himself, that he could humble himself in the eyes of the internet. And you get everybody in there, right? Twitter trolls will say anything. And I thought that was such a cool moment. It taught me a lot, that no matter who you are, if you're on a heater, if you've had a couple of bad calls, there's always room for humility. There's always room for the reset. Sorry for that little tangent, but I've just been doing a lot. If you haven't read Daniel Kahneman's book, Thinking Fast and Slow, I highly recommend it. And even if you don't read it, there's probably some good YouTube videos, or some AI tool that can summarize it for you, something like this. I think there's 14 different cognitive biases he talks about. I'll keep going here. Let me get a second. Let's see what you guys are saying. Uh-oh. I think I struck a nerve talking about a couple of people. Talking about CNN and Fox News. Sleepy Mocha says they are all friends. It's all performance. Well, yeah, I mean, why wouldn't they? Honestly, why wouldn't they be? Like, just because you disagree with somebody or you have a different opinion on how to solve a problem, why wouldn't they be friends? The funny ones are Kevin O'Leary when he shreds them. I can't listen to that guy. Kevin O'Leary's, I mean, I got a lot of respect maybe for what he's done in business. Maybe. I don't really know much about it, but it appears I should have respect for him and what he's done in business. But, I don't know. It always just feels like when Kevin's talking, he's it's engagement farming. I feel like he never really stands for anything. He's just engagement farming. He's taking like purposefully controversial opinions on purposely controversial topics. I almost choked my water just now. Jennings is kind of a DS in comparison, but sounds like he is running for McConnell's seat. He is. All right, let's keep going. The damp spring guy says JMG 001. Yes. All right, let's keep going. Sure, it's on Audible too. Cool. I did not know that. I'm a physical book guy. That shouldn't surprise anybody. There was like this moment when I thought to myself, I was like, you own all your books on a digital library, which means somebody else in theory has the power to strip away access to any of these books. Like if some I know this, I'm absolutely insane person, but at some point, you know, there's like we're living in some world and we're like, this book has been deemed inappropriate, removing from your collection, like that that type of world. I was like, you know what? I should probably buy the physical books. It was the same moment where I started to like come around to the idea of sort of like Bitcoin and owning or stacking up gold and silver. At the idea, if you don't really have it, do you really own it? And I thought about that in lots of different contexts. One of those contexts were the books that I owned. And so I was like, yeah, I'm going to stop reading digital books and start buying up all my physical books again. All right, let's keep going. Meta, my babies. How about them apples? I didn't really get to talk about it yesterday. Interesting little reversal. It came off the highs, but it still was I think it was still a max winner for me at open. You know, I don't think there's a lot to talk about. I think after the fact, I literally only had one potential earnings play for the week. I told you guys what I would do, that the setup between Snapchat and Meta is always a really interesting one at sort of these moments of an uncertainty. I don't want to say always. I've just noticed it. I've been doing this thing for 18 years now. Snap hasn't been out for that full time, but there's been a handful of instances. I would say not statistically significant. I don't think there's been 13 instances or more where this has occurred, but I think there's been a handful of instances where people do this same thing. They go, because Snap's revenue goes down, that is an indication of what Meta's revenue is going to do. And they just still haven't learned, I think. And maybe that's not really what's happening. Maybe that's just the narrative that people on TV or people that have prominent platforms will do. is they'll say because Snap went down, then digital advertising revenue, I should be scared about what that means for Google and for Facebook and for, everybody else. And I can understand why you would think that, but it's kind of really simple. Go talk to a marketing person. If you've ever done marketing, or if you have the opportunity to speak to somebody who's knowledgeable in social media or sort of like budget deployments, go ask them. And that's what I did. There was a few years back where we were sort of in this moment where people were bringing down budgets, and I was sort of asking people in that space how they were handling it, because we had to figure out what to do with our budget. And people all told me the same exact thing. Well, first, what you do is you sort of bring down the most ineffective, you bring down the spend in the most ineffective channels. And you cut the most effective channels last. And so, I don't know. The setup was, if people do too dire of a read-through on Snap into Meta, we'll take a shot. And luckily, I think the two things happened. We got Snapchat, then we got the GDP print, which spooked everybody, gave us a massive discount in Meta. And then I tweeted about it like, I'm going long this bad boy. And I just went long, sort of like a 10-point wide upside call spread. Opened up a max winner. I don't know that I'm actually going to trade I don't think I'm going to do a lot of binary bets here. But it worked out, man. Mark says, Victor has his books in a cave with doomsday prep gear. Something like that, man. Something like that. You know what the funny thing is? Here's the funny thing. This is like the duality of man, I think. Because on one end, yeah, I'm that guy, right? I'm that guy who I've got physical gold, physical silver, physical Bitcoin, with the keys, not held somewhere else, but I actually own them. Excuse me. I'm that guy. But I'm also the guy who's going, when everyone else is going, the store shelves are going to be empty in 2 weeks. I'm the guy going, I don't think so. I'm prepared for it if they want to play that game. But I'm also the guy who's I'm prepared. I'm a prepper, but I wouldn't say I'm a panicker. You know what I mean? I think in some small way, these actions that seem crazy, that seem wild, in a way that being prepared for those really negative outcomes, it sort of helps me to go, I'm probably not going to run out and buy toilet paper right now, in part because I've already done it. So yeah, I don't know. I just think it's funny, It's funny in some way because I've thought through the distribution curve far enough a long time ago that in the moment when people see the catalyst and go, oh my God, what if I can't buy this, or what if I can't buy that? It's like, oh, you thought I was crazy a year ago, didn't you? Now you're worried. Now you're worried, aren't you? Bitcoin, my baby's up to 96.7. I decreased my Bitcoin position today. Today or yesterday? I think it was today. By like 60%. So I still got a little bit of upside exposure, but not a ton. On the trading side, I remind people I've got I think about Bitcoin in two buckets, a thing that I just own and hold. And then on this show, I talk about trading in and out of Bitcoin. And so I think on the chart, I denoted where, can I zoom out of this thing? Where I had sort of been buying. I think this was entry point number 1. This was entry point number 2. There was a third. There was a third, but I think it was actually recently. I think it was back in this channel somewhere. And so I've worked out of a little bit more than 60% of that position, so a little bit riding to the upside. But at 97, it seems like this thing wants to go. And I don't know where that thought is coming from, but it's just the setup of regulation, the setup of a Bitcoin reserve, the setup of more friendly, sort of a more friendly environment to build. The setup of a weaker dollar, the setup of sort of foreign nations needing to protect themselves in the instance of U.S. devaluation. Same thing with corporations or corporates. More M&A activity, more investment dollars going into Bitcoin. It just seems like this is a really, really favorable environment. And I get that everyone wants to freak out. Everyone wants to freak out about risk taking. And I'm sort of intrigued by this idea. People have been talking about the decoupling of Bitcoin from the NASDAQ. I think price right now is probably allowing people to have that discussion. I think if and when correlations go to 1, I think that probably breaks down a little bit. But at least in the short term, it's a sort of an interesting development. And I've seen both sides argued. Some people argued that Bitcoin was relatively stable while the NASDAQ and the S&P and while the rest of the risk was selling off. And I also heard it argued here, in fact, by, I think, somebody in the chat who I thought brought up a really good point, a valid point, that that's not what's happening. What happened in Bitcoin is that the volatility was experienced first, well before the volatility in equities occurred, because it's a higher beta asset. They took Bitcoin out first. I think you can make an argument for that. But regardless of narrative, I think if you believe at its core that what matters here is the scarcity of Bitcoin, that there are 21 million of these things, if you believe that that's the most important aspect, and that we are currently at 6 to 7% of deficit to GDP, and that if we are actually going into a slowdown, that we've only got one option, and that's to make more of those green pieces of paper, then you've got one hell of a force to sort of support the upside premise in Bitcoin, regardless of the risk-taking appetite of the market. So I continue to sort of be constructive on this thing, but I do think, like, at some level I got to take some chips off the table. So I started to at 100,000. Crude oil keeps leaking lower, 58.80. I watched a podcast. Gosh, I can't remember. I can remember the name, but I don't want to call them out specifically. But I watched a podcast on another network, and it sort of talked about where commodities are, and that they are confirming sort of a growth down, inflation down environment. And I think even maybe Chris this week spoke to oil and copper. I think Ilya even yesterday spoke to oil and copper. I have a feeling, or this is just, I don't want to say I have a feeling, my interpretation of oil price movements is a little bit different. I think there is a very different I think there's an administration that wants a certain outcome, and they want it for negotiating purposes, and they also want it for their own domestic agenda. And I think there are ways to pull certain levers of power to try to get that outcome. And I think, I think the potential for the administration to be doing deals with like Saudi Arabia or something of that nature. The administration signed the mineral deal with Ukraine. And so what do you need to do to apply maximum pressure to Russia to try to get the negotiated settlement? You need a minerals deal with Ukraine to give you a reason to press, and you need cheaper oil to create economic pressure to press. And I kind of just think that's where we're at. I don't know if the crude oil narrative is any deeper than that. Copper, I would argue, it's not cheap. So that's the other part. That copper's not making new highs, but $5 copper was expensive, man. So I mean, when we were just at 4.9, that's not cheap copper. 460 is not cheap. So I don't know that I buy that argument either. So yeah, I think in some way I hear that point of view. I don't know that I share it. And I think there are ways I think there are alternative viewpoints to see what's happening right now in crude oil specifically. And copper, I would argue, is not actually cheap. All right, let's keep going. Let's talk about VIX term structure for just a little bit. I am fascinated by the length of time. I kept telling you guys at the beginning of this backwardation that there are a handful of times in history where backwardation has lasted more than 10 days. And so when you get a backwardation that lasts for 10 days, you can pretty much guarantee you are trading through a time that is going to be remembered throughout history. It might be, top 5 moments that people talk about, right? They talk about the dot-com era. They talk about great financial crisis. They talk about COVID. It might be one of those. Or it might be something, further down the list, which was temporary volatility, but didn't create as much lasting economic scarring and damage. But you're sort of in this moment that will likely be remembered for a very long time. And I don't think you need VIX backwardation to tell you that, but for those that don't necessarily follow this, I'm just calling it out. It's a pretty historical moment that we're in right now. It doesn't tend to last this long. It doesn't tend to last more than 10 days. But here we are. Let's see what you guys are saying. Trade futures and hold IBIT, says Mark Aguilar. I trade the futures. They're not too bad. I don't love the liquidity. You definitely give up something going in, and you give up something coming out. So on the trading side, I use futures. I don't hold IBIT. I think if I was going to hold anything, I want to hold the actual Bitcoin off exchange. But that's just me. Crude had a pop today off that Trump Middle East issue. Yeah, but then what happened? But then what? Any time that there's a pop off of sort of these skirmishes, the market just punishes it, sells it off. They're looking for any reason to sell crude right now. And I just remember reading and listening to a couple of people that are really admire in this space that know they've forgotten more about crude oil and energy markets than I'll ever learn, just talk so casually about the likelihood of $50 crude oil. And I was like, really? $50? And here we are, 58 and change. So oil is going negative again. Wouldn't that be nice? How crazy was that? There's a few moments in my life where I step back and I go, I cannot believe they gave you that price. The great financial crisis, you go back there and you go look at like what Bank of America was trading at, some of these banks during that period of time, and you cannot believe the prices that they gave you. Again, hard to pull the trigger, and you likely pulled the trigger well before those lows. And you were just praying by the time it got to those lows. And the other one was energy companies after COVID. The prices that they were given on energy companies after COVID was absolutely insane, especially during that negative oil price environment. Absolutely insane. Hey Vic, are you a dual citizen now? Just curious. No, I'm not. You can get longer term visitor passes or permanent residency here well before you apply for dual citizenship. But because you ask, my kids are dual citizens. So my son was actually born in Singapore 5 years ago. We were having our first child, about 6 years ago. We were having our first child, and my wife felt much more comfortable having her first child in her home country with her friends and family around, which is a really tough decision because every male citizen in Singapore has to serve in national service. So my son being a dual citizen, it would mean at some point he has to give up dual citizenship, at least in Singapore, if we were to live here, because he would have to serve in the national service here in Singapore. It means by the time he's 18, he's got to give up his U.S. citizenship because they can't have dual allegiance. The girls, on the other hand, our daughter is able to keep dual citizenship throughout her life. So kind of a weird, funky little quirk that we had to navigate as a family. Wild. Absolutely wild. What happens when you try to navigate a marriage across two countries, across two sets of rules, across two allegiances? Wild. Wild the compromises you have to make. Gold 32.45.80. They hit it again, and I loved every minute of it today. You know, the other day I was talking with Chris. He was leaning a little bit short. I think I forget the mechanism he used, but I was leaning short still. Through the mini gold contracts. I told you at 2,500 I put the GCs on. We got that break down by 200, 300 points, about 200 something points, and then I took the big ones off and I just let 5 mini ones ride. So a lot less risk, and I wanted to protect the profits off of that reversal. But we got stuck in this channel. We hadn't really gone very far, and I told Chris and you guys, like, I almost want to pitch this trade, but I'm going to hold on to it anyway. And we finally broke to the underside of that channel and made our way down towards 3,200. So I worked out of some of that position. I've still got the short calls. I'll probably keep those on. I think I'm short the 3,500 calls and bought something behind it. So anyways, man, I'm this might break down a lot more. But I don't need every tick of this move. I actually probably want to be long gold. I just thought gold was so extended in the short term that I thought it was a good risk reward move to try to bet against it. And it paid off. And the more it works in my favor, the more I'm going to take this off and not give my profits back to the marketplace. But my ultimate, remember, I'm ultimately bullish on gold. I'm maybe one of the few people, I don't know if everyone else trades like this, but I'm one of the few people maybe. I don't mind trading counter trend moves. I'll trade with the trend and I'll trade against the trend. I'm long a bunch of these miner stocks. So one of the reasons I'm okay trading the counter trend move, because I look at it as a hedge against my long miners. So if I'm long the miners, if I'm long like Newmont, Barrick Gold, all these others, GDX, GDXJ, if I'm long all these things, and gold has this like blow off moment and I think it's going to reverse, well, probably all my miners are going to have some sort of positive correlation to gold, and therefore if gold has a down move, I'm going to give up some of my profits to the marketplace. So if I don't want to sell my miners, one of the things that I can do is I can just get short gold and protect, or at least make some money on the way down to offset any losses in the miners. And that's why I don't mind trading counter trend. A lot of my counter trend moves are just to protect existing long positions. So it kind of works here. I don't want to get over bared up, but I do think getting back to 3,000 is not out of the cards. I think that's totally possible. But if that's true, then my range is 3,500 to 3,000. So exactly halfway point of that range is 3,250. Excuse me, 3,250, which is bing exactly where we are. So fair value would put us somewhere at 3,250, which means this is a moment where I kind of want to scale out of the short and actually be looking to pick up stuff on the long side, whether that's more miners at cheaper prices or whether that's actual long gold, I don't know. But that's sort of just the way I see the world. It's really simple stuff. I'm not overly complicated. All right, let me see. All right, give me a second. Let's interact with some of your questions here. I've just been blasting through. My apologies. Smart wife, lucky kid. Both are true. Edward says it should be one world. I don't know. It's tough because we got caught in sort of making these tough decisions. But if I'm being 100% honest, when I look at a lot of the rules that Singapore has in place, they're very simple, they're very straightforward, and in many cases, I totally understand the justifications for them. And the interesting thing about this place, they have methods for exceptions, but they're granted few and far between. So things to stay relatively consistent. And I actually kind of appreciate that. I can appreciate legislation that I can understand the incentive structures for and that are straightforward no matter who you are. I really appreciate that. So in one world, it should be one world and everybody moves right from place to place. I know that sounds good, but when you start to actually unpack what that would mean, there's some trade-offs, right? Because one world means in all cases, when people assemble themselves, they usually assemble themselves with some power hierarchy. So if you don't have individual nations with power structures or elite classes that are forced then to compete against others, then you just create one single power structure that doesn't necessarily need to compete against others. To me, I could see worse outcomes in a world where there is no competition for a power structure. I could see that being the worst possible outcome, actually. I didn't think USA honored dual citizenship. Well, because he's the son, because he's my son, he got U.S. citizenship as a birthright. Ben says you've got 13 years to move then. Maybe. Well, they have an exception process here. And if we hadn't moved back here, if we had just, stayed in the United States, then we would have likely qualified for that exception, But because we moved back, or because we moved here, that's going to make things tricky. But I actually think my son, if you stay 13 years in a place, how my son sees himself or how he identifies might be a little bit different than what I would think. Speaking of allegiance, curious, since parts of Ukraine voted to be ruled governed by Russia, which side are they fighting on? No idea. I try my best. One of the things that I learned through Daniel Kahneman's books, actually, was knowing when you have enough information to make a decision. I think we can get tricked in these social algorithms, seeing a couple of headlines, seeing a couple of memes, into believing that we have an opinion, or to believing that a certain opinion is obvious, or it is true, or it is the most moral. And I think that's a hard trick to try to mitigate against. To go, yeah, I know everyone thinks this way, in the herd mentality, or yeah, I know all the memes in my feed say this, or the headlines that I saw said this, but if I'm honest with myself, do I know anything about this situation, or do I know enough information to have a qualified opinion on this? And I think if more people would ask themselves these questions before they spoke so passionately or so confidently about some of these topics, they would, if they were honest themselves, they go, you know what? I really don't know what the hell I'm talking about. That's why it's always funny when you get those interviewers that go to these rallies and they interview people. I know there's sampling bias there. They're probably just showing the most outrageous interactions. They're not showing probably the more informed conversations that they had. But there's always those clips of somebody that says something outrageous or bombastic or has a really strong opinion, and they just crumble with one follow-up question. Or by the second follow-up question, they have no idea what they're talking about. So yeah, Steve, there's a couple of topics I don't talk about here, and it's mostly because I don't know enough about them to use a big platform like this to just be talking out of my ass. Unless your son wants to stay in Singapore, there are certainly worse countries. Yeah, no, I think they're pretty happy. It's me, man. I'm the one that misses home. But the kids are young. Every once in a while, my son's old enough and had a good enough time in Chicago. I mean, we had a blast, man. That he very often will say, "Dad, I miss Chicago. Can we go visit?" And that sort of makes me tear up sometimes. I get proud of him when he says that. Anything else here? Chaz says, oh, interesting. There's too much diversity in culture and class across the world for a unified planet right now. Kind of, yeah. I see what you mean. Though in my personal opinion, I feel that's what we're losing. I feel there are aspects of nationalism. Nationalism gets a really bad rap. There's a bunch of negative context assigned to that word, but nationalism in the context of, Americans, Italians, the Irish, the Australians, the Chinese, the Russians, the Japanese, the Nigerians, everybody sort of has these unique cultural characteristics and these unique set of beliefs. And to me, I think that's special. And I actually think in some ways, the more we're all looking at the same stuff on these phones, the closer we're coming to a world where the cultures are mixing. I'm like, sometimes I'll come back and I am just blown away. Like, what was it? Oh, I think it was during the LA fires. I know I'm stumbling and mumbling a little bit, and I apologize for that, but I haven't had much sleep the last 3 days. I've been staying up and trading, so I don't think my brain is firing on all cylinders. But I came back from the U.S. I was we were in Indonesia during the time of the LA fires. People would ask me where we were from, and I said the U.S. I swear to you, I think 15 out of 15 people said the exact same thing. Are you from California? Those fires are wild. And I thought that was kind of it. I was like, oh, wow. The first time I heard it, I was like, oh, no. The second time I heard it, I go, that's kind of weird. 15 times later, I'm like, holy shit. Everyone literally sees the exact same thing on their phones out here. And that's the thing that they link me to. The U.S. is all about fires, and everybody's just watching the news on the California fires right now. And I know that's just anecdotal, but I feel there's some aspect of that nationalism, that individual cultures, that is, I sort of see it as we're losing that a bit since I was a kid. That doesn't seem to be the same as it is maybe 20, 30 years ago. And I don't know if that's a good thing, honestly. I'm a four-country mutt. Irish, Italian, Irish, Mexican, and German. I'm two of those things. I am African American, Irish, Mexican, and Native American. So I've got a lot of stuff mixed. I celebrate every holiday, and I'm offended at every joke. Put it that way. A little rally, I suppose, in silver after the close, but this thing will not get up off the mat. 32.66. Would love to see silver back up at 35. Before I was just playing maybe we can get gold to sell off, and if that happens and I'm long these silver deltas against it, I'll be happy because I'm going to make more on the gold short, and I'm just sort of buying silver against it. But in the case they rally, I'm sort of hoping that silver will rally a little bit more than gold. So when you're playing that ratio, you're not necessarily playing the direction, you're playing just the difference between the two. But now that I'm taking off a lot more of my gold short, I could just use a silver rally here, or else I'm going to have to pitch the long silver part of this trade, which I haven't. I'm actually legging out of it. I don't know that I really want to cover all of the individual stocks moves for the day, and there's not really much to talk about for tomorrow. Microsoft, obviously, a big mover here on the day at 7.5%. This is one of those, remember we were just talking about this last week? We traded this against the 350 low. I think I bought the 360, 370 call spread, and I was happy to get out of there with a 10-point winner, and this thing goes to 425. I don't know. You can't go broke taking profits, and you shouldn't be upset at winners, but that's how this game goes. That's how the game goes. And there was a time when I would be upset, I would look back, I would look at a chart like this and know that I caught the 360 through 370 upswing and get upset. But luckily, I think I've just been beaten into humility by the markets after nearly 20 years of this. And I've seen this a million times, and I'll probably see it a million more. It's just what happens. I'm long a little bit of stock, which I suppose not much, but I'm long a little bit of stock, so I suppose that's helpful. Hey, Vic, don't mean to derail you, but opinion on Grab. I used to like this one. I think I consolidated a lot of my risk. Like at $2, I liked this one. Somewhere in that ballpark. I think I consolidated a lot of my risk a few years ago. And I missed that big run up to like $6. I don't know enough about the specifics of the value side of this trade. So I'm just going to give you my knee-jerk reaction looking at Grab. They have almost a monopoly throughout most of Southeast Asia. So in the way that maybe in the United States, you might use Uber, you might use Lyft. Here, I basically have one choice. It's Grab. They consolidated power. And so not only did they consolidate power, so what happened was Uber was here, and they ended up selling out to Grab a lot of their business throughout Southeast Asia, and they left Southeast Asia. So Grab was able to sort of consolidate power in a lot of these places. They don't have a monopoly in all places, but in Singapore, it's the only option. And not only is it they've consolidated power, but they've also worked their way much closer to being sort of the all-in-one app. So, Uber has eventually done this. Like now you can get courier services there. You can get shopping done there. I don't know. There are other add-on services. But Grab was sort of that all-in-one app much, much sooner. I personally like this as sort of access to a certain revenue in a certain part of the world. I think that developing area of the world is a potential beneficiary of the geopolitical conflicts that we're seeing, as long as it doesn't escalate too far. If it escalates too far where everybody's forced to pick sides or else, then that's going to be bad for the global economy. That's not good. But if it's just a shift sort of where dollars are created, where investment capital flows, where people are looking to move their supply chains, I think it could be beneficial for Latin America. I think it could be beneficial for Southeast Asia. Do I know if that means Grab is a good investment here at 477? I don't. But I have owned it in the past. I pitched it only because I wanted to consolidate all my risk and I had way too many bets on. And but at one point I really, really liked this stock. But that was probably in the $3 area. Chaz, I get it. Clever. What's your opinion on yield stacking over short-term T-bills to capture the risk-free rate? Schwab sweeps are terrible. I don't think it's a bad idea. I get it. If at 5,000 at 4,900 or 5,000 in the S&P, I would have said, man, you got to take a little risk here. At 5,700 in the S&P, I would ask you, what do you think the upside is from now until the end of the year? And if you think that the upside may be somewhat limited in risk, then yeah, I think short-term T-bills that are offering a pretty decent yield to take almost no risk That's probably a pretty interesting proposition right now. I like T-bills, but direct from Treasury. I've done the bills. I think Tasty offers Treasury bills now, right? If I'm not mistaken. I've done both. So I've owned, I do both. So I've owned Treasury bills directly through Tasty, and I own Treasury bills directly through Treasury Direct, directly through the Treasury. Treasury Direct is a horrible website. I'm kind of okay with that because it means we're not spending tax dollars to on government service UI or UX. But on the flip side, come on, man. Come on, bro. You could hire. I was making websites in the 6th grade. I could build a better website than that. I'll do a couple more here. It's so impressive that we are back to this price area in the indices. It really depends on the next few weeks what directions he keeps taking the ship. Again, it's very tempting, I think, to look at it. Like, here's my thing. You can't believe in efficient market theory one week, okay? Can't believe in efficient market theory 1 week and then believe that one guy has the power to move price on his own in the global marketplace. Like, you can't hold those two ideas at one time. And if you do believe that this is all resting on one person, then trading the market becomes really easy, right? Because you just have to understand the incentives of that individual and the incentives of his opponents. To me, I think there's a logic trap there. I think there's a logical trap there, man. Like, do you believe we're at 5,700 because what? Because there was a 90-day pause in tariffs? And if that's the only reason, does that mean it just there's so many, I think, logical traps there. I personally do not believe we're at the whims of one individual. I think that's what a lot of these stories are going to say. And I think these stories, in most cases, are designed for one purpose, and that's to create a bandwagon or herd mentality effect. And I don't know. I think the truth is probably a little bit harder than that. It's a little bit more difficult than that, I'm guessing. That's just my guess. Jeremy Walls said, I called 5750 as target 2 to 3 weeks ago. Nice call, Jeremy. I remember saying that first that we were in 6,000 plus or minus 200. When we broke down below that, I thought the new value area would be 5,500 plus or minus 300. And then I remember sort of saying that to people in the midst of sort of this sell-off right here. And I said, I'm not at 5,200. I'm not necessarily panicking. I actually want to accumulate anything below that level. People were so upset with me. Like, if you go there, you go look at the videos on I think it's the Tasty Live trending channel 3 weeks ago. Hundreds of comments, all calling me a Trump apologist. That what's wrong with Victor? How does he not get it? It was like if you didn't accept the dogma blindly that the world was ending, this herd mentality tried to punish you into submission. And it turns out that having your own opinion that runs contrary to consensus is an interesting way to make money. Who would have thought? That's going to do it for us today, folks. I appreciate you hanging out with me this week. It's Synthetic Friday, so we're not going to be back tomorrow, but we will be back next week. And if you have some time this Sunday, come join us for First Call, Sunday at 5 o'clock p.m. Central Time, the best time. Actually, we start at 4:55, to be honest. That's always a good conversation. In my personal opinion, a good way to start the week. If you want to follow me on Twitter, I'm super active on that during the day, talking about any intraday risk that I'm taking. You can follow me there at Victor Jones. The Owen Jones is 0 because I like to be difficult. And I'll see you back here next week, folks. Till then, I've been Victor Jones. Peace.